6% in yesterday's trade. Maybe some air comes out of that trade.
Yeah, just a little bit. Just a little bit after that massive rally that we saw earlier on this week. Michael O'Leary picking more fights with European governments. Shocker. Okay, let's talk about what is happening with this market. Here we go. Time for the opening trade this Friday morning. We're expecting a mildly positive start to the session. There's a few interesting stock stories that you want to pay attention to. Feels like it's going to be some of the macro data, some of the geopolitics next week that may drive the narrative. We're obviously moving into that Fed rate cut, but we already know that's going to happen. That's not news, is it? FTSE 100 absolutely flat. IBEX marginally moving on Spanish banks. Maybe we'll get back to that story in just a moment. Stock 600 going nowhere in a hurry. It's been frenetic this week, and maybe actually we are deserving of a day that maybe is a little bit calmer. The CAC 40 is up by 0.1%. FTSE 100 now climbing a little bit as well. We'll dig into the details in just a moment as to what is happening here as we await the DAX and the SMI. Their opening will come shortly. Val, what are we seeing when it comes to the sector story?
Well, in the sectors picture in the first few minutes of trade, we've got 13 in the green, the remaining 7 in the red. Basic Resources is at the top of the basket this morning. That sector is up over 1%. Seems like that rise in gold prices still helping some of the miners here in Europe. The energy sector is at the bottom of the basket, and I have my eye on the luxury space, looking for any reaction. I don't see any so far to these names floated by the Armani family as key to the preferred stake in Armani, but we have an eye on our luxury sector as it's opening up.
Okay, we'll keep an eye on that. Yeah, look, oil stocks are lower. You've got Shell and BP, two of the biggest drops that we're seeing on the market this morning. Shell is down by 0.5%, but obviously it's heavily weighted, so that is dragging the story down. Novartis is a little bit softer. Banks and tech look like they're on the front foot. SAP recovering a little bit this morning. It is the second biggest weight on the upside. We've also got ASML rising as well. UBS is the biggest gainer, but as you say, there are some mining names that are on the upside too. So you've got names like Anglo American and Rio Tinto climbing quite nicely. So quite a big kind of position difference in what is happening in the industrial metals. We were just mentioning that just a moment ago, and what is happening with oil. We did see IEA just basically confirming this glut story that we have in the oil market at the moment. Are we going to push into the 50s on oil? I think that remains a key question for markets like London. But balanced today by a much more positive picture coming out of the mining markets.
Yeah, at least when it comes to the Spanish banking sector, just a minor move into the downside from Banco Sabadell, down less than 0.2%. BBVA, on the other hand, down 0.2% as well. So that story about the bid not being high enough, not seeming to rattle the market so far as well. But looking for Ryanair, the stock's not open yet. Seeing if that noise about their pulling back on Spanish flights has anything to do with the market move.
We'll get some more details on that. Yeah, we'll come back to Ryanair in just a moment. Is bad news good news? Coco Aguilar, Global Head of Economics and Cross-Asset and Quant Research at SocGen Corporate Investment Banking, joining us now around the table. Good morning.
Good morning.
We have bad news coming out of the US labour market. Is that good news for equities?
Yes, when it comes to interest rate, it is. One of the things we've seen is that the Fed has clearly increased interest rate quite massively after COVID because of what I call the original sin, where government and central banks spent $25 trillion to save human lives. And now that inflation is going back closer to normal, so it's all a question of what's neutral interest rate ought to be. So in the US, it should be between 3 and 3.5%. Interest rate went from 0.5 to 5.5 at the peak. They've cut by 100 basis points. The market is expecting another 140 basis points to reach terminal. So ultimately, what it means for corporates is that the discount rate and the equity return should come down. and this is what we're saying, where the rally is no longer about tech, it is broadening. So we see small cap benefiting as well from that.
And no recession. No risk of recession here.
No, the risks of recession are pretty remote because because what's important is that if you keep interest rate too high, then you sort of increase the risk of recession. Because of it will essentially reduce the potential growth of the economy. So what the Fed is doing is adjusting dynamically the level of interest rate to make sure it can meet its dual mandate of maximum employment and price stability.
So when we're talking about the Fed, I think one of the risks on the horizon is potential dent to Fed independence. Is that something that worries you or comforts you?
Well, I think there's been a lot that's been written about this, and we don't think that we will have a repeat of the last time we had Fed independence being challenged by a president was the Arthur Burns era with Richard Nixon, who famously cared more about employment than he cared about inflation, and that led to the high inflation in the 70s. So today we have 12 members, voting members, 7 of which are the governors who are elected for essentially selected for 14 years, and then 5 of the 12 are the part of the 12 regional banks. So the challenge is that all of the 12 will be reappointed, or their mandate expire in February 2026, and Lisa Cook, if she's replaced, will essentially mean 4 out of the 7 were selected by Trump. So the point is, even if you have control of the board of governors, they have veto rights on the regional presidents. So hence the argument that if they are actively vetoing whoever is not a dovish president, then they could have control. So it's not because you're being selected by Trump that all of a sudden that these presidents and governors will essentially decline to meet their fiduciary duty, and there have been mechanisms that were put in place since the Arthur Burns era to prevent the independence being a challenge. So ultimately, I think they'll still look to do what matters most for the economy as opposed to be extra dovish, which is the concern for investors, but I think this is a bit too much of a concern.
Yeah, well, I guess when it comes to what matters most for the economy, I mean, you can definitely argue that the Fed and this inflation targeting, this 2% inflation, it's been missing for 53 straight months. Is the market, regardless of the Fed independence question, is the market really going to start to question whether that 2% target is really valid anymore?
I don't think it would. It's a question that a lot of investors have talked about post the COVID era. So the consensus is clearly that we're not going to go back to the pre-COVID era that fast. But the 2% target is one of the only thing the major central banks across the world have agreed on, and this has worked quite well over the past few decades. So I think what's going on is a prudent measure of balancing price pressure and unemployment. So today the Fed is clearly pivoting from concern about inflation, tariff, etc., to the weakness in the job market. But one thing I also want to highlight is that we've been fooled by randomness for the past couple of years. In August last year, we were expecting a recession, and then the data changed. One of the things we realized is that the non-farm payroll, for example, is a statistics. So it's supposed to be looked at within a 95% confidence interval, plus minus 100,000 jobs. But the market is excessively focused on one number and a tiny change, which again is an estimate. So if you look at the average over time, unemployment rate claims, they are weak, but not necessarily, it's not because you have 2 data points that you can put a straight line and assume the 3rd data point will be on that line. So we need to be careful on how we look at economic statistics, which have been incredibly volatile since COVID, working from home, the statistical adjustment are creating more noise. So the picture is not as bad as it looks.
Okay, we can debate the veracity of the data and what is happening with the US economy probably for quite a long time, and many people are. The picture you paint is one of asset price inflation. Is that the correct assumption?
Yeah, but I think it's more of a earnings boom. So what has happened post-COVID, we had 2 things. Number one, we had greedflation. This was the environment where companies were able to raise prices by more than their input costs. So profit margin went through the roof, and this is why a lot of economists and market participants got it wrong, expecting a recession when rates went up. What happened was that companies made a lot more money than that was expected, and net interest margin also went down because the excess cash was put in money market funds, earning 5.5% in dollars, which was offsetting the cheap financing that got post-COVID. So what's happening is company were able to deleverage their balance sheet. I call this the vaccination of zombies, which is a theme we talked about in 2019. So that's no longer a problem. So household and corporate balance sheet were saved, so to speak, by the weakening of government balance sheet. And now we have this third industrial revolution around AI, which is not just one company, it's a whole supply chain and sectors. You mentioned Oracle, and I think this is just the beginning. It's sort of an S-curve in terms of adoption rate and investment required.
So asset price inflation.
Asset price inflation, but it has a sort of a semantic feel that sounds negative when you say asset price inflation.
It's bullish, guys.
Asset price inflation. So are assets going up in value? So they just continue to go up in value?
Because
but there's
they will
not,
go up. They go up in value because of the earnings that is justifying this asset price inflation. So in other words,
this is a fundamentally driven market.
Absolutely. As opposed to the argument around the dot-com bubble, things are going up for no reasons, etc. Because the risk premium on US assets should be higher.
Oracle going up 30% in one day is fundamentally driven.
Well, because they beat numbers and estimates. Nvidia is at $4.7 trillion in market cap, which is pretty much the equivalent of the entire Eurostoxx 50. And they've, doing $60 billion share buyback. Their sales are up 50% quarter on quarter. So, I mean, it is an amazing earnings explosion that we see in the US.
Coco, nice to see you. Thank you very much indeed for seeing us. Coco Abouba, Global Head of Economics, Cross Asset and Quant Research at SocGen Corporate and Investment Banking. Let's talk about some of the stocks we're watching this morning. Novartis is under a little bit of pressure. Let me show you what is happening in the pharma space. This is the picture on the stock 600, as you can see. We've got actually a reversal of what we saw yesterday. Novo is up, but the rest of the sector is down. LVMH is actually not moving on this story we focused on yesterday. Big move yesterday. Defense stocks stable today. Tech's up a little bit. Nestle's a little softer. Let's talk about what is happening within the pharma sector. Louise Moon has more details.
Yeah, starting off with Novartis, the Swiss pharma giant. Their shares getting weighed on this morning, down over 2% into the red. That's after they were cut down to a sell at Goldman. So if you look at the analyst ratings, most are for a hold, and their shares have been under a bit of pressure recently, so down further into the red this morning. Next up, we're looking at Hanover Reinsurance. That's the German company. Also a change in rating for them. They're up into the green, almost higher, about 2%. That's after UBS rated them as a buy, adding to about 13 analyst buys. So the majority of people really saying that they should be a buy, up almost 2% into the green, so a good start for them this morning at open. Next up, looking at Ryanair, the budget airline, just slightly higher into the green. That's after they said they were going to cut 1 million more flights to Spain. That doesn't seem to be weighing on them this morning. They're still into the green, but only slightly there. And then finally ending on Ocado. So news that one of their customers is looking at doing direct deliveries from their own stores, so not using Ocado's fulfillment centres. And that is really weighing on them, down over 8%, almost 9% into the red, so potentially losing out on a lot of business there.
Okay, Louise, thank you very much indeed. Louise Moon, our UK breaking news editor. Mining stocks are actually having a fairly good day, but that's the kind of derivative trade of what we're seeing in terms of some of the metals prices this morning. Copper is up by 0.5%, nickel is up by 1.45%, iron ore actually fairly flat, but it's had a really good run. Steel rebar is up. You've got gold also tracking higher as well. Silver's up even more. So miners generally across the piece this morning are doing quite well, which is a little counterweight to some of the oil weakness.
Well, it comes as yesterday that we saw that inflation-adjusted gold surpassed its 70s peak. We just had Coco Agabloa on here talking about this asset price inflation. I mean, gold's got to be where you hide out rather than equities. What do we think?
I don't know. It depends why you're buying gold. The juxtaposition of NASDAQ at record highs and gold at record highs, there's something odd about that.
Fed's not even doing QE yet.
I know, precisely. So kind of, but that's what makes it logical in some ways. If you believe that the Fed's going to do QE, right? Yeah. So that would pump more liquidity into the system, which keeps the equity train on the track, which pushes asset prices of tech stocks higher and higher and higher. And then you worry about what is happening in terms of what is the safe asset, which makes you buy gold. So in some ways, if you believe that the Fed is going to do QE and we're going to see financial repression coming through, then it makes sense. But that's the scenario in which it makes sense. And that's a really odd scenario to find yourself in. That you are worried about debasement of currency, you're worried about that whole side of things, so you hold gold.
Or is it a bullish asset price inflation, as we were just told?
No,
that
but it
could
is
be a positive earnings boom.
No, but it's bullish if you believe that equity markets go higher in that kind of scenario. But the PPI data speaks to the idea that actually margins are being squeezed. So is that good for earnings?
Well, tech margins. That's what matters for the S&P.
Well, the Oracle story is basically based on, we'll talk about this a little bit later, the Oracle story is basically based on the idea that a number of the LLMs are going to continue to spend at the rate that they are at the moment, but the cash burn is phenomenal. So can they continue to burn cash? Maybe actually the way that you do that is by lowering interest rates and making it easier to maybe burn some of that. You can
Sounds
go
juicy.
round in circles. Sounds juicy, says Val.
Well, coming up on the show, Banco Sabadell has again rebuffed an $18 billion bid from BBVA. We'll talk Spanish banks next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Welcome back. 17 minutes into the Friday session. What is it looking like out there? Generally reasonably well bid. You've got the Euro Stoxx 50 up this morning, though it's interesting to see kind of what is happening in terms of the mix there. Actually, it's not up by as much as it was just a few minutes ago. We're now only up by 0.1%. Little fade coming through. The IBEX is actually negative, which is interesting, which takes us to our next story. Banco Sabadell's board has again rejected BBVA's $18 billion takeover bid as insufficient. This raises, of course, pressure on BBVA to improve the offer. How do you do that? Well, let's find out. We are joined in London by Bloomberg's Madrid Bureau Chief, Rodrigo Oruela. Good morning. Nice to see you in London.
Yeah, nice to be here.
More cash required?
That is what everybody feels, except one person, and that's the chairman of BBVA, who's dead set, and he's saying there's no way he will increase it. There's some questions about that, because why wouldn't he increase it after spending over a year trying to buy this company? It's not the first time they tried to buy this bank, so it doesn't make much sense. And if he is so convinced that this is the future of BBVA, why wouldn't he do it? The second element, which is a slightly minor one, but really matters, their key advisor is JP Morgan. JP Morgan was also an advisor to Montepaschi. Montepaschi kept on increasing their offer till the very, very last minute to buy Mediobanca in Italy. So they have an advisor who's already worked on a very similar process, and worked on the winner in that case.
Okay, so just before Val jumps in, why does he not want to put more cash on the table? Why is he the only? Has he given any indication as to why he doesn't want to do this? Because presumably the advice is from the. Why? Why won't he do it?
I mean, the exact answer to that is because he says that this is the perfect offer. This is everything that matters. They have taken everything into consideration.
Yeah, from his point of view.
Exactly. And that there's nothing that justifies it. If you look at the numbers, what he points to is that when they started this process, the premium was about 42%.
Yeah.
Now it's about 10%. The premium, the negative premium in this case. And so he's like, it was a very good offer. And since then, Sabadell has rallied because of the offer and not because of fundamentals.
Okay. Well, in that case, why does BBVA need Banco Sabadell? What is going to keep this deal floating and alive?
So the main reason they want it is because they are heavily biased towards emerging markets. About 50% of their income comes from Mexico. And so they would like to have much more exposure to Europe, but specifically to the only country they operate in Europe, which is Spain. And they say there is a lot of scope to consolidate the Spanish market. That would make them a more developed market bank.
Rodrigo, we're going to leave it there. Nice to see you.
Thanks
very much indeed for stopping by to see us. Nice to see you in London, by the way. We've spoken many times. I've never met you in person.
Go back to the sun
now. Precisely. Yeah, it's going to be sunny at least a little bit this weekend. Rodrigo Orihuela, thank you very much indeed.
Well, Bloomberg has learned that Giorgio Armani has left the entirety of his closely held company to his foundation, family members, and longtime aide Leo Dell'Orco, who will oversee the Italian fashion house following the death of his namesake founder. Armani will also set up conditions for the foundation to sell an initial stake of 15% in the company to LVMH, EssilorLuxottica, L'Oreal, or another company of similar standing within 18 months. Joining us now for more is Andrea Felstead from Bloomberg Opinion. Tell us about these potential suitors.
Well, the main thing to remember is that these assets, these well-known assets in luxury, come up very rarely. And once somebody gets their hands on them, they very rarely come up again. So that's the background. So everybody will be looking at this. You know, Armani's a very, very well-known name. It's a tremendous brand. Yeah. A lot of people will be looking to get their hands on it. LVMH is interesting, always seen as a long-term developer of brands, a safe pair of hands. Essilor's got the license for the eyewear, L'Oreal similarly the beauty. LVMH is probably the only one that can do this, given the scale and the fact that the Armani brand. How much does it cost? I reckon it's going to be around 10 billion euros.
Will they need debt funding for this?
They would, but remember they bought Tiffany for $16 billion. I can't remember if that was dollars or euros. It was a long time ago. I think it was dollars. They've paid most of that back already. I mean, conditions are tough in luxury, but LVMH has a very strong balance sheet. It could definitely do it. Now, you've got to buy it. It also needs a lot of work. You know, it's very focused. It's got a lot of sub-brands, very focused on apparel. The real profit drivers are leather goods. But there's tremendous opportunity. The beauty, the eyewear. He's been very clever. He moved into hospitality before anybody else. Amazing opportunities, hotels, restaurants, which is where the future of luxury is going. So this really sets up a battle for this stake if it comes to pass.
And this is just for a 15% stake.
Exactly.
What's going on with the rest of the brand?
Well, I mean, we've got Kering's deal with Valentino maybe as a bit of a model because they've bought an initial 30% stake with the option to buy more. So what I would imagine happening is someone takes an initial 15% stake with the option to buy more over time. And ultimately, it's going to come down to how it performs because, you know, if Armani does struggle, and we think about Armani's challenges, if it does struggle, then they could sell more over time. It's going to have a creative transition. It's going to have to, you know, improve the business a bit. It's going to be hard work. So you could see an initial stake and then more being sold over time.
Why is luxury struggling when stock markets are doing so well?
Well,
crypto's doing so well as well. A lot of things are doing very well.
Yeah, exactly. Well, I've been quite vocal all year saying that actually I don't think it's as bad as the market is saying. China is clearly under pressure. China doesn't seem to be getting any worse. The US, there was lots of fear about tariffs and the impact that would have. I mean, we haven't really seen, you know, the impact of tariffs is probably really only coming in now for consumer stocks. But markets are back and crypto's back, and that correlates well with luxury demand. So we've seen quite a lot of brokers lately getting a bit more positive on luxury. I've been positive on luxury all year, really, because I don't, you know.
That's just the default position, though, I'm assuming.
Yeah, personally and professionally. But no, I don't think it is as bad as people said, just because of the reasons you've said. And I don't think luxury is, you know, there's a lot of talk about luxury fatigue and people being fed up with luxury. I don't believe that. I think, you know, well, it seems to be. Don't forget, we've got big fashion week coming up as well. This fashion week is going to be very important. All the new designers are coming in. The industry's looking at that for, you know, to really spark excitement and interest again. There's been an awful lot of work going on to try to get people interested again. It's not going to be immediate, but I think there's a good chance.
Well, given luxury has been through a lot of upheavals this year, is there something within the Armani portfolio that these suitors really want to get their hands on? Is there something that really stands out for them?
It's really the brand. You know, it's a household name. Everybody knows. You know, we've just seen, you know, the outpouring of love after his death. You know, everyone knows this brand, and that's really it. These names come up so rarely, and when they do, everybody wants to get their hands on them. And also, there's not many things. If you're LVMH, there's not many things.
Not much left to buy.
And not many things are going to be big enough to make a difference. Yeah. Whereas Armani's a big name, big enough to make a difference. LVMH strength really is leather goods. A lot of potential in leather goods and in hospitality.
Okay. It's New York Fashion Week this weekend, isn't it?
That's right, yes.
Are you going?
Yes.
Getting on a plane?
No. I go to a few of the London shows, but no.
Maybe you have to report on it.
Not important enough to get invited to the shows.
I am certain that is not true. So asset price inflation, there you go. But this is the interesting
luxury
bit.
Handbags.
But this is the interesting stuff. The stock market cannot stop going higher, because it drives luxury consumption. The highest proportion of society has the highest. They're consuming a lot in the States. If the stock market rolls over, that rolls over, and then potentially you've got quite a big problem in terms of consumption.
Maybe they should wait a while before buying the name, because it'll be maybe cheaper if the U.S. enters a recession.
Did you just sound bearish? I can't believe. No, that's not true. That is not happening. Valerie, bearish? No. Andrea, thank you very much indeed. Coming up, we're going to talk tech. That's next. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Willow Bay. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back to the opening trade. We're 30 minutes into today's cash equity session, and it's looking fairly positive, though we are losing a bit of momentum. Euro Stoxx 600 just flipped to unchanged. So did the CAC 40, just briefly now in to the red. The FTSE 100 is outperforming this morning. That's off the back of some of these mining stocks doing well with the recent highs in gold prices. The DAX in the green, up 0.1% as well.
Okay, let's look at some market internals, figure out what is happening there. We're going to change the volume for next week. 100-day moving average captures some of the volatility we saw around some of the Trump tariffs. We're a little light. I think the baseline on this is probably -20. I think we're -40, so we are a little light on the volume picture this morning. Higher 336, lower 235. As Valerie was mentioning, the 52-week highs. There's a few of them are out there today. There's lots in the banking sector. There's a few in the defense sector. I think Rolls is hitting a 52-week high again today. But the bulk of them this morning come from the mining sector. This is partly down to gold. We've been talking a lot about Fresnillo recently. It is up another 4.5% today, hitting a fresh 52-week high. Seems to be on a daily basis that we see that story. But you've also got some of the industrial metals doing better right now. So names that are associated with copper doing a little bit better. Copper's up. Antofagasta is up by 2.2%. Anglo American's up 1.1%. The industrial metal story is gaining some traction, and some of the London listing stocks, as a result, are responding to that, Valerie.
Well, here's what else you need to know this morning. Brazil's Supreme Court has sentenced former leader Jair Bolsonaro to a 27-year prison sentence for plotting a coup after his 2022 election defeat. The indictment was decided on Thursday by a panel of 5 justices who oversaw the case. U.S. President Donald Trump said the ruling was surprising and bad for Brazil. U.S. Treasury Secretary Scott Bessent will meet China's vice premier in Madrid next week. The two are set to talk national security issues, tariffs, and TikTok's status in the United States. The discussions come amid a flurry of diplomatic outreach this week, potentially smoothing a path for a future meeting between Donald Trump and Xi Jinping. And lastly, Bloomberg has learned that the leaders of OpenAI and NVIDIA plan to pledge billions of dollars in support for UK data center investments. This is as UK tech executives join President Trump on his state visit next week. Sources say the two companies are teaming up with London-based data center business Nscale. Guy?
Finally, some good news coming through for the Prime Minister. We'll see whether that good news materialises next week. This in a week we've seen, obviously, a lot of problems for Keir Starmer, and also some fairly significant news when it comes to the life sciences sector, where we've seen Merck, for instance, throwing a lot of mud at the UK government for its attitude towards drug pricing, amongst other things. I do wonder whether some of that is going to change. But there's been plenty of big tech news out this week as well. We've obviously focused on what has been happening with the Oracle news. At the end of the week, we'll come back to this in a minute, Val, just talking a little bit about Oracle. How solid is the foundations of some of the rally that we've seen in the tech story this week? Are we going to continue to see, we talk about the UK investment that we're seeing from OpenAI. Is OpenAI, given the cash burn at the moment, going to be able to continue to spend that kind of money? It's interesting to see the Microsoft deal potentially being transacted, allowing that company to move into a for-profit format. But at some point, does that relationship change again? If we do see OpenAI running into problems, are we going to see Microsoft, for instance, taking a bigger stake in that business? There's a lot of questions out there at the moment. Let's carry on the conversation. Tom's just sat down. We were wondering where he was, but we found him now, so he joins us. You've been spending a lot of time talking to a lot of people about this kind of trade this week, and I'd be interested to get your take at the end of the week on what it looks like and whether or not the foundations of the AI story are more solid now than they were at the beginning of the week.
I think it's two really interesting stories, which are Adobe on one end and Oracle on the other. So Oracle, of course, with that really significant upgrade to the outlook on the data center and that pipeline of almost $1 trillion US. I mean, just remarkable. If they can deliver on that, that's another question, and the cost to deliver on that is going to be significant. But of course, you saw that historical jump for the Oracle stock price on that. So that's one part of the ecosystem that I think stood out. The other part was Adobe, which actually surprised, obviously, to the upside, because this is a company that struggled, and what they've been able to show with the results that came through last night was that actually they are able to incorporate AI into their software and their platforms, and they are now finally starting to gain traction with customers. They have to make that a sustainable proposition, but for me, that was an interesting takeaway in terms of the momentum that still exists in the AI theme. And then, of course, we look ahead to the spend around data centers that could come through from OpenAI and NVIDIA committed to the UK next week.
Yeah, what's your read on that? Is this just part of the Trump administration's visit, wanting to pledge help for the UK's attempt to become more of an AI centre?
The Prime Minister Keir Starmer, he's really lent into AI. They've really shifted the focus from the previous UK government, which was focused on safety, much more to kind of delivering and needing to generate growth on that. So it does align with Keir Starmer's policy agenda. Stargate, which is the sovereign data play that OpenAI has lent into alongside NVIDIA. Look, they're going to make some commitments. The question is, do we have the power and the capacity in terms of energy to support this data center build? And really, it's a drop in the ocean when you compare it to kind of spend on data centers you're seeing in the UAE and the US, 4.5 gigawatts in terms of data centers. Here we're talking much smaller. But nonetheless, it is a step. It will be seen as a step in the right direction.
You've had this amazing conversation with the CEO of Alphabet's Isomorphic Labs. Talk us through what he had to say. This guy's one of the leaders. You want to listen to what he had to say. And it's not only what's happening with the AI story, but also what's happening with the medical science story.
Yeah, and that's really where the focus was. So Demis Hassabis, Nobel laureate, and alongside Sam Altman, really one of the key players in terms of delivering on AI and that historical legacy in terms of, for the last decade, thinking about artificial intelligence. The focus was on this huge mission statement for Isomorphic Labs, which sits under Alphabet, which is to solve all disease. The reason you take that mission statement seriously from Demis Hassabis is because, number one, he's a Nobel laureate, and the reason he is because this is the team, AlphaFold, Isomorphic Labs, the team AlphaFold, that solved the protein folding question that many thought was impossible. Take a listen to what he had to say specifically about whether or not they can eventually possibly tackle the question of cancer.
The kind of holy grail in a way is to try and tackle cancer, but we've also done it for practical reasons as well, because the clinical aspects of that are favourable for new drugs, because obviously the disease is so serious.
The other key line that came through from Demis Hassabis was how they plan and hope to shorten the drug discovery phase. Yeah. And they think they can get that down from a number of years, sometimes 3-4 years, potentially to a number of months, even shorter, within a couple of years. That's what Demis Hassabis told me. There's, of course, the clinical phase part of it, which is 6 to 7 years, which they will look at some point. But in terms of that first part of the drug discovery story, they think they can shrink that possibly to months, possibly to shorten that. And that of course, if they are able to do that, would be hugely significant.
All right, thanks for joining us on the latest on European tech. That's Bloomberg's Tech Europe's anchor, Tom McKenzie. But joining us now for more on tech is Storm Uru, the co-manager of Liontrust Innovation Team at Liontrust Asset Management. I want to just start off with whether you think this incredible rally we saw in Oracle, the numbers that they were putting out in their earnings call, do you find them believable?
Good morning. It's great to be on the show today. So I've just got back from Silicon Valley yesterday, so I've got a little bit of jet lag today. Claire and I were first in New York, kicking the tires on a number of new IPOs that have come to market, particularly in crypto, a number of new types of companies, which are very exciting. Then we spent 3 days in Communicopia, Goldman Sachs' big technology conference, listening to the biggest technology names across the sector, talk about, one, what they've been up to for the last year, and two, where they're going over the next 12 to 18 months. And the message was very clear, particularly from the AI labs, is that they are very compute constrained. The question for us over the last 12, 18 months is who is going to build out the data centers? Who is going to get the ability to build the new data centers going forward? We got the answer to that earlier this week with Oracle.
The question that everybody else has asked has been, is it real? And can the LLM companies spend this kind of money, burn this kind of cash, deliver to Oracle this kind of business? Oracle missed and then came through with this very spectacular outlook statement. How easy is it going to be to thread that needle? How easy is it for these companies going to continue to spend at these kinds of rates? I read a note from Richard Windsor this morning talking about the fact that ultimately he thinks that there is going to be a crunch point coming, that actually the business isn't going to be there, and as a result of which this cash burn is going to become untenable at some point. Is it that binary? Is it kind of success, massive success, or ultimately some of these companies are going to get crunched?
Yeah, I mean, I just think we're just too early to be having this topic of discussion. And the reason why is because if you look at the cost of OpenAI to build its most recent GPT-5 model, it was around about $2.4 billion. They're now generating north of $13 billion average run rate revenue right now. So $2.4 billion investment, around $13 billion in revenue. That is a very high return on investment in terms of build. Now we're going to a high level of build going forward. The key other vector of demand going forward is around inferencing. And when we're talking about inferencing, the key factor here is moving from single-shot ChatGPT to reasoning. And the reason why that matters is because reasoning requires 100 to 1,000 times more compute.
Sure.
That's the reason why we need these data centers going forward. And if you look at OpenAI today, only 7% of their consumer cohort are actually using reaning today.
Sure, that's fine, but where's the money coming from? These companies are burning cash at epic rates. They're having to pull in cash. It was at OpenAI, I think the information was reporting this week, that they're having to raise the amount of money they're going to need. They're talking about their profitability. Yes, they're going to get greater revenue off this. But the amount of money that they're going to have to burn through to get to the point that they want to get through is just getting bigger and bigger and bigger. And I'm wondering if there comes a point where that is not tenable.
There's no doubt we're going to come to that point at some particular
When do you think that's going to be, though? When does the Darwinian moment come?
That is the big question. If we stop today, so we no longer spend any more money in terms of building smarter AI systems, it could take up to 10 years to deploy the available applications across the ecosystem.
Right, okay.
So we're talking about tremendous value creation that's happening. It just takes time to deploy across the economy. We have never seen companies be able to scale their revenues at this rate before, going from zero last year to $500 million of average revenue run rate today. This type of business model hasn't existed before. This is the reason why, one, we're having this level of investment, but two, it's also an arms race. And you've got the very large incumbents, Microsoft, Alphabet, Amazon. They're on the wrong side of this, and they're spending to get onto the right side of this. They're going up against new competitors like Oracle, like OpenAI, that are going after their business.
But Storm, surely there must be some sort of bottleneck you're worried about. You're saying that everyone is telling you in Silicon Valley they need more computing power. In building these data centers and trying to get the electricity and trying to get the water to cool them, surely there is a bottleneck somewhere that does worry you.
Without a doubt, there's bottlenecks everywhere. The key question we were trying to work out last year, where is the return on spend? Now we're starting to see it across the broader economy. We just talked about drug discovery. That's going to be a 3 to 5 year story. We're talking about code vibing today. That's a killer app. That's the second killer app after ChatGPT. So vocoding coding means that even I can sit there this weekend and I can build an application. I've got no coding experience whatsoever. And that is just crazy. The impact that that's going to have across the broader economy, being able to digitize the analog economy, because up until now, software engineering has been the key bottleneck. So this technology is already starting to unleash key parts of the bottlenecks across the economy. But what we haven't seen is a tremendous increase in revenues and profitability across the broader economy yet. And then that's what's going to encourage and give the payback for this increased data center spend.
Yeah, and just a wider productivity gain.
Exactly, but I mean the data center build up when we moved to the cloud, it took time before they got the payback on that initial investment. This is exactly the same transition. So you transition first to the mainframe, to the enterprise, and then enterprise to the cloud, and then cloud to the AI infrastructure builder. It just takes time. The investment needs to come first, and then the revenues.
Well, speaking of investment, the U.S. government has been a big part, a big driver, a big supporter of this investment. The Trump administration, we've got 3.5 years left, right? Perhaps this government investment isn't as bullish next time around, and you're talking about timelines that are way longer than that. Is government investment something that's needed in the long term to help this, or is that not part of one of your concerns?
At this particular point, it's the speed of build that's important, and so there is an arms race between the US and China, and for systems to get through, these AI systems to get smarter from this particular point, the size of the compute that's needed to generate ChatGPT 5 or 6, but then to go to Grok 5 requires 10 times the compute that's been required so far. And so, therefore, the data center build-out that's required at this particular point over the next 2 years to compete on the broader scale is quite significant. What that means is that deregulation is important. Speed to build these data centers is important. But then these systems need to continue to get smarter, otherwise the payoff will not happen.
It's great to get your take. Really appreciate it. Fresh off the plane. Thank you very much indeed for managing the jet lag.
He's just made me think we're worrying about all the wrong things. Obviously, he's giving us the bullish take on the matter, but he's shrugging them off as if that's not the key issue right now. The key issue is how quickly we can get this money and this investment in place, how quickly we can build these data centers in order to help that blockade on computing power.
Yeah, but where does the money come from? That is the key question. And what rate does it come at, I guess, is another key question.
And if the U.S. enters a slowdown, maybe or maybe not a recession, is that money still going to be there?
Absolutely. There's many key questions. Storm, it's great to see you. Thank you very much indeed for stopping by to see us. We always appreciate your and Claire's time joining us on the show. Storm Maru, co-manager of the Lion Trust Innovation Team at Lion Trust Asset Management. Seems to be coping with jet lag better than me. Coming up, tensions rising on NATO's doorstep after Russia leads to a mobilization of troops in the eastern part of Europe. We've got war games taking place as well. Belarus is the key focus. We'll get the details of all of this next. This is Bloomberg.
Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform Also the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
What made you go back to politics?
Putin. I'll be very frank with you. Had Russia not attacked Ukraine, I would not have run for president of Finland. This was built in the 1800s later when the Tsar took over the palace. And this is mirroring the Winter Palace in St. Petersburg, but it's called the Hall of Mirrors. So we have the mirrors on the side.
So do you ever get used to it, or do you sometimes just walk in and think, wow, this is...
Every morning, wow, this is...
Have a seat. Talk to me about resilience.
It's something I think we in Finland know something about, actually. It's one of our key words. It's sisu, which is resilience, perseverance, grit, stamina. So you never give up. You just have to keep on pushing and grinding through the tough stuff. And I think a lot of Finns have that ingrained into the system because remember, we're a poor country. First we were under Sweden for 700 years, then under Russia for a little bit over 100. And when we gained independence in 1917, we were basically a poor developing country. And I think then this sort of idea of resilience, let's try to overcome, let's work hard, came very much a part of Finnish DNA. And I think I'm still part of that generation.
Welcome back to the opening trade. We're just over 50 minutes into today's trading session, and the green on the screen has faded slightly into the red. Euro Stoxx 600 trading unchanged. We have the CAC in the red. The DAX is just holding on to small gains. Over on Wall Street, also have the S&P 500 in the red, down 0.1%. Well, over to geopolitics, tensions have been dialed up after a volley of Russian drones breached Polish territory this week, prompting the government in Warsaw to seek a NATO response. Poland's Prime Minister disagreeing with President Donald Trump's view that the incident could have been an error. Well, Bloomberg's Francine Lacqua has a new show, Leaders with Francine Lacqua. On the first episode, she spoke to Finland's Prime Minister Alexander Stubb about the situation with Russia.
It's not looking good. I'm very honest with you. With the current regime and with President Putin, I don't see big change. Nations that don't have a capacity to deal with their past, they have a very difficult time to look into the future.
Well, Francine Lacqua is with us now and joins us on this premiere of her new show. Francine, what a guest to have, and what a timing to have this guest.
Yeah, he's been quite pivotal, actually, in all of the negotiations between Donald Trump, the European Union leaders, and, of course, Vladimir Zelensky of Ukraine. Now, it's really interesting speaking to such a leader from a small nation, but remember, it actually shares the biggest border with Russia, about 890 miles long, that he had known for a long time that actually Russia and Vladimir Putin was not to be trusted. So he explains that it took a little bit longer for allies of NATO to come to grips with that realization. But again, he also has a really interesting story because he was in politics, then he didn't win, he left politics, and here he kind of lays out the fact that he really has gone back to politics to fight Putin. Remember, 2022, with the invasion of Ukraine was a real wake-up call for Finland, and it's the year after that then they joined NATO.
Can I just say the whole thing just feels very Finnish, sort of brooding and dark. And it's
a bit scary.
Yeah. No, it's a bit scary.
A bit serious.
No, it's serious and scary, and you kind of get that from him in as much as he clearly is worried. This is we all grew up, we knew what the Russian threat was, we kind of knew it existed, the Cold War kind of ended, but it feels like it's back, and it feels like this is a kind of pivotal moment in it being back, particularly this week once you've had the kind of the Polish incursions. He is clearly a worried man.
Yeah, he is, but again, I think that the closer you are to Russia geographically,
and you don't get much closer than Finland.
Worried, right? You are. So we also went to the border, and you see the kind of miles and miles of dogs and the police and the big barricades, because you just have a feeling that anything could happen. Again, it's something that a lot of the Nordic countries and Poland have had to contend with for a long time. There's military service that's an obligation in Finland. You also have bunkers that they use for swimming pools at the moment, but they're just set up very differently to some of our Western countries.
We're going to bring that back. Sorry, bunkers are used as swimming pools.
Yeah, so they have bunkers that you could, that at the moment are like places of recreation in the middle of the capital. But if you need to use them, then they're there. And they've always been, a country, again, it's a small country, if you look at the number of population and people that live there, but that they're prepared.
Right, so war and swimming go hand in hand.
In Finland.
Yeah.
All right, that was Bloomberg's Francine Lacqua, and you can watch the full interview with the Finnish president at 5:30 p.m. in the UK or 7 p.m. Eastern time in the US. You can also watch it on the Bloomberg website and on the terminal. It's the first of 6 episodes in the first Leaders with Francine Lacqua. Fran sits down with the decision makers shaping our future to explore the personal stories behind their public personas. Well, let's look ahead to what else we have on the front when it comes to the day book. We do have some ECB speakers speaking later this morning at 9 a.m. We hear from ECB's Olli Rehn at 9:15 from ECB's Nagel speaking in Frankfurt. Later this afternoon, the attention goes to the U.S. The last big data print of the week is the UMich Consumer Confidence Sentiment Indicator, which also has that underlying inflation expectations component that is hotly watched by the street. And then after the market, the Fitch review of France.
Okay, Fitch review is going to be kind of interesting. But the point that was being made earlier by Volta Morti over Mundi, it's in the price. We are anticipating that we are going to see some downgrades here. And that's why we've got Italy and France trading at the same level.
No, but it's very interesting to read the rationale and whether they say anything about the current political environment and what they need to see from the next new government in order to prevent perhaps a further negative
that's
watch
not the
on their
current government,
sovereign.
that's the next new government you're talking about.
I know we've had very many, but the next one formed, the prime minister and what he's going to pick as his cabinet in trying to tackle the deficit. Maybe they say a number that they need to see on the deficit projections in order for France to maintain this rating.
New York Fashion Week, just heard about that. You're not going, I'm not going. That's not important. Rugby World Cup, Women's Rugby World Cup. I think we're into the quarterfinals now. Pay attention to that one. I think the Premier League is back after the international break. The Rhine in Flames.
It's a weird title, but it's a big fireworks show.
It's like 5 different centres along the Rhine with fireworks.
It's not a protest like in France. It's fireworks of celebration.
Yeah, okay. Sounds like it's fun. World Athletics also on the docket as well. It's going to be a great weekend. Have a great time. If you've got some spare time, Bloomberg Weekend Newsletter is something you want to be paying attention to. Fran is going to stay here. The Pulse is next. This is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Well, U.S. inflation and jobs data cement expectations of a Fed cut next week. Treasury Secretary Scott Bessent heads to Madrid for talks with China's Vice Premier to discuss trade, security, and the future of TikTok. Plus, Bloomberg learns that OpenAI and NVIDIA are set to pledge billions of dollars for UK data centers as they join President Trump on his state visit next week. Now, the other big thing we're watching, of course, are all these market expectations. Equities pausing in caution trading. Investors again weighing how much further a record rally driven by expectations of a Federal Reserve interest rate cut can run. So this is the main theme that we look for in the markets. Again, stocks have scaled all-time highs after a raft of data actually pointed to a strained labor market and relatively contained inflation. S&P futures down 0.1%, euro dollar 117.41, and then gold 3,648. If you look at the European markets map, and again, it is a tale of slightly different indices, with the CAC 40 down some 0.2%, but actually the FTSE gaining 0.4%. Remember, it's quite a commodity-rich and extremely big companies in the UK, and that's maybe the difference between, for example, Milan, France, or Madrid. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, it's been a big week in markets, politics, and, of course, tech. Wall Street has rallied as the data gives the Fed the all-clear to cut. Another political killing shakes the U.S. while the fallout continues from the Epstein email revelations. In tech, OpenAI also edges closer to becoming a for-profit company as it reshapes its relationship with its top shareholder, Microsoft. So there's a lot to discuss with Karim Shadid, head of EMEA investment strategy at BlackRock, and our very own Rosalind Matheson. So thank you both for joining us. Roz, let's get us started with OpenAI. I mean, it's a pretty big deal.
Well, that's right. And so you've got a company that started with these kind of charitable goals but became this behemoth. And how in all of that do you stay true to those originating goals? And how can you structure yourself to do that in the reality that you kind of need to start to return money to shareholders. And so the structural conversation has been very, very fraught. The idea now is that the non-profit arm basically gets a stake in OpenAI, possibly $100 billion, 20%, through a public benefit corporation. And being a public benefit corporation means, again, you are saying you're holding true to your originating goals of benefiting, society as a whole, but it gives you some wriggle room, essentially, to make money also and to return it to shareholders. And this idea of getting Microsoft in and agreeing to the structure, does that get over the line? It's not the end of the road, though, because you've got a couple of states scrutinising OpenAI and its structure. You've still got Elon Musk taking pot shots from the sidelines. I mean, and legally too, saying that he thinks that OpenAI is diverting from its foundational goals. So this is not the end of the line, but at least it's an effort to get some kind of structure in place.
Rosa, what can you tell us about Scott Bessent, who's also in Europe, actually in Madrid?
Well, interestingly, yeah, he's coming through Spain, it seems, on the way to the UK, no doubt, next week as part of Donald Trump's visit to the UK. And it's a grab bag of things he's going to be talking about with the Chinese vice premier. So obviously trade, but also money laundering, TikTok. I mean, we've got a TikTok deadline again at the 4th deadline, I think, coming up, because Donald Trump is extending it, the future of TikTok on the table. But what it does show is that there's quite a lot of conversation going on between officials between the US and China. This is not the only meeting we've seen of late at a whole lot of different levels, and it's all about trying to pave the way for a meeting between Donald Trump and Xi Jinping, maybe in October. I mean, they're going to cross paths before that in September, but the idea is before the trade deal that they've got, which is sort of temporary, is up again in early November. Can they have a proper summit? Can they collectively announce, hey, the two of us have got a proper deal between us, have that big moment? And so what those conversations are going to be about is really getting all those things knitted away to have that proper deal and that proper summit.
And Karima, I know a lot of the focus, if not all the focus of the markets right now, is on everything that's happening in the Fed. But again, I mean, it's just a big week geopolitically because of the US, China, because also of what we saw at the border of Poland. Is that fed through in the markets at all?
I mean, the way that we look at that is really to consider what's happening in gold. And when I zoom out and look at the bigger picture here, gold flows have continued to hit record levels this year when I look at the global ETF landscape. And this is because gold has been the go-to geopolitical hedge of choice. So yes, I think it has fed through. I was looking at the gold prices year to date, and they have challenged all-time highs 26 times compared to 12 times for the S&P. So it's definitely there.
So is the only way of diversifying away from, equity, is it all gold, actually?
No, so when we look at our investment directions, which we launched this week for the rest of this year, so what are the themes for the rest of this year, we focus on multiple ways to hedge portfolios and to think about diversifiers in portfolios in an environment where stock-bond correlation is at best unreliable. And so we look at hedge funds, and here we look at a blend of hedge funds, a mix of macro hedge funds, systematic hedge funds that can really act as you fund them from stocks and bonds as a diversifier in a portfolio alongside gold.
I mean, there's, again, a lot to talk about on central bank independence, which is one of our big themes that we've been trying to figure out. It feels like the next couple of weeks will actually be crucial, and then we'll get on to Fed expectations.
Well, yes, because we have the Fed coming up, but we also still have that legal case going on with Lisa Cook. And that's going to potentially bleed right into the start of the Fed meeting, because the White House is asking again in this kind of game of legal ping pong that we've seen over Lisa Cook. They want another stay. So basically they don't want her to be able to take part in the FOMC next week. She says she's preparing for it either way. But, they're asking the court to decide essentially on Monday, possibly, if she can take part. And so you've got the immediate impact of her participation in what could be quite an interesting conversation that week with the Fed, but also in the longer term, can the White House keep her out of her role while all these court cases are playing out? And so all of that's going to feed into the dynamic around the Fed next week, regardless of the conversation around interest rates, regardless of whether they cut interest rates, as many people expect they will do, because the economic environment demands that they cut interest rates. But whatever the Fed does from here is always tinged in the background with that sense of, was there any kind of political conversation in all of this? Was there a sense of the political mood in all of this? The Fed will say, we're moving interest rates because the economy says we should, and all the data, has been building up to that. But if they move in the direction that Donald Trump wants, people will still wonder.
Yeah, and I mean, to that very good point, will people wonder? And the market is actually, again, largely ignoring some of the independence questions.
Sure. I mean, let's look at the growth and inflation numbers and take stock. The market is now pricing 3 cuts for the Fed by end of this year and 6 cuts by the end of next. And I think that's a little bit overdone. It's a little bit too dovish for the growth inflation trade-off that we have in front of us. So when we look at the growth numbers, labor market is softening. There's no doubt about that. You see it in the non-farm payrolls last week. You see it in the jobless claims yesterday. So there's enough weakness there and enough disinflation to merit a cut next week.
That's a doubt. I mean, that's 100% undoubted. But that's very recent, right? It's since last Friday.
Exactly. Yeah. But when you look forward to 2026, I mean, you could start to see tariff impact on inflation numbers create an inflection. Yeah. You could also see a boost to growth from Fed cuts later this year amidst a tight labor supply causing labor market inflation as well. So there are multiple things we're watching for inflation inflection, which suggests that 6 cuts next year is too much.
Karim, what are you expecting, 50 or 25?
25 is our base case. I don't think enough faltering in growth has happened to merit 50.
In geopolitics, Roz, I mean, it was just very, very big week on multiple fronts. It's very clear that, the drones that were taken down by Poland just has everyone on edge.
Well, that's right, because there's obviously the conversation of, again, was there intent behind the drones that came into Poland? Donald Trump seemed to be saying overnight he didn't think it was intentional. You've got other people, including Ukraine, saying, hang on, you look at the trajectory of these drones, and it does look pretty intentional and towards a specific site inside Poland. And was this a tester? But again, because Vladimir Putin's, his ability is he tests and sees the response, right? So in the early days of the war in Ukraine, he kept on floating ideas of using nuclear weapons. He was always pushing to see just how far he can go and get away with it. I mean, I don't think anyone expected him to use nuclear weapons, but he kept putting it on the table. And this is what he does. He keeps everybody on edge. And what's very clear in all of this, including what we've seen inside Ukraine itself in the past couple of weeks, is that Vladimir Putin doesn't have any great intention to end his war in Ukraine anytime soon, whatever he's telling Donald Trump. And his gambit is that Donald Trump, wanting that meeting again with Xi Jinping, is not going to put economic pressure on China, which would be the real thing for Russia's economy and the Russia energy side. It's one thing to go for India, it's another thing to go for China. And the dynamic for Trump, the priority right now, is probably getting that meeting with Xi Jinping.
And Karim, the other thing we had this week is, of course, a new prime minister in France. It was, extremely interesting to look at the ECB president trying to not say too much on all of these issues. And then we have a lot of the officials from the European Central Bank now diverging on where rates should go next, with, I think, the governor of the Banque de France saying a cut is possible. What happens to the ECB from now?
Yeah, and I was in Paris this week, a very interesting time to be speaking to the market there. But I would say that, when we look at the ECB path, we do see them now in wait and see. So wait and see at 2% until we have a bit more information about the growth picture. In Europe, growth has not faltered too much, but it's still in a low growth environment. Our economist and our fixed income team is predicting about 0.5% growth for the next year. So it's a pretty meager growth environment. I think as we enter the last months of the year, we could see one more cut from the ECB. Lagarde certainly kept that door open this week, but it's not a done deal.
Okay, thank you both for joining us. Karim Shadid there from BlackRock and our very own Roz Matheson. Coming up, as Russia breaches Poland's airspace, as we're just talking about, the U.S. is also rocked by a political killing, and France gets another prime minister. So it's been quite a week in geopolitics. We'll be speaking to Ian Bremer, founder of the Eurasia Group. That's next, and this is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question. You said they ask interesting questions.
Bloomberg Television. Top experts, great questions. Wednesday, the Fed decides.
The real debate is going to be about the outlook.
The economy's slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance. The Fed decides, starting at 1:30 p.m. Eastern.
Where do you see Russia going?
Oh, it's not looking good. You know, I'm very honest with you. With the current regime and with President Putin, I don't see big change. You know, nations that don't have a capacity to deal with their past, they have a very difficult time to look into the future.
The world marvels as tiny Finland halts and holds the giant invader. Soviets may command the sky of Finland, but the invader will meet resistance on Finnish soil.
There is this, you know, imperialist DNA and undertone in Russia, which doesn't seem to go away. Russia is built on empire. That's why Putin talks about the Ruski Mir, Great Russia, borders to the 1800s, which has, you know, one language, one Russia, one religion, and one leader himself. So I'm not very hopeful about the future of Russia right now.
And you can watch the full interview with the Finnish president today at 5:30 p.m. in the UK. That's 7 p.m. Well, it's not separately. It's 7 p.m. Eastern in the U.S. And you can also watch it on the Bloomberg website and on the terminal. It's the first of 6 episodes of the first seasons of Leaders with myself, Francine Lacqua. Now, President Trump says incursions by Russian drones into Polish airspace could have been a mistake, a comment refuted by the Polish Prime Minister Donald Tusk, who says it wasn't. It comes as NATO prepares defense measures to strengthen deterrence across the alliance's eastern flank. Now, to discuss the global geopolitical landscape, we're joined by Ian Bremmer, the Eurasia Group president and founder. Ian, thank you so much for coming on.
Hey, Francine.
Congratulations, first of all. Also, you had a great summit yesterday discussing a lot of the geopolitics things that we're going to do now. Look, this week had it all, really. What do you make of what happened in Poland? Is this like a step up from Russia? Is this, you know, retaliation, or is this escalation?
Oh, I mean, it's a test. The Russians are testing NATO. They're testing the United States. They want to see if they can get away with this escalation, if they can drive a greater wedge between the United States and Europe. They have no interest in having talks directly with Zelensky, despite Trump and others' efforts to make that happen. They have no interest in a ceasefire, despite the willingness of Zelensky to accept one without preconditions. And they have found that the United States said nothing for 24 hours from the White House. There was a strong statement, by the way, from the U.S. ambassador to NATO, but he's not the president. And the president looks radically different on this issue than every other major NATO leader, of course, including Mr. Stubb, our friend Alex, who you were just talking to.
But Ian, is Putin trying to engage NATO in a war, or is this just testing the limits?
It's not meant to engage in a war. There was no military strikes, and so as a consequence, there would be no Article 5 question. But the idea that the Russians have sent 19 drones into Polish territory, one of which was down some 300 kilometers inside Poland, this is not like the earlier occasional Shahed that was going through the edge of Polish airspace into Ukraine, which by itself is unacceptable. But this is a significant ratchet up. What can we get away with? And what the Europeans are finding, what the Ukrainians are finding, and I've had many talks in the last 24 hours with European leaders on this, is to a man, they all say the United States is increasingly unreliable as an ally. Now, that is music to President Putin's ears. That's exactly what he wants to see, especially coming off of that big World War II commemoration where he's standing on stage with Kim Jong-un and, much more importantly, Xi Jinping. So the Xi Three, as I've been talking about them. I mean, this is a more significant strategic relationship between Russia and China than heretofore. Increasingly feels like not an alliance, but it matters on the global stage.
Yeah, but yeah. So what's the right way for President Trump to look at this? I mean, after all, he's the one who.
But when you say right way, what do you mean by
Alaska.
right way? Explain what do you mean by right way.
So he brought Vladimir Putin right to Alaska, rolled out the red carpet, and saying actually he listens to me. And in the last 2 to 3 weeks, we've seen anything but that. How does he save face?
Trump has to, from Trump's perspective, he blames other people. So he comes to the Europeans, he says, okay, 100% tariffs if you're willing to put them on China and India because they buy all this oil, then I'm with you. Knowing full well that is a non-starter. Lindsey Graham, Republican senator, very close to Trump, has been trying to do the same, talking to Europeans directly, saying, hey, if you guys do this, we're willing to do this. Trump knows full well this is not happening. So from Trump's perspective, what he needs to do is blame somebody else. Blame Zelensky for treating him badly. Then he buckled under, so now blame the Europeans for not doing enough. They're stepping up. They're doing more militarily. Blame the Europeans for not taking on the sanctions. It can't be Trump's fault. It can't be Trump's fault. Trump is not to be blamed for anything. Now, Trump did say, of course, that he was going to resolve this war in 24 hours. He did not say 24 consecutive hours, so perhaps it'll take a little longer. But he has admitted of late that this has been a lot more difficult than he expected. This hasn't gone the way he's wanted. That's the closest he's admitted to geopolitical defeat on a major issue over the last 9 months. And Trump doesn't like that. He's not comfortable with this. He wants this issue to move on. He wants it to be somebody else's problem.
Does Donald Trump want to be part of that Xi 3 group?
Do you want to be part of the Xi 3 group? No. No, he doesn't. You saw the posts when he said that they're conspiring against the United States. He doesn't like it. He doesn't like the fact that he wanted to get the Chinese to, sort of buckle under when he did his Liberation Day, and China didn't pick up the phone, and they put their own tariffs on just as much as the Americans did, their own trade embargo, and then they squeezed the Americans on critical minerals, so much so that the Americans had to back down. Trump also wasn't happy with Kim Jong-un. He did his big, beautiful letter, the most beautiful letter, the love letter that he got that first time around, exchanged it, showed it to people, couldn't get anything done, so much so that we now find out just a few weeks ago, New York Times reporting quite something, that Trump ordered a SEAL team to invade North Korea to plant a surveillance device. He failed. So what we're seeing with the Xi 3, with Xi Jinping, with Vladimir Putin, and with Kim Jong-un, it turns out Trump doesn't have the cards. And that's a very uncomfortable place for the most powerful leader, the most powerful country to be.
Ian, the assassination of Charlie Kirk was shocking to everyone. How does it change America?
It's devastating. It's horrifying. Charlie Kirk, whether or not you agree with his political views, was someone that engaged in debate. He was someone that believed in talking to all sides. He's someone that steadfastly opposed political violence, opposed civil war. He did not want to weaponize institutions against fellow Americans. I think that's an extremely important message. It is one that has been lost in the hate and the anger that has come out as a consequence of his senseless, horrible death. Political violence has no place in my country, and yet we're seeing increasingly significant amounts of it. It's pitchforks. There's a lot of anger, and the likelihood that we see a demonization of a group of Americans as a consequence of this, I think, is significant. Political violence usually begets more political violence. And certainly there's a great lack of empathy. There's a great lack of compassion. There's a great lack of trying to meet people where they are in the United States. I think Charlie Kirk was part of more civic engagement, and his assassination is going to leave a hole.
Is there anyone that can bring the country closer together, that basically heals some of the divisions politically? I mean, it's a country that's split on the political front, ideologically.
There are a number of major wars going on in the world right now. They're escalating. We just talked about Russia, Ukraine, and the Poland issue. You can talk about Israel and the axis of resistance escalating. The war between Americans and Americans is escalating too. It's not a civil war, but it is a political war.
Could it be a civil war?
No, I don't believe it could, but it could get a lot worse than it presently is. I mean, we could see a significant amount of internal violence, of social discord, that could make the United States a much less representative democracy, could make it much harder to have legitimacy in your political leaders. And there are forces in the United States that would like to see that happen. I was
Political
very
forces?
chilled. Yes, I was very chilled by Stephen Miller's deputy chief of staff in the White House, his post, which I think is the most politically significant that has come out in the United States since the assassination, which was vehemently ideological. It was strident, and it was forceful. And it was there was no willingness to bring down the temperature. It was, let us use this to maximally escalate the agenda that we want to put forward. And some of that agenda feels to me very extra legal, feels outside the Constitution. And of course, Trump himself does not believe that laws should apply to the president. He believes that the U.S. president stands above the legal system. They've made that argument to the Supreme Court of the United States. As checks and balances erode in the U.S., and some have eroded, the Republican Party will not stand against him on any issue. The Supreme Court will, and the military will. But the U.S. is today the weakest and most dysfunctional of G7 democracies. And that is a serious concern, given it's also the most powerful, it's most economically successful.
Ian, I have 40 seconds left, but I have a viewer question on social media. How is this fueling actually some of the hatred?
Look, when you see a figure that was this beloved, a young guy, 31 years old, on a college campus, a father, a husband, gunned down and I inadvertently saw the video, and it stopped me in my tracks. I think that this creates so much hurt and anguish and pain in a country that has a lot of political dysfunction, a lot of guns, a lot of mental illness, a lot of drug problems, and isn't fixing it. It's going to cause a lot more political violence.
Ian, thank you so much for joining us today. Ian Bremmer there, Eurasia Group president and founder. Coming up, we'll go back to our other top story, which is tech. OpenAI and NVIDIA set to plan to pledge billions of dollars in UK data center investments. We'll have plenty more in our scoop next. This is Bloomberg.
opinion at least, the reason that the U.S. is so creative and innovative and has so much interesting development and has, most of the largest trillion-dollar businesses is because we have the best capital markets. And capital market development is really what creates the funding in order to pursue ideas. So in America, any idea you have, there's a market for it. Right? So building markets like the securitization markets in the U.S., really allowed for non-financial companies to get into the financial industry business. And that was really a derivative of making the securitization market so competitive. So building securitization markets and continuing to grow markets and figuring out how to continuously fund ideas, I think that's going to be the next stage of growth for these markets.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, everyone, and welcome to The Pulse. I'm Francine Acqua here in London, and these are your top stories. U.S. inflation and jobs data cement expectations of a Fed cut next week. Treasury Secretary Scott Bessent heads to Madrid for talks with China's vice premier to discuss trade, security, and the future of TikTok. Plus, Bloomberg learns that OpenAI and NVIDIA are set to pledge billions of dollars for UK data center investments as they join President Trump on his state visit next week. So the ECB Governing Council member Christodoulos Pastadilis says the central bank is in a comfortable position and has no need to lower rates further to deliver stable inflation. Well, he spoke to Lizzie Burden after the ECB left its deposit rate at 2% for a second meeting.
The risks to inflation are balanced. Nonetheless, we do live in a world that is becoming all the more uncertain. So uncertainty is on the rise on many fronts: geopolitical risks, trade tensions, and other developments across the globe. And therefore, even though we are saying that the risks are balanced, this is not a very strong argument to make, because of the existence of these risks.
So with all of those risks in mind, is it sensible to keep your monetary powder dry?
It is. It is sensible to keep our monetary policy dry, but at the end of the day, we do forecast, we do make our projections as needed, and we do expect that these things will play as per our projections.
So if you were to move again, would you need forecasts to vote to do that?
We would need additional information. There would have to be a significant difference in economic fundamentals, in economic projections, and other data. So yes, we would.
But to be clear, is October live? You could move without those projections?
One cannot preclude anything. Yes, we could move if the need arises, if there is an event in the economy that warrants a change in the interest rates.
Well, that was the ECB Governing Council member Christodoulos Pastadilis. Now, Sébastien Lecornu took over as France's prime minister this week, pledging big changes to try to rein in the country's debt amid hostility to budget cuts. Now, to add to his entree, Fitch may downgrade the country's credit rating later today. Well, joining us now is Jean Dalbach from Bloomberg Economics. Jean, thank you for joining us. So the government has collapsed and a new prime minister has been appointed. What comes next? Is it going to be practically impossible to get a budget through?
I mean, his new job is basically to try to strike a budget deal with the center-left and the center-right. And for that, he will have to make some concessions, both on the size of the fiscal package, but also on the measures to be implemented, and especially on the taxation of the more wealthy people in France. And it would be particularly complicated, especially because the deadlines are pretty tight. He should present a budget to Parliament before the end of the first week of October. So it's a pretty short period of time.
So what would be the impact if Fitch were, for example, to downgrade France tonight?
So absolutely, yes, the French rating is at risk. We think it would be a pretty close call because Fitch is laying out some conditions on the medium-term fiscal plan which are not fulfilled by France. But in the meantime, the growth outlook has been pretty good in France recently, so it would be a close call. And we think the impact will be very moderate because basically it's already priced in. France is currently trading like a BBB, like Italy, so it's priced in. And we think the main driver of the spread is basically the political premium at the moment. But if we look ahead, the main risk for France is not Fitch. It will be the closing rating gaps with Italy and with Spain, which will bring more competition from other European issuers, and that's the main risk for France, basically.
Jean, thank you so much. Jean Dalbar there from Bloomberg Economics joining us from Paris. Now, here in the UK, Peter Mandelson's advisory firm is cutting ties with him after emails published by Bloomberg showed he believed Epstein's first conviction in 2008 was wrongful and should be challenged. Global Counsel, the strategy and communications firm, was founded by Mandelson with Benjamin Webb-Prosser in 2010. The cachet of embarrassing emails saw Mandelson sacked as Britain's ambassador to the US yesterday. And Bloomberg has learned that the leaders of OpenAI and NVIDIA plan to pledge billions of dollars in support of UK data center investments. Now, this comes as US tech executives join President Trump on his state visit next week. Sources say the two companies are teaming up with London-based data center business Nscale. Now, for more on our scoop, we're joined by our Bloomberg Tech Europe anchor, Tom McKenzie. Tom, thank you for joining us. Congratulations also on a great tech edition today. But what else do we know about these data centers and the investment pledge that the Americans will put forward?
Yeah, so Jensen Huang will be here alongside Sam Altman, of course, of OpenAI, so the leaders of OpenAI and NVIDIA with President Trump. And the idea is, or at least according to our reporting from our team, is that they're going to be committing potentially tens of billions of pounds, particularly around the infrastructure piece, so data centers, which will house, of course, those NVIDIA chips. I think a key question going forward for the UK is, do we have the energy to be able to support those? Because energy prices in the UK are more than 3 times those of the US. And in terms of the spend, tens of billions sounds like a lot, but if you compare it to the commitments of $500 billion US dollars just for the Stargate project in the US alone, it really kind of pales into comparison. The Prime Minister and his team will certainly cast this as a step in the right direction, and it is a Prime Minister who is committed, he said, to ensuring that the UK is building out this infrastructure. So it will be a move in the right direction. There's question marks about the energy, and there's question marks about whether or not it's really going to close the gap, or at least position the UK when it comes to the infrastructure piece that powers these models.
Talking of AI, you had a fantastic interview with Demis Hassabis of Google, one of the greatest minds, I think, in AI. What did he tell you about the role of AI in medicine and the goals they're trying to achieve?
So we really lifted the lid on the unit at Alphabet that's called Isomorphic Labs, which he co-founded, which he founded, and of which he's the CEO. And the mission statement of this business is to solve all disease. It sounds almost ludicrously ambitious, but this is the team that solved the protein folding question that had befuddled biologists for more than 50 years, that many thought was impossible. They did that with AlphaFold 2 with their model. So they are building on this, and they have models that are more powerful than AlphaFold 3. He thinks ultimately we can get to a place where we can shorten drug discovery times down to months, weeks, possibly even shorter. He thinks that could happen in a couple of years. He also thinks that solving the question of cancer, tackling cancer, is a proposition that could happen in our lifetimes. Take a listen.
The kind of holy grail in a way is to try and tackle cancer, but we've also done it for practical reasons as well, because the clinical aspects of that are favourable for new drugs, because obviously the disease is so serious.
So Sir Demis Hassabis talking to me exclusively. look, he was very clear there are still scientific and technical hurdles that need to be overcome before you get to that point. But he says progress is being made, and crucially, shortening that time frame around drug discovery, he thinks that could be something that we look at in the next couple of years as a real impact. He also talks about the talent wars, by the way. I asked him about Meta and Mark Zuckerberg spending $200 million to attract individual names to Meta. He said he actually thinks it's rational because he thinks this technology, AI, is going to be so transformative. He thinks within that context, the spend on that talent makes sense, essentially.
Tom, thank you so much. As ever, Tom McKenzie, their host of Bloomberg Tech, with that great interview with Demis Hassabis. Now, the UK's attempt to position itself as a tech powerhouse has received a boost with our scoop that we just discussed, OpenAI and NVIDIA setting to invest billions in data centers. But London is also keen to lure tomorrow's big companies to IPO in the city. Now, this week saw Swedish startup Klarna list its shares in New York, bypassing the London Stock Exchange. Well, one company that is optimistic about Britain's fintech sector is credit score provider ClearScore. Its CEO and founder, Justin Bazzini, joins us now. Justin, thank you for being here. So why are you optimistic about the UK? Or London specifically? Is it the UK or London?
UK generally, but
Fine.
London as a market. UK is still a great place to start a business. We have fantastic universities, fantastic talent. And what you see in the fintech sector is you see a huge amount of great companies being created in the UK. And the Klarna IPO is a fantastic example of money being returned back into new companies that will get invested. And so what we need to see is we need to see that happening in the UK.
Are you not frustrated that they didn't IPO on the London Stock Exchange but decided to go for the US?
Well, I think, Klarna's a fantastic business and they'll make their own decisions. I think there are lots of reasons why one would think about listing in the UK. For ClearScore, we've just announced our results, so we're up 17%, up to 90 million in the UK, making close to 20 million of profit. And as we grow over the next few years, the UK will be a natural home for us, I think.
What's the most difficult thing to do if you're in the fintech space? Is it getting access to scale? Is it growing bigger? Is it having access to Europe? Is there anything that this government could do to make your life easier?
Yeah, I think the UK has done a great job over the last sort of 15 years of creating incentives to invest in startup companies, and we have a lot of startup companies here. The challenge for the UK now is how do you scale companies to be globally consequential? And so what needs to happen now is we need to see the cadre of companies like the ClearScore Group, but there are many who are now really starting to scale in the UK and internationally. We operate in 5 markets around the world, close to 26 million users. And what the government can do is really start to use, fast-track regulation, start to open up markets, support exporting, so that you can create these companies that are globally consequential.
Justin, I yet have to meet a CEO that likes any kind of regulation, but is this because there's too much regulation? Is it because it's the wrong kind of regulation? Or it's just there's too much red tape?
I think fintech is founded on regulation. So, you need to have strong regulators. You need to have the rules that are clear. I think what we would want is which I think this government is doing, is starting to really try and get coordinated regulation and to try and speed it up so that decision-making is quicker and so that we have more confidence that we can move through into other vectors of growth, and the regulator's going to support us in that.
Are you seeing quite a lot of pool of capital from outside? Again, we look at the budget. It was last year. We have a new budget November 26. Some of the things that are just applied to companies, how much of a setback is that for, fintechs, given you may want money from big U.S. investors or pension funds?
I mean, the UK is still a great place to raise money. All of the major funds around the world invest both privately and in the public markets in the UK. And so you still get a huge amount of access. Obviously, anything that hits profitability or potential profitability means that you need to factor that into your plans. But the UK still has a huge capital base. I think one of the things that the Chancellor could do, and we're very interested in, is bringing retail money, more pension money into private capital, private companies.
Which they're trying to, right?
They are
Is that fair? Is it making a difference? I mean, it's like 5-6 months old.
I mean, I've spoken to 4 or 5 of the major pension funds in the UK over the last 6 months as we start to think about IPO IPO and as we start to think about bringing those institutional investors on board. And they're interested in companies which grow and also return profitability. And that, something like the ClearScore Group and many of the other fintechs have that real sort of balance between high growth and profitability, which I think is important for success in the UK market.
Can you find the right people to hire?
Access to talent is always a challenge, but we have to remember that the UK still has a great set of potential employees, great universities, a great skills base. We need to continue to invest there, and we need to continue to support that.
Just how do you think about the skill space going forward? Again, with AI, I mean, there are a lot of kids at university that don't really know what the jobs of tomorrow will be. Some of the doomsayers say, look, there are only 5 real jobs that will stay as is from what we know now. How do you see your workforce developing in the next 10, 15 years?
I'm actually super excited about it. You know, you see, like the bedrock of any good economy is innovation, and the ability to create new ideas and to execute them now, given AI. The barriers to entry are so much lower than ever before. And so I spent time in universities, and you can see all of these young people, hugely talented, able to execute their ideas very, very quickly. And so I think AI is going to be a real driver of productivity. And I think if you can combine it into your company with really talented people, that's the sweet spot.
You hear in the corridors of power that actually there could be a brain drain from the US into the UK because it's an English-speaking country, because some of the things that the Trump administration is doing with universities. Is that true, or is it wishful thinking?
I think from the conversations that I have at universities, they are seeing applications from US students and academics increase over the last year, and I think that's a great thing. The UK still has an incredible university sector, some of the best universities in the world, and so that talent coming to the UK, I think, is going to be a great thing.
What can I see for ClearScore? So what are you expecting? What are your targets over the next 18 months and then for 3 and 5 years?
Yeah, we want, over the next 3 years, we want to double the business. So we want to move towards 50 million users. We want to move into other markets. We think there's still a lot of opportunity in the UK. That will take us up to close to sort of 250 million pounds of revenue and 50, 60 million pounds of profit. We think at that stage that is a very, very exciting prospect for institutional investors, and we might think about an IPO. We're not slavish about that, but we think that might be a really exciting future for ClearScore Group.
What are you thinking? Where would you list?
London.
No question.
I mean, we'll look at everywhere else, but, you know, we have a UK franchise. We're a well-known brand in the UK. 75% of my revenue comes from the UK. And I think our combination of, as I said, growth and profitability will be very attractive to UK institutional investors.
So good. Justin, thank you so much for joining us. Justin Vizzini there, a chief executive and co-founder of ClearScore. Now, coming up, we'll take a look at what Giorgio Armani's will means for the future of his fashion empire. That's next, and this is Bloomberg.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
When I was playing golf with President Trump, we had a really good time.
What was President Trump like on the golf course? You
very
played
pleasant,
for 8 hours?
Very talkative. You know, golf is a nice social setting. And again, going back to my dad, I remember my dad being very encouraging and saying, you know, Alex, even if you don't become a golf professional, golf will be useful for you one day. And I was going, yeah, sure, Dad. And sure enough, there I was on the first tee with President Trump. And, you know, I had a good time. And it doesn't, you know, the fact that you have a good time with someone doesn't mean that you agree with them. Especially coming from a small country. What you want to do is you want to, you know, nudge things in the right direction. And that means that you have conversations which sometimes can be difficult and awkward. Sometimes they can be good. And then, you know, the rest of it is about getting results. And I hope I get results with my diplomacy.
But if you have a good time, does it mean that they listen to your arguments more?
I don't know. You have to ask them.
What did you learn about him? I mean, is he different?
Actually, you know, this is the thing. And I've always said this, that funnily enough, and I hadn't really played golf for 35 years. I mean, when I quit, I quit. So, but I've always said it. You learn about the personality of a human being on the first hole of a golf course. You see if they're edgy, if they are impatient, if they're frustrated, if they're fun, if they're relaxed. And I have to say, I had no uncomfortable moments during that round. And we hit good shots and bad shots. So, you know, people are quite different on a golf course sometimes.
Well, another reminder that you can watch the full interview with the Finnish president today at 5:30 p.m. in the UK and then 7 p.m. Eastern in the US. You can also watch it on, of course, online on the Bloomberg website and on the terminal. It's the first of 6 episodes of the first season of Leaders with me, Francine Lacqua. Now, the Fed looks set to dominate headlines next week. Underlying U.S. inflation rose as expected in August, keeping the Federal Reserve on track to cut interest rates. Ven Ram, Bloomberg's MLive cross-asset strategist, joins us. Now, Ven, thank you for being on. U.S. CPI data, as expected, keeping expectations for a rate cut from the Fed. I mean, is there any world where the Fed doesn't cut?
Well, I think it's hard to see envisage a world where the Fed doesn't go next week because, you know, all the economic indicators that we've had since the June meeting and the July meeting, they show that, you know, the economy is shifted down to a lower gear. And I think that, you know, that it's pretty obvious that the next 2 rate cuts are kind of the easy pickings for the Fed. I think they've got room to cut till 375. The question really is for the next week's dot plot, Francine, is what happens with with the dot plot that they indicate. I mean, they've indicated 2 rate cuts this year. I think that they will move to 3 rate cuts this year, which is already priced by the markets. But also what happens is, how much will they pencil in for next year? They penciled in just 1 rate cut for next year after 2 rate cuts this year. So I think that, you know, that's going to move a lot. And I think they will indicate 2 more rate cuts probably. But all this needs to be kept in mind in the context of a Fed composition. The FOMC composition is going to change next year. We're going to have a new Fed chair next year. So I think, you know, the question is to what degree the markets believe the dot plot from next week is the question. Which is why if you see the 2-year Treasury yield, Francine, it hasn't moved much. You would have expected it to rally, but it hasn't happened.
Ven, I mean, the other big market story this week, of course, is what happened with France. There's a key review this afternoon on France's debt rating. What are you expecting?
Well, I think that, you know, Fitch has already indicated a negative rating outlook that makes the likelihood of a rating downgrade that much more likely, that much more imminent. And I think I wouldn't be surprised, for one, if they actually lowered the rating this evening. But having said that, I think that France is already trading like a credit that's much worse than what it is. It's not trading like a AA- credit. It's trading like a BBB credit. I mean, it is trading on a par with Greece. It's trading on a par with Italy. So I think that, you know, traders are already discounting the news heavily. So what will be interesting if Fetch downgrades the rate, the market does subsequently when the market opens on Monday, since much of the rating downgrade is already factored in.
Then overall, I mean, because of next week, and the Fed pivot, is that going to change probably certain asset classes or other currency and bond markets across the world?
Well, what's been interesting, Francine, is that, the dollar is, it used to trade with a definite risk premium, negative risk premium that was embedded into it following the Liberation Day tariffs. And in April and May, that risk premium was pronounced to the extent that it was trading at nearly a 6% discount to its fair value. But what we have seen of late is that it has closed that gap. It is just nudging the gap, and it's the differential between what the models show and where it is actually trading is less than 1% deviation. Shows a less than 1% deviation. That suggests that the risk premium has gone away. So the dollar is purely going to be a yield differential play going forward. And that Sell America theme has gone away for the markets, at least for the time being. And that's the most significant takeaway for the dollar investors.
Ven, thank you so much. Ven Rand there with the very latest on some of the market dynamics. Now, Bloomberg has also learned that Giorgio Armani has left the entirety of his closely held company to his foundation, family members, and longtime aide, Leo Dell'Orco, who will oversee the Italian fashion house following the death of his namesake founder. Now, the details of Armani's will also sets up conditions for the foundation to sell an initial 15% in the company to LVMH, EssilorLuxottica, L'Oreal, or another company of similar standing within 18 months. Well, joining us for more is Andrea Felsted from Bloomberg Opinion. Andrea, thank you for joining us. I mean, this is kind of like a huge development in the story.
I was really surprised to see this because questions had been, would there be conditions for him to sell? Would the foundation sell, etc.? Well, it looks like they can sell, so that's been one thing answered. This seems to really set up the next big takeover battle in luxury, allowing for a 15% stake to be sold, and then potentially more later on. Armani's a huge name, it's big. There are very few luxury assets that become available to buy, and if they go, they don't come onto the market again. So there will be a lot of interest in this business.
So, Andrea, what happens? I mean, again, it's the name of Armani is really quite incredible. It's one of the only few independent companies that has remained. But do we know anything about sales? How have they been doing?
They were about 2.3 billion euros last year, which was slightly reduced. It's a very well-known business, but it's also a complicated business. It's fractured into lots of sub-brands. Any buyer will need to simplify that. It's also got the licenses to Essilor and L'Oreal, which is why they have also been named. But really, Bernard Arnault has been bequeathed a great gift being named in the will. So, he looks to be in pole position to take it on.
I mean, does a big company like LVMH know what to do with Armani?
Yes, I think so. Armani is very focused on clothing, so the opportunity is in leather goods, which are the real profit drivers of the industry and where LVMH really excels. You've got the beauty and the eyewear, which, as I said, are licensed. He was also one of the few designers, along with Ralph Lauren, to really realise the power of moving into hospitality, the hotels, the restaurants. That's a very big opportunity. Really, that's where the future of luxury is going. And it's also where LVMH has been moving quite slowly. I think they would have gone more into this area if we hadn't had the downturn. So there's huge opportunities, but also a lot of work to be done.
Andrea, thanks so much. Andrea Felsted there from Bloomberg Opinion. Now, coming up later today, the chairperson of Tesla's board of directors, Robin Denholm, speaking to Bloomberg Tech. That interview at 4 p.m. London time. Up next, Bloomberg Brief, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Based on the data that you've seen, do you think it's a good idea now for the Federal Reserve to lower interest rates?
The Fed doesn't want to lower rates and appear to be kowtowing, if you will, to President Trump's language. On the other hand, I think there's actually room for them to lower rates. If you look at the Fed's beige book, which the Fed reacted to last year when they started lowering rates, I think there's room for them to take action now. And if I were the Fed, I'd start thinking about going ahead and lowering rates. Real rates are very high right now relative to history, and of course we have a pretty significant term premium built into the term structure of interest rates right now.
So let's talk about the Fed's goal, which is 2%. Is that too low a rate to really get to at this point? And does it have to be at 2% or in sight of 2% before the Fed should lower?
They have a credibility issue right now. The Fed has to get to 2% because that was the target that they set. Although they've already started to project that they're willing now to target a range of inflation, which I think is the approach they should have taken all along. But they're going to get to 2%, and I think the trajectory is still in favor of the Fed's 2% target. And what we're seeing on a shorter-term basis is that's where rates are actually going to in terms of the inflation level, and I think the trajectory is their friend.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Future is taking a little dip after U.S. equities post fresh records. Investors now awaiting the latest inflation expectations print to wrap up a data-heavy week. OpenAI says it's getting closer to turning into a for-profit company after painstaking negotiations with top shareholder Microsoft. And trade talks set to continue with the U.S. and China scheduled to meet in Madrid next week. So as I was saying, futures taking just a little dip, but don't forget we're up 1.5% on both indices, the S&P and the Nasdaq 100 for the week so far. So we'll see if we continue in the red throughout the day or if that takes a little bit of a turn. You might take a look at gold for an indication of some nervousness. We're about $30 off our record. 36.41 is where we're trading at now, but the real action the last 2 weeks has been in the bond market. So let's take a look. If you look at the 2-year yield, we were trading at 348 Monday. We're up 7 basis points. If you look at the 30-year yield, we were trading at 478 at one point on Monday. We're down 13 basis points throughout the week to 465. Now, that is a massive shift, and that's not even speaking of the moves the week before. We're going to dive into all that today. But for the moment, let's take a look at some individual equity movers, and for that, we'll go across to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with Microsoft. Those shares are in the green, up 1.5%. This comes after a joint statement between Microsoft and OpenAI. Details a memorandum of understanding about their next phase of their partnership. It's also precluding perhaps that OpenAI would be moving more to a traditional for-profit model, and that has to do with them giving $100 billion in equity to the nonprofit. Microsoft is gaining on this news of this new stage of their partnership between OpenAI, up 1.5%. Moving on to earnings, Adobe, this is the creative software provider, surging after earnings, up 4.3%. They beat when it came to many metrics and raised their full-year guidance, and this really puts to bed some worries about competition, fierce competition from new AI incumbents. Adobe seems to be holding in there just well, up 4.3% after earnings. Lastly, Warner Brothers, this stock surged near 30% in the trade yesterday. yesterday, rising again today, another 4.3%. This is on the back of reportedly Paramount preparing a bid for the entire company, backed by the Ellison family, which could potentially take the legacy media operations out in Hollywood down to 4 from 5. Bonnie?
Valerie Titel, thank you so much. And later in the show, we'll wrap up the big week of data and look ahead to the Fed with Monica Defend at Amundi. All major U.S. equity benchmarks hit new all-time highs following that CPI print that should keep the Fed on track to cut rates next week. Joining us now is Ben Ram, cross-asset strategist for Bloomberg News. Ben, can we look at the bond market for a moment? What is this flattening telling us that we would never see if we just looked at equities?
Morning. Absolutely. I think that the flattening has caught many investors by surprise, but I think I've been saying that for a while now, that there is the risk reward is in favor of a mild flattening in the curve, because, I think that, the most significant development that's happened in the US in the past 1 month or so is that the sell America trade that we were seeing in the bond market is no longer working. At least it's hit a pause button. And I think that, investors are sensing, given the dovish Fed and given that inflation seems to be about okay, we need to be cautious on inflation here, but it seems to be at the moment under control. And I think we got those wholesale inflation print earlier this week that showed actually prices actually fell, which kind of suggests that inflation down the line may be under control. And that is giving a dash for duration. And particularly, as you were saying, we have seen that at the 10-year point of the curve and the 30-year point of the curve, it's moved a whole lot in the space of just a few days. And that's the optimism that markets have, the sweet spot, if you will, in terms of the risk premium waning and the inflation metrics being rather under control, and a Fed that is going to cut rates.
Now, we do get one more indication about inflation today at 10 p.m. with the University of Michigan sentiment data. Any possibility of a surprise in inflation expectations? Because if we did get that, that would certainly give the Fed a tiny bit of pause, for sure.
Absolutely. I think that, regardless of what, the Michigan data shows, which is a consumer survey, I think, if you look at U.S. inflation swaps, if you look at U.S. one-year inflation swaps, they're thinking that inflation is going to be bobbing around current levels or a bit higher even. And I think that, that is the metric that matters more for the Fed. And I think that they are acutely cognizant that the room for them to cut rates from here is not very much. If you look at the Taylor rule rate, it is positing a rate of about 3.75 based on realized inflation. And I think that, that's about 2 rate cuts from here. So I think that, the Fed has room to chew on in 2 rate cuts. But the question really is what happens beyond then? And that's that uncertainty that will keep the market traders a bit nervous going forward.
A quick mention of gold, then. We're just $30 off our high. Is that indicating nervousness that we're perhaps also not seeing in this equities rally, which, by the way, is a global equities rally, not just the United States?
Absolutely. I think that, gold is ripe for some profit taking. I think it's run up a whole lot in the space of a short period of time, whether you look at it this month or whether you look at it year to date. It's run up a whole lot. And I just ran an article earlier this week, research on the terminal, that shows that gold has moved about $800 over its fair value. So I think there is some caution warranted, albeit gold has momentum working in its favor. Central banks still buying gold, working in its favor. So the short-term momentum is there, but it is vulnerable to some profit taking.
Ben, thank you so much. Always a pleasure. Ben Ram. Turning to tech now, OpenAI said it's closer to converting into a for-profit company. That headline pushing shares of Microsoft higher in pre-market trading. Let's go straight to Bloomberg Tech Europe anchor Tom McKenzie for more. So Tom, how close are we exactly to OpenAI and that restructure? Is Microsoft now fully on board?
Yeah, Vonnie, importantly, they've signed this memorandum of understanding. So let's see if they can get it across the line by the end of the year, which is important because that's when OpenAI wants to be able to unlock this $40 billion worth of investment from SoftBank, and it's one of the conditions of that investment. And also, they've just wanted to put to bed the tensions, frankly, with Microsoft over the structure of the business. So what we understand from the memorandum of understanding, that in terms of the restructure, there will still be the non-profit part of this organization that will sit atop and oversee the board and oversee governance. But then there will be the for-profit part of the business, which will be able to focus on commercialization of the product, and to which will have those strong links, of course, to Microsoft. Microsoft remains the largest investor in OpenAI. Importantly as well, the non-profit part of the business will have a $100 billion stake in OpenAI. Now, if you get to a $500 billion valuation, which is what some are suggesting, then you're looking about a 20% stake. So it gives them a seat on the board and gives them that oversight, of course. So that's the broad structure that's been agreed under this memorandum of understanding. Again, important in terms of OpenAI wanting to get access to that investment from SoftBank by the end of this year, and important in terms of resetting that relationship with Microsoft. For Microsoft, still question marks in terms of the detail, in terms of whether or not they still get exclusivity, some of OpenAI's tech and AI products. I think that still needs to be worked out. But broadly, resetting that relationship is going to be important for both sides. Still some legal questions. 2 attorney generals are looking at this, and Musk, of course, has pushed through an illegal case against Sam Altman and OpenAI. So we'll see how that moves forward as well.
Well, speaking of OpenAI, Sam Altman and NVIDIA CEO Jensen Huang set to announce some big investments in the UK. Can you give us some more details?
Yeah. So both CEOs of NVIDIA and OpenAI, Sam Altman, of course, Jensen Huang, as you say, will be on the ground here in the UK next week with President Trump's visit. And what the Bloomberg team have discovered through their reporting is that they will be committing, both of those companies, to what has been described as tens of billions of pounds worth of investment in data centers and infrastructure here in the UK. It's part, of course, of the Stargate project that OpenAI is now pushing beyond US borders, or sovereign AI for other nation states. I think the context is important. They've committed to 4.5 gigawatts in terms of data centers in the US with a spend of about $500 billion US. They committed to about 5 gigawatts in the UAE. The numbers are going to be much smaller for the UK, but it aligns with the policy agenda of the Prime Minister, who says he wants to push forward in terms of building out AI and making it easier to build here. There's question marks about the energy costs in the UK, and question marks about whether or not the UK is really going to be able to have the data centers and the infrastructure to properly compete. But certainly the UK government will frame this as an important step forward next week.
All right, Tom, thank you so much. That is Bloomberg's Tom McKenzie, host of Bloomberg Tech Europe. Trade talks then heating back up. U.S. Treasury Secretary Scott Bessent will meet with China's Vice Premier in Madrid next week for another session of talks amid the trade truce between the two nations. For more, let's bring in Bloomberg's Brendan Murray, who tracks global trade for us. Brendan, so what do we know about next week's agenda in Madrid yet?
Yeah, so this came as a bit of a surprise that Secretary Bessent was going to meet with his Chinese counterpart just in the next day or two from the Treasury's announcement late yesterday. The agenda is a bit vague, so it's not clear that this is going to be the follow-on to the last round of talks that were held in Stockholm. The Treasury described the agenda as one being about national security, economic issues, including trade, and they also mentioned the TikTok deal and a more vaguely worded money laundering situation between the U.S. and China. So it doesn't appear that the U.S. trade representative is part of these talks, or at least based on the information that we have right now, so that technical details about magnets and chips, those sticking points that both sides have pointed to in the past, it doesn't appear they're going to get into those kinds of technical details. But we'll know more as the Treasury can explain to us what exactly Scott Bessent's mission is as he stops in Spain on his way to the UK, as Tom was referring to, along with a delegation with President Trump next week.
Yeah, a lot of activity in the last few days. And then on India, an envoy for Trump told a Senate committee that a US-India trade deal is near. What were the details there?
Yeah, I mean, they've been saying an India trade deal is near for about 3 or 4 months now, and you know, so we'll have to see how this latest prediction plays out. There are major sticking points. The U.S. wants India to stop buying Russian oil. India says that's just not going to happen. That's part of our economic development over the long term, and we can't do that. So there seems to be at loggerheads there. They may be able to work out some of the other issues, investments and purchase agreements and those sorts of things. But some of the main asks on the U.S. side, India is just unwilling to budge on. And so if they say the India-U.S. trade deal is something, we're just going to have to believe it when we see it, because they've been close for a long time now.
Brendan, thank you so much. Brendan Murray, who covers trade for us there in London. Now, to other top stories trending on the terminal this morning. Armani names LVMH, Essilor and L'Oreal as potential stake buyers in the company. The late Giorgio Armani was deciding to make public his will, and that was made public on Friday, outlining conditions on selling stakes in the fashion empire. Brazil's Supreme Court has sentenced Jair Bolsonaro to 27 years and 3 months in prison for plotting a coup after his 2022 election defeat. He's the first former president convicted of such a crime in a country long scarred by power grabs. Bolsonaro's defense called the sentence excessive and plans to file appeals. Apple says its hypertension detection system for its smartwatch will arrive next week after getting FDA clearance. The tool will use data from the watch's optical heart sensor to analyze how a user's blood vessels respond to heartbeats over a 30-day time period. The user will be notified if any signs of chronic hypertension or high blood pressure are detected. Coming up, Isomorphic Labs co-founder and CEO Demis Hassabis is on a mission to harness AI to, quote, solve all disease. He speaks to Tom McKenzie exclusively.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Wednesday, the Fed decides.
The real debate is going to be about the outlook.
The economy is slowing as inflation's picking up.
The Fed's going to ride to the rescue and cut rates.
The risk is that you could see a reacceleration of inflationary pressures.
Trust Bloomberg to bring you the fastest coverage and exclusive analysis, including Powell's press conference.
I've never seen the equation this messy, ever.
Maybe this is going to be a central bank predisposed to running the economy hot.
Tune in to Bloomberg Surveillance, the Fed decides, starting at 1:30 p.m. Eastern.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Demis Hassabis, CEO of Alphabet's Isomorphic Labs, spoke recently to Bloomberg about the lab's lofty goals for the role of AI in medicine.
The mission statement of Isomorphic Labs is to solve all disease. Where are we, Demis, in that mission?
Well, I think we're making good progress. We're building a kind of general platform to help tackle the understanding, really, of biology and the chemistry that you need to buy into that biology. And I think if it works out, we should be able to tackle many, many diseases.
How should we think about where the time frame sits then in terms of ISO Labs discovering an AI drug and then getting it into clinical trials. Is that a 2025 proposition? Is it 2026 or further out?
Well, actually, we're at preclinical stage at the moment. We've just hired our Chief Medical Officer, Ben Wolf, and he's setting up a world-class team to help us with the clinical phase. But what we're really focusing on, what we've been focused on the last couple of years, is building the core platform and sort of extending the work we did with AlphaFold. But there's many more areas that we need to get into in terms of actually making an impact across drug discovery. And we're making great progress with that. And these first few trials are kind of examples of what the platform might be able to do.
And the internal pipeline for ISO Labs is focused on oncology and immunology, oncology, cancer. Does that suggest that you and the team think cancers can be solved first amongst some of these diseases that we face?
Well, that was always the kind of holy grail in a way, is to try and tackle cancer. But we've also done it for practical reasons as well, because the clinical aspects of that are favorable for new drugs, because obviously the disease is so serious. And so there are a number of reasons we picked those two areas. Also, partly what we think the platform's going to be able to do early on.
There's the speed and efficiency that the platform brings to it. There's the quality as well, of course. When we're thinking about preclinical research and AI drug discovery, usually using the old methods, you were talking, what, 3 to 6 years? To what extent can you cut that time frame down?
I think in the fullness of time, when our platforms mature in the next couple of years, I'd like to see that cut down into a matter of months instead of years. That's what I think is possible, perhaps even faster than that. So kind of order of magnitude speed up. But we'll see if that's possible. There's a lot of work we've got to do first, but our initial work, our initial signs are very promising.
You've partnered with Novartis, you've partnered with Eli Lilly. What does that tell us about what Isomorphic Labs looks like in 5-10 years' time? Do you focus on partnerships, licensing the technology, or do you want to be kind of a full stack biotech at some point?
Well, look, we have great partnerships with Lilly and Novartis, as you said, and that's helping us figure out what's needed from the platform, and they're world-class organizations, and our collaborations are being really fruitful currently. But with our internal programs, everything's on the table. We'll see those are going well too, and we'll see how far it makes sense for us to carry that through.
And do you look to deepen those relationships with Novartis and Eli Lilly beyond where they already are?
Yes, so we announced earlier this year an expansion of our Novartis partnership from 3 targets to 6 targets, and both collaborations are going very, very well.
You raised back in March, you raised your first external funding, $600 million US, and you're putting that to play in different parts to build out the platform. But also talent seems to be part of that. When you think about talent, when you think about people like Mark Zuckerberg signing checks for $200 million, what does that signal to you?
Well, Lena, that's a slightly different market, which is the pure sort of AGI market, let's say. But it's whether or not that's rational or not, I think our organizations need to think through themselves. But I do think AI is going to be one of the biggest technologies, if not the biggest, that humanity will ever invent. So in some sense, that is rational. But on the other hand, specifically with Isomorphic, we have such a compelling mission of applying AI to improve human health. I mean, what better use of AI is there than that? And that's a really compelling proposition for both our investors and our staff.
Isomorphic Labs founder and CEO and Google DeepMind CEO Sir Demis Hassabis speaking exclusively to Bloomberg's Tom McKenzie. And you can watch the full interview with Demis Hassabis on the terminal and Bloomberg.com. And on the next episode of Bloomberg Tech Europe, the team takes a deep dive into how artificial intelligence is changing the banking sector, with insights from some of the biggest names in the space. That's coming October 10th. Coming up, the battle between Lisa Cook and President Trump continues. Plus, a look at what else is making headlines in your front page news. Next, this is Bloomberg.
think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number two, because you could be number two in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to zero. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up on the Washington Post, the search for Charlie Kirk's shooter. Law enforcement officials have released new video and photos of a person of interest in the shooting. Officials say they're still unable to find or name that person. They also said a high-powered bolt-action rifle was recovered in a wooded area. Next up, the Wall Street Journal reporting that Paramount Skydance is preparing a majority cash bid for Warner Brothers Discovery. Sources say the bid will be for the entire company, including its cable networks and movie studio. And on the FT, the Trump administration has asked the U.S. appeals court to allow the president to fire Fed Governor Lisa Cook. The government called on the court to rule by the close of business September 15th, a day before the Fed starts its two-day meeting. Let's get a check on markets now. We are seeing futures pointing just a slight bit lower, but bear in mind it's been an up week so far for the major indices to the tune of 1.5% plus for the S&P 500 and the NASDAQ 100. That might change today, although we're not looking too convinced in the direction down. Let's take a look at the two-year yield, though, because that has moved up 7 basis points if you take it from its low Monday at 3.48 to its high today, 3.55.56. Not the same for the long end. The long end has been coming down. We have the 30-year yield now down about 13 basis points at 4.66. A very fascinating move there that does still continue. Coming up, we'll catch up with Monica Defend of Amundi Investment Institute. This is Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Futures dipping after U.S. equities post fresh records. Investors await the latest inflation expectations print to wrap up a data-heavy week. OpenAI says it's getting closer to turning into a for-profit company after painstaking negotiations with top shareholder Microsoft. And trade talks set to continue with the U.S. and China scheduled to meet in Madrid next week. Let's take a look at those markets then, because sure, futures are lower, but just very fractionally, and we have had a very up week. U.S. indices up 1.5% plus a piece, in fact, this week. Gold showing just a little bit of trepidation, up about 0.3%, but we're about $30 off the high that we made this week. The real story is in yields, where that flattening continues. We see the 2-year up another basis point plus to 355.36 right now. The 30-year yield unchanged, but it's come down quite substantially just this week alone, never mind last week, to 466.12. Remember when we were just hitting 5% last week? We're a far cry from there. Let's get to some individual stocks to watch now for this Friday session. Here's Valerie Teitel. Valerie.
Good morning, Avani. Let's start with Microsoft. As you mentioned, they reached a memorandum of understanding with OpenAI. They both released a joint statement yesterday detailing the next stage of their partnership, and Microsoft is up nearly 1.5% on the back of this news, as perhaps OpenAI is getting more and more close to turning into a traditional for-profit company. Now, this part of the realignment in OpenAI could deal with giving the nonprofit $100 billion of equity. So keep an eye on this story. But Microsoft shareholders sure are liking it. Moving on to earnings, Adobe out with a beat yesterday after the bell. Now, this is putting to bed some fears that it's being beaten to the punch on competition from other AI entrants into the market. Up 4.2% for Adobe. They make creative software. They beat on many metrics, Bonnie, and also raised their full-year guidance, so giving investors some assurance there. Lastly, let's go on to Warner Brothers, rising yet again. It rose nearly 30% in the session yesterday, rising another almost 4% in pre-market. This is on the back of Paramount being said to prepare a bid for the entire company, and this will be backed by the Ellison family. The father of Larry Ellison, David Ellison, runs Paramount as an independent filmmaker, and it's being said that perhaps maybe the boost of Oracle's stock price is making the Larry Ellison family wanting to put some of that cash to work. Bonnie?
Absolutely. Valerie, thank you so much. Valerie Teitel there. Just one more key data print to wrap up the busy week. The University of Michigan Sentiment Survey at 10 a.m. Eastern. And then, of course, we count down to the Fed decision next week. We made it through most of the data. Monica Defend of Amundi writes this, quote, "The Fed's focus is shifting from inflation to growth, while political pressure on the Fed is rising." Monica joins me now. She's head of the Amundi Investment Institute. So, Monica, if that's the case, if the balance of risks are shifting and the Fed is looking more at growth now, how many cuts do we get this year?
We do expect 3 cuts, and this is really on the line of the labor market data that we've been seeing so far that are showing the labor market not falling from a cliff, but definitely moderating. And this was really aligned with what we had in mind over the last few months. So we confirm the idea of 3 cuts this year and more to come next year.
Is the Fed in time? Michael Hartnett of Bank of America writing that financial markets are betting that the Fed is in fact still ahead of the curve and will be when it starts lowering borrowing costs next week, assuming that happens. We do, we have seen slower labor market prints in the last few weeks.
Yes, indeed. But there is really something that is changing, we do believe, underneath the U.S. economy. It is not really easy and visible yet, but all the tech evolution, if not revolution, that is taking place is having an impact, and we see this priced by the market if you look at the tech sector and the few names on the index that eventually are leading to this concentration on the U.S. market. But we do not have to worry. The U.S. economy is proving resilient, and this cool down of the labor market is compensated by solid corporate earnings that so far have been surprising on the upside.
Yeah, speaking of earnings, we just started to get a look at some corporate profit margins getting strained in this week's PPI data. Do you anticipate we'll see a lot more of that in the next earnings season?
Well, this is something that has not been visible yet, but this is what we think might be a risk in the remainder of the year. And as a result, this is why we feel positive on risky assets, but I would say we have not a sanguine outlook on risky assets.
Yeah, it's incredible that we're seeing this rally continue in spite of some of these little red flags. I'm curious, U.S. large cap equities, in Amundi's position, how lofty are these multiples?
Well, if you look at the S&P 500 at 22 plus price earning is definitely high if we compare to the current inflation framework we have. Probably the equally weighted index is running on more conceivable valuation metrics, and this is where we are looking at. But all in all, given the macro uncertainty on various fronts, trade, tariffs, policy pressure on institutions, it's really difficult to have strong, bold, top-down positioning and recommendations on regions. Maybe it's safer to stay on sectors positioning.
Sure, but then you read something like this from Bloomberg Intelligence, which points out that historically across cutting cycles from the Fed, the S&P has averaged an annualized 14.8% gain, and that's even in recessions where the gain was, a little bit less, but still 11%. I mean, do we see that this time round as well?
Well, we do think that the S&P 500 can still deliver positive returns from now to year-end, but if you balance the risk and the returns, as I was saying, probably why not staying on sectors such as financials, utilities, communication services. These allow you to implement some long-term investment themes, thinking about climate change, thinking about the tech revolution. So this would allow you to navigate the landscape in the coming months that might be particularly noisy.
So you say healthcare, communications, financials as well. You have an outlook that's positive on financials in spite of a rate-cutting cycle getting underway?
Yeah, well, we have this idea of steepening that probably is one of the strongest conviction we have. The steepening has been a crowded trade, and we've seen this quite visible here today. But statistically, there is a long-run tour that movement that still can materialize, having in mind that on one side, the short end will be pricing an accommodative monetary stance, with the Fed still cutting rates 3 times this year, while the long end of the curve is pricing some higher inflation and debt that will remain high in the coming months.
Monica, thank you so much for joining us today. An absolute pleasure. Monica Defend there of Amundi. Now to other top stories trending on the terminal this morning. Apple says its hypertension detection system for its smartwatch will arrive next week after getting FDA clearance. The tool will use data from the watch's optical heart sensor to analyze how a user's blood vessels respond to heartbeats over a 30-day time period. The user will be notified if any signs of chronic hypertension or high blood pressure are detected. Brazil's Supreme Court has sentenced Jair Bolsonaro to 27 years and 3 months in prison for plotting a coup after his 2022 election defeat. He is the first former president convicted of such a crime in a country long scarred by power grabs. Bolsonaro's defense called the sentence excessive and plans to appeal. The UK economy stagnated in July, marking a tepid start to the third quarter. This comes as consumers and businesses come under pressure from tax increases, with the possibility of more to come when Chancellor Rachel Reeves delivers the annual budget November 26th. Coming up, Microsoft rising in pre-market trading as the top shareholder of OpenAI reaches early agreement in turning the firm for profit. More next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. OpenAI inching closer to converting into a for-profit company. That pushing shares of Microsoft higher in pre-market trading. Let's get straight to Bloomberg Tech Europe anchor Tom McKenzie. So how close are we now to that OpenAI restructure? Tom, is Microsoft fully on board?
Well, this is a significant move forward, certainly, Vonnie, in terms of putting to bed the tensions with Microsoft, which, of course, is still their biggest backer and biggest investor, and moving closer to opening up that $40 billion worth of SoftBank investment that they hope to get at the end of this year, and that's partly contingent on having a for-profit part of the business. There will still be, overseeing OpenAI, a non-profit unit, which will look at governance and will look at things like safety, and that non-profit part of the business will also get a $100 billion stake in the for-profit, for public benefit corporation part of the business as well. It's complicated, but what it does do is ease the tensions between Microsoft and OpenAI and leads to a structure that may be more amenable to tapping some of that future investment from the likes of SoftBank, and means that the for-profit part of OpenAI can focus more now on commercialization of its product and continuing to deliver. It doesn't mean that all the legal challenges are completely put to one side. There are two attorney generals still looking at this, and Elon Musk is still pursuing a legal case against OpenAI, one of the original co-founders, of course, but it certainly resets that relationship with Microsoft. And if they can get it over the line in terms of a concrete agreement between the two sides, then they'll get that $40 billion from SoftBank.
For sure. And then in exchange for this massive financial backing, Microsoft has the right to incorporate OpenAI into all of its tools, right?
Yeah, that's a really important point, Vonnie, that you zero in on, because what they've been concerned about at Microsoft is that OpenAI are starting to partner with lots of other hyperscalers. They have a deep partnership now with the likes of Oracle. They have a deep partnership with the chip producer, which is NVIDIA, of course. So there's some concern that some of the tech that OpenAI is building out will not be exclusively for Microsoft. Microsoft want to nail down what they're going to be getting, what parts of the technology they will be exclusively being able to embed into their own software and the products that they ship to their enterprise and individual customers as well. So it goes some way to offering some relief to Microsoft investors, and you can see that reflected in the pre-market upside that's coming through for that stock right now.
Tom, earlier you spoke with DeepMind's CEO. It was a fascinating conversation with Demis Hassabis. He has a massive vision, I think is the only way to put it, for how AI might impact the world. Can you explain more?
Well, that was always the kind of holy grail in a way, is to try and tackle cancer. But we've also done it for practical reasons as well, because the clinical aspects of that are favorable for new drugs, because obviously the disease is so serious. And so there are a number of reasons we picked those two areas. Also, partly what we think is the platform's going to be able to do early on.
There we go, a little illustration. So, Tom, what else did he say?
Yeah, look, you pointed to the massive ambitions of Demis Hassabis, and he has a massive role as well, because he oversees essentially all of the core AI product for Alphabet, as well as being the CEO of Isomorphic Labs, which has that mission statement of literally solving all disease. What really stood out to me was he put a time frame around drug discovery and how they think they can shorten that, potentially to months, even shorter, potentially weeks as well, within a 2-year timescale, 2 to 3 years. A couple of years is how he framed it. He thinks there's going to be significant progress on that part of getting drugs to market, the drug discovery piece. I also talked to him about the talent wars, of course, and asked him what he thought about, for example, Mark Zuckerberg paying some of the talent that he's been poaching, $200 million. Demis Hassabis said, given the impact that he thinks AI is going to have on the world and how revolutionizing it's going to be, he thinks that's pretty rational. So he gave us some clarity in terms of the build-out that they are doing at Isomorphic Labs to get to that point where possibly we can get to faster drug delivery, faster drug discovery, and what that means for tackling diseases like cancer, which he says is the holy grail for him and the team.
Yeah, incredible ambition and more power to him. Tom, thank you. You can find more of this interview with Demis Hassabis on your terminal and Bloomberg.com. Turning to Washington, D.C. now, U.S. Treasury Secretary Scott Bessent is planning to meet China's vice premier in Madrid next week. More trade talks on the table, it seems. Meanwhile, a Trump envoy says that the U.S. is close to resolving its trade tensions with India. For more, Bloomberg's Kasia Klimashinska joins us now. So, Kasia, what is the latest on this trade front with China in particular? We've had a lot of movement, a lot of chatter and talks in the last few days, not necessarily among the trade partners, but among plenty of officials.
Good morning. Thank you for having me. Here we'll have new developments next week when Treasury Secretary Scott Bessent will travel to Europe. He will go to Madrid and then to London, and he is expected to meet with his China counterpart, China Vice Premier, in Madrid. The two will talk probably, most likely, about tariffs, about trade, potentially also about TikTok's U.S. operations and national security. It's not the first time that Scott Bessent is meeting his Chinese counterparts, but this time the stakes are much higher, as President Trump and President Xi will likely meet later this year in October, perhaps during a key economic summit in South Korea, or maybe just one-on-one for a special Trump-Xi summit. So probably Scott Bessent is heading to Madrid next week to meet Chinese officials and try to set those talks.
And then closer to home, President Trump has asked a court to pause an order blocking his attempt to fire Fed Governor Lisa Cook. Of course, the FOMC next week. So what is the latest?
Exactly. So this key FOMC meeting next week is at stake. And the Fed is meeting on Tuesday and Wednesday to talk about interest rates. And President Trump doesn't want Fed Governor Lisa Cook to join that meeting. So he asked a court to basically let him fire her. Remember, the reason here is that the Trump administration believes that Lisa Cook committed mortgage fraud, that she claimed 2 different houses as her primary residence, whereas Cook says that this was only a clerical error. It happened before she joined the Fed, and that she needs to join those key deliberations that is important for the U.S. and global financial markets.
You know, Axios reporting that President Trump is meeting with the Qatari Prime Minister today. What do we know about this particular meeting and developments in the Middle East?
This is very interesting. It's not on the official schedule from the White House for today. According to the White House, President Trump has a TV interview in the morning, and then he is in New York. So Axios is reporting that in New York, Trump might meet his Qatar counterpart later today. Obviously, this meeting would make a lot of sense after Israel attacked Hamas in Doha. President Trump could reiterate his support for Qatar and his criticism of that attack. And for Qatar, that would be an opportunity to extend their global push to force Israel to end the war in Gaza.
For sure, yeah. Looking ahead to next week, Politico reporting that the UK and the United States have actually restarted steel talks. Obviously, Trump's state visit is next week, so it would be timely.
Big week for President Trump. Yes, he's heading to the UK for a historic second state visit next week. He's bringing tech CEOs with him. You had Tom talking about AI and big tech earlier. There is some expectations for some big tech deals to be announced, but also, of course, trade talks between the US and the UK. The UK wants to sell more into the US with lower tariffs, especially steel and aluminum is at stake. The UK wants lower tariffs for those metals flowing into the US.
Kasia, thank you so much. Kasia Klimashinska there in Washington. To a Bloomberg scoop now, Bloomberg has learned that the late Giorgio Armani named LVMH, Essilor and L'Oreal as preferred buyers for a stake in his fashion empire. The details of his will were made public today. EssilorLuxottica told Bloomberg it will carefully evaluate a potential stake. Joining us for more is Andrea Felsted from Bloomberg Opinion. What a fascinating will to have read out. What might it mean for the luxury industry, Andrea?
It's setting up the next big takeover battle in luxury. You know, these prized assets come up for sale very, very rarely. Once they're snapped up, they never come onto the market again. There's going to be a lot of interest in this business.
Yeah, and I understand it's a 15% stake. Now, of the companies mentioned, who might be interested, who might have the cash, who might jibe well with the Armani brand?
I mean, obviously, L'Oreal and EssilorLuxottica are licensees for the beauty and the eyewear, so they might be interested in a stake. I'm not sure if buying the whole thing eventually, which is likely to happen, is a stretch. For me, the obvious buyer is LVMH. It's big, it's got the financial firepower, it's got the expertise. Armani is primarily focused on clothing. There's potential in leather goods, which LVMH excels in. You could do more with that beauty license. It's also, Giorgio Armani is one of the first designers to realise that the future of luxury is actually in experiences. It's got hotels and restaurants. And this is an area that LVMH has also focused on. Its ambitions have taken a step back with the luxury downturn, but I could see LVMH going much more into experiences in the future, and Armani would pave the way for that. So really, for me, LVMH is the obvious buyer if they're interested.
Oh, Andrea, it's going to be fascinating. And Armani also saying that the initial stake could eventually increase up to 54.9% after 3 years. He had it all thought out. Bloomberg opinion columnist Andrea Felstead there. Coming up, the latest piece of data to wrap up the week in your day ahead. That's next. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Jumana Versace in Vienna, and this is Bloomberg.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now a look at what's ahead today. Of course, the University of Michigan sentiment data comes out at 10 a.m. Eastern. Then, don't miss our conversation with Tesla board chair Robin Denholm. That's at 11 a.m. on Bloomberg Tech. And President Trump is meeting with the Qatari Prime Minister later today. That's according to a report from Axios. Let's take a look at some stocks that are likely to move today. Microsoft higher on an agreement with OpenAI about the structure of their partnership, a move that could pave the way for the AI startup to convert into a for-profit firm. Adobe extending post-earnings gain had a strong outlook, which suggests payoff from AI features. Restoration Hardware there are falling hard as quarterly results show tariff impacts mounting. It cut its sales outlook. Let's take a look at the macro environment as we head into the final trading day of the week. So we have futures pointed very fractionally lower after indices rose 1.5% plus this week. Brent crude a little bit higher. Don't forget we had that warning of a record surplus for next year from the IEA. Macquarie also out with a note today talking about the surplus, but we're coming off our lows. The bond market is very interesting. We have the 2-year yield at 3.55 today, up 7 basis points this week. The 30-year yield down another 15 basis points practically this week. A very fascinating move. Surveillance continues the conversation now. This is Bloomberg.
I think people are paying attention now to what we're doing in a way that wasn't happening 5 years ago. I think the convergence, not just of the hardware investments, but the AI investments in particular, have been the real watershed for us in helping people understand why we've always believed having these devices be wearable and having sensors and having context in the world around you has been so important. And it's like, oh yeah, of course, now that you realize there's going to be a potentially super intelligent assistant that's operating there, you want it to have, for free, all the context on what you've heard, what you've seen, what you're doing, so it can help you the most out as you go about your day and try to accomplish what you're trying to accomplish. So we feel a lot of vindication on that. I think the question is, yeah, will it be us? Will it be a competitor? That depends on our execution and their execution. I have a lot of confidence that the paradigm that we're in right now, which has been stable for a long time, right? The phone that you all have in your pockets now is roughly the same as the phone you had in your pocket 4 or 5 years ago. There's not really a lot of new innovation happening at that scale. There is a lot of things. The phone is the greatest consumer electronic device ever built, and yet there's also a lot of things that we wish it could do better or different. And I think with AI and integrated context with the world around us, that becomes more and more obvious. So I'm very confident that the paradigm will shift in that time frame. And you all know the saying, we get a lot less done in 1 year than we think and a lot more done in a decade. That really is going to be true, I think, when it comes to these shifts.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Haslinda Amin in Bangkok. This is Bloomberg.
We've been concerned about inflation for a while.
We're getting what we expected on inflation.
You are seeing more evidence of a softening in labor market conditions.
The economy is gradually grinding to a halt here.
The economy is set to reaccelerate.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. Bloomberg Surveillance starts right now. Coming into Friday, looking for another week of gains as the S&P 500 puts together a 4-day winning streak. More soft labor market data is keeping the Fed on course to cut, and Treasury Secretary Scott Bessent is preparing to lay the groundwork for a Trump-Xi summit.
Do these guys ever sleep? That's all I can say, because through the weekend, they're going to be overseas in Europe trying to create some sort of groundwork for late October, a Xi-Trump summit in China. And my question is, do we have a better sense of what the ultimate goal is here? What is the relationship between the U.S. and China that we're looking at a time of incredible confusion, given Russia, secondary sanctions, Mexico putting tariffs up, and how much we can get a sense of what the ultimate goal here really is?
Well, we're going to a weekend when trade risk now is once again kind of top of the agenda. You mentioned Mexico, China coming out with a statement saying the U.S. has abused tariffs around the world, and that has sparked widespread global opposition. At the same time, the Treasury Secretary is about to sit down with He Lifeng. So you could see there is this sort of trade angst still percolating, at least in the geopolitical space, for a lot of these third countries like Mexico. They might have to choose between Washington and Beijing.
It's setting us up for a big week next week, not just on the trade front, but on monetary policy as well. Next week, it's not about cuts. It's about guidance. Is this going to be a mid-cycle adjustment or a full easing cycle?
Yeah, and does it really matter what the guidance is, given that we don't know what the composition of the Fed is going to be early next year? Right now, the market is betting that the Fed will be able to cut possibly 3 times this year and do so credibly. Michael Hartnett saying that this market is betting the Fed can stay ahead of the curve and cut into a reacceleration. Sort of this Goldilocks 5.0, wherever we are in terms of Goldilocks. And I just wonder how much the Fed can support that, or is the Fed coming out and confirming that almost a risk event because it's all been priced in?
I think we've got to talk about this bond market. Really interesting development taking place over the last, let's say, 2 weeks. Through August, this curve steepened, led by the front end. Through September, this curve is flattening, led by the long end. That's a new development.
So there are 2 ways to interpret this. One is that it's actually acting as a safe haven trade. Once again, as people worry about the labor market and say longer term, maybe the trajectory isn't as positive. The second theory here is actually more interesting. It's that this administration really wants to get the long end of the yield curve down below 4%, possibly at 3%. That is that perfect 3% goal that Scott Bessent has put out there. And they could be creative with how the Treasury and the Fed work together. And that is increasingly coming into this idea, maybe this trade's gone a little too far given that type of potential surprise on the horizon.
The 10's around 4% so far this morning. 30s, remember being on 5%. Watch for 30s. 30s back down to 4.65. Coming up this hour, John Stolfus of Oppenheimer with stocks of fresh all-time highs. Ed Mills of Raymond James on new talks between the US and China. And Andrew Honhorst of Citi as the Fed gets the all-clear to cut rates next week. We begin this hour with stock steady after another rally to record highs. John Stolfus of Oppenheimer, the biggest bull on Wall Street, writing the following: we do not expect any dramatic cuts from the Fed, but rather measured trims. John joins us now for more. John, good morning.
Good morning.
Love that, don't you? Biggest bull on Wall Street. It's how I said good morning to you when I first saw you this morning. All-time highs on the S&P, record highs on the NASDAQ, not too far away on small caps. Are trimmed cuts enough?
I think trim cuts will be enough, and I think the wonderful thing about trim cuts is for the Fed, what it is the economic data, particularly around the jobs number, has offered an opportunity of essentially a free haul pass. So if the Fed chair and the FOMC committee come out with a cut, it's not politics, it's just the dual mandate. And looking at what the weakness in the jobs market and adding some liquidity to the system. And it's also an anniversary shot in September. If they do 25 bips or if they do even 50, the market should be able to take it, digest it.
Let's address that weakness in the jobs market. Are we testing the limits of bad news being good news for stocks?
I think somewhere in the middle of that, John. It depends the way traders look at it and the way intermediate to longer term investors who are investing for retirement, which is a multi-generational effort now, that has changed the tone of the private investor and the size and presence of the individual private investor more than I've ever seen it in 42 years.
At this point, we're watching what the Fed signals next week and how that really will play forward. And John was talking about, he didn't say these words because he hates these words, but a hawkish cut or a dovish cut. And there's this question going forward. If they are more,
I alluded to it.
You alluded to it because you tried not to say it, which I admire. And you did that very well, but I, of course, am going to violate that. I guess I'm curious if they are dovish, if they do indicate that this is something more than a mid-cycle adjustment. Does that make you more bearish?
Well, would that make me become bearish? Because I'm not bearish.
No, I know you're the biggest bull. Okay, yeah.
Okay.
Would it make you a little less bullish?
Yeah. Well, it would certainly make me take a look at the data, see where we're going, and take a look at what the terms were that when the Fed chair is reporting to the press. How things went and answering questions. But overall, what we've seen really over the last couple of years has been the size of the U.S. economy and the resilience that exhibited both by corporations and by the consumer. I mean, the consumer, the soft data is, they're so worried about inflation, yet the consumer's still spending, and different things, but also prudently. In this day of digitalization and information going around the world fairly quickly, it really is remarkable. When you look at the U.S. economy, around 30 trillion in size, still way ahead of China after all these years of us hearing that China was going to surpass us and everything else. It hasn't happened. And we think a lot of that is related to innovation. The Federal Reserve has done its job, we think, remarkably well. Once they got out from being behind the curve in March of 2022, so far with all the hikes, all the pauses, and very few cuts, no recession. Remarkable.
A lot of people who are listening to you are probably nodding along with this idea of innovation, especially when it comes to technology and how much that's powered what we've seen in the U.S. equity markets. Can that continue powering it, given how inflated expectations are and how difficult it is to price in a sea change in technology, innovation at the scale that, say, Oracle is predicting?
Well, I would say I think what type of overvaluation is being placed by investment or capex at this point really is in the eyes and the ears of the beholder, because maybe the investments that are being made across the 11 sectors to participate in what AI can do, both for the consumer as well as for businesses, this may be appropriate, what we're seeing This is so different than the, I remember the tech bubble, I mean, I'm like Father Time, 42 years in the business. Good Lord, it's shocking, I still feel 35, but it's like nearly 100, at this point. And when I look at it, it's just, this is not beginner's technology. This is, if anything, is technology that has to be checked somewhat by regulation, necessary, but not by too much regulation. And yet what it offers in a world in which we have not reproduced enough to replace ourselves, AI may be able to fill things out in factories and in offices where there might be shortages of employees. I do think, in case you think I'm just being too bullish or too positive.
No, I love it. Carry on.
I would say what does concern me is when we look at the current environment is moving forward. The first tranche beyond what we see in technology of layoffs will be a shock to the system and will cause a lot of questions as to how we're going to deal with it. But I think it's an opportunity for corporations to step up and train personnel, really position ourselves for what is genuinely a new economy that we are moving towards based on innovation.
John, that's what I wanted to ask you. To accept this innovation, do we need to accept that we're just going to have bigger layoffs and less jobs in the economy?
Well, I think I think that's the first part, that it gets. I think we need to prepare for that, and I think already we've heard Elon Musk and others mention the things that may be necessary to be considered. It really, if we meet it with retraining, looking for opportunities, because the biggest thing is, as wonderful as the machines can be, people love to deal with human beings. They just do, or not always love to deal with them. I know that, okay. Well, let's not know. But at the same time, just
Speak
think,
for yourself, John.
if you're trying to get some customer service, it's rare that you find an outfit that has real good beginners AI in those chat boxes and things to settle things.
When you mentioned the consumer as well, yesterday we did see household furnishings becoming a bit more expensive, clothing, airfares are up. Are you concerned about more of a tariff pass-through as we progress throughout 2025?
I think most certainly in the near term, and then I think as we go forward, if we see the benefits that the administration expects from it in reducing our deficits, I think that would be it would be very much helpful. And I also think, in addition to that, what we haven't seen yet across the sectors in a broad format is the reintroduction of competition. And usually, my generation went through hyperinflation relative for the U.S. Back in the late 70s, early 80s. And it took years to get rid of that inflation. In stickiness in inflation, the institutional memory is relatively short. But for the humans that went through it, gosh, it takes a while. But eventually you find people who go, hey, wait a minute. If I give up what I'm charging on a per unit price and do volume, I can really get ahead of my competition, my competitors. When that begins, and it'll start. We've seen a little bit of it earlier this year in the airlines, but now it's going the other way, and it's demand is what's doing that.
What you said about AI, I think, is so important. What you're acknowledging is that it's going to be regressive up front. This is something that Luke Carr, our former colleague, has talked about extensively, and something Lisa's hammered home on again and again and again over the last month or so, is that we could see a real decoupling between the performance of the stock market and the direction of the labor market. Is that what you think people are comfortable with going into 26?
Oh, at least at this point, I don't think that the market is looking as much to 26 yet as to the end of this year. I really think. I think when we start looking at it in 26, it'll probably bring up a bit, somewhat, periods of volatility. When we see catalysts in terms of news items and things, they'll make traders, skeptics, and bears, give them an opportunity to take profits without FOMO, and what likely is a secular bull market based on the degree of innovation we have today.
John, it's good to see you. 7,100, right? 7,100.
7,100. We're sticking with it right now.
Biggest bull on Wall Street. John Stelford's there of Oppenheimer. John, thank you, sir. It's good to see you. Thank you. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Yahira for more. Hey, Yahira.
Hi, John. A manhunt is ongoing for the shooter who killed Charlie Kirk this week. The FBI released a surveillance video of the suspect dressed in black and seen darting across a rooftop, swinging over the edge, and walking past a parking lot at Utah Valley University. You can see it there. Utah Governor Spencer Cook says the state will pursue the death penalty against Kirk's killer. Meanwhile, President Donald Trump has asked a federal appeals court to pause a lower court decision blocking his ouster of Fed Governor Lisa Cook. The request for a stay or order would likely allow the firing to take effect before the appeal is formally heard. The administration wants a ruling by Monday, which is the day before the Fed's policy meeting. And shares of Warner Brothers Discovery are surging 5.6% in the pre-market following reports that Paramount Skydance is preparing a bid for the company. Sources say Warner Brothers CEO David Zaslav believes he can get a hefty premium for his streaming and studios business once they're separated from the cable business. The Paramount offer is being backed by the Ellison family. That's your Bloomberg Brief. John?
Yahira, thank you. More from Yahira in about 30 minutes' time. Plus, we'll get to that story too. I want to talk about this as well. RH CEO Gary Friedman. You see this story over at Restoration Hardware? Maybe my new favorite CEO, just in terms of communication.
Yeah, going forward, just very blunt. And this is something that we're going to keep hearing. To me, I think that, honestly, CEOs are going to be rewarded for their bluntness.
Unless you want to go effing bankrupt, excuse my language, direct quote. In a market like this, you know, and stand there and be righteous and say, and I'm not promoting, good luck to you. Described it as the third year of the worst housing market I've seen in my 38 years in the industry.
Well, at least he's being honest, and ultimately he's not alone. We're hearing that from a lot of different potential home builders, and frankly, this has been one of the big criticisms of this economy.
We'll come back to that story too later this morning. Big mover overnight. Equity futures down by about 0.1%. Up next, tough talks with China.
Obviously, our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. My view has been that they would continue to eat the tariffs.
Up next, Ed Mills of Raymond James, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Coming into Friday on a 4-day winning run on the S&P 500, the longest daily winning streak going back to July, record highs as we head into the weekend. Equity futures this morning pulling back just a little bit. We're down by 0.1% on the S&P, just about unchanged on the Nasdaq 100. Under surveillance this morning, tough talks with China.
Obviously, our largest trade deficit is with China, and China does not have the same profit objective that other Western democracies do. So that is an employment agency, and my view has been that they would continue to eat the tariffs. They are doing that. So I think what we've seen is likely to continue happening.
So here's the latest this morning. The US Treasury Secretary Scott Bessent preparing for fresh talks with Chinese leadership. The two sides meeting in Madrid next week, expecting to lay the groundwork for a Trump-Xi summit.
And there's been a series of meetings this week alone. We had the inaugural meeting between Defense Secretary Pete Hegseth and his counterpart, Marco Rubio, got on the phone with Wang Yi. So all of this potentially is building up to a bigger leader-to-leader summit. This could come on the sidelines at APEC if both these leaders are set to attend. Likely that can happen. Will they have a summit there? Potentially, you could see the President of the United States making it a little bit bigger, making a splash, going to, say, Beijing. What I find interesting about this meeting is two deadlines to watch. September 17th, TikTok just keeps being pushed back. That is on the table for He Fang and Secretary Bessent, as well as the fact that the trade truce, that ends in November. So there's a lot of issues that these two countries need to work out.
What stuck out for me? Madrid. Madrid's an odd choice for these talks to take place.
It's very odd given the fact that you have a leader in Spain that has really been kowtowing to Beijing.
And pushed back against the White House.
Pushing back against the White House, saying that they are the ones that are basically defending Europe in the face of the United States by what? Becoming closer to China? I'm just going to look at it as they've already done Switzerland, they've done London. Maybe they just wanted to, go to Southern Europe. Maybe Italy would have been a better choice.
Maybe Madrid is the Beijing of Europe.
Okay, Eric Adams.
No, I'm
Does sound like an Adams thing.
No, I'm just saying, maybe this is sort of like neutral ground because it has sort of an appeal to both sides.
The Treasury Secretary is also going to be meeting with Spanish counterparts. Maybe this is his chance to explain what the Chinese are actually doing, which is dumping on their markets and will actually kill their industries like we've seen them do when it comes to the German manufacturing base and we see them doing in Mexico.
I think the Spanish government might be happy with that comparison, by the way.
That might actually work politically. Well, let's move on.
Ed Mills of Raymond James has this to say: the relationship is being carefully managed. We expect both countries to continue to extend 90-day tariff truces. Ed joins us now for more. Ed, welcome to the programme, sir. So we're setting the stage maybe for a summit between the two leaders. Where do you think there is perhaps a topic that's just proving very, very difficult to find a breakthrough on?
Well, I'd go back to the first thing that Donald Trump wanted to talk about with China, and it is on fentanyl. It is on kind of trade tariff barriers generally. I do believe that the president believes what the Treasury Secretary said, that when Trump puts tariffs on China, they will subsidize a lot of that cost. We go back to the first administration. We have the phase one trade deal that was never really implemented. President Trump did start off this conversation with saying before they can sit down, they wanted to see progress on implementing what he signed back in 2020. We haven't seen that. I do think the real reason we are meeting is because China was much more forceful in their response this time, where they stopped sending rare earth minerals. We couldn't make a magnet. We were really close to shutting down a lot of industrial production here in this country. That was an economic emergency that I think has been really underreported. And we got those back on. And Trump has sent a message to everyone in his administration: find a way to get me a meeting. And he thinks he can get into a room with Xi and cut a deal. The problem with that is that Xi does not like to go into a room unless it's 98, 90%, 99% set. And so we could have a personality clash come November once they do sit down.
Ahead of that potential meeting, do we have a sense of what the framework of any type of deal might look like, of what the ultimate goal is of both the United States and of China?
Yeah, Lisa, it's a good question. I would probably look at the other trade deals that we've been working on. They are kind of memorandums of understanding. I don't think we're going to have a deal completely fleshed out. I do think the goal is trying to not escalate things so that we can continue to get what we need from China. We will go into those meetings with a list of things that we would restrict to China if they continue to push back against kind of our demands. We also want to make sure that China is not an impediment to peace between Russia and Ukraine. I do think that we can't overlook the fact that we have not put secondary sanctions on China for their purchase of Russian energy, because we are concerned if we do, that could break down those talks as well.
Well, that's exactly where I wanted to go, this question around the U.S. response to Russia and a question about when the U.S. will place secondary sanctions on China, on India. How much is this potential trade talk an obstacle to actual harder action against Russia right now, since that complicates it dramatically?
Yeah, so I think when I've talked to clients at Raymond James, we have a deal that we thought we were going to have with India, and because the administration couldn't get that deal and they're annoyed with India, they keep on increasing the kind of rhetoric and the sanctions and the secondary kind of tariffs on India because they don't have a trade deal. Because they want a trade deal with China and they are concerned that that could blow it up, they are not going to be putting these secondary sanctions on China as long as they think they can get a deal. And I do think it's also really interesting that Trump is not going directly towards China. He's trying to get others. They're like, all right, EU, put on a 100% tariff on these goods with China. And I've always gone back to the fact that probably what our number one ask with the EU trade deal is choose a side. Is it the United States or China? They want us to make sure that they choose the United States within the EU, and things like the automobile industry, manufacturing. Don't have those joint ventures with China, have those joint ventures with the United States. So we're actually, instead of ramping up pressure on China directly, we're going to all of our allies and asking them to do the dirty work.
Ed, who has the leverage right now, Beijing or Washington?
I think it depends on the issue. I do think that President Xi has a lot of pressure on him. There's a lot of questions about the Chinese economy. There are a lot of things that the United States has that China needs. However, China had moved first in the leverage that they put on us. And so in the first round here in Trump 2.0, China did have additional leverage that I think came as surprise to the Trump administration, which has caused them to kind of reorient and try to get this Trump-Xi summit. Xi will not come to the United States to do this. Donald Trump, I do think your reporting is absolutely correct, Anne-Marie, doing it on the sidelines of the APEC summit or that big splash going to China on the way to the APEC summit in South Korea is probably what they have in mind.
But Ed, just in the past few minutes, you mentioned a number of issues: fentanyl, what's going on in Iran, Russia, China dumping on other markets. What is China's number one ask of the United States?
I think that their number one ask is to somewhat stand down and kind of make sure that we probably don't implement a lot of what we've done. And I think what we have seen is in these conversations when we say, we want you to buy more, China says, well, there's one thing that we really want to buy. It's semiconductors and it's semi-cap equipment. And that is part of the reason why Trump has already allowed for the licensing of NVIDIA and AMD chips that he previously blocked. I don't think that they're going to be able to kind of expand some of those kind of relief on those restrictions to other semiconductors. But if there is one thing that China really does want, it's our technology.
Will he get it? Ed Mills of Raymond James. Ed, thank you, sir. Will Jensen Huang succeed in pushing the U.S. government to agree?
It's pretty fascinating that Jensen Huang is with President Trump in this visit overseas, over to Europe. So is Sam Altman. So you start wondering how much of a carrot and a stick the tech companies are. They're right alongside him with all of these negotiations.
They're going to be pushing pretty hard for next week and well into next year and beyond. Up next on the programme, Robert Fishman of Moffett-Nathanson joins us on a potential media mega deal. Plus, we'll touch base with Danny. She's got your morning movers and some fiery commentary from the CEO of Restoration Hardware. RH is down in the pre-market by almost 10%. The broader market is doing okay. Equity futures down by about 1/10%, just pulling back from all-time highs on the S&P 500. Record highs on the S&P, record highs on the NASDAQ. From New York City, you're watching Bloomberg TV.
you've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Equities negative this morning, but positive on the week. We're down by about 0.1% so far on the S&P, but heading towards another week of gains on the S&P and on the Nasdaq. On the Russell, small caps are positive for a 6th consecutive week as we look to close out the trading week this Friday. Equity futures, Russell 2000 futures negative by 0.5. Let's get you some movers going into the open. About 3 hours away is Danny Berger with more. Hey, Danny.
Hey, John. A couple things working in Microsoft's favor. Early this morning, shares are up 1.4%. First, you had the OpenAI decision to make them look more like a for-profit company. They'd had some really painful negotiations with Microsoft, so helps them keep that partnership. And also elsewhere, Microsoft avoiding a very hefty penalty from the EU around their Teams products, choosing instead to settle with authorities there. Elsewhere, it is another day, at least it is on track to be, of a rally for Warner Brothers, up 6 1/3% after yesterday clocking its best single-day gain on record. This off the heels of Paramount Skydance looking at a bid for Warner Bros. Discovery. It would be backed by the Ellison family and looking at taking the whole thing. This is a company that had been looking at breaking up. Does this change its fortune? Finally, in furniture, RH shares getting pummeled in the pre-market, down nearly 10%. They cut their outlook for the year, cited $30 million worth of a tariff hit. Maybe more interesting, though, the CEO on the earnings call talking about how this is an industry in turmoil that needs to have heavy discounts in order to lure shoppers in because of the housing markets. I won't repeat exactly what he said because it would literally get me fired, but it was something along the lines of, unless you want to go effing bankrupt, you need to discount your furniture sales. John?
I think direct quotes are okay. We would have excused that. Danny, thank you. Thank you very much. No pricing power. Home builders have rallied aggressively. They've taken off. And you've got a furniture provider turning around and telling you that things are absolutely terrible and we've got no pricing power.
This is also a CEO who came out pretty vociferously against the tariffs. You do wonder exactly what he is speaking to, and you wonder whether this is consistent throughout the industry. At the same time, I also wonder if it's clearing some of the inventory before whatever is to come next year. That said, pricing power, the lack therein, highlights the reason we haven't seen any kind of runaway inflation.
Stock is down by about 10% so far this morning. On our radar this morning, one of our top stories, the manhunt continues. Authorities are still searching for the killer of conservative activist Charlie Kirk, who was fatally shot Wednesday at a Utah university. The FBI releasing new footage of a person of interest fleeing the scene. Elsewhere, a trade war warning from China. The Ministry of Commerce urging Mexico to, quote, exercise extreme caution and think twice before imposing new tariffs on Chinese goods. Mexico announcing plans to impose duties of as much as 50% on cars and other products made by China. And finally, the race for the next Fed chair is heating up. According to reports, Treasury Secretary Scott Bessent is meeting with new candidates to replace Fed Chair Jay Powell. In recent days, he met with former Fed officials, including Larry Lindsey, Kevin Warsh, and Jim Bullard.
So these are all people who have been close to the Federal Reserve before, which is notable given the fact that we're currently talking about Stephen Myron, who hasn't been on the Fed, as potentially getting there as soon as Monday with a vote in Congress. It raises the question in my mind whether this is trying to create a lot of drama, but ultimately picking Chris Waller. And the reason why I say that is because essentially you're looking for someone that has credibility in markets, and you're looking for someone with that institutional knowledge of the Fed, not an outsider. That is notable to me, even as we pack on the names and create a process that sounds very dramatic.
Or James Bullard, his mentor, and then having two almost Bullard-Waller thinking types on the Federal Reserve. What I find interesting is I don't feel that there is this real urgency from the administration to want to get this shored up ASAP. And do you know why? Because the Fed is about to cut interest rates. It is moving in their direction. So they can sort of, Trump will come out and say too late because he feels vindicated. He feels I was able to feel the market. I was correct. Powell was behind. He was too late. We have seen that now, and it's going to be twice. But I don't get the sense that they're going to come out and immediately need to pick someone. So, the Treasury Secretary is even adding to the list, and he's going to have as many interviews as he wants.
I'll keep this brief. What struck me about this list, these three, is that two of them are really well known as being small balance sheet guys. They're not the kind of people that I think would be compatible with the kind of things that maybe the president would like to see in the next 4 years and beyond.
So is the speculation that Scott Bessent is trying to set up the field, game the field?
I don't know.
Or is it that Scott Bessent feels differently than other people and really is targeting 3% on that 10-year yield? This is the reason why people feel like whoever is going to be the next Fed chair will be creative with the balance sheet. Maybe not necessarily expand it, but creative, and work in tandem with the Treasury to help suppress some of those long-term yields.
I think Anne-Marie makes a really great point, though. You don't sense a great rush right now. No panic. They seem to be happy with this process just going forward slowly.
Yeah, and a scapegoat. I mean, ultimately, you have damned if you do, damned if you don't. Regardless of what happens in the economy, you can turn around and say, ooh, too late.
It's the Fed. It's Chairman Powell's fault. Let's turn to M&A. Isn't it always Chairman Powell's fault?
I mean, it's great.
It's always his fault. It's his fault. Paramount Skydance is preparing a bid to buy rival studio Warner Brothers Discovery. Sources telling us here at Bloomberg the offer will reportedly be mostly cash for the entire company, including its cable networks and movie studio. Joining us now to discuss is Geetha Raghunathan of Bloomberg Intelligence. Geetha, welcome to the program. Let's just talk about what's happening here. This was a company that was about to split in two. Why is this solution better for shareholders?
Yeah, this is, the timing of this, John, I think is what is really throwing off a lot of investors. So we know that Warner Brothers Discovery had announced back in June a plan to separate out its secularly challenged TV networks from the studio and streaming business. This Paramount bid, and so always, I mean, the interest was going to be for, the crown jewels in the business, which is, the studio and the streaming portion. So just this Paramount bid kind of coming in. First of all, why it's better for investors is because it's going to be an all-cash bid. Most importantly, it has the backing of the Ellison family. I think that makes a huge difference. It's a bid that is going to include the cable networks, which, by the way, is not a desirable asset right now. And so the fact that, we have a taker for all of the assets, I think makes it definitely appealing.
Geetha, let's talk about some of the companies involved here. Paramount Plus getting together with HBO Max, CBS News together with, say, CNN. Are they great synergies or are they messy relationships?
Great synergies right now. I mean, we just have Paramount. What's really interesting here, John, is we just had Paramount, which freshly just combined with Skydance. And when we spoke about that deal, they were talking about $2 billion in synergies. You think about a company, the scale of Warner Brothers Discovery, all of the different assets that it has in its portfolio. You brought up the TV networks. We're thinking something like, $4 to $5 billion in synergies at the very least. I mean, there's just a whole lot of different cost efficiencies across the TV networks, across the studios that can be achieved here. So it makes a ton of strategic, a ton of economic sense.
Geetha Raghunathan of Bloomberg. Geetha, thank you. Appreciate it. Robert Fishman, senior research analyst at Moffett-Nathanson, is writing this. We view the news as a key milestone in the Warner Brothers Discovery success story and potentially the opening of a second chapter for a growing media conglomerate. Robert joins us now for more. Robert, welcome to the program, sir. Let's just start with the basics. What's to like this morning with this potential tie-up?
Well, I think as you just heard, what you have is a lot of potential strategic combination between these two players. We've been talking for a long time about the lack of scale on streaming, and what this does is really help accelerate the streaming story by putting two subscale players together to help better compete in the current landscape. Then you also have to go to the cost savings that were just discussed. We're still working through our assumptions, but essentially there will be a lot of extra cost synergies putting these portfolios together. And then really what this does for Warner Brothers Discovery is allow them to accelerate that timeline that you just talked about, and really for investors to see the payoff of how valuable these assets are, like HBO and Max and Warner Brothers Studios. So it really is a really strong evidence of the value in the Warner Brothers portfolio.
Once upon a time, the idea of CBS and CNN being combined and the idea of synergies, probably job losses and some consolidation of efforts, would have raised concerns by regulators. Will it still, or has the landscape changed so much competitively that it doesn't necessarily reach that level?
That's a really interesting question. I would say that the landscape has clearly changed. Back to my first point, streaming is first and foremost here, and that's where all the eyeballs are going, and already essentially are for a lot of the parts in the media business. On news specifically, yes, it does seem like the strategic combination of a CBS News with a CNN would be something that makes a lot of sense. From a cost-saving standpoint and strategically to put those two assets together.
How much do you think that Warner Brothers is going to hold off on any kind of deal, because they were planning on splitting up and they did believe that each of the pieces was worth a lot more than the whole? We are seeing a premium here in terms of the Paramount Skydance offer from Ellison. But do you think that it's enough, or do you think that it's going to have to be sweetened?
Well, I think we're going to see how this all plays out. So this is just kind of the first salvo, and really what we're really waiting to see is if the Paramount Skydance bid is going to bring in other bidders here, because that potentially has the opportunity to, as we've seen in past, these are premium, very, very demanded assets, especially when you think about the studio and streaming and HBO. So if this is the opportunity for other companies to explore that's something that we're waiting to see if that's going to bring in other potential bidders here.
Potentially a price war. Who else could bid for these assets?
Well, I mean, if you go through the list, clearly Comcast is a potential bidder. It's unclear, to the regulatory point, if they're going to look to enter into the fray and put their hat in the ring. But I think Comcast has long been discussed, again, from the streaming side and also from the studio side and other assets that this can be part of. The question is, they're going through their own spin with Versant, and essentially, do they want to change strategies as well? That's remains an open question. Obviously the digital big bidders are some ones that we all have to look at and see whether or not they want to really throw their hat in the ring, again, from the regulatory side, and even a company like Apple, if they really want to go all in on media.
How much more consolidation could we see, Robert, in this space?
Well, this is a big one. We've been waiting for something like this for a little while now. Again, talking about the potential dance partners with Comcast, with Warner Brothers Discovery, and Paramount being the three key players. So, I think this is going to lead to other potential dominoes that could fall, but clearly this is the big one that we're all focused on right now.
Robert, appreciate your update and your take this morning. Thanks for making time for us. Robert Fishman there of MoffettNathanson, CBS together with CNN, something we've been talking about since the late 90s, early 2000s, and here we are. And as you pointed out, and it's a perfect point, this is a very different environment compared to 25 years ago.
This would never have been allowed 25 years ago, because there would have been thought to be something of an oligarchy when it came to disseminating news. Now people get their news in lots of different ways, and there are lots of different competitors. I just wonder whether this subjects this whole deal to less scrutiny, or whether it still will have the same kind of resonance, especially given some of the creative output and the demand for some of these properties.
Futures this morning down by about 1/10% on the S&P. If you are just joining us, welcome to the program. Let's get you some news, some top stories worldwide with your Bloomberg Brief. Here's Yahara with more. Hey, Yahara.
Hi, John. Brazil's former president Jair Bolsonaro has been sentenced to over 27 years in prison. He was convicted on charges he sought to cling to power by plotting a military coup that included plans to assassinate current President Luis Ignacio Lula da Silva. Bolsonaro's lawyers are expected to appeal his sentence. The U.S. has warned it will act accordingly to what it called a witch hunt. Meanwhile, the first full month of President Donald Trump's tariffs set a new all-time monthly record by bringing in nearly $30 billion. According to the latest monthly statement from the U.S. Treasury Department, net customs receipts for the fiscal year, which ends on September 30th, are at a record of more than $165 billion. And President Donald Trump attended the New York Yankees game last night in the Bronx, speaking to members of the team, including Aaron Judge, ahead of their September 11th game against the Detroit Tigers. The Yankees came out on top 9-3, with Aaron Judge hitting 2 home runs, tying Joe DiMaggio for 4th on the franchise's all-time home runs list. That's your Bloomberg Brief. John?
Yahara, thank you. And guess who was in Yankee Stadium? Drum roll. I think you know the answer to that.
It was incredible. Not just Yankee Stadium. I wore my Yankee jacket on Air Force One with the president.
What did the president say?
The president went into, behind the scenes, went and met the team, and he talked about 2 things I thought were really funny. One, Aaron Judge, guy couldn't be bigger. To make Donald Trump actually look not as tall as he is pretty astounding. Like, he's 6'7", the guy is huge. And then on top of that, he said they're going to go all the way. And I think Aaron Judge thinks he was a good luck charm. He's hit 2 home runs. So we might have to get the president at more Yankee games if we want to see them go into the World Series.
Very cool. Up next on the program, paving the way for rate cuts.
We're thinking of the inflation trajectory as more of a plateau rather than a mountain. It does look like the Fed will cut. We still think they'll have to be quite cautious in cutting, so we only have 2 cuts in this cycle under Chair Powell.
Up next, we'll catch up with Andrew Honhorst of Citi, live from New York. You're watching Bloomberg TV.
case you missed it, on the close. Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What do you see?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Equities are negative this morning. We're down 0.1% on the S&P. Record highs coming into Friday on both the S&P 500 and NASDAQ 100. The NASDAQ just about unchanged. Under surveillance this morning, paving the way for rate cuts.
We've been concerned about inflation for a while. Not necessarily the impact of changes to trade policy, but just underlying inflation. We think that's been stuck around 2.5%. for a long time now. We're thinking of the inflation trajectory as more of a plateau rather than a mountain. It does look like the Fed will cut. We still think they'll have to be quite cautious in cutting, so we only have 2 cuts in this cycle under Chair Powell.
So here's the latest this morning. A busy week of economic data paving the way for the Fed to cut interest rates next week. Andrew Honhorst of Citi writing, we continue to expect 125 basis points of rate cuts over the next 5 FOMC meetings, with growing risk that the Fed will continue cutting interest rates below 3%. Andrew joins us now for more. Andrew, good morning.
Good morning.
Got to get to that 3% call in just a moment, but I want to address the data of the last 24 hours. So jobless claims came in close to 4-year highs, sparked a bit of concern. Then we got into the numbers and it screams one state, it screams Texas. Is there anything to be concerned about here at all?
Yeah, I mean, I think you always have to watch the jobless claims numbers. What we would look for is this going to be a sustained movement up in jobless claims? A lot of times you get 1 week of data, and it's weekly data, right? You're trying to seasonally adjust weekly data in a holiday week, spiked up in one state, so you never take that too seriously. So I'd be kind of cautious in terms of getting too concerned about that number.
The broader backdrop, though, the totality of the data, as the Fed likes to say, hasn't been great on the labour market side of things. When we go into next week, we're talking about the following: mid-cycle adjustment or the start of a really big easing cycle. And you've alluded to it. Are we going to stop at 3%, or will we need to go even further?
I think it's increasingly clear that we're going to get to at least 3%. And you look at the jobs data, and we do have some conflict in the data. If you look at the household survey where the unemployment rate comes from, unemployment rate has been more stable. It did move up in the last report. You look at the payrolls data, and with these revisions, it's just fallen apart. I mean, we're running at 29,000 jobs per month on a moving average basis, just 22,000 jobs last month. You look at the benchmark revisions and say, maybe we're overstating that payrolls number each month. So, subtract a little for that. We're probably close to zero job growth in terms of payrolls. So there's no question that you want to be moving rates at least back towards a more neutral setting. I think with the cooler inflation data that we're getting now, you can really start thinking about, do they actually move below 3%?
Well, hold on a second. The cooling inflation data, sure. We're still above 3% on a year-over-year basis. You still haven't gotten below 2% going back more than 4 years. Is that enough at this point to be actually a reason for the Fed to cut aggressively?
Well, I think the reason to cut aggressively is the jobs data, what we're seeing in the labor market. The question is, how constrained are you by inflation, to your point? And you're right, you look at core PCE inflation, we're still above 3%. When we looked at the CPI report yesterday, though, this was really interesting. You map that through to core PCE inflation, we're getting just 0.20% month-on-month core PCE inflation. So that's monthly annualized core inflation that's running pretty close to 2%. And that year-on-year figure maybe going to come down to 2.9%. So we could get below 3% on a year-on-year basis. We're running close to 2% on a monthly basis. And remember, this is August inflation data. This was meant to be the peak of tariff pass-through and the high inflation that we were going to see. And we're close to target. So I think there's a lot less of a constraint on the inflation side. That's maybe more underappreciated by the market right now. I think everyone's acknowledging now that you have this risk on the labor market side. I'm pretty clear what the Fed's going to do here.
I mean, we've got the Restoration Hardware CEO cursing out the investors because of their inability to have pricing power. So it raises the question of further disinflation. There is a feeling, though, that going forward, there is going to be a reacceleration of the economy, thus the bet on small caps, thus the bet on equities. And how much do you see that as sort of predicated on the Fed cuts that you're talking about, that will ignite the reacceleration of growth that so many people are hinging their bets on?
There's a little bit of a disconnect between markets here, and I hear this when I speak with investors also, that equity market, I think, definitely thinks that there'll be this reacceleration in the economy. Not as clear to me that the rates market is sold on that, which is part of why we're pricing in these cuts in the rates market. So maybe you need to kind of reconcile those two markets with each other. I do think that these Fed cuts are getting increasingly priced in. I think that is part of the story of what is supposed to get the economy moving a little bit faster. Again, you look at the housing market, that's the most interest rate sensitive sector of the economy. And we have really weak housing right now in terms of activity, in terms of prices moving lower. You need to get rates lower if you want to reaccelerate that portion of the economy. The question, though, is the Fed cuts interest rates, it's going to bring down policy rates, it's going to bring down the 2-year yield. How much lower will we get in terms of the 10-year yield? It has been moving down together with the front end of the yield curve, but I think that's still an open question.
Andrew, how likely is it potentially that they go 50 basis points, especially given everything you've just outlined in the last 5 minutes?
So I think fundamentally you can look at this data and you can say, look back at June payrolls. June payrolls originally reported above 150,000. Now it's negative, right? If we had a negative payrolls print in June, I'm pretty sure this is a Fed that would have been cutting in July, right? We would have seen rate cuts by now. That said, there are big differences across the committee. Remember, back in June, we had a lot of Fed officials who didn't want to cut at all this year. Powell has to pull that committee together. So 25 basis points, I think, is going to be a lot easier to build a consensus around. We could see some dissents for 50. I wouldn't be surprised if we see some dissents, but 25 looks much, much more likely than 50.
What does a Fed under Lawrence Lindsay, Kevin Warsh, or James Bullard look like, given the fact that those are the most recent individuals to sit down with the Treasury Secretary?
Yeah, personnel matters here, right? There's no question that the Fed chair matters. It is a committee, right? So we always think about, where are the votes actually going to line up in terms of where policy rates go. One discussion, we're talking about 3%. Why does everyone talk about 3%? That's kind of a notion of where maybe the neutral policy rate is. Different candidates for Fed chair are going to have different views about where the neutral rate is. And I'm pretty sure when Treasury Secretary Besson is interviewing these Fed officials, that's one of the discussions that they're having. So, where do you see neutral? How quickly do you think we need to get to neutral? That could depend on the Fed chair.
Where do you see neutral?
I think neutral is still around 3% here. So when we talk about the Fed cutting below 3%, that's really, are they going to actually go to stimulative levels? To Lisa's point, if you have an inflation problem, it gets pretty awkward to get below neutral. But if this inflation problem is, kind of quickly disappearing, which I think it may in the next few months of data, all of a sudden there's less of a constraint, and yeah, you should support the labor market.
Got about 60 seconds left. They don't forecast payrolls; they forecast unemployment, and they've got unemployment year-end at 4.5%. Core PCE at 3.1. Is there anything that's evolved since the last meeting that's out of whack with the June SEP?
Those forecasts can actually pretty much stay where they are. And I think the way that Chair Powell will talk about this, and he said this at Jackson Hole, is not where that point estimate is. So you might still be at 4.5% on the unemployment rate. What's the risk around that? Yeah. We're running 29,000 payrolls. It's to the upside on the
But if he
starts
talking about risk management rate cuts, that's very different to the kind of rate cycle, cutting cycle that some people are thinking about in financial markets.
Yeah, the idea of a hawkish cut, if he starts just talking about maintenance versus something that is more stimulative. How many jobs does this economy need to really be even? And frankly, how much has that number gone down as a result of fewer immigrants coming into the country?
Can this Fed meet the market? Something Neil Dutta of Renmac poured some freezing cold water on just yesterday. Andrew, it's good to see you. Thanks for dropping by. Appreciate it. Andrew Honhorst there of Citi. Up next, Steve Orth of Federated, George Pollack of Signum, Sheila Kaiolu of Jefferies, and Sam Zeef of JP Morgan Private Bank. The second hour of Bloomberg Surveillance, just around the corner.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
A cidade estava sitiada.
Isso, ao começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
people back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money? I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The animal spirits are back.
We think equities can continue to rally.
Stocks have been very conditioned to like rate cuts.
The market's going to trade off the narrative that we have a dovish Fed.
Any sort of a pullback makes a big case for the markets to go up.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance, and your second hour of Bloomberg Surveillance starts right now. Your scores look like this. Equity futures on the S&P 500 negative by just 0.1%, following a 4-day winning streak on the S&P 500. On the Nasdaq 100, just about unchanged. In the bond market, the long end of the curve starting to outperform the front end of the curve. We've actually had what's called a bull flattener through September so far. That's a change, a different development. We'll get to that story later in the program as we set you up for next week and the last day of trading going into the weekend. G. Mitch a little bit later on this morning. Look out for that at 10 a.m. Eastern time as we work our way through next week. The main event has got to be Chairman Powell on Wednesday. Decision, forecast, news conference.
Yeah, and the sort of drum roll leading up to that as to who is going to be at that meeting on Tuesday that leads into Wednesday, considering the Stephen Myron hearing on Monday and this bid to get Lisa Cook off the Board of Governors before that Wednesday meeting. A key question to me is how they message, as you were mentioning, the tenor of the rate cuts. Right now, markets are pricing in 75 basis points of rate cuts this year and at least 2 more next year at a time when you still have inflation well above 2%, well above 3%. How do they really message this at a time of growing concern about the labor market?
To the personnel issue, it's going to be a bit awkward having Steve Myron, who still has one foot at CEA, working at the White House, joining the FOMC next week, most likely, as long as he gets that Senate vote, alongside Governor Lisa Cook, who the judge is saying she can remain at the FOMC at this moment as the Trump administration appeals because they are saying that they have cause to get her off. So first off, the personnel is going to be, I think you would call it prime time. Second, when
box office.
Box office.
Pay-per-view.
Pay-per-view, box office. Get it straight. Okay, sorry. The second thing I would say is they're going to be meeting at a time when you still have trade negotiations ongoing and still concerned for some what is going on with tariff rates. We're still waiting on the IEEPA decision. And you have the Treasury Secretary going to sit down with his Chinese counterpart.
I'm pleased you keep building on Stephen Myron. First thing I'm going to look for, that dot. on the dot plot. Stephen Myron, like somewhere down here.
He wants to anchor.
26 and
My
27.
favorite part is people say, is there going to be a descent for 50? Is there going to be a descent for 200, right? Basis points of cuts, and we'll know who that is.
Coming up on the programme, Steve Orth of Federated. As markets continue a record run, we'll catch up with George Pollack of Signum with the list of Fed chair candidates continuing to expand, and Sheila Kohler of Jefferies as airfares take off. We begin this hour with stocks hitting record highs as Wall Street banks on the first Fed rate cut of the year. Steve Orth of Federated seeing the glass half full. He writes, it will be no surprise if they cut rates next week, finally reviving the interest rate sensitive areas of the economy still in recession. Steve joins us now for more. Steve, good morning.
Good morning.
Good to see you, my friend. Thanks for being here with us. The challenge for investors right now, and I think you and the team have addressed it quite well, the challenge is to carry on looking forward as the Fed is looking backwards, and that tension begins to build as they keep getting this data that says you're late, get a move on. How are you going to manage that in the months to come?
We're going to keep doing what we've been doing, which is try to predict where the Fed is heading based on where we think the economy is heading, as opposed to compared to what they say they're doing. So we've got them. You know, we've been of the view for some time now, as you know, that the Fed is going to cut because they can cut, not because they need to cut. The transmission mechanism for goods inflation is the labor market. The labor market has been softening, and there's key elements that are labor-intensive elements of the economy that are in recession. Small caps have been flat in earnings growth over the last 6 quarters. There's been an earnings recession in small companies. They depend on interest rates. Housing is in a recession. The auto sector is in tough shape. These sectors of the economy are the ones that are going to pick up when the Fed starts cutting. And we've said they can cut because they can cut. Now with the labor market clearly softening, there are concerns about tariff inflation, you know, one-off tariff increases, which we see, which we have calculated to be about 13% of the total pie, not the 18 that people talk about. We can talk about why that would be. But if you look at that and assume half of it is going to be picked up by the exporters from foreign countries, it's about a 75 basis point hit spread over maybe 12 months. So we're seeing a little bit of that now. We'll probably see a little bit more, but the core numbers are heading towards their target of 2.5. They say it's, I mean, officially it's 2, but we think they shifted to 2.5 a long time ago. And so now with the transmission mechanism obviously broken, and you know, they're going to cut, and we would guess a bullish cut. So or a dovish cut. So like a 25 basis point, but we're going to keep this going. They can go to 3. If you look at, if you have an inflation rate of 2.5, you should be about 50 basis points above that to get to the kind of the normal short-term rate. You put 150 to 200 on top of the 2.5 for the 10-year, you know, the yield curve, you get to around 4. We're there. And we think that's another, you know, driver for stocks in the next 12 months, along with the reacceleration that we're seeing.
Let's unpack some of those calls. So we're seeing a reacceleration in the equity market. We're not seeing it in the economy. This is the distinction to make at the moment. You mentioned small caps up for 6 weeks. Home builders have absolutely ripped. This is what Restoration Hardware is telling us this morning. The 3rd year of the worst housing market I've seen in my 38 years in the history. How backward looking is all of that? How confident are you in the team that the worst of the data is in the rearview mirror?
Well, we're looking at a number of reaccelerants starting in the back half of this year, but particularly in 26. First of all the uncertainty about tariffs go off the table. So there's a sort of a psychological boost that's going to happen. Secondly, you've got big CapEx incentives in the bill that come into place, and there'll be a capital, we think, a sort of a CapEx flush, both in the software sector. Our software analysts are seeing this coming in the 4th quarter on the software side, but more broadly across the economy as decisions can now be made about the future. That's what CapEx is. You've got the tax incentives to produce that. You've got the tax rebates coming in effect. It's going to be basically a check to every consumer because the tax cuts were retroactive to 1/1/25, but the IRS hasn't been able to fix their system. So all those withholding taxes on tips and all that thing, that's all going to get refunded early in the 1st quarter of 26. And then, of course, you have the Fed rate cuts helping those sectors of the economy that are very rate sensitive. What people don't know that today, the U.S. economy is not as rate sensitive as it was. It just isn't, because the service sector is much less rate sensitive. But the sectors that are rate sensitive, they're going to be another kicker for the U.S. economy in 26.
The fact that those areas have been in recession and we still haven't gotten inflation below 3% raises questions about going forward, how much inflation could reaccelerate if those areas are turbocharged at the same time that everything else is being turbocharged.
Right. So coming out of the lockdown, right? The problem was labor was in very short supply. You saw it here in New York, stores all over the place. Help wanted, get it, help, help, help. Do you see any help wanted signs, right? The labor markets have more than stabilized. They've recovered. And now you're starting to see actually excess labor, and AI is adding to that. So the worker doesn't have the leverage to get pricing power on wages that he or she had 2 years ago. That transmission mechanism is over. So we're much more comfortable about, the inflation outlook because that transmission mechanism is cracked.
So do you reject that sort of voice that keeps coming in my head? Watch the gold market. Watch the gold market. It's telling you something. Are you just sort of saying it's not telling you anything? It's telling you that there's central bank buying, and it has nothing to do with long-term inflation expectations.
Well, Lisa, I should make you my gold analyst. I mean, because I
think you hear two different voices.
I spent 40 years in this business. I can't figure out gold. There's just too many. There's a real market for gold. People use it for jewelry and other real things. There's central banks operating with very long-term objectives. There's short-term players. There's a lot going on, and gold is what someone's willing to pay for it. I like to find things that can generate cash flows that I can predict and then discount back. I can't do that with gold. So I know you probably can make a lot of money in gold, but and other people have. It's just that we don't play in it. But we don't think we can do it well.
It's become a geopolitical hedge, though, for a lot of countries that don't want to hold dollars anymore. So doesn't that mean, like, the only direction of travel for gold really is going to be up?
I don't know. I mean, a lot of the gold, you ever been to the vaults of the New York Fed?
No, but I've heard about it.
A lot of gold down there.
Maybe you can take us, field trip.
What happened to the tour of Fort Knox?
All these central banks store their gold in New York.
I think the administration thinks I'm a conspiracy theorist because I keep asking
to go.
You
still want the tour?
Yeah, I want the tour.
You still want the tour? Yeah. Steve, before you go, I wanted to ask you about valuations. Typically, if we just had a period of weaker than expected economic data and had a guest come on the program and talk to us about buying the recovery, most people would be comfortable with that if the forward multiple was closer to 16 than it is to 20. What kind of valuation do we need to get used to given the character of this equity market now?
We think 21.5 or 21 to 22. And the way we came to this about 1.5 years ago, we said, well, wait a second here. Everyone's heuristics on what is a fair value for the market are based on history. Typically with a 3%, 2.5 to 3% inflation rate, you'd be at an 18 multiple on stocks. The problem is, or opportunity is, that in the stock market today, 40% of it are these giant cash flow generators that are growing at double-digit rates, and they're asset light. Those businesses are simply worth more on a PE basis than a big industrial company. So we've been valuing the market as two markets. So 40% at like 25 times earnings, not as high a multiple of cash flow, and then 18 on everything else. And when you work that out, we don't see this market as cheap here, but we see it as kind of at fair value.
Yeah, when you benchmark this, you've got to be careful about what you benchmark this against. Yeah. That market history might not be as helpful as it has been.
I love the idea of two different markets, the idea of the Magnificent Seven or the Magnificent Eight, if you want to stick Oracle in there, or however other many you want to put in there. This idea that it is a paradigm shift, and they are leveraged to a paradigm shift where they have cash flows up the wazoo, and they don't have that many assets, and it really is a very different model.
Steve, do you want a final word? What's the price target now in the S&P?
Well, we haven't changed our year-end price target. It's 6,500. I just don't like making 3-month forecasts on equities. I think we're overdue for a correction, so we'll see. But we've been saying a correction be more of a broadening out rotation, kind of chopping around this level than a big move forward. We've got 7,500 for next year. We set that about 8 months ago, and that's we're sticking with that. We think there's good upside here. We don't think it's a screamer, but there's certainly good upside. We're still overweight stocks here, and particularly we're overweight the broadening out trade. So we like the small caps, EM, emerging markets, value stocks, regional banks, look good to us.
For as long as I've known you, you've been bullish and right. It's good to see you, sir. Appreciate it.
Thank you.
Thank you. Steve Author of Federated Hermes. If you're just joining us, equities negative by only 0.1% on the S&P, coming off the back of a 4-day winning streak and closing at all-time highs in Thursday's session. With an update on stories worldwide with your Bloomberg Brief, here's Yahira with more. Hey, Yahira.
Hi, John. President Trump says he plans to attend Charlie Kirk's funeral next week in Arizona. He also says he plans to posthumously honor him with the Presidential Medal of Freedom. Kirk was shot and killed while speaking on a college campus in Utah. His casket was flown to Phoenix yesterday aboard Air Force Two with J.D. Vance and his wife accompanying Kirk's family. Meanwhile, New York City Mayor Eric Adams is telling business and civic leaders he's conducting his own polling to decide the future of his re-election campaign. Polls currently show Zohran Mamdani holding a sizable lead and former Governor Andrew Cuomo with a more viable path to beat Mamdani. Campaign officials said Adams has, quote, never alluded to leaving the race. And Tesla's robo-taxis may be coming to Nevada. Elon Musk's company has been approved to test its autonomous vehicles in the state after launching in Texas in June. The service does include a Tesla employee sitting in the front passenger seat. Tesla also has a non-autonomous ride-hailing service in the San Francisco Bay Area. That's your Bloomberg Brief. John?
Yahira, thank you. Appreciate it. Up next on the program, the race to replace Fed Chair Jay Powell.
We are getting the process underway. Obviously, it's going to be President Trump's decision, and we're not in a rush. There's a long list, and like I said, there's some great candidates.
And the list might be getting longer. George Pollack of Signum joins us next, live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Steve Author, Federated, with us just moments ago, looking for 7,500 on the S&P 500 year-end next year. Very constructive on this equity market. Equity futures at the moment pulling back just 0.1%. Jonathan Golub, now over at Seaport Research, looking for 6,700 year-end this year, saying the economic backdrop is constructive. Credit, rates, and policy are supportive.
You know, a lot of people coalescing around this idea that equity markets can keep going up on the dynamism of tech and what AI might do. The bigger question to me is not the stock market. Frankly, it's the bond market, because this is predicated on the idea of a Fed that's easing in the short term at a time where we're heading into a reacceleration. This is going to ostensibly come without inflation. A very big question mark around the long end of the yield curve.
Big rally at the long end more recently, and we'll be talking about that in about 10 minutes' time, so look out for that conversation. 10-year bond yields this morning up by around about a basis point. Under surveillance this morning, the race to replace Fed Chair Jay Powell.
I'm not really sure what the Federal Reserve is looking at because thus far we've seen very little, if any, price pressures from the tariffs. We are getting the process underway. Obviously, it's going to be President Trump's decision. And we're not in a rush. There's a long list. And like I said, there's some great candidates.
So here's the latest this morning. The U.S. Treasury Secretary Scott Bessent looking to expand the list of candidates to replace Fed Chair Jay Powell. According to reports, Bessent recently met with former Fed officials Larry Lindsey, Jim Bullard, and Kevin Walsh.
This is the start of a process. We know that there's 10, 11 names circulating when it comes to the Fed chair himself or herself. And these are the first 3 of these long interviews. What I would say is that the President Trump doesn't love process as much as I think as a Secretary Bessent, but I don't get the urgency anymore from this administration. And that is because the data is moving to seeing a Fed rate cut next week. So they have, I think, a little bit of breathing room to take their time and go about this in a methodological approach to actually have a process. I think one thing that potentially is going to come up in these interviews is how the new Fed chair could shape the Federal Reserve based on really a scathing essay in the Wall Street Journal where Bessent basically compared what the Fed did to the COVID pandemic and a terrible virus that took control of the economy.
There seems to be a big difference in the way that Wall Street and the Treasury is talking about inflation and the way that some people might be experiencing right now. I think Paul Donovan over at UBS has done a fantastic job of really explaining this. On Wall Street, we take a massive basket of goods and services and spit out a number and say what it might mean or might not mean for the Federal Reserve. At home, there's a thing called frequency bias. It's what do you come across every single day? What goods or services do you use? And a fantastic example of that is, say, coffee. Everyone wakes up, most people, reaches for a cup of coffee, and they realize the price of that has been going up aggressively, up 20% over the last year. And that is going to set their view on what's happening with inflation. And they're going to have a very different perspective, real-life perspective of what is happening in their life compared to what we're talking about around this table.
Which is the reason why I think a lot of people are looking at consumer sentiment. We'll get another read today to understand exactly how that's filtering into the decision-making. I personally don't buy blackberries when they're above $7. I think that that's outrageous, and I just put them back. And fruits and vegetables just went up significantly in the latest CPI report. But you aren't seeing a lot of the sales fall off a cliff except for Restoration Hardware. So there's this question going forward of what is going to be the trigger point to bring down prices, right, if consumers are not going to push back. And that's one of the questions that's really been underpinning this.
To talk about some of these issues, George Pollock of Signum joins us now for more. George, welcome to the program. Let's start with the Federal Reserve and work our way through things from there. So the Federal Reserve audition continues. The interviews will continue to build over the next several months. George, what is less clear are the kind of characteristics that this administration are looking for, both the Treasury Secretary and the President. What do you think they want from an incoming Fed chair?
So with the incoming Fed chair, I think they want 2 things. I think they want a strong resume to show to the market to say we're taking this seriously. We're not appointing someone who the market won't follow, who the market won't respect. But at the same time, they're looking for someone who will embrace monetary policies that are more in favor of the president's policies and more in line. Well, maybe not explicitly being so, at least showing some kind of independence of thinking and independence of thought.
Well, wasn't that the #1 question when Donald Trump, when he was the 45th president, ended up asking Jay Powell to decide whether or not he should get the chairmanship job?
Yeah, absolutely. That's a very fair point. But I think the difference is that was the first Trump administration where he still had people around him who were trying to curtail his instincts and trying to push him to do certain decisions that they favored. With this administration, with Susie Wiles as chief of staff, what we're seeing is they're basically following the president's lead and making sure they're embracing his ideas and embracing what he wants.
Given the fact that the Fed is already going to be cutting interest rates when they decide to pick a new Fed chair, how important is this person going to be in terms of rethinking the Fed and how they operate?
I think even with the Fed cutting rates, as you guys were discussing, it will still be important for the administration to have their imprint on the Fed itself through the Fed chair. As we saw with the nomination of the likes of Myron for the Kugler's remaining term, they want people who are disruptors. They want the people who have thought about Fed independence, who have thought about the structure of Fed, and really do intend to see some reform executed.
George, are we being played? I kept wondering that when we saw more names come out, and I felt like they're just going to name Chris Waller, and we're just sort of getting other names thrown at us like fodder, fish bait, for us to talk about, to just sort of keep the pressure up on the Federal Reserve. Is that your takeaway?
I think my takeaway is, to an extent, we're getting played. I think they're seriously interviewing these people because they want to hear their thoughts, they want to see their views. But in the end, I think we're going to end up with someone like Christopher Waller, or maybe one of the two Kevins.
What do you think is going to be sort of, they love that. We had a long discussion about whether they like being called the Kevins or not. I wonder if you do think, though, that whoever is going to be the next chair, and this is something that's making its way into markets a bit more, is going to be creative about the way they use their balance sheet, maybe not expand it, but be willing to work with Treasury, whether it's Operation Twist, whether it's whatever creative instrument you can imagine, to keep longer-term yields lower. Do you think that that is actually increasingly part of these discussions?
I don't think they would ever say that openly, because I think that would disturb the market. But I think the understanding is the Fed chair they pick, they're not going to make, as they view it, the same mistake they made with Jerome Powell. They're going to choose someone who they feel will be with them, maybe not openly, maybe not campaigning with them, but at the very least backing their ideas and backing their policies.
George, I wanted to go further with something that we were talking about around the table just moments ago, and that's how maybe consumers are viewing the economy at the moment and how Wall Street, the Treasury, and the administration is talking about it. George, the Biden administration rightly took a lot of criticism for gaslighting the public around the conditions in this economy, talking about how great Bidenomics was at a time when a lot of people were struggling to get by. George, is there a risk that we repeat that? Talking about an economy that's doing well when the labor market data says it's not, talking about prices coming round and inflation being well behaved at a time when a lot of people are experiencing higher food prices, higher nat gas prices. George, do they run that risk down in Washington, D.C.?
I absolutely think they're running that risk. I absolutely think they're following in the Biden administration's trend, be it for better or for worse. And the story about the not buying BlackBerries was that once they go above $7. The interesting thing is, though, there was a recent poll this week that laid out 55% of Americans, as of today, are not letting tariffs decide their purchasing decisions. So that means while there is still around 37% who say it does, a majority of Americans are still not feeling the effect of the tariffs, or maybe not allowing the tariffs to affect their purchasing decisions.
That's good news, at least so far. George, we appreciate your take. Thank you, Serge. George Pollack there of Signum Global on what's happening in this economy and the Fed race.
So his point there was really interesting, and you have a great question here about at what point will people push back against some of the characterizations of the labor market and of the inflation backdrop and say, that's not my experience. How much are people conditioned to have a little bit more inflation? And how much is this what companies are able to exploit by raising prices, passing it along? Remember, right after the pandemic, we were coming off a period of no inflation for decades. So it was a very different kind of paradigm that people were getting used to.
I'm not sure you, Mitch, is going to help later, which, as we know, has become a political poll and not an economic survey. The spread between Republicans and Democrats and the way they view this economy at the moment seems to be incrededly wide.
I'm looking at the totality of surveys to really get a sense of it. I think
well said,
thank you. I think
Chair
that's
Powell
the
would
way
be
to go.
proud.
So then speak.
Coming up on the programme, we'll catch up with Sheila Kahlu of Jefferies as airfares take off. Bramo's going to tell you her price for what she won't pay for a trip from New York to the West Coast.
Stingy.
What's the line of the sand? $7 for blackberries.
Well,
my line would be more like $5.
Yeah, well, I don't.
$5.
Yeah, I know, but it's you get the really big one, but you have to like see, and sometimes they jack up the prices.
Like the jumbo pack.
Yeah, well, you have to, or
That's
like
different.
But when they're actually like bigger and they look really good, sometimes you have to go for it.
Are they not the organic ones?
Look at that.
They're the ones that have like been juiced.
All right, cut it out. Stop having.
the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Equities doing okay. We're down about 0.1% on the S&P 500, but arriving into Friday at all-time highs on the S&P, on the Nasdaq, looking for a 6th consecutive week of gains for small caps. That rally hasn't stopped since that weak July payrolls report reported in early August. And we've seen some big moves in the bond market since then too, particularly at the front end of the curve. 2's around 350, 355 this morning. 10's around 4.03%. The long end has outperformed the front end over the last week or so. This is important. Check out 2's and 10's. Just want to sit on this chart and just speak to you about what's been happening here over the last month. 2's, 10's, since the start of August, the end of July, has gone from the 40s to the 60s. That was a steeper curve led by the front end. That's called a bull steepener. What's happened since then, since we've arrived in September, is we've gone from the 60s back to the 40s. And it's been driven by what's called a bull flattener, driven by the long end. This is really, really interesting at a time when a lot of people came into the post-Labor Day period positioned for a steeper yield curve and more of the same. PIMCO's Dan Iverson, one of the very best at it in fixed income, backing away from the steepener, speaking to Bloomberg saying it's performed so well that our conviction level has come down, and maybe he's not the only one now.
Well, this raises the question, is this flattening, the sort of bull flattening that you're talking about, is that signal or is that noise? Is this people stopping out positions that already performed very well, or is this a signal that as the Fed cuts rates, there isn't going to be this concern about runaway inflation and there still will be demand for the long end of the yield curve? I would say the jury is still out because you have other people like Dan Iverson who are saying the same thing. Essentially, longer term, they see a steepening, but right now, short term, they see this flattening. This, to me, is one of the most complicated trades I could possibly imagine, and it really will be important, especially given Scott Bessent's goal of getting 10-year yields down to 3%.
This is one of the biggest consensus trades in the market right now, and the market is pushing back against it, at least so far in September. Early days, I know, the yields are backing away from the highs we were talking about 2 weeks ago. 5% on 30s, more like 465 this morning. 10s at about 4.04%. 2 hours away from the cash open. Let's focus on equities now. To get your morning movers, here's Danny. Hey, Danny.
Hey, John. It's been a really big week for AI infrastructure stocks after Oracle earlier this week, but now it is the turn of Supermicro Computer getting a big boost, up more than 5.5%. It says that it has started rolling out its servers that include the most advanced NVIDIA Blackwell Ultra chips. It's ones that help with more complex computing processes. For these types of companies, it's really a race to see who can deliver with NVIDIA chips the fastest, and Supermicro seemingly ahead of the curve. Elsewhere, we also had an analyst upgrade by Barclays to GM, taking it from equal weight to overweight. Those shares rallying off the back of that. Barclays analysts saying that things like more soft regulation when it comes to EVs and just generally pricing power still for autos helping a company like GM. They also say its valuations look attractive and buybacks look good, hence the upgrade for them. Now, as far as earnings, we also heard from Adobe after the bell yesterday. Again, another AI story. It seems like all of their AI innovation is paying off. Morgan Stanley analysts noting that going into the earnings, there was a real question to whether they'd get that return on investment. They gave a pretty punchy outlook, surpassing estimates. So those shares up 3% because everybody wants to Photoshop themselves with AI. John?
Danny, thank you. Bit loose and fast with everybody. Don't want anything to do with that. The photoshopping with AI.
Yeah, I want
People changing their pictures. You've seen people are doing that with their LinkedIn photos now.
Yeah.
That you take your own photo, then you push it through.
Or dating apps. Yeah,
right?
That's always an
Yeah,
interesting one.
imagine them turning up for the date. And
exactly.
finding out
Well,
that
there you
person
go.
sitting across from you is not the person you thought it was.
How do people handle that? Do they get up and walk away?
I think they walk away.
You think so?
Honestly. I just speak with experience there. That was pretty fast.
That was, you want to say anything else on
No
that?
filter, AMH, filter. Let's move on. On our radar this morning, the FBI releasing new video of the suspect in the assassination of Charlie Kirk. Surveillance footage showing a person jumping off a building and fleeing the scene just after the shooting. Any developments here, of course, will continue to bring you them. Elsewhere, Treasury Secretary Scott Bessent discussing trade and TikTok with the Chinese Vice Premier in Madrid next week. The meeting laying the groundwork for a potential summit between the President, Donald Trump, and Xi Jinping.
This is going to be a big one because this is the third of a series of meetings between U.S. officials and their Chinese counterparts. Pete Hegseth, Marco Rubio both spoke to their counterparts this week. And then final, you send in Scotty B, maybe sealing the deal for this leader-to-leader meeting can happen potentially on the sidelines of the APEC summit. What I struggle to understand is when the United States sits down with China, what's going to be their number one ask? They are dealing with fentanyl. They need China's sign-off, the Communist Party sign-off on a sale of TikTok. They are dealing with China dumping on other markets. They want China to purchase U.S. agricultural goods, the phase one trade deal, which they have not lived up to. So this is going to be very delicate when it comes to Xi Jinping and Donald Trump sitting down
It's
together.
super delicate, and also in the mix of all of this, I think the Mexico story is fascinating. We're going into next year. Mexico and Canada want to come to some kind of agreement with the US on USMCA and the future of a trade relationship. What Mexico knows it's got to do is put up the walls to Chinese imports to make sure they can smooth the runway, foam the runway, to make sure that things are going to be okay next year. China's basically trying to bully Mexico. At the same time, these two are getting together in Madrid. I think that's one of the most interesting stories in global trade right now.
How does the U.S. come to some agreement with China or even the parameters for it at the same time that the U.S. is encouraging Mexico to put up the walls and China is going after Mexico and saying the U.S. is a bully and we don't ascribe to such bullying tactics and we want free trade? There's a real question here about how all of these other stories now add to the complexity, the issue with Russia. How do you get China to agree to pressure Russia to end the war without putting secondary sanctions on and without further inflaming some of the concerns? So the geopolitics of this, I think, are fascinating and what messaging the U.S. sends.
The United States is basically going to tell these countries like Mexico, like Spain, the Europeans, you have to choose. And you better be choosing with us. They're also going to remind them that if you decide to go down this road of choosing China, you're going to destroy your high-end manufacturing base. And you're going to be basically crying for the next few years because it would be cheap now, but you're going to have to pay for it later.
It's going to consume your manufacturing base, and we're seeing that take place potentially in Germany and the auto industry across the continent. Wanted to squeeze this story in, looking ahead to next week. NVIDIA, OpenAI, planning to invest billions in UK data centers. The CEOs set to make that announcement when they travel to the country next week. Their trip coinciding with President Trump's visit to the UK. You'll be there.
This will be an interesting one, of course, because we have seen the president do this in his prior trips to the Middle East. He brought likes of Jensen Huang along, and they were inking deals. What I find really interesting about this is I'm missing some other names. Where is Mark Zuckerberg? Where is Tim Cook? Are these individuals going to go with him? And what has been proven is if you go on some of these trips, like Jensen Huang, you get a lot more say on what is going on in the Oval Office and policy than when it relates to your industry.
Important question. You've screened the prices of flights. How expensive was the transatlantic trip this time? Is it going up?
It was expensive.
Was it?
It was very
Do you
expensive.
think that was just for next week? Or do you get a sense that everything's just had a little bit of a lift?
I think everything has had a little bit of a lift based off the rants I hear every morning from Lisa.
I'm asking for Bramo.
Well, I could just say we could see it from August CPI, 5.8% increase, which was definitely interesting. But to me, I take a look at the peak times vacation, and when it crosses a certain line, my God, I sound horrible.
She has a lot of lines in the sand.
No one gets a
Red line.
vacation once you go over a certain number.
We get a different kind of vacation, that's
Yeah.
all. I just tell the kids, you know,
Cruises.
ratchet it back.
Elisa
Think about
said
the
it, a
summer.
move of 6%, almost 6% in airfares in August CPI from the month before. Sheila Kolu of Jefferies is following this too. Sheila, good morning. It's good to see you.
Good morning. Thank you.
Is this the real deal? Do you think this is the kind of thing that can stick around?
Every point of price is about 10% of earnings for airlines, so it is a big deal. But we've seen airline prices essentially be deflationary over the last 4 or 5 years. So this is finally some momentum. And what's resulting is capacity is coming in. We're seeing capacity down 1 to 2 points, and that's helping price just move up into positive territory.
How much is this price increase an average that isn't representative of all of the potential offerings? I saw yesterday Delta put out an 8K, and it sort of highlighted how Delta gets more than 50% of its revenue from seats outside of the main cabin. In other words, premium offerings. And it just highlights that people who are feeling the wealth effect and are wealthier are fueling some of these price increases maybe than the back of the cabin.
Yes, it's definitely for folks that buy BlackBerries over $7. This is what's fueling the demand for Delta Premium One. But Delta's 8K really just raised the midpoint of the guidance 1 to 2 points to 2 to 4% revenue growth in Q3. So we're not talking big numbers here. That's moving these stock prices really. So it is 50% premium. Corporate's just coming back. But Delta still talked about weakness in Atlantic, main cabin pressure as well. So it's not all parts of the market. United refuted that and said everything is great in all places of United. So they were more bullish.
Well, how much are some of these airlines reducing capacity in order to keep prices high? And I'm saying this because simply their overhead costs, especially with personnel, have gone up. They want to maintain some of that personnel so that they don't have the same situation as during the pandemic. And you end up with higher prices no matter what.
We're looking at capacity for airlines down about 1% over the last month. TSA volumes are up 1%, so it's only a 2-point spread that we're seeing. So capacity coming in 1% is really helping that price. Some of it is low-cost carriers going out of business that's driving and fueling this demand. And then in terms of costs, a lot of the labor agreements are in. Delta called out higher costs related to weather in Q3, so it was more just seasonal rather than a long-term issue for costs.
You mentioned low-cost carriers. What's going on with United and Spirit? The Spirit Airlines CEO is saying United CEO can't stop, quote, yapping about us.
Scott Kirby tends to be an outspoken person for the airline industry, and he's done well in terms of raising visibility for airlines, saying there's brand loyalty associated with airlines, and I do think that's true, whether it's the Mileage Plus program or Delta One. Once you fly that, you tend to go on it and you look less for what the airfare price looks like. So I do think that Delta and United are bringing brand loyalty back and trying to say, we don't need to trade at 5 times earnings or a 70% discount to the market. We could have sustainable earnings.
Is Scott Kirby, though, right about Spirit? Are they going to go out of business?
Low-cost carriers in the U.S., there's just too much capacity going into the same markets. And then that's where you see promotional airfares from Southwest Airlines and the like. And so you don't really want to fly the routes, the most lucrative routes, where you're making 20% margins are those transatlantic flights.
I noticed you haven't really mentioned American. You've talked about United, talked about Delta. Has American still got a problem?
That's where my loyalty lies, Delta and United, in terms of my personal flying. But in terms of American, I do think they're the third sort of network carrier in the U.S. They have a subpar product domestically and internationally, and they're trying to improve that by improving their wide-body
What makes it subpar for you? What is it that they're doing that is subpar compared to, say, the Deltas of this world?
I think Delta One has invested so much. They have 3 main hubs with the Delta One lounges in the U.S., something like $3.4 billion of investment at JFK alone. So the return on that is to gain a little bit of market share, and they've done that successfully because folks like me who flew American in 2019 are now flying Delta because they've invested so much in the infrastructure and the cabin and on-time delivery, on-time arrivals. Same thing with United. So you could see the investments really helping brand loyalty.
Sheila, appreciate it. Appreciate the honesty too. Subpar American Airlines. Sheila Kohli there of Jefferies. I don't know if they're listening this morning, but
I will get a call if they are.
That's the conclusion of a lot of people.
That hit hard for you. I know. It's sort of what it was.
Here's the problem, and Anne-Marie understands this.
We're one world.
If you're coming from London, you've probably been flying BA, which means you're one world, which means ultimately you just sort of drift over to American almost accidentally.
Yes, and also I used to fly to the Middle East a lot. Qatar is also one world, which is not subpar. And I recently flown American, I have to say. I thought it was a good experience, and they've updated the lounges. It seemed pretty seamless.
You're happy with that, all right? Yeah. We're balanced here at Bloomberg Surveillance. Let's get you an update on stories worldwide with your Bloomberg Brief. Here's Yahara. Hey, Yahara.
Hi, John. Former Brazilian President Jair Bolsonaro has been sentenced to over 27 years in prison. He was convicted on charges he sought to cling to power by plotting a military coup that included plans to assassinate President Luiz Inácio Lula da Silva. His lawyers are expected to appeal his sentence. The U.S. has warned it will act accordingly to what it called a witch hunt. Meanwhile, Treasury Secretary Scott Bessent is adding additional names to the list of candidates to replace Fed Chair Jay Powell. In recent days, Bessent reportedly met with former Fed officials Lawrence Lindsay, Kevin Warsh, and Jim Bullard. Powell's term expires in May 2026, and while he could stay on for 2 more years as governor, Trump is anxious to replace him as chair. And shares of Warner Brothers Discovery are surging nearly 5.5% in the pre-market following reports that Paramount Skydance is preparing a bid for the company. Sources say Warner Brothers CEO David Zaslav believes he can get a hefty premium for his streaming and studios businesses once they're separated from the cable business. The Paramount offer is being backed by the Ellison family. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next on the program, a new rally in the bond market.
I think the long end of the curve has actually done most of its rallying. What we think you'll see instead is short bonds will rally. We think equities can continue to rally. But that long end, I think, probably has a little less opportunity.
A conversation up next with Sam Zeef of JP Morgan Private Bank, live from New York. You're watching Bloomberg TV.
I think with the new world reorder, it means that there will be regional clusters of excellence. There will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns goes to 0. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
You missed it on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Michael McKee in Jackson Hole, Wyoming, and this is Bloomberg.
Equity futures this morning, negative by 0.1% on the S&P 500, just about unchanged on the Nasdaq 100, coming into Friday at record highs. Under surveillance this morning, a new rally in the bond market.
What is most likely to happen is, kind of 2-year yields are likely to come down to where the federal funds rate is headed. We think that's 3%. 10-year yield at, essentially 4%, we think that's about where it belongs. We think the long end of the curve has actually done most of its rallying. What we think you'll see instead is short bonds will rally. We think equities can continue to rally. But that long end, I think, probably has a little less opportunity.
So here's the latest this morning. Treasury yields nearing lows of the year as traders price in further Fed interest rate cuts. Sam Zeef of JP Morgan Private Bank saying the following. Fed rate cuts can stimulate the economy even if long-term Treasury yields don't decline. Sam joins us now for more. Sam, good morning.
Thanks, good morning.
It's good to see you. Let's throw some of that into foreign exchange.
Yep.
Can you help us understand what kind of market regime we're in right now, whether it's relative rates, whether it's yield differentials, growth differentials? What's driving things at the moment?
Yeah, it's definitely compared to early this year around Liberation Day or Q2, there was always the kind of yield differential story, and it had totally fallen away, and everything had become about flows, American exceptionalism, the Sell America story. And really, since then, over the summer and into right now, that story has completely faded away. We don't see it in the data. We're not seeing signs of repatriation or big asset allocation flows. And it's really been the correlation between yield differentials and the dollar that has reasserted itself. So when we think about our expectation that the dollar can sell off a little bit more, 3 to 5% into next year, it really comes down to the yield story and the relative growth and rate story.
So when you put this together, do you buy the yield flattener, the yield curve flattener that we've seen? Do you think that that's a lasting trade?
In the long end, no, this is probably more of a counter trend rally in our view. We really just think you get the diversification benefits and the yield that you need from the Treasury yield curve in the intermediate part of the curve. We don't see tons of reasons to go out into ultra long duration, particularly when it comes to Treasuries, or really globally in sovereign bond markets, given fiscal concerns, given debate around political volatility. And really, I think you can see it. We were talking about this before. You can see it in gold. 10s, 30s, steepening year to date, gold continues to rally. So we get a lot of pushback on our dollar view saying, oh, the dollar is stubborn, it's not selling off, euro dollar is stuck here, and that's right. But not against gold, not against precious metals. The dollar is continuing to devalue there. And that's actually, at least at the private bank, where we've been really expressing our bearish dollar view, has really been in the precious space and in gold.
So when you take a step back, you said that cutting rates at the front end can still stimulate the economy, even if you end up with higher long-term rates. Can you talk about exactly how, given the fact that the transmission mechanism, a lot of people are saying, has been, if not broken, really muted?
Yeah, I think people think about, oh, Fed rate cuts, long end comes down, mortgage rates come down, refinancing rates come down. But I think it's really important to think about not only how we think about it, but the Fed is in terms of broad financial conditions. As long as if the fact that the Fed is getting more dovish or bringing the front end down results in tighter credit spreads, higher equity prices, maybe a weaker dollar, improved sentiment, then financial conditions ease, and that's what transmits into the real economy. And actually, if you look at the Fed's own FCI models, just given the easing of financial conditions we've gotten over recent months, Fed hasn't even cut yet. It's going to boost growth all else equal 30, 40, 50 basis points over the next 12 months.
They're expected to cut next week. So help us understand what you're expecting next week. Is that going to be a one-off adjustment or the start of something bigger?
Yeah, we think it's the start of a full return to neutral. We really don't think, given the loosening in the labor market, or certainly lack of retightening in the labor market, that you need rates in restrictive territory anymore. So we think it's the start of the process to bring rates back down to around 3.25. So we have penciled in about 100 basis points of cuts over the next 12 months. We can debate how fast we get there, but this is the first step, and the fact you're going back to neutral is really what underpins our investment
Let's
thesis.
talk about speed. How do you think about speed at the moment when we could have a different Fed chair arriving in May with a very different view of what to do?
Absolutely. I think they want to get the process started. The Fed itself has given some speeches that say kind of get on with it. And so I think they want to get the process started. Look, the market, at least, again, and go back to the idea that we focus on financial conditions, broad financial conditions. As long as the Fed delivers on the roughly 100 basis points of cuts that are priced at some point over the next 6 to 12 months, that shouldn't tighten financial conditions and threaten the outlook. Maybe it's, downplaying their actual actions, but it's already priced. It's already transmitting through financial conditions. So as long as you kind of deliver on it, you're going to get the stimulus that it involves.
Does it make you want to buy U.S. debt more with a backstop potentially of a Fed that is going to try to be supportive in whatever way that it can, both on the short end and the long end, depending on who comes into the office?
Yeah, I think the key is we are going to have a Fed cutting cycle, let's call it. Other underpinning belief that we have is that the economy is not going to slide into recession. And when you have Fed cutting cycles that don't accompany recessions, your kind of playbook for asset prices is very different than if the Fed's cutting into recession. So going to bonds in particular, front end performs, gives you yield, gives you diversification. The long end, if you look across cutting cycles that don't result in a recession, long end stays flat, maybe even moves higher over time. So we're really like being in the belly of the curve and in. And then when we're trying to find yield in the private bank to make up for the fact that cash rates are on their way down, we've really been looking more into ultra high quality, investment grade credit, taking a little bit of credit risk in the high quality companies because treasuries are already really pricing in a big easing.
Why aren't you going into Europe, given the fact that they just forecast inflation coming in below that 2% level and still see growth, albeit tepid?
Yeah. It's not that we're against going into Europe, but on an FX hedge basis, it doesn't really give me much relative to the U.S. And I think what we heard from, the ECB yesterday is that they're done cutting, right? We're kind of 50-50 in our own debate about whether they deliver one more cut or not. The real difference in global sovereign bond markets is that most foreign central banks are done with their cutting cycles, and now the Fed is catching up. And that's the theme that we're going to be trading.
The ECB forecasts are amazing for me. I keep going back to these growth forecasts. GDP for this year, 1.2%. For next year, around 1%. For 2027, around 1%. We talked about this yesterday. What happened to all the hope and enthusiasm about the European growth story? The ECB just turned around and told you yesterday they're expecting growth around 1% for the next 2+ years.
They turned around and they said, be happy it's not a recession, essentially, right? I mean, this is sort of how low the bar was, but you're right. Where is that dynamism? And that's one reason why, as much as people were saying, sell America, go into Europe, we really haven't seen it sustained. Yes, in certain pockets of the equity market, but you've seen those flows reverse in certain pockets over the past couple of months.
Besides the defense sector, where are you going to be investing in Europe? And what we've seen, especially in autos, is China just absolutely destroying the sector across the continent.
It was interesting that they believe the disinflationary story might be over on the continent when we still haven't really concluded what's going to happen with trade for next year and beyond.
Well, and that's why Christine Lagarde said that the risks around the view are high, but it is notable that right now we are heading into a weekend of meetings between the U.S. and the Chinese counterparts in Madrid about exactly what the trade landscape looks like. That is a huge risk. And how do they deal with this inflation? How high is the bar for them to act in a more stimulative manner, given the fact that they do have a singular mandate, but it seems like mission accomplished based on their own forecasts?
Sam, it's good to see you. Appreciate your time. Sam Zeether of JP Morgan Private Bank with a big call in the FX market. Dollar weakness, if you want to see it, see lots of it. Look for precious metals and what's been happening this year.
To me, this has been stunning. The fact that we had, on an inflation-adjusted basis, record high prices, more than $3,600 per ounce on gold. The precious metal has just been ripping higher. And this really is where you can see some of this question around the dollar and where its role is in the global economy. And this is where you can see buying by central banks, particularly in China, that tends to be underreported time and time again. So, again, if you want to buy a ring, good luck.
Gold up again this morning by 0.4%. The good news is diamond prices are like,
yay,
rock bottom.
All right, well,
there you go. Just trying to bring a smile to people's faces, Bramo.
And you're doing a great job.
Trying. Coming up, Tracy McMillan of Wells Fargo, Gil Luria of D.A. Davidson, Stephanie Roth of Wolfe Research, and Krishna Mamani of Lafayette College. The third hour of Bloomberg Surveillance up next.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg.
We've been concerned about inflation for a while.
We're getting what we expected on inflation.
You are seeing more evidence of a softening in labor market conditions.
The economy is gradually grinding to a halt here.
The economy is set to reaccelerate.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
4-day winning streak on the S&P 500, 6 on the NASDAQ 100. We're looking at all-time highs arriving into Friday from New York City this morning. Good morning to you all. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures negative by not even 0.1% on the NASDAQ 100, up by around about 0.1%. In the bond market, decent rally at the long end of the curve so far this week, taking bond yields down to around 4%. Yields a little bit higher this morning by 2 or 3 basis points. One more data point left before we get into the weekend, the big one, drum roll. You, Mitch. You know how much we love you, Mitch. It's not even an economic survey. It's become a political poll about how Republicans and Democrats feel about the economy.
Well, look, we're going to be looking at it because it is something that comes out, and it's one piece of the pie. It sort of has been less and less of an indicator. I think a lot of people are with you. That said, one thing that's been notable is that consumer sentiment has held in better than you would have expected, given that inflation is still as high as it is. And I think that that's the tension that you're talking about, which is if people say that inflation is low enough to start cutting rates, is that sentiment reflected in the population, especially at a time of slow labor market growth? And that, I think, is a really good question that we're looking for tea leaves to try to understand.
We can all sit around this table and look at this poll, what it is, not a survey. It really is a poll and has a lot of political bias in it, and say, who's really going to be paying attention to that? But the Fed actually paid attention to the University of Michigan last time around.
The Fed's not paying attention to inflation this time around. I guess that's the big change. Chairman Powell set us up for a very different meeting next week when he addressed Jackson Hole, and you were there. That line in that speech that we've repeatedly on this program, that he expects inflation potentially to be a one-off, but not all at once phenomenon, that basically means this Federal Reserve is ready to look through hot inflation prints into year-end and maybe beyond.
The fact that this market is pricing in 75 basis points of rate cuts, even when we haven't seen inflation at that 2% target for more than 4 years, tells you a lot. And I think that a lot of people are saying they're willing to look through any short-term inflation pop. My question is, are they willing to look through a 6-month or 8-month inflationary kind of wave? And it really goes to the core of, why is the long bond rallying? Is it because people truly believe that inflation is going to come in? Is it just a trade that is getting stopped out because it was so consensus and we're trying to put a narrative around it? Or is this something else about how the Fed is going to adjust its policies and its balance sheet to have a little bit more influence over the long end as well as the short end?
That meeting coming up next Wednesday. Equity futures at the moment pretty much unmoved on the S&P 500. Coming up on this program, we'll catch up with Tracy McMillan of Wells Fargo as stocks trade near all-time highs. Gil Luria of D.A. Davidson shaking up his outlook for big tech, and Stephanie Roth of Wolfe Research on rising rate cut bets. We begin this hour with stocks steady ahead of next week's Fed meeting. Tracy McMillan of Wells Fargo writing, Fed Chair Jay Powell is more focused on employment data than inflation data for now, and the bond market knows it. Tracy joins us now for more. Tracy, good morning. Can we talk about the rally, not just at the front end, but the rally further out along the curve at the long end? That long end starting to outperform. What do you think's behind that?
Good morning. Yeah, so we think that it's outperforming because there are a number of rate cuts priced into the markets. And we're seeing really the yield curve shift down across all of the maturities. So we think that's really what's behind that. We don't think, however, that the 10-year gets much below 4%. You know, if you just do a little simple math, 2% growth, 2% long-term inflation, you're at 4% without a term premium. So we really do think that's probably about the floor for the 10-year.
What's the relationship between that and that view and what you expect to see in equities?
Yeah, so what we expect to see in equities is potentially some choppiness here in the near term, and that has to do with a number of risks, one of which is that we could see inflation higher than the Federal Reserve is comfortable with, and the markets may need to ratchet back some of their rate cut expectations. And there are a number of other risks that we see that also could play into a choppy market here. But longer term, we see markets recovering in 2026.
So you see that even if there is a sell-off at the long end. I mean, to me, I thought that one of the most interesting notes overnight was Torsten Slot coming out and saying, what are the implications of not having a risk-free asset? There's a question about whether the stock market can power ahead, even if there is choppiness in yield curves as well.
Yeah, so what we're seeing is that if there is choppiness in yield curves, and we also anticipate that we could see some lift at the long end of the curve next year. However, we don't think that it's going to be an all-out sell-off of the U.S. Treasury. The U.S. continues to have the dollar as the reserve currency of the world. The U.S. also has the ability to issue debt in a way that it can help to manage what yields are further out the curve. So we don't really see those numbers, those yields rising so significantly that it puts a rally in the stock market in peril.
And this is one reason why some people are saying that the recent rally at the long end has more to do with expectations around what the Fed can do in order to adjust some of its policies to keep yields within a certain level. I'm just wondering, Tracy, going forward, what do you think is going to be the leadership of an ongoing stock rally? Do you believe the sort of cyclical tilt that we're seeing right now, or do you think it's going to be the tech giants that keep powering it ahead?
Yeah, so really it's likely to be the tech giants that continue to power us ahead. Our favorite sectors are information technology, financials, and utilities. Information technology, because we do believe that the investment in AI is really just getting started, and utilities benefit from the build out and the operation of those data centers. Financials are benefiting from a yield curve that's rising on the long end.
When you look at the tariff impact, you talk about, you write in your note about they're arriving in piecemeal. What kind of timeline is piecemeal?
Yeah, so obviously some tariffs have already been implemented, but certainly not to the extent that we thought back in early April. What we see happening is that as court decisions come through that tell us whether or not the current policy is legal and whether or not the administration has to then reconsider how they implement tariffs, that could cause the tariff policy to be extended. And even as it is today, many tariffs are still in negotiation, so and still in flux. So we see it being implemented, across the next few quarters at least.
So are you basically saying that we're going to be living in tariff purgatory, almost maybe as long as the Trump administration?
Well, we hope not. We do hope that there is some clarity over the next couple of quarters.
Tracy, we've got to leave it there. Thanks for joining us. Tracy McMillan there of Wells Fargo. Just got some breaking news. Want to get you a quick update and cross over to Yahira for more. Hey, Yahira.
Hi, John. Exactly. President Donald Trump says the suspect in the killing of Charlie Kirk is in custody. He says someone close to the suspect turned him in. Meanwhile, Utah Governor Spencer Cox says the state will pursue the death penalty against Kirk's killer. Meanwhile, Treasury Secretary Scott Bessent will meet with Chinese Vice Premier He Lifeng in Madrid next week. The two will discuss trade, economic, and national security issues. The discussions will also cover TikTok's status and efforts to combat money laundering. A 90-day tariff truce between the U.S. and China is set to expire in early November. And OpenAI is moving closer to restructuring into a more traditional for-profit model after months of negotiations with its top shareholder, Microsoft. Chairman Brett Taylor says the nonprofit parent will keep control through a new public benefit corporation and holds an equity stake worth at least $100 billion. But its restructuring faces opposition from Elon Musk and state attorneys general. That's Bloomberg Brief. John?
Yahira, thanks for that. Just to recap the breaking news crossing just moments ago from the President of the United States saying he's just recently found out that with a high degree of certainty we have the suspect following the killing of Charlie Kirk, saying the suspect is in custody and that according to the President of the United States, somebody close to the suspect turned him in. The President going on to say that I hope the killer of Charlie Kirk is found guilty and gets the death penalty. More on that story later this hour. Up next on the program, we'll turn back to the markets. The morning calls, plus Gil Luria of D.A. Davidson shaking up his big tech outlook. That conversation up next.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today. and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
What type of overvaluation is being placed by investment or CapEx at this point really is in the eyes and the ears of the beholder, because maybe the investments that are being made across the 11 sectors to participate in what AI can do really position ourselves for what is genuinely a new economy that we are moving towards.
That was the biggest bull on Wall Street, John Stolfus of Oppenheimer, looking for 7,100 on the S&P 500 year end. We're getting closer. Equity futures this morning pulling back just a little bit. We're down 0.1%, but over the last week higher. Every single day this week so far, Monday through Thursday, a 4-day winning streak on the S&P 500, taking us towards another week of gains. Record highs on the S&P, record highs on the NASDAQ, coming into Friday.
There have been 24 record highs on the S&P 500 so far this year. There have been 22 on the NASDAQ. This includes the swoon that we saw after April 2nd, after Liberation Day. It highlights how offsides people have been who have betted that this market would continue to go down, and it highlights why some people are saying the pain trade might be up even now with all of these gains behind us.
How comfortable are you with the new story? Re-acceleration. That's the real risk here, that things start to pick up, that the worst of the data is actually behind us. It was June. Mark your calendar, it was June, the jobs data was terrible, and now move on. Look ahead and things are going to improve.
When have I ever been comfortable, I think is probably the better way of looking at it. And I would say just about as comfortable as I am now with that story, which is not very. And really the issue to me is there some sort of dissonance, as Andrew Hollenhorst was talking about, between a bond market that's pricing in a Fed that needs to take action and pretty significantly, and a stock market that's rip-roaring ahead? Is there some sort of contradiction and a re-acceleration that's going to allow the Fed to cut without inflation coming along? It's so many different perfect little pieces that come together that, sure, I'm not comfortable, but that's probably why there still is that bearishness and probably why the bulls are dancing all over them.
Are we reaching the limits of bad news being good news? I was thinking about that yesterday. Maybe it's not the claim story. That looks like Texas, looks like a freak one-off. But are we reaching the limits of that weak labor market story being good for stocks?
You know, the issue to me is, do we understand that weak labor market story? I was looking at a study coming out of one of the regional feds yesterday, and it was pointing to the fact that the break-even rate of labor market creation in this economy might be 30,000, not necessarily 150,000 like earlier this year on a monthly basis. I'm just saying it's hard for us to get our hands around exactly what this market is in terms of labor, and I think that's underpinning some of this idea that people are just discounting it altogether.
The open about 1 hour and 15 minutes away. We're down by not even 0.1% on the S&P. That's the price action this morning. Let's get you some morning calls. First up, UBS upgrading Alaska Air to a buy, saying earnings are about to, quote, take off. They are this morning by more than 3%. Your second call from Barclays upgrading GM to overweight, seeing more upside potential with further tariff deal easing still ahead of us. That stock is up by 1.5%. And finally, BMO cutting its price target on Adobe to 405, citing concerns about its durable growth. That stock's still doing okay, positive by 2.5% in the pre-market. Let's stick with tech. Wall Street sentiment on Apple hitting a 5-year low after it unveiled a new line of products earlier this week. Bloomberg's Mark Gurman joins us now for more. Mark, welcome to the program, sir. It's not been a great time for Apple over the last few months. We talked about an upgrade super cycle for iPhones for the last several years. It hasn't developed. Do you see anything, Mark, in the latest unveiling that's going to encourage people to say, yeah, now's the time, let's upgrade?
Well, we haven't talked about an iPhone supercycle the last few years. Others have talked about an iPhone supercycle. To me, it seemed kind of obvious. Design is what sells. New form factors are what sells. Real AI features are what sells. And over the last few years, Apple has not had that. That's why I'm a big believer in this year's release, because new designs, new colors, new looks, new features, that's what sells. So I'm pretty optimistic for these new 17 Pro and Pro Maxes because of the new look, because of the camera improvements, because of the new colors. I would anticipate some semblance of lines this time around. In addition to people simply wanting to check out the iPhone Air, they might not buy it because it's not very practical given the battery life and camera constraints, but certainly it's going to bring people into stores to take a look.
Mark, one thing we've heard from a lot of guests on the program, particularly the bears, of course, is that ultimately it's not about looks, it's about functionality now. What are you doing with Apple Intelligence? What steps have they taken to improve things on that front?
Well, I don't necessarily agree. I think we're about a year away from people really making purchase decisions in regards to AI features. Apple has definitely done a very poor job on implementing AI. Their rollout over the past year and a half for their Apple Intelligence functionality has been nothing short of a borderline disaster for the company, but it's not really impacting purchases. We're still, like I said, many months away from that being a real factor. People buy phones because they break their screen, people buy phones because they want a new look, and people buy phones because they have run their battery into the ground. But in terms of upcoming AI integrations, you'll see a revamped Siri in March.
Can you promise me, Mark, that if I drop this one, the Air, that it won't break?
I can't promise you, but it was actually quite interesting. A couple Apple executives did an interview with a website called Tom's Guide I saw on YouTube yesterday. And Greg Joswiak, the head of marketing, threw his iPhone Air to one of the journalists and asked them to try to bend it in half. Because if you remember when Apple did a super thin iPhone 6 Plus back in 2014, you could just bend it in half like you're bending a piece of paper almost, right? And this guy was trying and trying and trying, and he could not bend that thing. So I can't promise you that if you do it, it won't break, but clearly they're confident enough to have a journalist on YouTube try to break it in half, and nothing happened.
Mark, appreciate your take, sir. Thanks for making time for us this morning. Mark Gurman there, one of the very best following this story. Let's stick with Apple. Gil Luria at D.A. Davidson, downgrading Apple shares to neutral with a 250 price target. Gil joins us now for more. Gil, welcome back. You heard Mark there. A little bit more constructive about what the next year could bring. How constrained do you think the growth story is going to be? And why don't you think this story, the big unveil over the last week, is going to address that?
I do think that Mark is right about there being a little bit of a different form factor. The colors, the look is a little different, which is what has in the past driven some upgrade. But this is the type of upgrade that maybe will take us from iPhone being flat for the last 5 years to up a few single digits. That's probably not enough. To Mark's point, until AI has a big impact and drives an upgrade cycle, which was what we were expecting last year and did not materialize, we're not going to get a big enough upgrade cycle to drive the stock up from here. That's where we're at, is that until they have another breakthrough, until they have something very dramatically different, a new category, a completely new form factor, it's unlikely that we're going to get out of this low single-digit growth range.
But are they going to lose their install base, Gil? And this is actually one of the existential questions facing Apple, especially as there's real competition from the likes of Samsung and others. How much are other manufacturers of smartphones luring people away from the Apple ecosystem? Or is it just sort of a waiting process until something better comes along from Apple?
Apple turned out to be very sticky. The handsets are very sticky. Once you get into the ecosystem, especially you have multiple devices like the AirPods or the Watch or Apple TV, then you're very entrenched, and it's very hard to get the consumer to leave the platform. That is why Apple trades at a premium. It trades at a premium because it's so sticky. It's hard for me to imagine 5 years from now not being in the Apple ecosystem, because of how it's wrapped itself around my usage. That is the big advantage of Apple. So even with low single-digit growth, they can grow services double digits. That's what gives Apple that premium valuation, which is well justified.
Gil, given that sort of demand, and you see it if you have kids and if you do a channel check at the high school and you see that everyone has their various Apple devices, I'm just wondering, was it surprising to you that they weren't able to raise pricing more on some of these phones?
Yeah, that is a competitive issue, right? If they start pushing the price points higher and higher, they're going to get less top of funnel. They're going to get less new users. Parents are increasingly going to have their kids have Androids instead of iPhones, if the price point differential is big. They did some subtle things. Putting the Air where they did may encourage some people to go to the Pro level $100 higher. So those kinds of subtle things may increase ASP a little bit, average selling price a little bit, but not significantly. And it's very hard for them to raise prices at the low end, again, because that's where the competition is.
How constrained is Apple right now when it comes to regulatory concerns in Europe? When I walked into the studio this morning, Jonathan was talking to me about how the fact that this cool feature everyone's excited about, the AirPods that can have live language translation, actually won't be allowed in the European Union because of the Digital Markets Act.
Well, the Europeans have regulated themselves out of innovation for a while now. I don't expect that to change. But if the live translation feature works, that could be a very attractive feature. That could be a game changer. Let's not forget, Google and Meta have been trying this with the glasses, and they have pretty shaky early versions of this. I would imagine that if Apple went ahead and showed us live translation on AirPods a week ago, then maybe this is real and it will be very significant. And I would expect, if it does work that well, that the Europeans may reconsider that, because that would be a very a big leap forward in terms of functionality.
Right, so you think potentially they need to prove that it's working and then the Europeans might come around. Speaking of Europe, do you expect Tim Cook to go with the president next week?
He's doing his best to ingratiate himself with the president. It was almost comical to see him present the president with a golden statue. I think it was almost biblical. So hopefully that gets him close enough with the president. The president will take him there and maybe even address some of these concerns head on. Part of our concern vis-a-vis Europe is that Europe is applying these non-tariff barriers on big tech. And so the president's going to want to address that. Part of it has to do with the very restrictive regulations around the Apple store, the Android store. And so that very well could be an opportunity for Mr. Cook to improve that situation in Europe.
Gil, before you go, shake up with your NVIDIA call as well. What's changed for you? What do you see differently and why?
We're very optimistic about the growth of demand for AI compute based on how much we're using these tools and how powerful they're being. And NVIDIA, which has done it incredibly well, hasn't caught up to the rest of the AI trade. It is now the most attractively part of the AI trade. In fact, they're trading at 28 times next year's earnings. That's the same as Apple. Apple's going to grow earnings 9 or 10%. NVIDIA's going to grow earnings 30 or 40%. So for as well as NVIDIA has done, the rest of the AI trade has done so well that NVIDIA is now the most attractively priced within the AI trade.
Amazing. Gil, appreciate the call. Gil Lurie there of D.A. Davidson on both Apple and NVIDIA. What a week it's been for the AI story. Oracle, so far this week, still higher by more than 30%. We've added $221 billion to the market cap of that company this week.
After they announced that they see a 77% increase of the demand for their cloud computing services, really thrusting them into the race to really cater to companies that are trying to adapt to this AI technological boom. I'm looking right now, just Gil Lurie's call for NVIDIA to be the lowest price or the most attractive shares. Those stocks are up 32% so far this year. So this is the reason why people are getting a little bit nervous. And then you have the likes of people coming in and saying on the relative basis, they're behind. They should be up that much more.
We're concentrating a lot of capital in a handful of names.
Yeah.
That's the risk. That's the risk, but it's paying off at the moment, that's for sure. Nasdaq futures higher by 0.1%. Up next, Stephanie Roth of Wolfe Research on rising rate cut bets. Plus, Danny has your morning movers. RH feeling the effects from tariffs.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The open about 60 minutes away. Stocks just about positive on the Nasdaq going into that. On the S&P 500, just a touch negative. With your morning movers, let's cross over to Danny for more. Hey, Danny.
Hey, John, a couple good things going in Microsoft's favor this morning. For one, and perhaps the bigger one, is OpenAI looking at restructuring that would make it appear more like a classic for-profit company. It settles a long dispute between Microsoft and the company, helps Microsoft keep its partnership. Microsoft also settling with the EU and avoiding a hefty fine around allegations around its Teams products, so those shares up about 1 1/3%. Elsewhere, it appears to be a second day of a big rally for Warner Brothers Discovery. Yesterday was their single best day, up some 39%. And this is because the Ellisons are doing a classic media roll-up. Skydance Paramount, backed by the Ellison family, looking at taking over Warner Bros. Discovery, squishing the two together in a company that had been looking at breaking apart, so those shares up 8.5%. Finally, R8 shares getting crushed this morning, down 9% in their earnings. A disappointment there and a cut around tariffs. About $30 million is the charge they will be taking. But the CEO, who likes to use, let's say, colorful language on the earnings call, also saying unless you want to go effing bankrupt, you need to have discounts, something like 30 to 40% on it. I know you gave me permission to say the full quote, but I'm going to pass you on that.
It's Friday. You do you, Danny. Thank you. Looking forward to the show in about 30 minutes' time with Matt Miller and Danny Berger. Open interest just around the corner. I think the RH story is actually pretty important. Home builders have rocketed through August into September, getting excited about rate cuts. You don't hear the excitement about rate cuts from that guy on that call.
Yeah, they don't have pricing power. And this is a question around how much does that indicate true consumer pushback? How much does that indicate a sector-specific issue at a time when everybody renovated during the pandemic and now maybe aren't doing so as much? And how much is this a competitive disadvantage, right? Because some places have that pricing power, other places not so much.
Well, that's the latest on Restoration Hardware. That stock down by close to 10%. Important headline just crossed the Bloomberg terminal. I want to share it with you and give you some details. The US proposing broad G7 sanctions on Russian energy in a renewed bid to end this war.
So basically 100% tariff level when it comes to Russian crude on places on China and India for their purchase of that Russian crude. Also, they're telling G7 countries that they should create a legal pathway to seize Russian assets. Basically a way to try to get Vladimir Putin to the table and end this war. It was a month ago. Secretary Bessent sat around this table and said, it's put up or shut up time for the Europeans. They have for months been trying to get the Europeans to agree to, alongside them, also raise the bar when it comes to penalizing the Russians. And right now they're making a serious push at the G7.
This turns into a game of who's going to do it first and whether the U.S. will follow suit with big tariffs or secondary sanctions, I should say, on the likes of China and India. And this comes as Scott Bessent is poised to meet his counterpart from China over the weekend to talk about what could be setting the stage for a détente or some sort of meeting between Xi Jinping and Donald Trump. A real question here about how this would influence that should this get passed.
Busy few minutes of news here. Want to draw your attention to this too. Forgive me for changing topics quickly. Apple, these headlines just crossing, delaying the iPhone Air launch in China citing a regulatory issue, going on to say that the 17, 17 Pro, 17 Pro Max will still go on order in China, but there is a delay. The latest information just crossing, Bremo.
Yeah, questioning around exactly what type of regulatory issue this is and whether Tim Cook, once again, is a part and parcel of this trade dispute between China and the U.S., whether China is targeting Apple for its origin or whether this is something else. We'll get more information, but this really does highlight how much these tech companies are very much intertwined with discussions about trade between the U.S. and China.
Regulatory issue sounds like it is code word for leverage we want to use at the negotiating table, especially given the fact, Lisa, you just mentioned, Treasury Secretary is going into meeting with He Fang. This feels like leverage, and also China reminding their national champions that they want to back them when it comes to consumption of iPhones to their consumers and their economy.
For once, I'll hang back from speculating. All I can say is that the website says the iPhone Air is now coming later, and we'll see how late that iPhone delivery will actually come over in China. Keep an eye on that. The stock a little bit softer in the pre-market at the moment. We're down a few tenths of 1%. Let's turn to the economy ahead of next week's Fed decision. Bloomberg's Michael McKee joins us now for more. Good morning, Mike.
Good morning, John. Well, imagine you are Jay Powell and one of his colleagues on the Open Market Committee, and you've got to decide what to do on Wednesday. You look at the latest economic data, and I'll go back a week and a day, and it isn't particularly good. 2 out of the 3 are not particularly good news for the economy and may suggest a rate cut ahead. Unemployment has gone up since the president took office, and GDP has gone down. The restraining factor is CPI is now rising, and rising relatively quickly. So do you cut rates? And if so, how far do you go? That's going to be the question for Tuesday. And right now, the betting in the markets is we're going to get 25 basis points. The real question is going to be what happens in October and December. Part of that may depend on who's on the Fed. Here's the latest scorecard for that story going on. The Trump administration has asked the U.S. Circuit Court of Appeals in D.C. to rule by Monday on whether Lisa Cook can keep her job as a Fed governor while all this is litigated. District Court judge said yes. Now the Trump administration is asking for an expedited decision on a no basis because they want to keep her out of the meeting next week. Cook's people have filed a response that says you do that Monday night before the meeting and you could get chaos in financial markets, all aside from the fact that it wouldn't be the right thing to do. Then Stephen Myron expected to be confirmed on Monday night, so he would attend the meeting on Tuesday. And the meeting begins at 9 a.m. on Tuesday. So it's going to be a big Tuesday and Wednesday for the Federal Reserve and for the markets, keeping an eye on all these legal matters as well as interest rates.
Mike McKee, thank you, sir. The big breakdown going into the big meeting next week. Sticking with the Fed, Stephanie Roth of Wolfe Research joins us around the table. Stephanie, good morning.
Good morning.
Where's the Stephen Myron dot going to be next week?
I think we might need a new page for that dot.
What kind of changes are you expecting to the SCP?
I don't think there'll be that many changes. I think we're still, the Fed will still probably be looking for 2 cuts this year. Little changes from an economic perspective. The real thing is going to be how is Powell going to message the tone? And our expectation is it'll probably be fairly dovish in the sense that we last heard Powell Jackson Hole. He was dovish then. Since then, the data have gotten worse. So our expectation is maybe next week we'll see some dovish sentiment around the Fed. Beyond that, though, we might see strong employment data, or at least stronger than what we've seen, and the narrative could easily shift. So we have maybe one more week of this sort of soft, dovish narrative, and then it might certainly turn.
Do you think that he's got to have that in mind when he offers guidance next week? This is the big question for markets. Is this the start of something bigger? A one-off rate cut, a mid-cycle adjustment, or are they going to deliver the big deal? Go all the way down to 3 and think about even getting accommodative.
I think it's a path towards something that's closer to neutral. So call it 100 basis points. Their expectation is certainly not to cut one time and be done with it. Their expectation is they want to cut closer to neutral. They don't feel like they need to be in restrictive territory, just given we have seen a slowdown in the economy. I don't think it's anything that's likely to be cut below what they see as neutral, but just tweak to a level that's not so restrictive, and then they can kind of see from there. So their expectation is to cut a couple times this year, a couple times next year, and then they'll be at a level that they want to stay at.
Cutting to neutral at a time where inflation is still above the 2% target, somewhere around 2.5%. Are we saying that inflation at 2.5% is not a constraining factor for the Federal Reserve in cutting rates to tackle the employment part of their mandate?
So I think right now the focus from them is on the employment side of the mandate, just because payrolls has slowed down so much. Granted, unemployment rate has kind of been okay. It's been fairly steady. I think they're concerned about the direction of travel that we've seen in payrolls. So our expectation is they're certainly emphasizing the employment side of the mandate, at least for this meeting. Beyond that, it's very possible that they're going to have to focus more on the inflation side of the mandate. If we get a September payrolls print that comes in fairly solid and some upward revisions to August, the picture might look quite different.
How wrong are we getting this labor market? And I ask this given the fact that people have talked about immigration, that this is a supply side story more than anything else. It's also at a time where consumers keep spending. They wouldn't be spending so much if they really felt like the world was falling off a cliff. And you still see the unemployment rate hovering at a relatively low level of 4.3%. What are we getting wrong? What are we missing here about whether this is a good or a bad labor market?
I think what we're missing is the emphasis on headline job growth. At the start of the summer, we were talking about, and certainly on this show, that job growth should slow down substantially, the unemployment rate should be largely steady, and wage growth should be fine. That's a signal that it's a supply-side story impacting the labor market. Of course, there's an element of supply and demand, but we think it's more so on the supply side. Looking ahead, there's reasons that the demand side of the economy should pick up. We're going to move past economic uncertainties that ties to tariffs. We're going to have lower easing financial conditions, which should boost growth. Fiscal should start to become a positive. So even though we have slowdown partially from a demand side, that should move in the positive direction, and then we're just left with the supply side, which is just a headwind on regular job growth, but not really a real risk for the job market. It's just telling us that the supply side has slowed down.
I want to pick on a point you made about there's still this concern about inflation and potentially revisions or maybe better payrolls reports upcoming. What does the Fed do then? Do you see a world where they potentially have to hike next year?
No, I don't think they'll have to hike next year. I think they'll be in an environment, the pausing would be kind of the new hike in a sense. So what you would say is an environment where they cut a couple of times, and then they're in an environment where they want to wait and see how the inflation data plays out. And inflation may stay a little above 3% for some time. So it's just enough to be uncomfortable, but not enough to make them change policy in a big way.
Even pausing when we're going to get a new Fed chair?
Well, that's the challenge. So we'll probably see one or two cuts this year, one or two cuts at the beginning of next year, and then they'll have to kind of weigh it out. But the names for the Fed chair, if you have someone like Waller, I think there's a potential that they'll be able to pause and wait it out for a little bit.
Are you struggling to formulate a view post-May next year about what this Fed's going to do? Just how difficult is it as an economist at the moment? Just watching all of this play out down in Washington, a big interview process. Is it difficult to make guesses about what's going to happen after May next year?
So I think what's interesting about this environment is it's hard to have an economic forecast and a Fed forecast that goes together. So in a typical environment, if you give economists a set of same assumptions, they'll have a very direct path in terms of what the Fed's going to do. This time, you can give economists a set of assumptions, and they may have different forecasts for what the Fed's going to do. So it's not just about forecasting the economy, but then it's also forecasting the Fed's framework. And that's what's been so challenging in this environment. So for the economy, our sense is we'll see a labor market that looks just fine, growth that's starting to pick up, inflation that's a little bit elevated. The question is, how is the Fed going to approach that? They want to get towards neutral, but inflation is running above their target. So our sense is they'll cut a couple more times, 100 basis points, and then they'll probably want to stay there, just given that inflation will still be a little bit steady.
And just to be super clear here, you're not confused by what's happening with Washington because of the White House. You're confused because of the reaction function shift of Chairman Powell? Has that been the most confusing element of this?
That's been one of the most confusing elements so far, is just what data are they focused on? What should we all focus on to follow the Fed? What are the key elements of the framework? That's been changing throughout the past couple of years, and that's what's been so challenging in terms of following the Fed.
I'll say this for you because you're alluding to it, and I'll make it a little bit more direct. That's the failure of the Federal Reserve and the chairman himself to not be clear about this. And I would go back to the news conference with the Federal Reserve last time around. The chairman anchored his view on the labor market around the unemployment rate. Then the chairman gets to Jackson Hole, one bad payrolls report later, big step down in payrolls, I get it. And his view's now anchored around payrolls, even though unemployment's been pretty steady through summer. So he's completely changed the way he looks at the labor market and what anchors that view. Now, I'm not sitting here saying that one was wrong and the other's right. That's not my position. I'm not in a position to make that point. What I'm saying is just very different what we heard from him in the news conference and what we heard from him in Jackson Hole.
Yeah, the Federal Reserve has changed its stance on a number of things. The reaction function has been more confused just simply because this economy has also been really hard to pinpoint. You get 5 people in a room, they all have different opinions about what's going to happen, and they might change their opinions in 6 months. So I do think you are correct. It has been a failure to communicate the reaction function. A question here is, I would ask this, on Wall Street, do people have a consensus around what the reaction function should be? Or is it just as splintered there because of the confusions of the moment? I mean, I'm not justifying it. I think that this is true in terms of the market's difficulty in understanding this.
A critic of Powell will say that he was protecting himself politically. He opened the door and basically said, look, Mr. President, I opened the door to the Fed cutting. The rest of the committee, it's a deliberative body, needs to walk through it.
Stephanie, it's good to see you. Thanks for dropping by. Thank you very much. Stephanie Roth there of Wolf Research with the latest. Lots of news breaking in the last 10 minutes or so. Let's get you a wrap of that. Here's Yahara with more. Hey, Yahara.
Exactly, John. And we start with the latest on Charlie Kirk. A suspect in the shooting of the conservative activist is in custody, according to President Trump. Speaking just earlier, Trump said that a minister and the suspect's father were involved in helping to apprehend the suspect, who you can see there in that surveillance video. Kirk was shot and killed on Wednesday during an event at Utah Valley University, which spurred an extensive manhunt. Meanwhile, the U.S. is stepping up its efforts to end Russia's war on Ukraine. According to a proposal seen by Bloomberg, the U.S. will urge its G7 allies to impose tariffs as high as 100% on China and India for their purchases of Russian oil. It will also tell G7 countries they should create a legal pathway to seize immobilized sovereign Russian assets. And another breaking story, Apple is delaying the launch of its new iPhone Air in China. The company's China website would not let customers order the new, thinner device when pre-orders started today. Instead, shoppers got a message saying release information will be updated later. All models will be released after approval. An Apple spokesperson didn't immediately respond to a request for comment. That's your Bloomberg Brief. John?
Yahara, thank you. Appreciate it. Up next, we'll set you up for the day ahead, a sneak peek of next week, and we'll catch up with Krishna Mamani of Lafayette College from New York City. This is Bloomberg.
You've said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
You have the Fed rate cuts helping those sectors of the economy that are very rate sensitive. What people don't know that today the U.S. economy is not as rate sensitive as it was. It just isn't, because the service sector is much less rate sensitive. But the sectors that are rate sensitive, they're going to be another kicker for the U.S. economy in 26.
Always enjoy catching up with Stephen North of Federated Hermes. Looking forward to a better year in 26. Looking forward to 7,500 on the S&P 500 year-end next year. Equities at the moment on the S&P 500, as we count you down to the opening bell, just a little bit negative. We're down about 0.1%. 41 minutes until the opening bell. Here's your trading diary, 10 a.m. Eastern Time, a little bit later this morning. UMich sentiment Monday, looking ahead to next week, the Senate voting on Stephen Murren's Fed nomination. Tuesday, some more data for you. Retail sales on Wednesday, a Fed rate decision. Plus, the president travelling to the UK on Thursday, another round of jobless claims, and we'll squeeze in a Bank of England interest rate decision as well. That's the week ahead. Let's focus on one decision, the Federal Reserve. Christian Mamani, the Chief Investment Officer at Lafayette College, writing CPI came in hotter than expected, both core and headline, and it's broadening. That's not something the Fed is going to like. Krishna joins us now for more. Krishna, good morning.
Morning.
Isn't it something the Fed set us up to ignore?
Well, so I think for one meeting, sure. I think in Jackson Hole, basically, Mr. Powell gave the plot away as to what is going to happen in September. The real question is what is going to happen subsequent to September, October, December, next year. And if you look at the employment data, that clearly has softened over. But I think if you look at consumption data, it's kind of hard to reconcile the spending that we see in the economy with respect to, and reconcile it with what the employment data is showing. And there may be a lot of buffeting going on because of tariff and kind of delays that ensued after Liberation Day. We'll find out in due time. My suspicion is that it'll be, economy is in decent shape. And the real question for the market is to determine whether we are in 95, 98, 2000, or are we in 2001, 2008 from an economy and cutting standpoint.
Do you think then that the yields decline that we've seen in the long end of the yield curve is a head fake?
I think it is recognizing the potential of a softening economy. So not a head fake, but I think misguided would be a better way to phrase it.
So can you walk us through the progression of what you see? Because one thing we've talked about a lot on this show is whether the Fed is cutting into a reacceleration or whether Fed cuts are going to ignite that reacceleration of growth. And it matters for inflation. It matters for the nature of this rally or not. How do you see things?
Well, so I think if the Fed cuts and it reignites the economy, there has to be a sufficient amount of lag relative to that for things to work through the very large economy. So I don't think if they cut, that would be the cause of reacceleration. If it reaccelerates, it will be because the economy was not that soft to begin with, and they cut because of all sorts of reasons. And, you know, if you go back and look at last year, we were not too different from at the same point last year as well.
Do you think the same thing's going to happen in terms of long-term yields?
I suspect that is what is going to happen as well.
When it comes to the inflation story, are you concerned about some of the components we saw yesterday with sharp acceleration going up?
Well, so again, if you look at the data flow, the acceleration can be reckoned. You know, it's what is causing the acceleration. You know, goods or services, and that sort of gives you a little bit of clue. So the data headline number was hot, the core numbers were hot, but they are not totally out of the context of the Fed kind of trending lower with kind of keeping an eye on what's going on in the real economy.
So if the Fed cuts, we have a repeat of last year, what do they do about the long end of the yield curve that's attached to mortgage rates?
Well, so I think that's really the question. But, we are singularly focused on the Fed, what the Fed is going to do. However, the Fed can continue to cut. And if the economy reaccelerates, the bond market is not going to kind of take it very lightly. And the long end of the market is probably going to sell off, and the curves are going to steepen. And therefore, you may not get the oomph in the cyclical part of the economy that you may be expecting out of Fed cuts. So, yeah. The Trump administration may control the Fed, but the likelihood that they will move the economy in a meaningful way because of rate cuts, I think, is up in the air.
We've known each other a long time, and periodically I've come to you around turning points to try and get your view of the world. And I remember going back a long time, and you've got a decent record of doing this. I don't. I struggle with it for obvious reasons. It's hard. You said it's either the mid-90s or 2001, 2008. Two very different environments.
Absolutely.
What's guiding you to make that decision if it's one and not the other?
Well, so I think you have to look at the fiscal impulse in the economy. Deficit spending. Is it low or is it contracting? The answer is no. Do you think there are technological innovations that are taking place that may drive investments and things like that? The answer is yes. So in that context, it looks more like we were heading into a dislocated kind of agents in the economy and delevering that ensued. I don't think that is the case this time around.
So buy stocks and not bonds?
Yes, I think bonds are. I think bonds are in a range, in my judgment. 3.5 to, let's say, slightly above 4.5. When they get there, you buy bonds, and when they get closer to 4, you sell. Stocks, on the other hand, nominal instruments. We have decent nominal growth, and it may accelerate, and so they probably keep up. I think they do just fine. What's the risk-free asset then? Well, that's an interesting question. I think the risk-free asset at the moment is really cash, for that matter. That's the only thing that, it's not bonds. Bonds would be a riskier free asset, if you will, at 4.5, 4 3/4 over 10 years, as opposed to at 4%, given what the inflation picture and what the growth outlook is.
Krishna, you've given us a lot to think about. We appreciate it going into the weekend. Thank you, sir.
Thank you.
Thanks for being here. Krishna Mamani there of Lafayette College. Stocks over bonds is the mid-90s. It's not the end of this.
This is really the theme that I'm hearing from everybody this morning, that if you believe in inflation running a bit hotter than it has been in the past, you believe in this sort of reacceleration, well, bonds aren't going to offer it to you. Even dividend-paying stocks, probably a better upside hedge to any kind of growth than bonds.
Is there a risk-free asset in the world of Trump where we are reshaping the geopolitical and economic landscape around the world?
So far, it's gold.
Yes. Yeah,
at least
gold,
so far this year. It's not the traditional bond market. Coming up on Monday, as we count you down to a big week next week, we'll be catching up with Laurie Calvasina of RBC, Christian Nolting of Deutsche Bank, Henrietta Trace of Veda Partners, Greg Peters of PGIM, counting you down to a Fed decision, statement, forecast, news conference, all of that coming next Wednesday. From New York City this morning, good morning to you all. Have a wonderful weekend with your loved ones. Thank you very much for choosing Bloomberg TV. This was Bloomberg Surveillance.
To Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it, on the close.
Sweet Green, which has a kind of a similar business model to Kava, they're having some issues, and it's more about just the foot traffic. Maybe the price points are too high, or people have just moved on to other types of ways to feed themselves. What are you seeing?
We're not seeing anything underneath structurally in the business. If anything, we're seeing greater structural strength. In recent years, we've now underpriced CPI by 900 basis points. So again, our value scores continue to improve. We continue to make our food more accessible and really try and mitigate any of the impacts of, say, tariffs and not have to pass along to our guests.
There's been a lot of talk about how do you reimagine stores like this. What do you want your customer to do?
If you're in a hurry, we've got great digital channels. We've got 60 drive-through pickup windows. But if you want a great physical experience, you can have that walk-the-line experience, see the food, smell the food, interact with our team members. Our mission is to bring heart, health, and humanity to food. So we want to deliver that humanity in the four walls of our restaurants and have a great environment for you to enjoy your Mediterranean meal.
Don't miss The Close, live every weekday.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
And we take a breather after hitting 4 records within 8 trading days, 30 minutes until the start of cash equity trading. I'm Danny Berger. Matt Miller on assignment this morning. Bloomberg Open Interest starts right now. Coming up, a media Game of Thrones, Paramount's bid for Warner Brothers could spark a bidding war. And OpenAI is on its way to become the world's biggest startup as painful negotiations come to an end with top shareholder Microsoft. And a harsh warning from the CEO of RH, shares falling as the furniture retailer cuts its outlook on tariff impact. So some of the stocks we're looking at this morning, I mentioned this one, Warner Bros. Discovery up 8.5%, extending its record day yesterday on the news that Paramount Skydance is preparing a takeover bid. Then there's Adobe up 2.6%. It gave strong earnings, that forecast showing that its AI efforts are paying off. Meanwhile, Microsoft up 1.2%. That's after OpenAI said that it is close to a deal with shareholder Microsoft to convert into a for-profit company, which includes at least $10 billion in equity for its nonprofit arm. So a couple good things going for Microsoft this morning, including a deal with the EU on some regulation. Let's get to the details of a lot of tech stories this morning. I'm pleased to say joining is Bloomberg Tech co-host Caroline Hyde and Bloomberg Intelligence Global Head of Tech Coverage, Mandeep Singh. Thank you both so much for joining this morning. Caroline, so what exactly has OpenAI agreed to in terms of its structure and deal with Microsoft?
Well, this is still a memorandum of understanding, so nothing has actually been contractually signed to, but basically there's a verbal agreement that a new kind of relationship with Microsoft can continue to flourish. Microsoft was the holdout. Of course, had given it $13 billion. It had been a key client, and they're clients of each other. Many people worried about how it would ultimately stand on its own 2 feet, Microsoft, without the help of OpenAI, and how OpenAI is going to continue to get its compute. And we'd seen OpenAI spread its wings, start to get compute from others, and indeed start to get investment from others. SoftBank now its key investor. Now we see that it is going to be a public benefit corporation that is ultimately controlled by the not-for-profit. So here we still have the question marks about how much it's ultimately allowed to go all in on for-profit, but also really have to focus in on safety. And we're seeing the attorneys generals of several states still worry about this, particularly around the safety around children using chatbots. But for Microsoft, there is comfort. There is comfort that it still has access to its key models, but also it's going in alone. Mustafa Suleyman, the head of consumer AI for Microsoft, is saying we need to stand on our own 2 feet. We need to be able to develop our own frontier models and use those of others. Think they're looking at the likes of Anthropic as well.
Mandeep, to Caroline's point, is this a symbiotic relationship between Microsoft and OpenAI that has changed?
I mean, in this case, I think Microsoft now needs OpenAI all the more
earlier it was the case that OpenAI needed Microsoft. I think now with OpenAI signing up a $300 billion deal with Oracle, you know they're set for compute. They have the compute for training, inferencing, and then NVIDIA is also kind of partnering. So you can see the ecosystem being formed where OpenAI, Oracle, NVIDIA, you know, they're aligning very well. And Microsoft needs OpenAI's models to, you know, continue growing their Azure business. So from that perspective, I think it's a good sign that OpenAI is not going out there and adopting Google TPUs, for example. and I think the ecosystem is sort of getting set.
Well, another company that's trying to figure out where they exist in this ecosystem, Apple. We had the big day, the release of the iPhone Air. There was news this morning, Mandeep, that Apple is going to be delaying the release of one of their iPhones in China. What do we understand, and what does it say about this moment where Apple really has faced that political tension with the country?
Yeah, look, I mean, with the upgrade spec that we have seen with the new iPhones, everyone knows these phones will be running some form of an AI model down the line with the same changes, the eSIM changes. So I just feel any company that's doing business in China, NVIDIA has seen their share of struggles. Apple has a 20% plus exposure. There'll be a lot of scrutiny around what is going inside the device, how it can run AI, how it's going to train AI, you know, from the device. And those are the sort of things that will delay, especially in China.
I wonder if Tim Cook, though, is going to get some help from this president, potentially accompanying him on this trip that Donald Trump is doing to the UK.
Look, Tim Cook has been navigating the political headwinds with some art, because at one point he felt like it was in the crossfires. Every single day a new statement coming from the president saying that Apple shouldn't be building in India, shouldn't be so close to China. Now he's got a seat at the table when it comes to AI last week among the government, with all the leaders and the CEOs who came for that AI event in the White House. Now he's traveling side by side, along with Jensen Huang, along with Sam Altman, to go to the UK. This is about the UK trying to get the investment piece of the pie as well. But more broadly, this is Tim Cook having to think, look, I haven't yet got a generative AI partner. They've been doing deals with Baidu in the longer term, but as yet, as Mandeep says, do they need to restrain sales of the iPhone 17 Air? And at the moment, you try and click on and order one, you can't if you're sat in China right now.
How much of this is also about Jensen Huang being alongside Trump, making sure that any of the AI policy or any of the chip policy, that he has a clear ear into the president?
This is so interesting because, of course, we've been talking a lot about H20s being stopped and then allowed again, with 15% of piece of the pie going to the US government. We're still wondering whether then some sort of new version of Blackwell, the most modern, sophisticated architecture that NVIDIA produces, whether that will be allowed to be reformatted for Chinese purposes. Look, we're going to see deals done in the UK. Will Nscale, which is one of the key neo clouds that wants to build these data centers on behalf and get GPUs from NVIDIA, will they be allowed to have Chinese customers? Because at the moment, there's a lot of reporting that they've been saying ByteDance is their #1 customer for some of these data centers. ByteDance can't use NVIDIA chips, as far as I understand from US law thus far. So it'll be interesting to see how the UK and Keir Starmer navigates that with the president, and indeed how Jensen Huang continues to push him along to say, look, we're allowed Blackwell architecture going to China too.
I mean, to that point, Mandeep, how much do you evaluate NVIDIA, not just on the fundamentals, but how much time Jensen Huang is spending with politicians?
And look, Jensen has called out sovereign as a big end market. I mean, based on his projections, right now, sovereign is about like 11 to 12% of NVIDIA's data center revenue. The expectation is going to surpass 20% next year. So clearly selling to governments like the UK, I mean, it's a big deal. And so it's great that he's going along with the administration on a lot of these trips.
Mandeep, Caroline, thank you both so much for joining on the latest tech news. That's, of course, Mandeep Singh of Bloomberg Intelligence and Caroline Hyde, co-host of Bloomberg Tech, a show you need to tune into 11 a.m. Eastern Time. Now, elsewhere, Warner Brothers Discovery is extending gains this morning on news that Paramount Skydance will bid for the entire company. That would shrink the number of legacy media studios to 4 from 5. Bloomberg's Hannah Miller reports on media and joins us now. So Hannah, are we going to get a situation where David Ellison is just going to roll up all of legacy Hollywood?
That is exactly what Ellison is trying to do right now. And, you know, we know he has deep pockets. We know his dad is Larry Ellison at the Ellison family is backing this bid. So it'll be interesting to see what happens. There are some significant hurdles that face any deal that gets proposed.
Can you talk about those hurdles, especially the regulatory ones? Because as I mentioned, this significantly shrinks those big Hollywood studios.
Yeah, so David Ellison is no stranger to regulatory hurdles. His merger between Paramount and Skydance Media languished for around a year as they awaited FCC approval. And there were a lot of complicating factors here. You know, Trump was suing CBS News. They reached a $16 million settlement in July. We saw, Skydance propose making significant changes to CBS News ahead of the deal being approved. And that deal did come to fruition. David Ellison stepped in as CEO in August. So there are some concerns that similar things will happen here, that Trump will be worried about CNN and CBS News being united under one roof.
This is also a company, Warner Brothers Discovery, that had just been discussing or just been agreeing that they would be splitting into two. For their shareholders, Hannah, what is more attractive, splitting up or becoming part of Paramount?
It's hard to say right now because we don't know exactly what's being offered here. We don't have that dollar amount yet. But, we saw shares soar. We know investors are excited about this. They feel like, maybe this is a better value of selling the whole company versus just waiting to see what it is on the market after the split. Warner Brothers is in the process of having its streaming and studios business divided from its debt-laden, struggling cable business.
Hannah, you mentioned this before about Trump potentially being concerned with CNN and CBS coming together. What would this look like if this does go through? Not just that, but of course something like HBO and Paramount Plus coming together.
Yeah, I think there are some antitrust concerns. This would decrease competition in an already tumultuous media industry. I think there could be people concerned that this would be unfair to consumers, that there isn't enough competition in the media industry.
Okay, Hannah, really interesting. Looking forward to catching up with you as the story develops. That's Bloomberg's Hannah Miller. Let's get a quick check on your futures market. 20 minutes to go until the start of equity trading. Unchanged for the S&P. If it does notch a gain, it will be the 25th record high of this year. I believe a little bit of easing of those gains because of higher yields. That's why you're seeing small caps struggling. A lot of calls that small caps are going to outperform higher yields potentially because of higher oil prices this morning, with reports that the U.S. is going to be looking at getting more strict with the G7 in imposing secondary sanctions among those who buy oil and Russian crude. So your futures this morning just barely higher. Coming up, one stock that is absolutely getting hammered in the pre-market trade, down 7%, RH, cutting its full-year outlook thanks to tariffs. The CEO with some, let's call it, colorful language on the earnings call that we are going to bleep out so we don't lose all of our jobs. We'll share that clip with you next. You're watching Bloomberg Open Interest.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
I'm Alex Rodriguez. And I'm Jason Kelly. And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
and more. Stay tuned.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Let's get you some high-interest stories at what's making headlines around the world. First up, the U.S. will urge its allies in the G7 to impose tariffs as high as 100% on China and India for their purchases of Russian oil. The proposal calls for restrictive trade measures on both imports and exports, all of that to curb the flow of Russian energy in an effort to end the war in Ukraine. Oil markets erased yesterday's drop on that news. And Treasury Secretary Scott Bessent will meet with the Chinese Vice Premier in Madrid next week to discuss trade, economic, and national security issues. It's another sign that talks between the two sides are heating up. The discussions will also cover TikTok's status and efforts to combat money laundering. And Gemini stock, the crypto firm run by the Winklevoss twins, starts trading today. The firm raised $425 million in an IPO, pricing its stock above the marketed range and shrinking the number of shares. The firm offers a crypto exchange, a U.S. dollar-backed stablecoin, and a credit card that offers crypto rewards. So it has been a big stretch for IPOs. Klarna just earlier this week. Elsewhere, shares of RH, you can see sliding in the pre-market, down 7 1/3%. The furniture retailer trimmed its sales outlook for the full year. It cited tariffs. CEO Gary Friedman had blunt words for analysts when it came to the longevity of the industry, saying that without discounts, furniture sellers would go bust.
Furniture is an industry that at the highest level does not sell at full price. It doesn't. So people just get over it. You don't understand the furniture industry at the luxury level. And unless you just want to go bankrupt in a market like this, and stand there and be righteous and say, and I'm not promoting, good luck. Good luck.
Some really stern words there from the RH CEO. Let's dig more into this story. We're joined now by Shelley Banjo of Bloomberg, reporting on consumer and global businesses. Shelley, I mean, this is a CEO that likes to use colorful language, let's say, so maybe not unusual to hear this from him. But to what degree does this highlight, the twin forces? It's a company getting hit both by tariffs and a slow housing market.
Yeah, and it's not just China. They talk a lot about China, but this conference call, they started talking about India. They make a lot of their hand-knit rugs over in India as well, and so they're just getting hit at one by one by all of these tariffs. And he went out in the conference call and said, a lot of these companies, a lot of these CEOs are really keeping quiet about it because they don't want to risk, making the Trump administration angry. And he apparently doesn't, fear that at this moment.
I would love to know whether the Trump administration has called him. Maybe not. Maybe it's too small of a company. By the way, he did use an F-bomb in the clip that we just heard, but I love they take it out of the earnings call because I guess they don't want institutional shareholders going back and listening to that. Is it also an issue of just pricing power, that companies like RH that are exposed to the consumer, to the housing market, just lack that pricing power at the moment?
Yeah, they've been raising prices for the last few years, especially during COVID when people were outfitting their homes and, moving to bigger homes and, filling it with more furniture. They've been raising prices for so many years that they've sort of reached a limit now on how much higher that they can go. And so now you're going to see the whole industry sort of shift into more discounting mode.
You're talking about really steep discounts, though, like 30, 40%. Is that the level that we're going to see in this industry?
I think it depends on the brand and where they're at. But he was saying that they're going to take a real big hit on this. And so in order to move these products, they're going to have to discount.
Are we seeing similar things in other areas of retail, not just furniture, but clothes, other items, that discounts are going to be necessary to keep a consumer on board?
Yeah, we had a number of CEOs into our offices over the last few weeks, and a lot of them are talking about discounting, but it's really hard to track because it's category by category, product by product. As you're introducing new things into the marketplace, that's the time when you raise your prices because the consumer doesn't have a frame of reference. They can't tell that you're actually raising that price there.
It's interesting you say that because it also seems like a time where new products are coming into market because consumer behavior and trends are changing so fast. And a lot of these retailers have tried to change course. You think of Macy's trying to put in a new strategy. So does that mean because you're getting a lot of strategy changes that prices can remain high because of the phenomenon you're talking about?
Yeah, I think consumers are still willing to spend money and shell out, their hard-earned cash for something that they really want. And so the only time you're going to get that is newness. You got to give people a reason to come into the stores. And while you're doing that, you can introduce higher prices, higher margins.
All right, Shelley, thank you so much for joining us on that. That's Bloomberg Shelley Banjo. And just a reminder, we are going to get consumer sentiment figures at the top of 10 a.m. from the University of Michigan. We will be speaking with Joanne Shu shortly after that. And ahead of those figures, an unchanged equity market, at least for the S&P, after notching its 24th record of this year. The NASDAQ also hit a record too. I think it's its 22nd record so far of the year. Russell 2000 futures, those underperformed, down about 0.2%, likely off the back of an oil spike because of the U.S. pushing for secondary sanctions of G7 nations. That oil spike also leading to higher yields, hence you get the fall in Russell 2000. Coming up, speaking of those small caps, a Bloomberg analysis of Wall Street forecasts shows Russell 2000 expectations outperforming the S&P 500 over the next year. We're going to talk to Morgan Stanley's Andrew Slimman on whether he expects the same thing. All that coming up on Bloomberg Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
Up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne-Marie Hordern in Alberta, Canada, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The Russell 2000 Small Cap Index has jumped almost 10% since the end of July, rallying for 6 weeks straight, and analysts see more room to run. From a bottom-up analysis, they see the potential for a 20% advance in the Russell 2000 over the next year. Now, that compares with an 11% jump in the S&P 500, potentially due to expected Federal Reserve rate cuts that will lower borrowing costs for companies. But again, this one is from a bottom-up analysis, so based on those individual companies in the Russell 2000, people are seeing bargains. Joining us now is Andrew Slimman, Senior Portfolio Manager at Morgan Stanley Investment Management. Andrew, great to see you this morning. Thanks for joining. And you've been writing about this rotation into small caps, that it presents an opportunity for investors. So would you lean into it?
Well, it really depends on, good morning, how much risk you really want to take. The Russell 2000 rotation, like the rotation into other areas, home builders would be one, is predicated on Fed cutting rates, and more than just once. And it's giving relief. That expectation is giving relief to areas that have been hurt by higher rates, small cap, home builders. I think the investment banks are another area. So if you think the Fed's going to cut, more than once, those will be the biggest opportunities in the market. But, warning, Russell 2000, something like 40% lose money. So if in fact the Fed is a little bit more cautious on cutting rates than expected, there is more risk to those areas as well. At the end of the day, my view is that, look, it's going to be a good fourth quarter. There's too many people have been expecting a pullback here. And what usually works in the fourth quarter are the stocks that have worked year to date. And I think large caps, and especially the big tech companies, you'll do just fine owning those. Although, your biggest returns could be in the more Fed rate sensitive stocks.
Andrew, to that point, it's a really interesting dichotomy because, as you say, these things do well if we get a real cutting cycle going, not just a mid-cycle adjustment. But if it is a more forceful cutting cycle, doesn't that imply that something has gone wrong for the economy, and that in turn would be bad for risk assets?
I think that's absolutely right. If you look at the history of when the Fed cuts, if they cut aggressively, I think the market is going to get worried that they see something that the market doesn't see. If they are measured but continue to cut, the history says when the Fed cuts and the market's at an all-time high, the next 12-month returns are very good. And I think that, the market would take that in stride, and it would, add another check to the bullish argument for equities. But again, your point is a good one. If they cut more aggressively, I think the market's first reaction is heading lower on what do they see? I don't think that's the case, but.
Yeah, no, it definitely kind of also rhymes with this melt up sort of narrative that's been building. Ed Gardeni has talked about it, that we're melting up. He says that there's a chance we melt up to 7,000 by the end of the year. Just about a minute here, Andrew. But he talks about this idea that melt-ups work for a limited time. Before you get a meltdown, of course, timing a meltdown is more of an art than a science. But is that the environment that you're describing too, that we're just pushing higher, maybe a little bit past fundamentals, that at some point could crack?
Sure. I mean, markets go up an escalator, they go down the elevator, and sometimes there's no elevator there. It's just the chute. But I think what's going on, his point is that, look, Wall Street has been too bearish. Their price targets currently are at 6,200. The market's at 6,550 or higher. So Wall Street's going to have to raise their price targets because they're too low. Earnings estimates are too low. First and second quarter beat. And yet numbers for Wall Street have come down. So I think in the fourth quarter, you're going to get a bullish rollout of next year's price targets by Wall Street, and then they're going to conveniently raise their numbers for this year in terms of earnings and price targets. And then look, the AA bear bull sentiment, it's too bearish too. So I think you have a confluence of things that will push the market higher.
Andrew, so much more to discuss with you. Stay with us. Morgan Stanley's Andrew Slimin with just 4 minutes until your opening bell.
single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
I think there's no question AI is going to impact everything we do. The opportunity to take great companies and use AI is going to transform. Also, the issue of jobs. What do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And, the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive, and NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Just moments away from the start of U.S. equity trading, this is Bloomberg Open Interest. I'm Danny Berger. We hit a record yesterday. It was our 24th so far of the year. In fact, it was the 4th record in the past 8 trading days. We take a break from that this morning. NASDAQ goes higher. That also hit a record yesterday. It's 22nd, while small caps lag this morning as higher yields and higher oil prices push those, but a lot of bullish calls. All right, we've got our opening bell, and hey, IPOs are back. We have IPOs everywhere. Over here at the NASDAQ, the New York Stock Exchange, we have VIA. Remember them? I honestly didn't realize that they still existed, kind of that transportation Uber-like company. They're going to be going public today, as is over here. Gemini, they're also going to be going public, the many crypto offering company with the crypto bros and I think like 4 crypto ladies here at the exchange representing that. You got the Winklevoss twins in the middle clapping it up, and we will bring you those IPO pricings as we start to get them. So a lot of excitement in this market. Again, IPOs are back, as are the big Hollywood roll-up mega mergers. Warner Brothers Discovery, that on the upside here at the opening, up 7 1/3%, extending gains on news that Paramount Skydance is preparing for a takeover bid. Then you also had Adobe earnings yesterday. Everybody wants to Photoshop themselves with AI, with, I don't know, like rainbows and unicorns behind them, or make them look better. Adobe shares up 2.3%, strong earnings forecast that showed its AI efforts are paying off. And then finally, Microsoft, not as high as it was in the future trade, but still up about 0.5%. OpenAI saying that it's closer to a deal with shareholder Microsoft to convert into a for-profit company, which includes at least $100 billion in equity for its nonprofit arm. Let's talk more in detail about these equity markets, and we are back with Morgan Stanley Investment Management Senior Portfolio Manager Andrew Slimman. Andrew, I want to get to the point of IPOs coming back. Klarna earlier this week, VIA apparently, Gemini, we have a mega merger coming from media. It is capital markets that feel like they've come alive once again. What needs to go right for that to be able to continue at pace?
Yeah, I mean, it's just so classic behaviors, right? Where the confidence is building, corporate confidence is building in terms of an ability to bring a company public or mergers and acquisitions. And look, I think it's a combination of the perception of fiscal policy that's friendlier and monetary policy that's friendlier. So those are the two things that have to go right. I think it's very, very safe to assume fiscal policy is its friend, and monetary, as long as the Fed doesn't pivot or pause. I think this is a classic build-up, pent-up desires to bring things to the capital markets. And again, this argues for what Ed Yardeni says is the classic melt-up scenario. Look, I think at the end of the day, we've just, we're in the third year of a bull market, and one of the hallmarks of the third year of a bull market is you get a very volatile year, and certainly we've had that. But as you enter the fourth year, if a bull market makes a fourth year, we've never had a down year in the fourth year. So that's where we're about to enter. Coming at the end of this month is the end of the third year. The bull market started in the fourth quarter of 2022. So yeah, I just don't see the behavior as unusual. This is what you get at this juncture.
So if history is any guide, maybe more strength, more melting up to come. Andrew, you talked about the additive benefit of what fiscal policy is doing. On the monetary policy side of things, Michael Hartnett of Bank of America had a note out earlier this morning arguing that the way stocks are trading seems to suggest that the Fed is ahead of the curve in cuts. He specifically points out the KBW Bank Index, which you pointed out as well, advancing for a fifth straight month, and the Russell 2000 Small Cap Index also outperforming the S&P for a second straight month. To what degree is this a market? And again, getting back to our earlier conversation, saying that the Fed isn't behind. The Fed is ahead of the curve and is going to be able to deliver cuts that help this economy.
Well, I think that's certainly the case, but he's right. The market is very overbought on a very short-term basis, and a lot of these stocks have done very well. The truth is, high beta, the more risk you've taken, the better you've done. Short interest, so the companies that most heavily shorted, they've done the best on the upside. So it is a short-term frothy situation. But one of the things that gives me comfort is that corporate earnings have delivered. So this is not stock market pure speculation. Companies are delivering on estimates. And I do go back to what I said initially, which is Wall Street's been too bearish on earnings estimates, and they're being forced to raise their numbers to catch up. So I do think fundamentals have validated the move, although there has been this speculative area that has quickly moved on Fed policy. And if it is not as dovish as expected, you could get a pullback here next week.
It's one of the favorite parlor games over here, Andrew. What ad hoc reason has ex-Wall Street analysts given for missing out on the rally and having to raise their price target? Andrew, we're going to have to leave it there. I won't have you comment on that, I promise. Morgan Stanley Investment Management Senior Portfolio Manager Andrew Slimman, thanks for joining this morning. Let's get back to one of our top equity stories this morning on that possible Paramount acquisition of Warner Brothers. Bloomberg Intelligence media analyst writes, quote, given that Warner Brothers Discovery is probably the only premium media asset that will be available for the foreseeable future, Paramount's bid could spark a bidding war. Geetha Raghunathan from that team joins us now. Geetha, what could that look like?
Yeah, I mean, Danny, this is, a one-of-its-kind asset. They have some of the top-tier portfolio, some of the most iconic brands in film and in TV. You think of Harry Potter, you think of Lord of the Rings, Game of Thrones. There's definitely a lot of scarcity and a trophy value that is associated with this asset. There are multiple players here, we think, who could be potentially interested. You can think of an Apple or an Amazon or a Netflix, but I think we really think that, Comcast here has to kind of do something. This has, long been debated in the industry. Comcast is actually spinning off its own cable networks, and the rumor mill always said that those networks would potentially be combined with Warner Brothers Discovery's networks. So we think that there definitely is a lot of interest. A lot of players could potentially be interested. Of course, we think Comcast definitely would like to make a move.
Well, to your point, Geetha, it's a period where we just heard about media companies breaking up, be it Comcast or Warner Bros. Discovery itself. That was the path forward for them. What makes more sense, to split out these crown jewels and have them highly valued, or enter another period of media roll-ups?
Yeah, that's a really interesting question, Danny. I mean, the whole reason we had the split ups in the first place is because you have the TV networks business, which has been severely challenged by cord cutting. And we've seen some of, the EBITDAs just slide by 30-40% over the past 3 to 4 years. And on the other hand, you have the studio and the streaming businesses, which are now kind of finally gaining their ground. In streaming especially, they're finally kind of turning around and becoming profitable. So it was really important for these companies to kind of separate out the low growth from the high growth assets. The Paramount bid is, of course, very interesting because I don't think anybody necessarily expected a bid for all of Warner Brothers Discovery's, assets. We were kind of expecting more M&A activity next year once the split actually happened. So it's going to be interesting to see how everything plays out.
Okay, Geetha, it will be really interesting. I have no doubt we're going to have you back on to discuss that. That is Bloomberg Intelligence Media Analyst Geetha Raghunathan. Some breaking headlines to bring you. When it comes to digital media, Amazon and Google are being probed by the FTC over their search advertising practices. Shares are notching slightly lower, about 1/4% off of that. But the FTC, according to our reporting, people familiar telling us that the FTC is looking at whether the two companies misled advertisers that place ads on their website. It's being probed by their consumer protection unit on whether they properly disclose the terms and pricing for ads. Again, people familiar telling Bloomberg that it's a new bout of scrutiny on the big tech. Remember, this is an administration that we came into the year saying, would they be more relaxed when it comes to regulation over the big giant companies like the tech players? Do they hold them up as American icons, especially broad? This potentially marks a new turn and still concentration from this Trump administration and scrutiny on regulatory practices. Again, this over Google, Alphabet, and Amazon's advertising practices for ads on their websites. We will bring you any details as we get them. Coming up, the CEO of Miami International Holdings, known as MIAX. Anyway, MIAX, I think is what it's called. It's an exchange, and it's going to be expanding from the Sunshine State. We'll get the pronos right. This is Bloomberg Open Interest.
At what point do you say, we made a mistake and we're getting out? How long do you give it before you say, this isn't working?
That's one of the most critical differentiators between great investors and just mediocre investors. Because on one hand, you have to have confidence and conviction in all the work you've done, the decision you've made, that if you have a little stumble here and there, if you immediately are selling out, you're never really going to fully realize that the depth of potential long-term success. And yet, on the other hand, if you're stubborn and you refuse to admit I'm wrong, you continue to think the market's wrong and I'm always right, then you'll get caught in some very, very difficult positions over time. So that ability to have a fresh perspective, take in the new information, even when things aren't going the way that you'd expect or to hope, and to really understand from this price point today, is this still going to be one of the most compelling investments or not?
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Let's get you some top calls. Some of the analyst action in focus this morning. First up, Molson Coors getting cut to a sell at Barclays. Shares falling more than 1%. The analysts over there citing souring beer trends, saying it's hard to think of a positive catalyst. Next up, Alaska Air, that gets an upgrade at UBS. The analyst writing that Alaska Air earnings are about to take off. Again, that's a direct quote, not a pun from us. The move gives the stock a clean sweep of buy ratings among analysts. Those shares up 2.5%. Finally, GM, that gets a boost to a buy at Barclays. The analysts say that tariffs are well understood by the market now, and GM should see a favorable environment. Those shares up 1.5%. Coming up, the CEO of Miami International Holdings, known as MIAX, as the exchange expands its offering from the Sunshine State. We'll bring you that interview coming up shortly on Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up to the minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja in Luanda, Angola, and this is Bloomberg.
Miami International Holdings, known as MIAX, is launching its Sapphire Options exchange trading floor from Miami after the firm went public last month. Bloomberg's Kriti Gupta is standing by with its chairman and CEO, Thomas Gallagher. Hey, Kriti.
Hi, Danny. This is a really exciting moment for Miami, for the Miami Stock Exchange, for the Global South. I've got the best assignment here because you've deployed me to the Miami Stock Exchange at a really critical moment when trading floors might just be going away. Well, not here in the Global South. I've got the perfect guest to talk about it. The CEO, Thomas Gallagher, joins me right here. Thank you so much for your time today.
Good morning, Kriti.
Good morning. Such an exciting day for you. We got to talk about Miami. We got to talk about your business. But first, I have to ask you about the trading floor. You are starting to see across Wall Street, across New York, even at the New York Stock Exchange, fewer and fewer people doing in-person trading. Why are you leaning into that?
Well, we feel that it's a part of the market we should be in. So we've never had access to 100% of the market. This gives us access to 6 to 7%. And the most important reason is our member firms asked us to open up a new trading floor.
Well, I mean, talk to us a little bit about how it's expected to grow. You can start to hear a little bit of it behind us as we're speaking. Where does it go from here? How much bigger does it get? Walk us through that plan.
So right now we have about 17% national volume in multi-listed options. With this access to the trading floor, I think we'll get, right now there's 5 other options exchange trading floors. So I think we'll get a healthy share of that 6 to 7%. And hopefully with that addition, we would be approaching close to 20% market share in multi-listed options.
Okay, so now we got to talk about the Global South. You said it in your opening remarks here. Miami seems to be the new place to be. It's got Ken Griffin's blessing among many, many other people. Walk us through why Miami and why now?
So Miami is becoming a global financial center. And one of the things that we wanted to do was create an environment where floor brokers and market makers could come down here. And also there's a very favorable tax climate. When you look at some of the Northeast cities, New York, Philly, Chicago, you've got large state taxes. Here in Florida, there's no state tax. So people pick up an immediate 10 or 12% raise just by being in this very business-friendly jurisdiction. That's number one. Number two, there's a great talent pool, and it's getting stronger and stronger. What started out during the pandemic as a temporary relocation has become a full-fledged financial services migration, and we're really excited about being able to hire folks in the Miami area.
Yeah, well, this exchange is really cool because you're doing options primarily at the moment with plans to expand, obviously.
Right.
Talk to us about how retail fits into that crowd. Miami is known for its appeal to the retail crowd, perhaps overtaking the traditional New York institutional crowd at some point in the future. What does that look like?
Yeah, this is one of the most exciting secular tailwinds that we have in our business right now. It's the explosive growth in retail trading. It really kind of started during the pandemic. People were home, they had access to easy online accounts. So the proliferation of trading technologies and the retail customer, and particularly in the Southeast and in the Miami-Dade area, we really think that our technology and our focus on the retail customer, not only in our options business, but also in the futures. We're also just launched a brand new platform called MIAX Onyx, and that's a futures platform. We're really hoping to attract a lot of the retail brokerage firms to trade new retail futures.
You know, it's a fascinating one. I've got to ask you a question about the international appeal of Miami Exchange as well. And one of the key pieces, so much of the Latin American wealth specifically that's come to this area and really giving a run to its money for a lot of international investors that are looking for a place to get involved when it comes to the States. Is this that place when you're talking about the international community?
Yes, yes. As you know, we are very close to South America. And many folks from South America and Latin America, they perceive Miami as their northernmost Latin American city, not northernmost American city. There's a tremendous growth of the middle class in Latin and South America, and I think we can appeal to that group as well, being so close to South America.
Talk to us a little bit about, as well, we're talking about the retail, we talked about the international community. Is crypto on your radar? We know you have other parts of the businesses that are exposed. How does that factor in to your floor here?
The crypto is not the focus of this floor here. What this floor is all about is trading multi-listed options products. That's not to say that sometime down the road that we may open up a trading floor down here in other asset classes. But with all the acquisitions we've done and with all the infrastructure we built, we really are going to focus on bringing new products to our existing venues, and crypto will be a secondary focus. Primarily, the focus is about some of the new proprietary products.
All right, Thomas Gallagher, exciting day for you. Thank you so much for your time here on the stock exchange. Danny, this is such an exciting moment for Miami, an exciting moment for Wall Street's South. I'm sitting here with CEO Thomas Gallagher. He mentioned they're launching futures contracts. We should just disclose to our international audience that Bloomberg is a part of that partnership. We also will have this studio camera here to monitor everything happening right here on this trading floor.
Kriti, thank you so much for bringing us that interview, and Thomas Gallagher of Miami International Holdings for joining her as well. Elsewhere in this market, gold is up nearly 40% this year, and now it's set for a fourth weekly gain as expectations of a Fed cut take hold. Gold ETFs have seen a surge in inflows amid all of that. Here to talk about those flows is Bloomberg Intelligence ETF analyst James Safar. James, great to see you this morning. When it comes to gold inflows into ETFs, how much of this is a real reconsideration about this market of what the risk-free rate is, about where you find safety and where the havens are? How much are gold ETFs taking the crown?
Yeah, I mean, they are on fire this year. I mean, even if you just look year to date, they've taken in 29-ish billion. You go out 1 year and they've only taken in 32. So it's almost all, completely all this year. Some of it definitely has to do with rate cuts priced in. Obviously, people are worried about inflation. This is seen as a long-term inflation hedge against currency debasement. Ironically enough, like money was pouring into gold via central banks last year and the year before, but ETF buyers were actually selling while that was happening, but now it's kind of, they're both buying at this point, and that's contributing to what I think is happening to the price of gold.
I was going to say, James, how much does ETF buying of gold contribute to the actual spot price of gold?
Yeah, I mean, it's a piece of the pie, right? It's not the biggest piece of the pie, I would say, but it's definitely a meaningful piece. And if everyone's kind of rowing in the same direction, it kind of adds on. But like I said, 29 billion so far this year alone, spread across mostly 3 ETFs, GLD, IAU, and GLDM. And that's in the US alone. If you look internationally, we're around 50-ish billion so far this year, I think. So Europe and Asia are also buying, China's buying. So no matter how you slice it, gold ETFs are being bought in a pretty heavy way by investors around the world.
By the way, James, there's a lot of excitement about different crypto offerings coming to the market. Today, we're going to get the IPO of Gemini. What about in ETF land and various offerings coming to market?
Yeah, I mean, so right now what's going on at the SEC is they're coming up with what's called the generic listing standards, or a framework for crypto ETFs. If anyone has paid attention to this, getting the Bitcoin ETF or the Ethereum ETF took forever. They had to go through all this individual process. They're basically coming up with, if this underlying crypto meets some set of criteria, you're going to be able to launch an ETF with it. So that we're expecting to come out some point this year. So we're expecting to see literally over 100 ETFs likely come to market over the next 6 to 18 months relating to cryptocurrency. So Bitcoin ETFs are also on fire this year, not quite as much as gold ETFs. But yeah, crypto ETFs are going to be a massive part of the US ETF industry going forward.
James, that's an insane figure. Is there actually appetite for these ETFs, or are these just issuers pushing them out and hoping for the best?
So I will say there is appetite for a decent chunk of these products. And will they be as successful as the best launch of all time in the Bitcoin ETFs? Probably not, almost certainly not. But we're going to see basket products that are going to offer market cap weighted exposure or different types of exposure to this entire asset class or some portion of it. There are people that want exposure to these other assets, namely Solana and XRP, which we've seen in futures products that are already existing. So there's a long tail of assets. Is there going to be able to be, 10 different products on an individual asset and all of them be successful in the way that we have for Bitcoin or Ethereum? Probably not. But issuers are going to throw, they're going to throw spaghetti at the wall and they're going to see what sticks. And all it takes is a couple of those pieces of spaghetti to stick to the wall to be successful for them to keep launching new products. So that's kind of what the ETF industry is nowadays. They're just shooting things at the wall and seeing what sticks and leaning into those things that are successful.
The good old spaghetti cannon. Well, at least we'll get some crypto ones this time. James, thank you so much for that. That's James Safer, Bloomberg Intelligence ETF analyst. And of course, don't forget to tune into ETF IQ on Mondays, 12 p.m. New York time, where you can hear more about the huge boost to gold ETFs and all things crypto. By the way, speaking of crypto, a real feeling like the animal spirits are back in this market. Sure, stocks are not doing a whole lot this morning, but look at what else is happening in the market this morning. We're going to get more IPOs. Via Van is coming back and IPOing. Gemini from the Winklevoss twins is going to be IPOing. Meanwhile, we're talking about mega media roll-ups again. You have Warner Brothers Discovery getting a bid from Paramount Skydance. It's this feeling that capital markets are really coming back. What needs to happen to sustain that? We were talking with Andrew Slimmons of Morgan Stanley Asset Management earlier this morning, who said, you need to get Fed cuts, and you need to get them at pace. You can't just have a mid-cycle adjustment. Speaking of which, on deck, how's sentiment doing? 10 a.m. New York time, UMich survey figures come out. We're going to speak with Joanne Shu of the University of Michigan. Plus, we'll talk about bubble risk and the Fed with JP Morgan's Mira Pandit, and cowboy boots with Takova's branches as Takova's branches out from direct to consumer. Get your cowboy hats ready. This is Bloomberg Open Interest.
cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Is, and I suspect we're going to hear from Governor Cox here in a few minutes. Again, we're waiting for an update on the assassination of Charlie Kirk, that conservative activist. An update in Orem. There's going to be a news conference with the governor, the head of the FBI, and state and local law enforcement as well, as they really mounted this impressive search in terms of size, trying to find Charlie Kirk's shooter. Word from the President of the United States this morning is they have a suspect in custody. Bloomberg identifying that suspect as Tyler Robinson, 22, from Utah. That according to two people with knowledge of the investigation who asked not to be named because the information is not yet public. I suspect when this news conference begins, we will learn more about who he is, perhaps what his motivations were, and Tom, more detail about this search, which I said was incredibly comprehensive. The FBI soliciting tips from Americans about what they might know about it, soliciting tips from those who were there for Charlie Kirk's speech, some 3,000 in total who were there at that university in Utah, many of whom were taking photographs and video, and over the course of the last day and a half, trying to assemble all of that to get a sense of what happened and where that suspect went.
On the Blur of News of America, I was going to mention, David, they're perfectly cued, the photograph that sticks with me, which is Mrs. Kirk coming off the vice president's airplane, Mrs. Kirk coming off the airplane with Mrs. Vance.
We had J.D. Vance, who I should say, the Vice President of the United States and a longtime friend of Charlie Kirk, traveling to Utah yesterday. He was supposed to be here in New York for the memorial for 9/11, changed his plans and went to Utah, and he accompanied Charlie Kirk's casket to Arizona, where he lived yesterday, and it was, as you say, a searing photograph. Miles Miller, our law enforcement correspondent, joining us here in the studio this morning with an update. We've relied on him this morning as we got word from the president of suspects in custody. Miles, catch us up to speed. What's the latest?
I'll give you about a minute, but this is the story of the arrest. So I just got off the phone with sources in the Marshal Service, and they tell a really interesting story. The kid gets home. The father says, "That looks like you on TV. Was that you?" He says, "Yes, it was." He says, "You should turn yourself in." He says, "I don't want to do that. I'd rather kill myself." So the father says, "No, don't do that. We'll call the youth pastor." Happens to be a task force officer who was looking for the suspect. The task force officer calls the FBI, calls a deputy, and they go and take him into custody.
And what's important here with this comment, and continue, Miles, is this is U.S. Marshals which I would say have a process and rigidity even more than the Secret Service. Continue.
That's right. The marshals, right, go looking for the most dangerous fugitives and have the responsibility of keeping U.S. judges, federal judges safe. And in this instance, it's again the work of local law enforcement, this task force officer who does a dual duty of trying to, spread the word of the Lord in this town, but also, recognize this issue, says, let's, this kid has a gun, let's try to get him in safely, but more importantly, to learn that that photograph, that those photographs shared, a parent saw it and said, let me do the right thing and turn my son in.
That's an incredible story, Miles, and I wonder if you could put that into a larger context here. I was talking with Tom just a few moments ago about the magnitude of this search, the quantity of tips that the FBI was sort of sifting through with local and state law enforcement, and what they were going on. We had here a palm print, I gather, some impression of knees on the ground or the roof nearby, really a minimal amount of forensic evidence aside from the photographs and video, of which there really wasn't a huge quantity either. Where were things before this happened, so much as we know?
Yeah, at this point, there was very little forensic evidence besides that palm print, perhaps a latent print on the cartridge. I'm going to go back to my desk and monitor this press conference. Thanks.
Miles, thank you so much. Greatly appreciate that. You will see Miles and Hadriana Lorencron, no doubt, with that reporting here. We hear it first on Bloomberg Surveillance across Bloomberg News worldwide. David, this press conference, press briefing, I should say, begins. There are introductions being made and the various, the governor and others coming into the Orem, Utah building here. David, why don't you pick it up, please?
Yeah, let's hear now the governor of the state of Utah, Spencer Cox, taken to that podium. Let's hear what he has to say.
Good morning, ladies and gentlemen. We got him. On the evening of September 11th, a family member of Tyler Robinson reached out to a family friend who contacted the Washington County Sheriff's Office with information that Robinson had confessed to them or implied that he had committed the incident. This information was relayed to the Utah County Sheriff's Office and scene investigators at Utah Valley University. This information was also conveyed to the FBI. Investigators reviewed additional video footage from UVU surveillance and identified Robinson arriving on UVU campus in a gray Dodge Challenger at approximately 8:29 a.m. on September 10th, in which he is observed on video in a plain maroon t-shirt, light-colored shorts, a black hat with a white logo, and light-colored shoes. When encountered in person by investigators in Washington County on September 12th, in the early morning hours, Robinson was observed in consistent clothing with those surveillance images. Investigators interviewed a family member of Robinson who stated that Robinson had become more political in recent years. The family member referenced a recent incident in which Robinson came to dinner prior to September 10th, and in the conversation with another family member, Robinson mentioned Charlie Kirk was coming to UVU. They talked about why they didn't like him and the viewpoints that he had. The family member also stated Kirk was full of hate and spreading hate. The family member also confirmed Robinson had a gray Dodge Challenger. Investigators identified an individual as the roommate of Robinson. Investigators interviewed that roommate, who stated that his roommate, referring to Robinson, made a joke on Discord. Investigators asked if he would show them the messages on Discord. He opened it and showed several messages to investigators and allowed investigators to take photos of the screen as each message was shown by Robinson's roommate. These photos consisted of various messages, including content of messages between the phone contact named Tyler with an emoji icon and Robinson's roommate's device. The content of these messages included messages affiliated with the contact Tyler, stating a need to retrieve a rifle from a drop point, leaving the rifle in a bush, messages related to visually watching the area where a rifle was left, and a message referring to having left the rifle wrapped in a towel. The messages also refer to engraving bullets and a mention of a scope and the rifle being unique. Messages from the contact Tyler also mentioned that he had changed outfits. I know there has been speculation as well as to the writing on those casings, those bullet casings, and I believe we have that as well. And I will share that with you now. So the area north of Campus Drive Road where the suspect crossed over, you saw some of that in the video that we released last night, consists of a grassy area with trees on the edge of the UVU campus. Investigators discovered a bolt-action rifle wrapped in a dark-colored towel. The rifle was determined to be a Mauser Model 98 30-06 caliber bolt-action rifle. The rifle had a scope mounted on top of it. Investigators noted inscriptions that had been engraved on casings found with the rifle. Inscriptions on a fired casing read, "Notices, bulges, capital OWO, what's this, question mark." Inscriptions on the 3 unfired casings read, "Hey fascist, exclamation point, catch, exclamation point." Up arrow symbol, right arrow, and symbol, and 3 down arrow symbols. A second unfired casing read, "Oh Bella Chow, Bella Chow, Bella Chow, Chow Chow," and a third unfired casing read, "If you read this, you are gay, LMAO." We are indebted to law enforcement across the state who has worked seamlessly together, local law enforcement, state law enforcement, and our federal partners with the Federal Bureau of Investigation. We're grateful for everyone who worked together in such a short amount of time to find this person and to bring justice. I want to thank the public who has been so engaged, reviewing videos, helping us with sending in tips, and helping us get to this point. I want to thank the family members of Tyler Robinson who did the right thing in this case and were able to bring him into to law enforcement as well. I especially want to thank the family of Charlie Kirk, Erica, Charlie's parents, his children. I want us to be thinking of them as we bring justice in this case. They will be involved in that justice. We will be working very closely with them as we move through this process as well. This is a very sad day for our country, a terrible day for the state of Utah. But I'm grateful that at this moment we have an opportunity to bring closure to this very dark chapter in our nation's history. With that, I will now turn the microphone over to the Director of the FBI, Kash Patel.
Thank you, Governor. This is what happens when you let good cops be cops. The FBI and our partners are proud to stand here today together to bring justice to the family of Charlie Kirk and honor his memory. I want to express my deep gratitude to President Trump, the Vice President, and the entire White House who have been so incredibly supportive with both resources and just personally to the FBI as a team. They had our backs the entire way, and I just want to express my gratitude for giving us the resources we need to operate in this space to bring this sort of justice at this sort of speed. In 33 hours, we have made historic progress for Charlie. Governor Cox, our partnership has been absolutely incredible these last few days. Our partnership will endure. Your state and local partners, your sheriffs, your DPS community has been unbelievably impressive in the hardest of times. And a case like this cannot be solved, cannot be brought without partnering with your state and local authorities. The FBI has a certain role to play, and we will play that role, and we will lead out for the federal government. But Governor Cox, we are so grateful for your state partnership that led out on this investigation. A little bit of the timeline. Charlie was shot at 12:23 p.m. on Wednesday. The first FBI agents arrived on scene in 16 minutes with chiefs of police at 12:39 and secured the scene. The FBI immediately launched fixed-wing assets. We utilized these assets to transport personnel specialty technicians, hostage rescue teams. We also utilize these assets to go back and forth from the East Coast and here in Utah to transport forensic evidence and other evidence that will be analyzed and is being analyzed at our FBI laboratories in Quantico and other laboratories, including the ATF. At my direction, the FBI released the first set of FBI photos of the suspect at 10 a.m. local time on 9/11. Then, shortly thereafter, the FBI reward of $100,000 was released at 10:45 a.m. local. Myself and Deputy Director Bongino arrived on the scene at approximately 5:30 p.m. on 9/11. The governor led a press conference last night at approximately 8 p.m., where at my direction, the FBI released a never-before-seen video of the suspect. We also released new images to the public of the suspect. And just last night, the suspect was taken into custody at 10 p.m. local time. In less than 36 hours, 33 to be precise, thanks to the full weight of the federal government and leading out with the partners here in the state of Utah and Governor Cox, the suspect was apprehended in a historic time period. And I want to highlight what Governor Cox said. This would not have been possible without you, the media, and you, the public. That's why we went so public, so fast, and we're so transparent, and we're committed to that transparency. The crime scene, just a little bit there. It is a large crime scene. State and local authorities, along with federal authorities, processed that crime scene quickly. And I even had the ability to walk through that crime scene and walk through the steps the suspect took to learn more about what was needed and what resources we needed to bear to create a full picture for the FBI and leadership back in Washington. Furthermore, thankfully to state and local partners, forensic evidence has been seized and continues to be garnered. Forensic evidence has already been evaluated at FBI laboratories in Quantico and state and local authorities here. We will continue to process evidence as we see it, as we collect it, and we will continue to deliver it to Governor Cox and his team. Last night, we had a total of approximately 7,000 leads. As of this morning, thanks to your great work, we have over 11,000 leads that were called in to the FBI. And we are running out every single lead that we can. Every one of those leads will be run out. The arrest is a testament to the dedication of good law enforcement being great and partnerships in law enforcement, which I've tried to highlight as my tenure as the director of the FBI. There is no better relationship for law enforcement than the FBI to partner with state and local authorities, and you've seen it here in these last few days. The FBI Salt Lake Field Office, along with our offices in LA, Phoenix, Denver, San Antonio, Las Vegas, Pittsburgh, Buffalo, our headquarters component in Quantico, all participate in the FBI. I want to express my deep gratitude to the employees of the FBI, the men and women, the evidence response team tacticians, the special operators, the agents, the support staff. You have done monumental work in historic time when the public, who had a right to demand such an expeditious solving of an investigation, the FBI answered that call diligently, critically important to our nation, and we delivered. And I'm proud to be their leader, and I'm proud to be the director of the FBI. This is very much an ongoing investigation, as the governor said, and we will continue to work with state and local authorities to develop the investigation, to provide them the evidence they need for their ongoing prosecutions, and we will be here to answer every call they absolutely have, as long as it takes, for as long as we need to find and apprehend whatever suspects were involved in this crime. Lastly, to my friend Charlie Kirk, rest now, brother. We have the watch, and I'll see you in Valhalla.
Thank you, and good morning. I would just like to take a few minutes as the sheriff to express my gratitude for everybody who has played a part in this investigation. As you know, it's been a vast, a complicated, and a very, very fast-paced investigation. You're looking at people standing up here who are running on, if they got an hour's sleep in the last couple of days, they're probably lucky. It has been very taxing. It has been so impressive, speaking on behalf of the local law enforcement, to see the cooperation that we've seen in this type of case. Across the state, sheriffs, chiefs, our state partners have stepped up and have come to the call on anything that we needed. Our county chiefs have been phenomenal. Our Utah County Attorney, Jeff Gray, who's standing up here with us, has been phenomenal in leading us through this investigation. I would like to thank the federal government for their resources, their assets. Our local team here, our FBI team, has been extraordinary in helping us work through this and bring this person to justice. Most of all, I would like to thank the public, and specifically, I would like to thank the public who turned to prayers and who turned to positiveness for us. I would like to thank them on behalf of the law enforcement community because we needed those prayers. That's what we needed to get through this. We needed your support, and you gave it to us. We needed your patience, and you gave it to us. And I would like to thank you for the Kirk family because that's what they need, is your support and your prayers, and that will get us through all of this. So thank you, everybody, for everybody that have stepped up. We've had such a phenomenal response to this. Thank you.
I also want to give a special thanks to the Attorney General and the Department of Justice. Their unwavering support and their commitment to justice is shown true here. And without AG Bondi and Deputy Attorney General Todd Blanche and the resources they brought to bear, we would not have been able to complete our mission. And I just want to say special thanks. It's an honor to be a part of the Department of Justice.
Thank you again to our incredible law enforcement team who has worked so hard. Sheriff, I got a solid 90 minutes last night, so I'm probably the most well-rested person up here. Ladies and gentlemen, I get the microphone, so I hope you'll permit me a moment just to share a few more thoughts about where we are and how we got here and maybe a little bit of where we go from here. I don't want to get too preachy, but I think it's important that we, with eyes wide open, understand what's happening in our country today. I've heard people say, well, why are we so invested in this? There's violence happening all across our country, and violence is tragic everywhere. And every life taken is a child of God who deserves our love and respect and dignity. This is certainly about the tragic death, political assassination of Charlie Kirk. But it is also much bigger than an attack on an individual. It is an attack on all of us. It is an attack on the American experiment. It is an attack on our ideals. This cuts to the very foundation of who we are, of who we have been, and who we could be in better times. Political violence is different than any other type of violence for lots of different reasons. One, because in the very act that Charlie championed of expression, that freedom of expression that is enshrined in our founding documents, in having his life taken in that very act, makes it more difficult for people to feel like they can share their ideas, that they can speak freely. We will never be able to solve all the other problems, including the violence problems that people are worried about, if we can't have a clash of ideas safely and securely. Especially those ideas with which you disagree. That's why this matters so much. Over the last 48 hours, I have been as angry as I have ever been, as sad as I have ever been. And it was, as anger pushed me to the brink, it was actually Charlie's words that pulled me back. I'd like to share some of those. And specifically right now, if I could, I need to talk to the young people in our state, in my state. and all across the country. As President Trump reminded me, he said, you know who really loved Charlie? The youths. And he's right. Young people loved Charlie, and young people hated Charlie. And Charlie went into those places anyway. And these are the words that have helped me. Charlie said, when people stop talking, that's when you get violence. He said, the weak can never forgive. Forgiveness is the attribute of the strong. The only way out of the labyrinth of suffering is to forgive. Welcome without judgment, love without condition, forgive without limit. He said, always forgive your enemies. Nothing annoys them so much. A few months ago, I referenced this last night, Charlie posted to social media, when things are moving very fast and people are losing their minds, it's important to stay grounded. Turn off your phone, read scripture, spend time with friends, and remember, internet fury is not real life. It's going to be okay. He again said, when you stop having a human connection with someone you disagree with, it becomes a lot easier to commit violence. He said, what we as a culture have to get back to is being able to have a reasonable agreement, where violence is not an option. Now, again, to my young friends out there, you are inheriting a country where politics feels like rage. It feels like rage is the only option. But through those words, we have a reminder that we can choose a different path. Your generation has an opportunity to build a culture that is very different than what we are suffering through right now. Not by pretending differences don't matter, but by embracing our differences and having those hard conversations. I think we need more moral clarity right now. I hear all the time that words are violence. Words are not violence. Violence is violence. And there is one person responsible for what happened here. And that person is now in custody and will be charged soon and will be held accountable. And yet, all of us have an opportunity right now to do something different. I want to thank my fellow Utahns. This bad stuff happens. For 33 hours, I was praying that if this had to happen here, that it wouldn't be one of us. That somebody drove from another state, somebody came from another country. Sadly, that prayer was not answered the way I had hoped for, just because I thought it would make it easier on us if we could just say, hey, we don't do that here. And indeed, Utah is a special place. We lead the nation in charitable giving. We lead the nation in service every year. But it did happen here. And it was one of us. But I want you to look at how Utahns reacted the last 2 nights. There was no rioting. There was no looting. There were no cars set on fire. There was no violence. There were vigils and prayers and people coming together to share the humanity. And that, ladies and gentlemen, I believe is the answer to this. We can return violence with violence. We can return hate with hate. And that's the problem with political violence, is it metastasizes, because we can always point the finger at the other side. And at some point, we have to find an off-ramp, or it's going to get much, much worse. But see, these are choices that we can make. History will dictate if this is a turning point for our country. But every single one of us gets to choose right now if this is a turning point for us. We get to make decisions. We have our agency. And I desperately call on every American, Republican, Democrat, liberal, progressive, conservative, MAGA, all of us to please, please, please follow what Charlie taught me. I'll just conclude with with words I share often from a friend and author, Yuval Levin, who was asked if he was optimistic about our country, and he said, "I'm not optimistic." He said, "I hate optimism." Like, that sounds bad. But he said, optimism is a vice. It's this idea that good things are just going to happen. And he said, in the history of the world, good things have never just happened. He says, I'm not optimistic, but I am hopeful. And hope is the virtue that sits between the vices of optimism and pessimism. Hope is the idea that good things are going to happen because we can make them so. I still believe in our country, and I know Charlie Kirk believed in our country. I still believe that there is more good among us than evil, and I still believe that we can change the course of history. I'm hopeful because Americans can make it so. Ladies and gentlemen, we're happy to answer any questions you might have.
Please speak to whether the suspect is speaking with authorities and his demeanor, Tyler Robinson, when he turned himself in.
I cannot speak to that. Well, I will leave that up to you to interpret what those engravings mean. I think the clearest one that says "catch fascist," there's not, and by the way, that's like catch like a ball, catch this. That's I think that speaks for itself.
Governor, you indicated that he had been communicating.
Please.
Beyond that, is there anything in your view that you discovered that may have radicalized or changed him to prompt him to commit such a horrific?
There's nothing more that we can share at this time.
Governor, you indicated that he had been communicating with a friend on Discord about the gun. Do you anticipate any more arrests?
We do not at this time have any information that would lead to any additional arrests.
Do you believe he acted alone?
Yes, but the investigation is ongoing.
How he came into custody of police and where he is right now?
Yes, so right now, Mr. Robinson has been booked into the Utah County Jail. You heard the president this morning report that he was taken into custody, that his family and a friend helped to deliver him into custody of law enforcement in Washington County. For those of you that don't know where Washington County is, it is the southwesternmost part of the state of Utah. It's about a 3.5 to 4 hour drive from here, where we are right now, and that's where he lived and where they turned him in. Please, I'll go here. I can't share any more than what I've already shared. Yeah. So how we obtained the gun was found here. So I don't have much more details on that. We do know that he drove. We had his car here on campus, and then we had his car going south back to the St. George. It's actually the city of Washington in Washington County.
Is he talking with authorities and did he discuss a motive?
I'm sorry? We don't have any information that would lead us to believe that. Yes, in fact, it was just released. Yes.
Talking with authorities and did he discuss a motive?
I can't answer that right now. Yeah, thank you. Over here. I absolutely believe that this is a watershed in American history. Yes. The question is, what kind of watershed? And that chapter remains to be written. Is this the end of a dark chapter in our history, or the beginning of a darker chapter in our history? Look, I mean, if you look at true political assassinations in this country of someone of this stature, this feels a lot like the late 60s. And having one so gruesomely displayed on camera in all of our hands and in all of our pockets, we are not wired as human beings biologically, historically. We have not evolved in a way that we are capable of processing those types of violent imagery. And by the way, we've seen another one with a gruesome stabbing very recently that went viral. This is not good for us. It is not good to consume. Social media is a cancer on our society right now. And I would encourage, again, I would encourage people to log off, turn off, touch grass, hug a family member, go out and do good in your community. That is happening, and it's happening organically right now. I had a friend in a small city in Utah who said, we're getting together, the Republicans and Democrats in my little town are getting together to have a discussion tonight, last night, just to find a way to find their better angels. So yes, this could be, I mean, you know, again, you have to go back to JFK to have seen a video live of something like this happening. I wasn't born until 1975, but I know that things were really dark in the late 60s. Sorry to some of you. I know some of you were there. But this is our moment. Do we escalate, or do we find an off-ramp? And again, it's a choice. It's a choice, and every one of us gets to make that choice. Two more questions right here. I cannot comment if there is a direct connection or not, but all I can say is that that through some process, the family came to know that this had happened.
One more thing, Governor. Could you just clarify the clothing issue you mentioned earlier? Was he changing outfits?
Correct. Yes. So when he's first spotted on campus, he has different clothing on, and then he changes clothing on the roof, and then changed back into that clothing at some point, so that when he was apprehended, when he was arrested, the clothing matched the clothing he had on before the shooting here at UVU. Last question here. Yes. Yeah. So I don't have any information on the mental illness part. He was not a student here at UVU. He was living and had lived for a long time with his family in Washington County, in the southernmost part of our state. Thank you, everyone, for your great work in getting this information out. I just say, process-wise, this may be important. I know many of you aren't familiar with the process in Utah. I think it's important that you understand that. Basically, we have 3 days for charging documents to be filed. A CI will be filed. We'll have more information then, more detailed information as those charging documents are filed in preparation for a preliminary hearing. So 3 days. So we would anticipate then that early next week those charging documents will be filed. We will obviously be working. The county attorney will be working very closely with Mr. Kirk's family as those documents and decisions are prepared and made. Thanks, everyone.
Okay, you've been listening to a news conference in Utah. Governor Spencer Cox, the governor of the state of Utah, just speaking there after officials said they had physical evidence tying the shooter with the assassination of Charlie Kirk. The shooter, identified as Tyler Robinson, he has been arrested. And in fact, the first thing, Alexis, that we heard Governor Spencer Cox say when the news conference began is, "We got him."
Yes, he's a 22-year-old from Utah. A family member apparently turned him in. The FBI had offered a $100,000 reward to any information leading to the arrest of the individual who killed Kirk. And we heard from Utah Governor Spencer Cox. We also heard from the head of the FBI. Cox, again, calling the murder of Charlie Kirk a political assassination. He said it's an attack on the American experiment and our very ideals.
All right, let's bring in Terry Haynes, who is founder of Pangea Policy, who's also been listening to the news conference that was taking place there. Terry, put this into context for us, given what we've heard from the president in particular about this, because he has been very vocal in playing a different kind of role here. Typically, in tragic moments, you have the president coming out with soothing words, healing words, and the president took a different tone.
Good morning, Scarlett and Alexis. The president, I think, was a little combative, and but they've been forthright about their outrage and sadness at Charlie Kirk's death, and wanting to show and actually to have resoluteness in finding Kirk's killer. And understanding the motivations. So I think they've done all of those things. They're doing all of those things, and probably will continue to do so over the next days, weeks, and months. But the other thing I would say here too is, obviously, from a human perspective, simple human perspective, this is not only heartbreaking for Kirk and his family, but that heartbreak is now widened out to the alleged killer's family. The father and the mother are both hugely involved in the community, and the alleged shooter's father is a longtime deputy in the Washington County Sheriff's Department. So, you got to feel for them too.
And Terry, the officials are saying that it's most likely that Robinson acted alone. When a reporter asked the governor if they thought more arrests were coming, he said he did not believe there would be. President Trump said he wants the perpetrator to get the death penalty, which we know the state of Utah has. There was a high-powered rifle recovered in a wooded area. Authorities talked about that, and they talked about writing on bullet casings. We don't know much about Richardson yet, but what are you gleaning from what was written on those bullet casings?
Generally speaking, I heard the same thing as you did in the press conference, and I don't have the list in front of me. Somebody's compiled that on the internet already, I'm sure. They're a mix of cryptic and direct. The direct is kind of, this one's meant for fascists. That's not a quote, but fascists were mentioned. And that kind of chimes in with the reporting that from family that the alleged shooter was concerned about Kirk and thought Kirk was filled with hate, that sort of thing. Beyond that, there were a lot of these cryptic messages, even including symbolism. And I'm going to have to get somebody that with more internet expertise than I am to decode some of those things, but they'll all be rapidly decoded and, frankly, motives established even before the documents can be filed to charge.
Yeah, you're right. I mean, we were taking some notes, of course, during that presser, and one of the bullets said, "Hey, fascist, catch." Another said, "If you are reading this, you are gay, LMAO." Yet another saying, "Oh, Bella Ciao, ciao, ciao." So you can bet people are going to be sifting through that for any clues.
Yes. God knows on the last one. So.
Yeah, well, as we continue to get more details and understand perhaps the mindset behind the alleged shooter, I want to bring this back to what this does for our political environment, Terry. This was clearly a political assassination, and it feels like this is a bit of a sea change now. How are you thinking about how the president, how the government can play a bigger role in trying to bridge some of the gaps between the left and the right?
I don't. This is a matter that's not up to government so much as it is up to individual people inside and outside the government. This is the risk of sounding grandiose, and I don't mean to. This is a government of the people, by the people, and for the people. So people demanding change, and those who are most closely involved in the political process demanding change from their politicians, whether that be private citizens involved in the political process or even companies involved in the political process, I think is entirely appropriate. I don't know if this is the hinge that, for example, Peggy Noonan talked about in her wonderful column this morning. But there need to be three changes inside of the political process. One is very simply humility. Humility is very much lacking in among politicians in Washington and elsewhere. I would not include Governor Cox in that, by the way. I thought his views were sincerely and very well judged. But in Washington, there's been a lack of humility going back to at least to January 6th and well before, and that needs to stop. Full stop across the board. Secondly, I think there needs to be an agreement that in a reset from everybody individually, that they're not going to engage in extremist rhetoric anymore. And there are hundreds, thousands of examples of this on both sides of the aisle. One side doesn't get to win if the other side was guilty of one less infraction than the other. But it goes on both sides. There's a Democratic senator who I will not name because I'm not interested in outing that person at all, but I am interested in using it as an example. 2 or 3 days ago, said something to the effect that, we're in a war for the soul of the nation and we need to do whatever is necessary to make that happen. Now, does that senator think that he was inciting to violence? I doubt it. Can that be taken as incitement to violence language by very many people? Sure it can. So that all needs to stop, full stop again. And finally, you've got a situation where the political culture rewards extremism and the political structure rewards extremism. You have the energy, the energy and the money. There are 4 factions, not 2 political parties. Left or right, there are progressive Democrats, centrist Republicans, and kind of right conservative Republicans. The energy and the money in both sides is on kind of the left progressive and the right conservative, and ever since the campaign reforms in the 70s, the political system has continued to provide outsized influence for those with the energy and the money, and that needs to be reformed. Now, I'll stop the filibuster with this. Relying on those who are beneficiaries of that system to reform the system, is not going to be something that's easy or neat or anything else. But again, people need to be engaged, and people need to be more than disaffected with the existing system. They need to demand that their politicians stop the rhetoric that, frankly, gets mistaken as enabling a lot of this stuff.
Terry Haynes with Pangea Policy, thanks so much for jumping on so quickly with us. We appreciate it. We want to stick with this story now, and joining us in our New York studios here is Miles Miller, Bloomberg News senior reporter. Miles, we just got a lot of information here from authorities, but I just want to touch on what I noticed over the past 30 some odd hours is that Charlie Kirk's social media followers have doubled, tripled, then some across social media platforms. We don't yet know what Tyler Robinson's motive was in this shooting, if he was indeed the shooter. But what's going to happen to Charlie Kirk's message going forward? Because it doesn't seem as though Robinson silenced him.
Yeah, no, and I think what we heard from the president is that his wife, Charlie Kirk's wife, wants to keep up Turning Point action and wants to continue sort of the messaging that he put forth, mobilizing college communities to embrace the conservative ideals that he set forth. It's those ideals that investigators told us at this press briefing are the reason why this suspect carried out this attack. The suspect, saying to family members just a few weeks ago how much he was disenchanted with Charlie Kirk, and that being the reasoning why he carried out this attack, writing anti-fascist messages on the bullets and all of that. It's an interesting thing, right? The following continues, but the governor in the press conference really saying that both sides need to come together and really bring down the noise and the frustrations.
Miles, you've been busy on the phone speaking with your sources in law enforcement. Just recount for us what you've learned in the last hour or two that led to the arrest of Tyler Robinson?
Yeah, so, we saw the video yesterday. Tyler Robinson jumps down from the college building in Orem, Utah. He limps his way through the woods, drops off that gun, gets back into his Dodge Challenger, and drives the 3 hours back home that it takes to get to that part of Utah. He gets home, and his father had seen all the images on social media, seen the images on television, and recognized that was his son. In fact, we're told he was wearing the same outfit that he was wearing in surveillance video seen by investigators. The father says, "Was that you?" Robinson says, "Yes, it was." The father says, "We have to turn you in," and he says he wants to kill himself. So that at that point, they engage the youth pastor at the church, who happens to be on the task force run by the marshals to catch violent fugitives, and they bring in the FBI and they bring him into custody. But this really talks about the power of getting those images out, generating 11,000 leads, the biggest amount of leads since the Boston Marathon bombing, and it really talks to the power of multiplying with law enforcement. Those leads led to this suspect's roommate, who said, here's the Discord channel where he's talking about, some of the very things that we knew were germane to this investigation. And all of that plays a large role in what you'll see in the charging documents in the coming days.
And President Trump is expected to attend Charlie Kirk's funeral. He has said he wants the suspect to get the death penalty, which does exist in the state of Utah. How do you see all of this? I mean, I know we're jumping here many steps, but how do you see this playing out? It's
always interesting to see what's said at a press conference versus what a prosecutor can prove in court. They have to definitively link him to those guns just because there's the Discord and there's the confession to the father doesn't mean that, so there's all these things that have to happen. It is very interesting that the death penalty is on the books in Utah, given the state is very much governed by the Mormon Church. And so it'll be interesting to see what jury of peers they pick in Utah to hear this case, if it gets to a trial stage, just given, the makeup of the community, specifically in Orem, Utah, which as you saw, 3,000 people came out to see Charlie Kirk that day.
One thing that sticks out to me is you said that the push for public assistance by the FBI, by authorities, generated more than 11,000 leads in 2 days. That's huge compared to even 7,000 the night before. And there was a question posed at the news conference about whether authorities were looking into the possibility of anyone else involved. And for now, the answer was no, they think they have their person. What happens to those 11,000 other leads? I mean, do they just drop them or do they continue looking into them?
Yeah, so the FBI continues their investigation into all those leads. You can't leave any of those leads untouched because, you want to make sure that something that what is presented doesn't lead to anything bigger, right? How did he purchase the gun? How did he have the means to get to Orem, Utah? You have to track down every lead, and so they'll be doing that work over quite some time to make sure that everything is sort of up to snuff, because the charging document's really going to tell the story about this case.
All right, Miles Miller, really, really fantastic work. Thank you so much. Miles Miller is our senior law enforcement reporter here at Bloomberg News. And of course, he's been working the phones and talking to his contacts inside law enforcement to bring us the latest here on the arrest of Tyler Robinson, who is the alleged shooter of Charlie Kirk. All right, let's go over now to John Tucker for a check on the other headlines and a look at what's happening in financial markets. John?
All right, guys. Right now, the major stock averages, they are mixed to little change. This flash brought to you by Oracle. Attention growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. We're data dependent, so let's start you off with the University of Michigan sentiment survey that we got at the top of the hour. consumer sentiment fell to the lowest since May. Also, maybe more importantly, at least for the bond market, inflation expectations rising for the second straight month. Again, the major stock average is mixed to little change, hovering around records. S&P 500 up just about 2 points, 65.89. Anything in addition to that is a record. The NASDAQ right now, composite index, 87 points higher, up 0.4%, and the Dow is down 184 points. Adobe shares higher after the maker of software reporting third quarter results beating expectations. They also raised their full year forecast. Apple, those shares right now up 1.5%. Even though they've delayed the launch of the new iPhone Air in mainland China, they're blaming regulatory approval issues there. And OpenAI says it's closer to converting into more traditional for-profit company, nearing the resolution of negotiations with its top shareholder, which just happens to be Microsoft. Investors waiting for next week's Fed rate decision. That comes Wednesday, and Seema Shah, Principal Global Investors, sees little doubt the Fed will cut next week, but not as much as some are betting.
Certainly from our perspective, if you look across the whole broad economic picture, we don't think this is a requirement for emergency easing, so a 25 basis point cut is our call.
And then you have a new front in the regulatory scrutiny of Google and Amazon. The Federal Trade Commission investigating whether Amazon and Google misled investors. And we check the markets for you all day long. Right here on Bloomberg Radio, I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Alexis.
Thanks very much, John. 10:53 Wall Street time. Alexis Christophorous here with Scarlett Fu. And lots of news in tech today. We heard a little bit of it from John just now. Adobe's earnings beat, OpenAI closer to becoming a for-profit company. Want to break some of this down now with Anurag Rana, Bloomberg Intelligence technology analyst, coming to us from our Chicago bureau. So, Anurag, let's break down Adobe first, because I know it was sort of the stepchild of the AI craze for a long time, but I think with this earnings report, it sort of has Wall Street rethinking that.
Yeah, no, it's still the stepchild. It's still not up. I mean, you could see that, imagine what would have happened even if they would have missed the numbers. So this is definitely the one that has the biggest AI cloud in terms of being disrupted. And it's going to take some multiple quarters like this for people to get comfortable with the story. I think last night they showed really good numbers, really good AI adoption, but they really have to continue to do that for a long period of time.
I think you hit it on hit the nail on the head, that it's going to take multiple quarters of this to convince Wall Street that this is a story where Adobe has figured out AI and how to monetize off of it. Up until this point, and until very recently, it feels like investors were souring on app software makers. Why is that, and how does Adobe's results start to push back against that idea?
See, again, that halo is not going to, go for multiple quarters. The concept is very simple. Because of large language models, you can spin up a software very quickly, which means if you don't need to go to app software vendors, whether it's be Salesforce, Workday, or any function that you're looking at where your large language model can do for it. We think it's a bit false narrative over there, but it's going to take some time again for people to get comfortable. We think it is not going to be easy to get rid of the system of record for finance, for HR, for sales. People are not just going to get rid of those software and just put in a prompt and let somebody take care of it. So, but again, the software industry is declining right now. That is not tied to AI, but that has to do with macro spending being bad, the overall economy being bad when it comes to enterprise IT spending. So I think those are the two opposing factors that are happening there. Adobe's results do help them a little bit, but I think it's going to be multiple years before we get comfortable with that.
Anurag, I want to switch gears and talk a little OpenAI, because we know the company is trying to move closer to becoming a for-profit company. We know that it is, facing criticism from Elon Musk, who's accusing the company of defrauding investors about its commitment to its charitable mission. Just tell us how this might work. How might this conversion work?
Yeah, so again, we don't have any details of what happened, but the only good thing is that Microsoft and OpenAI have, in principle, agreed that they will move forward with this. The question, for us, the biggest thing is, will Microsoft still have access to OpenAI's, top of the line models or not? So that's the biggest thing. And second, what kind of revenue share they will have with Microsoft on the inferencing side. So when people are using more ChatGPT, whether that operation will run on Microsoft Cloud or not. So those are the things. And we think Microsoft will be willing to give some equity for these kinds of deals for these two factors. And, that would be in the best interest of Microsoft shareholders.
Let me ask you about something else that John had mentioned, which is about Apple delaying the launch of its new iPhone Air in mainland China. These are regulatory approval issues that are holding that up. Is that on the side of the U.S. or on the side of China? And how big of a knock is this on Apple's revenue line?
Yeah, it sounds like it's more from the, the China side of it. Now, the big question is, what happens is the iPhone's going to be available, a week from now. So from September 19th to October, 31st is, you could say, a few days of revenue recognition of the newest model that you get in the current quarter. Most likely that gets pushed out in the next quarter. So that's the only difference it's going to have. I know it's for the Chinese users who are looking forward to this phone, they may not get it in the next 10, 15 days. But, I don't think it's going to be longer before they'll be able to get that.
And in the about 45 seconds we have left, just want to get your take on Microsoft Teams basically avoiding a hefty fine with the EU. Bring us up to speed on that.
Yeah, so this has been a case that's been around for a while, and the question is, do you disaggregate Teams versus Slack? So Microsoft has to do it. There's always a tying aspect of Microsoft products. It bundles in these things, and competitors think, that's an unfair advantage for them, and they have to do it. They, frankly speaking, otherwise, this is their lawsuits otherwise that they will face because of it.
All right, Anurag, always appreciate your joining us. Anurag Rana is our senior tech analyst over here at Bloomberg Intelligence, giving us kind of a roundup here of everything that we need to know about the tech sector, whether it's Apple postponing the release of its new iPhone Air in China or Adobe's strong outlook, a beat and raise quarter from that software company. But Alexis, as he was just telling us, needs to do a couple more of those, string a couple of those together for investors to be convinced.
Yeah, going to take more than just one quarter with some really good numbers, I think, to get investors on board and to keep them there. I mean, we saw the stock up about 3% yesterday. It's basically flat today. And let's remember, it's been down about 20% year to date, underperforming a lot of the other AI software companies.
My favorite factoid about Adobe was that they basically invented the subscription model, the recurring revenue. And it was genius because it allowed them to think about software in a completely different way.
Yeah, but sometimes first to market is not always the winner. We've seen that with Apple.
Yes, there's plenty of room to refine. All right, let's move on here. It is 10:59 a.m. on Wall Street. And by the way, for our listeners in the U.S., just a reminder that you can listen to us through satellite radio on Sirius XM channel 121, access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Bloomberg Intelligence continues. Stay tuned for the latest market news and industry research right here. The next hour of Bloomberg Intelligence begins right now. This is Scarlet Fu with Alexis Christophorus on Bloomberg Radio.
This is Bloomberg Intelligence with Scarlet Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlet Fu and Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
On Wall Street. Hello, everyone. I'm Alexis Christophorus here with Scarlet Fu. And coming up on Bloomberg Intelligence, we're going to simulcast a Bloomberg TV interview. This should be a good one with the chair of Tesla's board. She's going to be speaking with Bloomberg tech anchors Ed Ludlow and Caroline Hyde. Also, why muni bond investors should brace for a bumpy ride this fall, despite these expected rate cuts from the Fed. And newly merged Paramount Skydance wasting no time in making some acquisitions. The company already reportedly preparing a bid for Warner Brothers Discovery. We're going to talk it over with Bloomberg Intelligence media analyst. But first, we want to go over to John Tucker with today's market movers. John.
All right, guys, and this report being brought to you by IBKR. Financial advisors switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges, no conflicts of your interest. Learn more at ibkr.com/RIA. Let's start off with the data. Consumer sentiment falling in September to the lowest since May. And maybe more importantly, long-term inflation expectations rising for the second straight month. This is all the data that we got last hour from the University of Michigan Sentiment Survey. Right now, the major stock averages, they are mixed, with the S&P 500 up 5, 65.93 on the index. That's good enough for another record if this keeps up. The Dow is down 151 points. The NASDAQ right now, the NASDAQ 100 up 94 points. That's a rise of 0.4%. That also is a record. And yeah, you mentioned it, Alexis, the best performing stock in the S&P 500 that belongs to Warner Brothers Discovery, up 14%, adding to yesterday's gains after we learned that Paramount, Skydance, and Young Ellison wants Warner Brothers. And then we get a decision on rates. Of course, that's next week. John Stolfus of Oppenheimer says the Fed's going to cut next week, and they won't.
Economic data, particularly around.
Well, here's what he says. Let's listen to John.
The economic data, particularly around the jobs number, has offered an opportunity of essentially a free haul pass. So if the Fed chair and the FOMC committee come out with a cut, it's not politics. It's just the dual mandate.
We have right now 6 of the 11 major industry groups in the S&P 500 higher, being led by consumer discretionary, and that is home to shares of Tesla right now, up 6%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Alexis.
All right. Thank you so much, John Tucker, to setting us up here for the second hour of Bloomberg Intelligence. We are looking at a market that is mixed right now, with the S&P 500 really little change, although notable that it is the 5th straight day of advance, so it is at a record high. I'm Scarlett Vu here with Alexis Christoforous, and we want to take a look at some of the stocks, the individual stocks on the move today. And let's bring in Bloomberg's Tatiana Dari for more. Hi, Tatiana.
Hi, Scarlett. I'll kick it off with Super Micro Computer. Shares are up about 3%. We're up as much as 7% after the server company announced the availability of its NVIDIA Blackwell Ultra solutions. They're now delivering in high volumes to customers globally. This is an important announcement because it signals large shipments of this next generation type rack platforms, which can now hold as many as 72 GPUs compared to about 8 in the past. So this is a lot more powerful infrastructure that is intended to support large AI training and AI workloads. And, you know, another important example, or another example that the AI theme is still going strong in the equity markets. And this stock is about to extend gains of about 44% year to date as of yesterday's close. We'll be looking at a lot larger after today. The stock has outperformed the broader market, the Magnificent Seven and NVIDIA. So it's got a lot of momentum going on right now.
Nice story for Super Micro Computer, sort of going below the right, moving along below the radar there, Tatiana. Want to talk about Tesla. We're going to be hearing from Tesla's chair of the board shortly in an interview with Bloomberg Tech TV, but Tesla's up 6% today. What's behind that?
6%. Your ticker is TSLA. The company has been approved to start testing its autonomous vehicles in Nevada, according to the State Department's of Motor Vehicles. Investors have been watching to see how quickly the companies can expand its robo-taxi service to other states after it launched in Austin to a small group of users. It also operates a non-autonomous ride service in San Francisco and announced earlier this month that it will allow the public to download an app and sign up for the waiting list. So if you're not there, you can still sign up. I mean, this is an important sort of focus area for Tesla, right? We know that fundamentals are challenged. The earnings outlook isn't great. So anything that the company can deliver on this very futuristic prospects of its business is welcomed by investors. And the stock has certainly used some good news. It's down about 4% year to date, underperforming the Mag 7 and the broader market. So this is generating quite a bit of excitement today.
This is exactly what Tesla bulls want to hear, right? It's about the autonomous vehicles. It's about the robotics, all of that. All right, let's move to something that's a little bit less technical, a little more analog, and that is Six Flags. That stock is up 7% right now.
But equally fun, I should say, because, the ticker is FUN, fun, for Six Flags. Those shares are up about 8% now after the theme park operator reiterated its full-year guidance and noted strong trends for 2026. Well, this comes after the company reporting quite disappointing earnings last month, so it's a relief for the market. They said August attendance is up 3% year over year. Early unit sales season passes are pacing well ahead of expectations and the same pace last year. So they're also saying that the pass price is up 3%. Speaking of cooling inflation, we keep hearing anecdotes from these companies of price increases to come. The company here also could use some good news because the stock is down 55% year to date. So this is a relief to investors there that earning trends might be on the recovery.
All right, Tatiana Dare, thank you so much for the latest movers here in the equity markets. For more conversations like this, be sure to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. All right, let's move over to our colleagues at Bloomberg Television. Ed Ludlow and Caroline Hyde, the co-hosts of Bloomberg Tech, are speaking with the chair of Tesla's board, Robin Denholm. Let's listen in.
Answer the questions. The chair of Tesla's board, Robin Denholm, is with us. Thank you, Robin, for your time. This proposed package was about Tesla's long-term goals as much as it was about retaining Elon Musk. But why is it so crucial to the board's mind that it is Elon Musk that is able to get Tesla to this future?
Well, thank you, Ed. I think it is a pivotal time at Tesla and also in the world. I mean, AI and autonomous and the application of AI is transformative technologies. And we believe at Tesla in big, ambitious goals. And so Elon put out the Master Plan 4 on the 1st of September, very auspicious day, I think, in terms of putting out the vision for the company for the next decade or more. And AI and autonomous is at the front and center of that, both in the vehicles, but also in our Optimus lineup and what we're doing from a robotics perspective as well. And so having the board's responsibility is to look at who the CEO is for the next period of time. And we believe that Elon is the right CEO for Tesla over this transformative period of time. And our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. And so once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him to actually deliver against the ambitious goals.
The motivational piece is interesting. In the course of the proxy, as you read it, a negotiation plays out, doesn't it?
Yep.
7 or 8 months. But there were sticking points on both sides. What were they?
Well, obviously, in any discussion around the future of the company, but also the future of an individual in terms of what motivates them, it's very important to understand that. And from a board perspective, from a special committee perspective, as we've outlined in the proxy, we had a very fulsome process. We had more than 10 meetings with Elon in terms of understanding what were his motivations? What does he want to do over this period of time? And having worked with him now, I've been on the board for 11 years, and Kathleen Wilson-Thompson, our other amazing special committee member, has also been working with him for the past 6 or 7 years as well. And so from our perspective, seeing him in the boardroom, but also understanding what motivates him, it's things that other people can't do. It's what the company could do that no other company could do. So those types of things are what are in this plan. And so, as you said in the outset, it is a zero compensation package unless he delivers against pretty ambitious goals for the company.
ambitious goals that include 20 million vehicles, that include 10 million FSD, that think about 1 million robots and robo-taxis. Robin, tell us, from your experience with the 2018 pay package, the investor base really wants to understand how structurally this is different.
Yeah, so for us, the framework of the 2018 plan worked very, very effectively. And so this package, this framework that we've put in place for the 2025 proposed compensation package has 12 tranches, 12 market cap goals, where the top goal is $8.5 trillion, and we're just over $1 trillion today. The first milestone on the market cap side is at $2 trillion. So we've got to almost double the size of the company before any of the market cap goals are actually achieved. And then it increases by $500 billion up into the last 2 tranches, where there's $1 trillion jump each time. And then on the operational side, to your point, Caroline, they're very ambitious. We're just over 8 million cars that have been produced and delivered at Tesla. The milestone on the vehicle side is 20 million vehicles. 10 million FSD paid subscription areas. So to me, these are ambitious goals, and not to mention what we've proposed in terms of the goals around our robotics areas, our Optimus and bots, 1 million of those, and robo-taxis. And so to me, it really brings the master plan 4 to life within this compensation package, because they're the goals that Elon has. It's the goals that the company has as well.
Some had worried that Elon's goals had turned more towards politics, and you draw him back from that within the proxy, and he's agreed to wind down his political activity. How do you define political activity, Robin?
I think, from my perspective, this is a package that really motivates Elon. So having him front and center at the company and delivering against really ambitious goals, to me, is great for him. It's great for the company. It's also great for shareholders. And as we've outlined, the shareholders, in this proposal actually win, very extensively with that market cap at $8.5 trillion in order to achieve this compensation package. To me, that actually is one of the things that all shareholders will benefit by. And so from a politics perspective, obviously we're in a democracy, so everybody gets to voice their points of view. I think Elon, having served as a special government employee, he obviously completed that activity, and he is back and front and center at the company these days.
But did those reassurances go as far as to Elon Musk agreeing not to specifically participate in any one political party, take another government role, extend to whether or not he makes donations in a political cycle?
Yeah, I mean, what he does from a personal perspective in terms of his political motivations, etc., is up to him. I mean, clearly from our perspective as a board, we're measuring him on results and measuring him on what he does as a CEO of Tesla. And our view is he's delivered big time in the past, and we look forward to him doing that in the next era.
Robin, you've just been unequivocal about the future of the company and the inclusion of those operational milestones on Optimus and Robotaxi. But when the proxy hit, many shareholders went straight to the bullet point on the 20 million vehicle deliveries. How much was that informed by, A, the board wanting Elon Musk to focus on the bread and butter business in the near term, but also, did you have some data that sales specifically were being impacted by Musk's political activity?
Yeah, I would say that vehicles are our mainstay of our business today. So is the energy business. A lot of people forget about this brilliant business that we have on the sustainable energy side. And so from our perspective, from a board perspective, they are the revenue drivers of the company in the near term. But obviously in the plan, you can see that there are other areas of revenue activity and profitability and growth for the company in what we're doing with AI as it relates relates to Optimus, but also FSD and beyond. And, you know, we've put pretty ambitious goals out there in terms of the EBITDA. And so I think...
Profit.
Yeah, the profit in terms of having 4 operational goals around product, but also 4 pretty extensive, or 6 actually, pretty extensive goals around the profitability of the company as well. And you can't do that without selling fabulous products that customers want.
Fabulous products that people have to want to buy, and sometimes because of the brand or the person who built them. I just ask a little bit again, did you think sales were hit by his political activity?
So my view is, over the long term, people buy things that they really love, and Tesla vehicles are things that people really love. You know, it doesn't matter who you are. The minute you get into a Tesla and you drive that car, you know what that experience is like. And so, from our perspective, focusing on products that customers love, that our consumers, both in the vehicle space and in the energy space, really do enjoy using and appreciate in terms of not only the technology aspects, but also how the vehicle responds, the user interface, those types of things. So again, we're a products company. We love building things that people love.
And we can see the future product just behind your shoulder as well with Optimus. And Robin, what's been so interesting is the push from Elon's side in the 10 times you met him in the negotiations, and indeed on X's platform, to have more voting control and have more ownership of shares. Can you tell us a little bit about how you weighed that as a board and as the chair?
Well, clearly, Elon's been very public in terms of the things that he motivates him and what actually he wants over this next period of time. So as a special committee, as a board, that's actually easy to work with, because when you're designing a compensation package, you're looking for the things that will motivate an individual to do something above and beyond the mainstay. And so clearly voting rights are important to Elon, particularly in this era as we're developing products around artificial intelligence, autonomous, those types of things where we could use products for good as opposed to any nefarious activity with the products. And so he's been very clear on that. And so for us as a special committee, taking that information and then working through what were the right goals in order for him to earn those voting rights is really important. And again, I'll say again that it's a zero plan if he doesn't achieve the goals. So each tranche is worth, 1% in terms of voting rights. They kick in when he actually hits the goals, both an operational goal as well as a market cap goal. And then the economic benefits are delayed beyond that period of time, which is a difference in the plan that we structured in 2018. So bifurcating the voting rights versus the economic benefit actually has a huge retentive effect. And so from our perspective, that's one of the key levers that we used in the plan.
You're joining us on Bloomberg Television and radio around the world. This is Bloomberg Tech, live at Tesla in Palo Alto, where we're speaking with the chair of Tesla's board, Robin Denholm, about the proposed compensation package for Elon Musk that investors will vote on in November. In the proxy, again, it's very clear, if one is to go and read it, that Elon Musk essentially said to the special committee that my priority is the voting power, but, you know, if my motivations aren't met, I am interested to go and pursue other interests. What was the kind of absolute for the board on your side? You know, I'm trying to understand both Caroline's question on, you know, I think Musk wants the voting power so that he can focus on this AI future. But in return, if to hand over that voting power, what is it, Robin, that you wanted to ensure?
Yeah, I think, as I said before, Elon's a unique individual. He can apply his time, effort, and energy into different endeavours. He has different endeavours out there. What the board sought to do through this plan is to actually have him focus, an outsized proportion of his time, effort, and energy on Tesla. Because when he does that, shareholders win.
Might I just add that what's kind of missing from the proxy, it's not codified, but you are calm, sanguine, comfortable with him also being the CEO at another company, private company, or having another leadership position across multiple companies. That's okay.
Yes, it is okay. It is how he's delivered in the past, from our perspective, actually having his creative energies in various endeavours that are outside of Tesla actually helps Tesla.
Yes.
I know that sounds perverse and people don't really understand that, but having worked with him now for 11 years, it actually benefits Tesla with him doing things that are not in the mission of Tesla, outside of Tesla, both from a resource perspective, but also from a motivation perspective. Yes. And so I think to really understand that point is to understand Elon and how he actually works. And so that's what the board sought to do through this plan.
Succession. The latter tranches directly relate to Elon Musk's participation in succession planning and the successful implementation of that succession planning. You started this conversation by saying there isn't anyone like Elon Musk. Given that this is a decade-long plan, so maybe succession after a decade is more timely then, do you have confidence as a board there are leaders already within Tesla that could potentially step up when he's gone? Or are you already starting to speak with Elon Musk about external candidates, those that are nearest to him, in that level of extraordinary ability that you see in him?
Yeah, so clearly succession planning is a very important responsibility for the board. And we take that responsibility very seriously. I meet with investors all the time, and I will say it's probably my #1 question that I get in terms of consistency of feedback from investors around succession planning. And so from our perspective, we obviously have a plan if something untoward were to happen in the near term, but we also want to have and do have a longer term succession plan. Now, this plan, this compensation plan is a 10-year plan. Elon will be 64 or close to 65 by the time this plan completes. At some point, he will want to ease back. Maybe he doesn't believe that today, but at some point he may want to do that. And so we want to make sure that we have the right leaders in place to do an orderly transition at some point in the future. And so making that part of this plan was a very deliberate activity, and obviously he was part of that discussion as well. And he is part of the discussion on an ongoing basis that the board has around succession planning, the talent that we have. We have extraordinary talent inside of Tesla across many facets of the company. And so making sure that we're continuing to develop those leaders, but also bringing in talent. And, that's the other part. It's in the report as well. And that Elon is a talent magnet, particularly on the engineering side, that we have extraordinary depth in the AI space, in the engineering space, in the manufacturing space, and largely because he works with them day in and day out. And so that's one of the unique aspects to this. And also one of the unique aspects to the plan is to make sure that we have that visible succession plan as we near the end of this decade-long compensation package.
Robin, what you just said was really interesting, the fact that there is a plan in place if something untoward would happen. Can you spell out what that would look like in the here and now?
No, I won't go into details here, but from my perspective, it is a responsibility the board takes very seriously. Elon has participated in that. We have leaders in geographies that run large portions of the organisation. We have a really extensive executive team. And as I said before, Elon works very closely. He's a hands-on leader, both in the engineering space investors, but also across the board from an operational perspective as well.
And I realise that was a sensitive question to ask, and forgive me, I will ask another sensitive one, because it is a time of sensitivity. We've just had the death of Charlie Kirk. We've had Musk himself on his own platform X raising questions, well, about his own security and the fact that he is focused on it. I know it's something that you are focused on. What is the board's view on terms of upping his own security right now?
Yeah, so very tragic circumstances this week. I think there isn't anybody in a boardroom that isn't touched by what's happened with Charlie Kirk. And also, there have been other incidents, in the executive world over the last 12 months that I think every board stops and thinks about security of their CEOs, but also their executive team. And it's no different at Tesla. We have been focused as a board on Elon's security for many years now. He's been very public and very much out there. And so it is something that we take very seriously. He takes it very seriously as well. And so, again, from a board perspective, it is something that we've discussed at length.
Robin, there are a number of other proposals in the proxy. One is a shareholder-initiated proposal for Tesla to invest in xAI. It is non-binding. The board doesn't take a position, but how does the board think about it? For example, if investors would say, no, we don't want Tesla to make that investment, would the board still look to pursue it independently?
So clearly there are 16 proposals overall in the proxy. I know we've spent quite a bit of time on one, important one on compensation, but the xAI proposal is a shareholder proposal that has been put into the board. We value our shareholders' input, and the reason why we have not put a recommendation is we want to hear from shareholders in terms of what their views are as to whether or not we should make an investment in xAI. Well, one thing I will say at the outset is there's a lot of misunderstanding of AI in the marketplace. It is not one thing, okay? It is a range of technologies. What Tesla is doing today with AI is quite different to what xAI does. xAI is working on fundamental areas in AI, but it's also working on large language models. That's not what Tesla's doing. As you can see behind me, with Optimus, we're taking real-world application of AI and putting it into physical products to actually empower those products to do things. So with Optimus, it's very visual. You can see what he does in terms of visualizing things and then actually doing things. And the same with the vehicles. So what we're doing with AI within FSD is actually taking that visual data and using that to drive the car. And so that's quite different to what an xAI does.
Robin, a very quick question, and then we will end on the final proposal for the compensation package. This week, Bloomberg reported an investigation about some fatal incidents where passengers or those inside the vehicle had difficulty using the manual release. Now, as you know, I drive a Tesla vehicle, you drive a Tesla vehicle. All I want to ask is the board aware of that reporting, and will it raise that issue with Elon? And is Tesla looking at the design of the door manual override?
So I can tell you that the board takes very seriously any safety-related reporting or any incidents of any type globally in terms of what we look at. But in the Tesla, there is a manual override already. And in fact, it's been reported on that you can actually manually open the door if there is a power event or anything like that. So safety is our number one factor in terms of what we're doing.
And Tesla ranks very highly on safety.
Very highly. It's also why we're pursuing FSD, because just in North America there are 50,000 deaths on the road. That's 50,000 too many. And so, and we know with the data that we have for FSD that it's actually safer than a human driver, because of those 50,000, 94% are human error. So if you can eliminate 5% of that, that's a lot of deaths that you can avoid. And so, again, safety is one of our key priorities in any aspect of the business.
let's end on this unprecedented proposal. And I'm going to ask you this. What would happen to Tesla if Elon Musk left tomorrow? You know, in order to try and help shareholders understand the board's motive here in keeping him. But there was one specific question from our audience, which I really appreciated. Why does Elon need to be CEO? Could he not take on a more technical role?
Well, that is contemplated in the package, just like in the 2018 package. We want his service at the company. He can be the CEO, but he can also be in another role, whether it's chief product officer or that type of thing. We've contemplated that before. But to me, I think the really key thing is that shareholders get to vote on the future of the company, not just on a compensation package. The compensation package is the instantiation of the goals and ambition, the super ambitious goals that we have as a company. And so I think with this proposal, it's really up to shareholders what the future of Tesla looks like.
Robin Denholm, chair of Tesla's board. There is a key shareholder vote in November on what is, we've said it, an unprecedented proposal on a compensation package for Elon Musk set against very high bar deliverables. But what a conversation, Caroline, to inform the understanding of some of those deliverables. Back to you in New York.
All right, and we've been listening to Robin Denholm, the chairperson of Tesla's board of directors, speaking with our Bloomberg Tech anchors Ed Ludlow and Caroline Hyde in Palo Alto at Tesla's office. Let's head over now to John Tucker with a data check and our Bloomberg Business Flash.
All right, Scarlett, stocks holding near all-time highs. You have bond prices edging lower. That's pushing the yields up. I should point out this Bloomberg Business Flash brought to you by Oracle. Attention, growing businesses. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitments. See if your company qualifies at oracle.com/Bloomberg. Data today showing sentiment among consumers hitting the lowest since May, and then long-term inflation expectations, they rose. You have a 25 basis point rate hike from the Fed. That seems baked into the cake when the FOMC meets next week. It's up again today, adding to yesterday's stock jump. Warner Brothers Discovery, those shares right now up 15%. Paramount Skydance preparing a bid. It is likely to run up against regulatory opposition, though. Adobe delivering a strong quarterly revenue outlook, suggesting the software maker is seeing a payoff from its investment in artificial intelligence websites. Adobe shares up about 0.1% today. The Federal Trade Commission investigating whether Amazon and Alphabet's Google misled advertisers that place ads on their websites. And then you had results after the close yesterday. RH, luxury furniture company, RH, used to be Restoration Hardware, cutting its sales outlook for the full year, and they're citing mounting impacts from new U.S. tariffs. Right now, the S&P 500 unchanged, 65.87. The Dow down 188 points. The NASDAQ 100 up 82. News out of Walmart. I'll conclude with this. This is from the New York Post. A Pennsylvania man's emotional support alligator can no longer accompany her inside Walmart after their recent trip to the store stunned shoppers. The 32-pound pet wore a gray dress as owner Wesley Silva pushed her around in a shopping cart. That apparently proved too much for the world's largest retailer. I mean, it caught my attention. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
Is brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. Time to bring in Ashna Shah, now municipal finance reporter, joining us here in our New York studio to talk about the muni bond landscape and what investors can expect. So Ashna, you're saying it could be a bumpy ride for investors, even though we're expecting a series of interest rate cuts, which is usually good news. There's going to be an avalanche of new debt coming to market in just the next few weeks.
Yeah, so we've already seen that yesterday we hit a milestone of $400 billion in the muni market in terms of supply, and that's the most amount we've seen since almost 2014 for this time frame. And so there's a huge surge in issuance right now, and bankers are kind of split whether that issuance is going to continue growing. It's going to, pare back a little bit, but regardless, it's going to be a little bit of a bumpy ride for muni investors. One of our colleagues on the team, Elizabeth, wrote this story about how because of the technical headwinds, we could be seeing more issuance, but a bumpy ride.
So talk a little bit about those technical headwinds. What typically happens around this time of year?
Yeah, so we aren't seeing generally positive returns around this time of the year. So in September has only delivered positive returns 4 times since 2014. So, they're seeing this overwhelming supply in the market, and they're saying that, there's a strong supply pipeline that could impact returns since this upcoming season generally has weaker demand.
But you're saying it's the retail investor who might actually come in, swoop in and save things in the muni market because they're coming back from those summer vacations. They're wanting to put that money to work someplace.
Yeah, exactly. And projects have to get done. So I think we're also seeing and hearing from investors that, they might be getting a little more comfortable with these higher interest rates.
Within the story, you've noted that local governments are paying out less in redemptions this month. What are the implications of that? Why does that matter to muni investors?
Yeah, so we are seeing more we're hearing that more redemptions are going to be coming around. I was speaking to a executive at Siebert, and he was saying he's not expecting issuance or supply to slow down from the market this year, but he was saying supply, stronger supply could be because of bets on the Federal Reserve cutting rates, and that could bring in some more refinancing activity into the market. These deals have to get done at some point, so.
Are you expecting, though, these Fed rate cuts, which we're all believing could be at least 2 by the end of the year, shouldn't they be propping up the muni market?
Yeah, I think that people are going to be coming back into the market. We're going to see investors coming in from their summer vacations, like Scarlett mentioned. And so we are going to be seeing stronger issuance. That's what some bankers are anticipating, yet some are saying that things might par back because of the weaker demand.
All right, Ashna Shah, thank you so much. Ashna Shah for us, a municipal finance reporter on the latest in the muni bond market. For those who are invested in this tax-free part of the market, brace for a bumpy fall, Alexis.
Yeah, I mean, you gotta love a good muni bond, though, with all of the tax advantages that come along with it. But it's important to know what some of the caveats might be, especially as we enter this area of where that could be lower interest rates for longer now.
Absolutely. Maybe I will outsource looking for muni bonds or the right investment to my virtual executive assistant.
Oh, really?
There was a really good story in the Wall Street Journal about how a lot of ordinary people, not executives, no one in the C-suite, are hiring their own executive assistants to help them just get through the day-to-day demands of, work-life balance.
Right.
So,
I saw that, and I, was curious because people are paying good money to have these virtual assistants now. It's one thing when you have a virtual assistant, when you have an actual live assistant there with you in the workplace, because that person, usually you have to share that person with somebody else. You can really only give them work-related tasks. But what you're talking about is you can tell somebody, listen, go pick up my mother-in-law a birthday present.
Yeah.
We need travel for the summer vacation.
And tell me what I should make for dinner this week.
Oh, I like that one.
Because this is the question that, always perplexes me day in and day out. What should I make for dinner? How should I feed everyone? You can outsource that and, not pay a huge amount of money, but it allows you to free up your time to do the things that you need to do, like prepare for Bloomberg Intelligence.
There you go. Wow, I wish we could do that. First world problems for sure, but definitely interesting that, especially in this environment, we're on higher prices all the way around for so many basic things that people are spending on these virtual assistants because they just help them be more productive, right?
Absolutely. And as companies also reduce costs, they're making less executive assistants available to their senior managers overall. And when they do, like you said, the CEO, the COO, maybe not the CEO, the COO and the CMO might need to share an executive assistant, right? It's no longer like you have the one person that you go to all the time.
Yeah. Well, I don't know, maybe you and I can chip in and get ourselves a virtual assistant.
I'd be into that, definitely.
I thought I was your virtual assistant.
Oh, John, you're always our helper here, always helping us out, John Tucker. All right, let's get a data check now with John, since he's here and chiming in.
Let me assist you. This Bloomberg Business Flash brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Major stock averages, they've turned mixed to lower right now as we close out this week. And with investors focused on next week's Fed meeting, expectation of at least a 25 basis point cut that seems baked into the cake right now when we get the FOMC decision on Wednesday. And back to the best performing stock in the S&P 500 right now. That belongs to Warner Brothers Discovery. It is up 15% right now. Again, best performing stock in the S&P 500. Young Ellison at Paramount Skydance has the urge to merge with Warner Brothers. In the meantime, Andrew Hollenhorst at Citigroup Global Markets says, you know what, the data that we've recently got do argue for a Fed rate cut.
We're probably close to zero job growth in terms of payrolls. So there's no question that you want to be moving rates at least back towards a more neutral setting.
And at this point, just getting news crossing the Bloomberg, and you can bet this is going to affect the share price of some of the vaccine manufacturers. According to the Washington Post, U.S. officials plan to link 25 child deaths to vaccines. And of course, we're going to have more on this story as it develops. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Scarlett and Alexis.
Thank you. That was so well done to our new executive assistant.
You take it with cream, sugar?
Just black, thank you.
Okay.
Popcorn for me.
Well, that sounds good.
I'm not sure I can do that.
All right. Anyway, let's move on because we're taking a look at these markets. And what I've noticed here is that the Mag 7 is up about 1.3%. But if you look at the components within it, Amazon lower by about 1/3 of 1%. Alphabet also slightly weaker. There was a headline today about how Amazon and Google are being probed by the Federal Trade Commission on their search advertising practices. This is according to Bloomberg reporting, citing people who are familiar with the matter. So we need to bring in Justin Teresi. He is the antitrust litigation and policy analyst here for us at Bloomberg Intelligence. Justin, just walk us through what these headlines mean to you when you look at it through your antitrust lens.
Hi, Scarlett. Happy Friday to you. So, interestingly enough here, this case, it really looks like more of a consumer protection investigation, not an antitrust kind of investigation. So what I mean by that here is that we're really looking at the pricing and the terms that perhaps were set forth by Amazon and by Google in their workings with advertisers, and whether or not that pricing and those terms was misleading in any way. So a different kind of series of facts here from what we're seeing in the antitrust cases around advertising, with a big one coming up in about a week. The remedies trial and the Google ad tech case starts in Virginia very soon. More risk there, if you ask me. But this one here really focused on those pricing policies, it looks like, at those companies. And the remedies here probably nowhere near the kind of breakup risk that we would see in a more antitrust aligned case.
That's what I was going to ask, Justin, is whether or not, this makes the case to bolsters the case to break up these tech giants. I also want to make clear that these allegations are now different from what both Google and Amazon are facing. They're facing trials this month, right, with separate lawsuits brought by federal agencies.
Yep, that's right. So you're hit the nail on the head there too. This is really more related to search issues and search advertising, which, interestingly enough, that's what we just had that huge remedies ruling on in the Google search case, right? And in that case, there was a lot of discussion in the remedies about increasing transparency in pricing for the text-based search ads, right? So one could actually say a lot of those remedies are already on their way to being implemented as part of that ruling, number one. Number two, yeah, absolutely. The Google case that's pending, that's about open web advertising on websites, the little ads you see when you might go to Bloomberg.com or CNN.com, for example, that pop up on the side, separate and apart from search ads. And then the Amazon trial coming up this month, that's about Amazon Prime terms, right? And whether or not there was misleading kind of behavior in how that was sold to consumers.
We should note that the FTC and Google declined to comment on our reporting, and Amazon did not respond to requests for comment. So, Justin, when you look at all of this, what does this mean in terms of how much of an overhang this will be for the companies? Is this something that's going to be a month-long investigation or months-long, maybe years-long investigation?
Right, and I think the latter definitely, Scarlett. Right, so I think just now we're, and great reporting, by the way, as usual, by our colleagues Leah Nyland and Josh Sisko over at Bloomberg News. But I would say, we're really early on here. I think is the story. If they're just starting to look into these allegations, these things can take years, absolutely, to pan out. A lot of times, there's no case that's even brought at the end of them. It's really about ascertaining the facts, figuring out what, if anything, happened, and moving on from there. So I don't think we'll see any more announcements from the FTC about how this is proceeding either. Typically, all of this is confidential. So as it moves forward, we may or may not see updates that come out, in different ways about the case. But it's a long-term risk, absolutely.
Is this just another example, though, of how the Trump administration is dealing with big tech, do you think, Justin?
Yeah, I find this a little interesting too, right? So I think, you look back to the AI action plan that came out earlier in the summer, and, in that plan language, the White House said, hey, FTC, stay away from investigations that might inhibit the growth of AI in any way. So that leads me to believe, are we looking to areas like advertising as a carve out from that messaging, right? Are we looking to different areas of tech? There might be a problem that falls out of that ambit of AI, but it seems like, there is that whiplash, right? Where the White House might have one statement on things, and there might be a visit to the White House, right, by certain CEOs on the other hand, but then you said the FTC pursuing an investigation like this. So there certainly is a back and forth, but I would say if it doesn't fall within the ambit of AI, there still is a possibility and some risk that things could be subject to investigations.
Okay, so very much moving goalposts and a TBD kind of scenario. Justin, you and Jennifer Rhee, who is our senior litigation analyst, have also done some research on Live Nation and how its dominance in events is at risk because of a lawsuit. And this is a lawsuit that is scheduled to lead to an antitrust jury trial that will begin, I think, in the first quarter. Just walk us through what we need to know there.
Yeah, so I'll defer to Jennifer on the nuts and bolts of that particular case. She's been following from the start. She's really been knee-deep in that litigation. But what I will say is that it's not just the courts we're looking at here from the aspect of ticketing, right? Really recently, we've seen legislation introduced at the federal and state levels where we're looking at the secondary marketplace for ticketing too, and what's happening there. Things like increased price transparency for consumers when they're going through that ticket purchasing process, a whole host of issues there, but perhaps capping the fees that are allowed in the secondary sale of tickets. So there's a lot happening in that particular area. You're right. There is the monopolization suit that proceeds next spring, and I think that's going to be a really, bet the company kind of litigation in many ways for Live Nation. But there also is this kind of political risk that's out there too, really more focused, I would say, on those secondary ticket resellers.
You know what, I'm curious, though, have consumers really felt the difference yet when it comes to ticketing and pricing regarding Live Nation? I mean, I know they're sort of embroiled in a lot of lawsuits, actually.
Sure, I'd say probably not yet, right? I think we saw some activity around a class action case just really recently there. But, the FTC's rule mandating these price transparency issues for consumers when they're in that kind of ticket purchasing process, that just went into effect a few months ago, right? So really, it's a trickle down here, a slow-moving kind of issue here with politics and with litigation. And of course, we haven't even gotten to the liability phase yet of that Live Nation trial, much less remedies that would be imposed if there were a finding of liability in that case, right? So I think we're at the beginning of a lot of activity, but certainly no real, outcomes are developing just yet.
I mean, I'm a very imperfect example of, what you see when you actually try to buy tickets. But I've noticed when I do try to buy tickets on secondary markets, there's a lot more text about how this is, every single fee included. So we're not going to add anything more to your final price tag. And that's something that's only really started to roll out, I would say, in the last couple of months.
Yep, you're right. And that's the FTC rule right there in play, right? You're seeing that with ticketing applications. We're also seeing that in kind of travel websites as well, right? Where you kind of get to the checkout page and wait a minute, there's all these fees for things like baggage that maybe you didn't know about up front when you saw the fare. Yeah. So that's kind of how those are rolling out there too. And I'd say, to your point, that's really the impact we've had so far on the consumer, more likely yet to come.
Yeah, nice to not get those surprises at the end. You thought you were going to pay this, but guess what? It's a lot more. Justin Teresi, antitrust litigation and and policy analyst for us here at Bloomberg Intelligence. Thanks so much for jumping on with us. You can get the latest news whenever you want it with Bloomberg News Now. Top stories from our global team of reporters at the click of a button. Get Bloomberg News Now on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts. Mixed market with the Dow Industrials now down about 200, NASDAQ up 67. This is Bloomberg Intelligence.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
It is 11:53 on Wall Street. I'm Alexis Christophorus along with Scarlett Fu and Paramount Skydance. Boy, wasting no time when it comes to making acquisitions, right? The Hollywood studio taken over just last month by the independent filmmaker David Ellison, now reportedly preparing a bid for Warner Brothers Discovery. And Wall Street seems to like the news because Warner Brothers up about 14% right now. We've even got Paramount Skydance on the plus side by nearly 3%. Let's break it down with Geetha Ranganathan, Bloomberg Intelligence analyst on U.S. media. He's watching it all for us from his perch in Princeton. Geetha, great to see you. I guess Bloomberg was the first to report this, but we should make clear no official offer made yet. So what do we know?
Yeah, so what we know right now, Alexis, is that Paramount is definitely interested in making a bid for Warner Brothers Discovery. And what's interesting, I mean, you pointed out the timing, that's definitely a very, very critical aspect here. The second thing that's very interesting about this offer is that it's going to be for the entire company. Now, the reason I bring that up is because Warner Brothers Discovery was actually planning to split off its different assets. So, the company owns TV networks like a CNN, a TBS, a TNT. They also own one of, the biggest Hollywood movie and TV studios. And of course, they have their, iconic HBO Max streaming platform. So there's a whole, portfolio of different assets there. And they were planning to separate out the TV assets, which have been challenged for the past few years by cord cutting, and separate that out from the studio and the streaming part of the business. And so really what we were kind of thinking was that there would be a lot of M&A interest, a lot of appetite for the studio and streaming portion of the business, just given that, those are kind of the crown jewels of the business, if you will. But having Paramount kind of come in for the entire company is obviously a little bit of a surprise. There's no deal or dollar value yet, though, Alexis.
And you are saying, Geetha, that this would, if it were to happen, would be a cash offer, like an all-cash offer?
That is what has been reported. It would be a majority cash offering for all of Warner Brothers Discovery.
So I'm wondering if Paramount Skydance is interested in all of Warner Brothers Discovery, what might regulators have to say about that?
Yeah, normally it would have been a problem, I think. You do have two of the biggest studios kind of combining. It will become a top studio with about a 25% box office share. Not that such deals haven't gone through, the regulatory process before. So if you just remember a few years ago, Disney bought the Fox studio. That gave them about a 26% share of the box office. So it has been done. But I think what gives us more confidence in the whole regulatory process here is that David Ellison and the family, the whole Skydance team, just went through this whole approval process for the Paramount merger with the Trump administration just about a month ago. So they obviously know their way around this around the system. They know how to navigate all of the different challenges that come with a deal of this size. So I think that gives us plenty of confidence. And the other thing that I would mention is that there is no broadcast. There's no combination of broadcast assets. So combining two broadcast networks like a CBS or an NBC, that would be problematic. In this case, there is no broadcast asset from Warner Brothers Discovery.
Good point, Geetha. So I'm just wondering about the synergies here, bouncing off of that. And, would there be a fair amount of overlap in the sense that we may see a bunch of layoffs if and when this deal happens?
Oh, that is absolutely bound to happen. So we're actually already seeing that at both companies separately. So remember, Warner Brothers Discovery is actually a combination of Warner Brothers and Discovery, and they had mentioned or they had announced a lot of synergies and a lot of cost savings at the time that they merged those two companies. We're going to see the same thing with Paramount and Skydance, and now when you kind of see this mega merger, there absolutely is going to be a ton of layoffs, just kind of given the duplicative systems in place here. You're talking about a studio business. Again, a lot of positions there can be eliminated. The streaming platforms, the TV networks, you're going to have multiple teams kind of performing the same functions. So yes, we do project something like about $4 or $5 billion in potential cost savings. A lot of those, of course, would be, with the elimination of jobs. So the Hollywood unions definitely would not be happy here.
Yeah, I bet. And I just want to ask you a little bit about the market reaction we're seeing. Again, no deal has been made. This is Bloomberg reporting out there that's actually moving these stocks today. Warner Brothers Discovery up about 14%, but we also got Paramount Skydance up about 3%. Usually the acquirer comes under a little bit of pressure. In the 30 seconds I have, why do you think we're seeing both stocks higher?
Yeah, that's a really interesting point you bring up, Alexis. The reason we're seeing Paramount trade higher is because, remember, this is a subscale streamer. So they have only about 75 million streaming subscribers right now. Merging with Warner Brothers Discovery really kind of puts them on the map along with Netflix and Disney, makes them a really formidable player. And so this is why we're kind of seeing a lot of enthusiasm for this bid.
Yeah, enthusiasm for sure. We'll see how it all plays out. Really interesting. Geetha Ranganathan, Bloomberg intelligence analyst on U.S. media, again, joining us there from Princeton on this Friday. Thanks so much, and great reporting on the part of Bloomberg, bringing us this story that is moving both of these stocks right now. Again, Paramount up about 3%. We've got Warner Brothers Discovery up about 13%. You can bet they're going to be keeping an eye on this story for us here at Bloomberg and let us know when it moves along. And for our listeners in the U.S., we've got got a reminder. You can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. We're going to have much more coming your way. Want to get you a quick market check first. Markets are mixed after that big rally yesterday that sent the indexes to record highs. We've got the S&P 500 down 3 points now, but the Dow Jones Industrial Average off about 190. The NASDAQ Composite, though, in the green by 81. Taking a look at 10-year Treasury, 4.07%, 30-year at 4.70%. I'm Alexis Christophers with Scarlet Fu. This is Bloomberg Intelligence.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. A 22-year-old man is in custody in Utah, a suspect in the Charlie Kirk assassination. Utah Governor Spencer Cox.
A family member of Tyler Robinson reached out to a family friend who contacted the Washington County Sheriff's Office with information that Robinson had confessed to them or implied that he had committed the incident.
CBS's Scott McFarland.
11,000 tips came in. All that video was released, and a couple key takeaways from what the governor said when he was answering questions about the video and about the case, that we do not have information that will lead to any more arrests. Not the most declarative statement I've ever heard, ruling out the possibility of more arrests or more people being considered culpable in this, but saying right now that this is the one person responsible for this murder.
Correspondent Carter Evans has been following the investigation.
Authorities have a tremendous amount of evidence linking him to this crime. Of course, they have the gun. They have all of this video evidence. I would presume at this point they've probably got fingerprints and DNA. FBI Director Kash Patel mentioned how they had flown that evidence back to Quantico to be tested right away.
CBS's Natalie Brand at the White House says the development is a relief for people who were close to Kirk.
I just can't overstate just the grief that has overtaken the White House this week. And, you know, the president giving more details about when he learned about the shooting, and also confirming this morning that he will attend Kirk's funeral in Arizona.
President Trump said this morning he will deploy the National Guard to Memphis. Shelby County Mayor Lee Harris is not on board.
We know that the City Council, County Commission have a right to ask for the National Guard to be deployed. That hasn't happened. So no reason to bring them. We know the governor also has a right to bring the National Guard to town, and so we're asking the governor to reconsider.
Well, General Motors has closed a facility in Warren, Michigan after 2 positive tests for Legionnaire's disease. CBS News Detroit's Sandra Ali.
The building will stay closed until at least Monday, September 22nd. GM says Macomb County health officials have not identified the building as the source, but they closed it out of an abundance of caution. Legionnaire's is a severe form of pneumonia. It's caused by a bacteria found in water systems.
Sounds of celebration in Brazil. After the country's Supreme Court sentenced former President Jair Bolsonaro to more than 27 years in prison, he was convicted of attempting a coup to remain in power after his election loss. Wall Street, right now the Dow Jones Industrial Average down 180 points. This is CBS News. Attention Costco shoppers about a product recall.
A New York bakery is recalling its Dubai chocolate squares stuffed with pistachio filling sold at Costco because they're made with wheat, but don't say so on the packaging. The ingredient list actually says gluten is the allergen. The chocolate treats from the Rolling Pin Baking Company are also made with shredded semolina phyllo dough, which can contain wheat. No reports of illnesses. The batches in question were sold between May 1st and August 29th. If you have any and you're concerned, you can return the snacks to Costco for a full refund. Deborah Rodriguez, CBS News.
The New York Times reports nearly $10 million worth of birth control pills and other contraceptives for people in low-income countries have been destroyed on orders of the Trump administration. They had been purchased by USAID and had been in a warehouse in Belgium for months. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
The suspect is identified. Welcome to the Friday edition as authorities arrest a young man named Tyler Robinson in the shooting death of Charlie Cook. President Trump was in fact the first to announce that a suspect had been caught. We're going to have much more on the investigation and the legal path forward when we talk in a moment with Bloomberg national security reporter Miles Miller. The UN Security Council holding an emergency meeting to discuss Russia's incursion into Polish airspace this week. There's also been a NATO response just announced today. We'll have more on that with Bloomberg's Nick Wadhams. And as the president pledges to send National Guard troops next to Memphis, we'll discuss the political implications with our political panel. Bloomberg Politics contributor Jeannie Shanzano is with us alongside Republican strategist Lisa Camuso Miller. So let's get to it. We start, as always, on Wall Street. For that, we turn to Charlie Pellet, our friend at World Headquarters in New York. Charlie, how's it look?
Thank you very much, Joe Matthew. Here's what's going on. We've got the Dow lower, the S&P lower as well. NASDAQ, though, continues to advance in record territory. Strong week, though, ending on a quiet note. Stocks holding their records, bonds edging lower. Fresh consumer data doing little to alter bets that the Fed will cut rates in September. Of course, the FOMC does have a decision next week. So here's where we stand. Emphasis on little change with the S&P down under 0.1%, down 3 right now, 65.83. We've got the Dow retreating, down 197, drop there of 0.4%. NASDAQ, though, pushing higher, up another 0.3%, a record there for NASDAQ. The 10-year at 4.07%, the 2-year 3.56%. Gold up $9 the ounce, up 0.3%, and West Texas Intermediate crude oil up 1.5%, 63.28 a barrel. Bitcoin at 115,128. The big event for markets next week, of course, the September Fed meeting. Bloomberg is going to be all over that. Policymakers widely expected to cut rates by a quarter point. Andrew Sliman is head of equity advisors at Morgan Stanley.
If they cut aggressively, I think the market is going to get worried that that they see something that the market doesn't see. If they are measured but continue to cut, you know, the history says when the Fed cuts and the market's at an all-time high, the next 12-month returns are very good.
Andrew Sliman of Applied Equity Advisors at Morgan Stanley. Federal Trade Commission is investigating whether Amazon and Google misled advertisers about the terms and pricing for ads on their websites. Recapping, stocks lower, S&P little change. Key takeaway right now down under 0.1%. Balance of Power continues right now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, good to have you and happy Friday. Welcome to the Friday edition, as always, of Balance of Power. You made it to the threshold of the weekend and really glad that you decided to spend time with us today on Bloomberg Radio, satellite radio, channel 121, and of course on YouTube. Watch us by searching Bloomberg Business News Live. We're always live as well on Bloomberg Originals. You pick the platform. We'll keep cooking up the news here, and we do have a lot to talk about. It's the 12th of September. The House and the Senate are out. The president is up in New York. Went to the Yankee game last night. See him up there with Aaron Judge, James? Donald Trump's a pretty tall guy. Aaron Judge is a lot taller. An hour-long tour de force on Fox News this morning brought forth a number of headlines from the president, remembering that Donald Trump was the one who first announced that they had somebody. He first announced the fact that Charlie Kirk had been killed, and on Fox News this morning announcing that this individual was in custody. Tyler Robinson, Governor Spencer Cox of Utah, says that Tyler Robinson was arrested after a family member alerted authorities that he had confessed, or at least implied involvement in the killing of Kirk. We did hear at length from Spencer Cox, who appeared alongside FBI Director Kash Patel, among other authorities. Here's what the governor said.
Investigators interviewed a family member of Robinson who stated that Robinson had become more political in recent years. The family member referenced a recent incident in which Robinson came to dinner prior to September 10th, and in the conversation with another family member, Robinson mentioned Charlie Kirk was coming to UVU. They talked about why they didn't like him and the viewpoints that he had. The family member also stated Kirk was full of hate and spreading hate.
Full of hate and spreading hate. We still have a lot to learn about this individual who has been arrested. We have a lot to learn still about the stages of this investigation, and we're going to try to unpack what we do know right now with Miles Miller, who has spent the better part of this week on this story, Bloomberg's national security reporter. Miles, it's great to have you in place again today, and thank you for all the information that you've been bringing us here. When do we learn more about this suspect?
Yeah, and I expect, we'll continue to do some digging on this to figure out just how he planned all of this. And we've been doing some of the work of calling family members who haven't been getting back to us and just trying to figure out what this was about. One thing that was noted in the press conference was his time on Discord. Now, that's that social media platform on phones where people are in special channels and all of that kind of stuff. And so we'll be digging into that. But, one thing that's really interesting is what he detailed in his Discord server, talking about retrieving the rifle from a drop point, talking about leaving it wrapped in a towel in the bush, engraving those bullets, and changing the outfit after the attack. If you look at it just with that, then the investigators have got him dead to rights. But it's going to take much more than that for them to prove this case against him.
It was interesting hearing from Kash Patel, who, along with other authorities, took a massive victory lap in that news conference. He called this historic in the amount of time that was taken. But, of course, it was family that helped to turn him in, correct? That's actually what happened here.
Yeah, and, they will take their victory lap. They did send evidence back to the FBI lab. That'll be crucial as part of the investigation to figure out if this is definitively the person. But this was really a case that was solved by putting his picture out, making him the most wanted man in all of the United States, certainly, and his father seeing a picture of him by the time he got home a day later, asking him if he was the person responsible for the shooting, the suspect telling his dad, yes, I am, and his father said, listen, we got to turn you in, and he said, I don't want to do that. So then he calls the youth pastor at the church they go to. That youth pastor just happens to be on the Marshals task force that was looking for Tyler. And it was that youth pastor, who's that task force officer, who called the FBI and the Marshals picking him up and bringing him to justice back to Orem, where this all took place.
It's quite a story. Do we believe that he was basically at home for that 33-hour period? I mean, he could have left the country, Miles.
Yeah, and, that's the interesting thing. He was still wearing the clothes that he had changed into, and that we are told by investigators they saw him in after the shooting. They were able to track a car he got into. And so what we know from this is while those investigative steps didn't lead them to the suspect, those investigative steps now give them some definitive evidence that Dodge Challenger was in that parking lot. The person who jumped from the roof got into that car, so they can do that timeline. They're going to continue to do that. And then one other thing is they're going to continue to work down these leads. 11,000 leads coming into the FBI in the last 3 days. They're going to be looking to see if there's anybody who helped him plan this. Was there any material support for this? How did he get the gun? Whose gun was it? All of that goes into this investigation and helps to trump up these charges, which they're saying will amount to the death penalty in the state of Utah.
Well, yeah, the president was the first to say that. Should we assume that will be the path here? And how long? The president said, he's not going to be sitting around in trial or waiting for trial 6 or 7 years. How quickly could this happen?
You know, we know the court system everywhere has its, you know, its druthers, and you know, I think it's actually very premature to say, you know, if this will go to trial immediately. You know, he has the right to say he wants to plead or he wants it to go to trial. There's speedy trial rules, but they don't go that quickly. Now, the one thing about Utah that is interesting is that their court rules and their court system is different. They have 3 days to swear this complaint out, and so they're going to take that time. We probably won't hear anything about charges until Monday, and I'm surprised that this is going to be a state case because, you know, certainly as this was investigated with the FBI, this could go federal quickly. But a state case does mean that we likely could see this on television and likely see all the evidence on television as well.
Wow. Wouldn't that be something? Spending time with Miles Miller, who's with us live from New York, talking about the now arrest of the suspected gunman in the Charlie Kirk killing. The rhetoric has been off the charts here in some cases, Miles, and I know that you're no stranger to politics as well. The president said in the White House driveway last evening as he made his way up to New York where you are, we just have to beat the hell out of radical left lunatics, he said. We have a great country, we have radical left lunatics out there, and we just have to beat the hell out of them. There is some concern here, and Governor Cox spoke to this about retribution and people reacting to disinformation. He even pointed to Russian and Chinese bots at one point. How concerned are authorities about that?
It's very concerning. I know the Secret Service is tracking those threat streams. I know that Homeland Security and FBI are tracking those threat streams. You know, they are very serious when they say that our adversaries, Russia and China, are trying to use this event against us and to divide Americans. Now, you know, it is important to note that what is very clear from family members is that this suspect did not like Charlie Kirk, hated the words that he said, hated the ideology that he espoused, and he said that is the reason why he carried out this attack. And then you think about some of the engravings on the bullet talking about, you know, anti-fascism and you know, a number of other things he put on these bullets, you know, hey fascist, catch. All of that, you know, points to the heightened rhetoric and points to, you know, what the governor of Utah said needs to happen, which is everybody's got to like bring the temperature down and really think about what is said online and think about what is said in public squares. You know, one important to note as you talk about politics is that Charlie Kirk's wife likely will take over running Turning Point USA. The president said that earlier today. So it'll be interesting to see how this legacy is carried forward despite what happened.
It's great to have you, Miles, as always. Miles Miller, Bloomberg national security reporter with great information, and I still want Miles Taylor. If you're with us on the radio, you can always watch us on YouTube. Search Bloomberg Business News Live. We're going to be covering a lot of news here and bringing you a lot of information coming from Utah and from here in Washington. Much more ahead on geopolitics. Nick Wadhams is going to join us now as President Trump reiterates he's losing patience with Vladimir Putin, what it will mean for potential secondary sanctions, and what the UN is going to do with Poland now that this incursion by Russia has taken place in Polish airspace. An Article 4 incursion, according to NATO. We'll dig into it next, only on Bloomberg.
12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got the S&P 500 index swinging between gains and losses, but your key takeaway right now, little change, down just half a point on the S&P, very close to a record, 65.87. The Dow's retreating by 191 points, pulling back from a record there, down 0.4%, but the Nasdaq Composite Index up another 89, up 0.4%. That is a record on the Nasdaq Composite Index. Nasdaq 100 index also at a record. Tech stocks pushing higher. Nasdaq 100 up 0.4%. The Bloomberg Mag 7 index up by 1.5%. Spot gold up $11 the ounce, up 0.3%. West Texas Intermediate crude up 1.2%, 63.13 a barrel. The 10-year, meanwhile, 4.07%, with that 2-year 3.56%. Bitcoin up 0.8% to 115,334 on Bitcoin. Tylenol maker Kenvue spoke with Health Secretary Robert F. Kennedy Jr. in a bid to keep the over-the-counter painkiller off a list of autism-causing treatments. The conversation disclosed by the company follows reports that Kennedy plans to link pregnant women's use of acetaminophen, which is the active ingredient in Tylenol, to autism in their children. Kenvue shares, they're up now by 1.6%. Again, recapping, S&P back in the green, up 1 point, little changed, up under 0.1%. Balance of power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
Okay, Charlie, thanks. Looks like a nice day in New York. It's a beautiful day here in the nation's capital, and I hope you're enjoying it somewhere on this Friday. Thank you for joining us here on Balance of Power. Bloomberg Radio, half an hour from now, we'll invite our global television audience to the conversation. We do this every day from Washington, every weekday for 2 hours, with news from both ends of Capitol Hill and typically around the world. With geopolitics in our focus now, the UN Security Council is set to hold an emergency meeting here to discuss Russia's incursion into Polish airspace this week, the drone swarm that we told you about, one that President Trump kind of brushed off this morning on Fox. He said, well, we knocked them down. I'm not too worried about that. And he was asked as well about his relationship with Vladimir Putin, because clearly things are not getting better in Ukraine. The temperature is not going down. And the idea of Vladimir Putin starting to push the line on our NATO allies is quite a thought. This is why Poland invoked Article 4. Here's what the president said about his relationship and his patience with Putin.
So is your patience run out with Putin?
Yeah, it's sort of running out and running out fast, but it does take two to tango. It's amazing. When Putin wants to do it, Zelensky didn't. When Zelensky wanted to do it, Putin did. Now Zelensky wants to, and Putin is a question mark. But we're going to have to come down very, very strong. It'll be hitting very hard with sanctions to banks and having to do with oil and tariffs also.
Remembering, of course, that we have passed several deadlines, weeks worth, that President Trump has outlined for triggering secondary sanctions, which is why we continue asking about them. Nick Wadhams asks about this a lot, too. He's our team leader here on Bloomberg's national security team in Washington. What do you make, Nick, of this sort of equivalency here he's making between Putin and Zelensky? Well, one of them doesn't want to talk, then it's the other guy when, of course, Russia invaded Ukraine.
Right. I mean, when I hear that, the thing that I really think about is that's a very canny move by Vladimir Putin. I mean, Zelensky has actually been very consistent over the last many months about what he wants. And I think what you see is Putin trying to drive a wedge between the U.S. and Ukraine and seeming to be amenable to conversations, to a ceasefire, to reducing the violence. But anytime you actually try to pin him down on sort of brass tacks, he backs off. And so we're in one of those backing off phases right now where there was some suggestion that we might be inching toward a ceasefire. Then you had the push for this meeting between Zelensky and Putin. And now that you're trying to get the details and get a signature on paper, he's running in the opposite direction.
Boy, interesting. What will the UN Security Council do about this issue in Poland, as we also report that NATO is enhancing defenses along the eastern border?
Well, it may be no surprise to you that the Security Council will talk. Okay. They're talking this afternoon. I mean, I do not want to downplay the gravity of what happened in Poland, but the emergency meeting today is an emergency meeting where views will be expressed. Concerns will be aired and condemnations will be made. I mean, this is one of the big challenges with the Security Council when you have Russia as a permanent member and now the U.S. quasi on Putin's side. Sometimes you don't see a lot of action out of the council. But it is going to be a very interesting moment for the Trump administration because the U.S. representative up there, the deputy mission chief, will make a statement. So we'll be looking at that for clues about whether there are going to be any teeth, whether the president is going to actually do something here. He says his patience has been running out, but it's been running out for some time.
Well, that sure seems like it. And I know that there doesn't seem to be, in the wake of the Alaska summit, an appetite by Vladimir Putin to sit down with Zelensky anytime soon, unless I guess he came to Moscow as the condition.
Not going to happen.
They're not going to happen. So how about NATO then? What is happening right now after Article 4 was invoked?
I think what you're seeing is a huge pressure campaign behind the scenes by NATO allies to try to get something from the U.S., to try to get some promise from President Trump. I mean, all we have really had from the president so far is raising the possibility that this drone swarm could have been a mistake, and now all sorts of European officials saying that could not possibly have been the case. I mean, this puts the president in a position exactly where he doesn't want to be. There are certain rules, Article 4, which could potentially lead to Article 5. An attack on one is an attack on all. I mean, there are a lot of ways this thing could go, but the president does not want to be boxed in. He does not want to make any sort of commitment. I think what he's going to say in response is essentially, listen, we want you to take up more responsibility for your own defense. Get to it. He may commit more resources to Poland. He likes Poland. They have a right-wing government. But in terms of using the NATO structure as it was sort of designed to be used, I don't think we're going to see that.
Well, interesting to hear from both the Polish foreign minister and the president, quote, no, that was not a mistake, unquote. Pretty blunt statement there, so we know how they feel. But when it comes to this Article 4 review, what are they looking at, and how do they conclude this process?
Well, I mean, basically what that does is brings everybody together for a discussion where they then decide what to do next. So it's sort of like, okay, let's weigh the gravity of this attack and decide how confrontational we now want to be with Russia. And, it should be said, there's a fair amount of dissent within the ranks of NATO as well. I mean, a lot of these, it's a fascinating situation because a lot of these principles we have held up as being red lines. Okay, an incursion into a NATO member's airspace.
That would be
you would think those would not be crossed, and if it is crossed, there will have to be consequences. At the moment, it looks like there are not consequences. So I think you're seeing some of the hardliners in NATO, the Baltic states, Poland, wanting to push for a more robust troop presence, more pressure on Russia, more assistance for Ukraine. But then other countries, like the U.S., saying, hold your horses here. And there's some indication that the U.S. is not even really participating in the conversations that come out of Article 4. So that's going to be a big challenge for the alliance when, its most powerful member just isn't even showing up.
Boy, that's incredible. So nothing comes from this. Does NATO start sending Patriot batteries to the border? How do they enhance defenses?
Well, I mean, I think it would be primarily a show of force. So there are supposed to be military exercises that they could beef up. But yes, it would primarily be, additional troops. But there aren't a lot of Patriot batteries to go around right now, and that's one of the big problems. You could see increased defense production, or you could see Ukraine used as sort of the proxy where European nations then boost purchases of military supplies from the U.S. and take a more aggressive approach. But for Ukraine, but again, that's something that takes a long time to work its way through the pipeline. So I think what you're seeing right now is a real effort. How can we do something in the moment that responds to Russia and makes them feel like, okay, reestablishes deterrence, but they just haven't come up with an answer.
Well, the president, I know, is sort of vying for a Nobel Peace Prize, but he's dealing with this endless situation and, of course, what is happening in Gaza. And I'd be curious to hear your thoughts on this before you go. He's asked Benjamin Netanyahu to promise to never strike Qatar again, which was quite a development this week. Is that progress?
It does not strike me as progress. I mean, if the president of the United States has to ask Israel for a promise like that, that just shows you how the power structure in this relationship has been completely upended. Yeah. I mean, in past times, you would have had a situation where Israel would not have done this unless it had a glaring green light from the United States. It's hard to know what really happened behind the scenes here, but you have the president himself essentially saying that Israel only notified the U.S. when this thing was going ahead. And Netanyahu has been very explicit, we're going to do what it takes, either with or without the United States. So it's extraordinary to me where the president says he has so much influence and he's at the center of all this peacemaking, but then he says repeatedly, you know, I'm not happy with developments either in Gaza or in Ukraine. Mm-hmm. When you're saying you're not happy, you're de facto acknowledging that you've been left on the sidelines. Mm-hmm. And I think that's something that this administration is going to have to confront, and the fact that it feels at this moment like they really don't have a lot of control over Netanyahu.
Really amazing stuff, Nick. Thank you so much, as always. Pleasure. Nick Wadhams and his team cover all this for us here at Bloomberg, and there has been a lot to cover this year. You can find a lot more about it on the terminal and online. The Friday edition means we get to talk to Miami Mike McGlone, because part of this story involving the Middle East and the tensions that we've seen not only between Israel and Hamas, but you've got the matter of Iran. You've got missiles flying in Doha. Still remarkable that that took place this week. Yet crude oil is sitting below $63 a barrel, kind of like Mike McGlone told us it would. Bloomberg Intelligence senior commodity strategist is with us from Miami. Mike, we also had a pretty important OPEC move this week. How do you rationalize all these headlines?
Yes, I appreciate you mentioning the price, Joe. Last year's low was 63. I'm sorry, 65. We're 63 now. This year's low has been 55. 55 is about the U.S. break-even cost. And that's what's happening in crude oil. There's an increasing glut. We see the global trend towards somewhat of a declining economic situation, notably as the U.S. cuts off tariffs. The thing is, the market's so in tune to this increasing glut that every time we get little potentials for spikes and the potential for supply disruptions, like the things you mentioned, sellers are just waiting to lock in some profits so they can sell forward and produce more crude oil, most notably from the U.S., Canada, Brazil, Guyana, even OPEC. Mm-hmm. So it's just a question of what stops that. So I will be updating my note that I put out a few months ago. Is I don't see what stops crude oil to do normally what it has been for the last 20 years. It has to get below its cost of production, which means it's been going to 40. And I don't see what stops gold from going towards $4,000 an ounce. The key thing I'll end with is right now, that ratio, the amount of crude oil barrels to 1 ounce of gold is about 57. On an end of the year basis, we've never ended above 40. And the two key years was 1934 and 2020. So what's happening in commodities right now is just very exciting.
Incredible stuff. Did you see how he just did that? He put oil and gold together. I love the consistency, Mike. It's great, and I hope you have a great weekend. Come back and see us soon. I think it's my goal to get a job at Bloomberg Intelligence. I can work with Mike McGlone and Nathan Dean. Don't you want to try that out someday? I'm not sure I'm smart enough, though. Our panel is, and they'll be with us next, Jeannie Shanzano and Lisa Camuso-Miller. Stay with us right here only on Bloomberg.
1240 on Wall Street. We do check markets all day long here at Bloomberg. We've got this stock rally stalling at a record. Little change on the S&P 500 index as we come close to wrapping up the trading week. Up by half a point on the S&P, but any advance today will be yet another record on the S&P. 65.88 where we stand now. That is a gain of under 0.1%. We've got the Dow lower by 195, down 0.4%. And NASDAQ, the composite index, up 93, up by just about 0.4%. The 10-year at 4.06%, with a 2-year currently yielding 3.55%. Gold pushing higher by 0.4%. We just heard our Mike McGlone talking about the precious metal, 36.46. He also chatted about crude. WTI 62.81 a barrel, up today by about 0.7%. Apple is delaying the launch of its new iPhone Air in mainland China, citing regulatory issues. President Trump will be heading to Europe next week, and Apple CEO Tim Cook might be going along too amid tariff concerns. This after Cook unveiled its next-generation iPhones this week, and last month gifted President Trump a statue featuring a 24-karat gold base. Gil Luria is an analyst with D.A. Davidson.
He's doing his best to ingratiate himself with the president. It was almost comical to see him present the president with a golden statue. I think it was almost biblical. So hopefully that gets him close enough with the president. The president will take him there and maybe even address some of these concerns head on. Part of our concern vis-a-vis Europe is that Europe is applying these non-tariff barriers on big tech. And so the president's going to want to address that.
Gil Luria of D.A. Davidson. Apple shares today, they are advancing 1.6%. Apple, of course, part of the Mag 7R index. The Mag 7 index up now by 1.5%. So again, recapping, we got the S&P swinging between gains and losses. Right now trading lower, down by just under half a point. Balance of Power continues right now, and back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. We'll get back to Mr. Pellet, the voice of Wall Street and the New York subway, coming up at 1 p.m. Top of the hour with the latest on Wall Street as we track the Friday trade here. It's been quite a week for Wall Street and, boy, certainly for Washington. And I do want to mention very quickly, we're going to have our panel with us in just a moment, but we have breaking news from the Associated Press. This news alert just hit the wire. The suspects in the assassination of Charlie Kirk, who, of course, we have been talking about over the course of the day here. Tyler Robinson, his name, is now arrested on suspicion of capital murder, weapons, and obstruction offenses. This is the first time we've had clarity on charges that we'll be hearing more about here. Of course, President Trump saying earlier today that he wants to seek the death penalty in this case. Miles Miller, our national security reporter, will be with us at the top of the hour as well with the latest on this case. We had an FBI briefing that we began the day with here. Kash Patel, joined by the governor of Utah, along with other authorities, in outlining the way this all played out. A family member alerted authorities after this young man apparently confessed. We'll have a lot more on this as we make our way through the morning. You know, it was pretty remarkable. President Trump, who was the one who actually announced the death of Charlie Kirk, was the one who announced that someone had been arrested. He didn't ID this person, but announced the arrest in a long interview this morning on Fox News. They actually had him on the couch. You know, he was up in town to go to the Yankees game last night. Sat on the couch for like an hour. They could barely get out of this interview to get into the news conference. But he talked about a lot of things beyond Charlie Kirk. We already went through what he said about Russia, Ukraine, his relationship with Vladimir Putin, the incursion into Polish airspace. He also talked about law and order, crime on American streets, and the expectation that he might go to Chicago next, dashed again by his pronouncement that no, the National Guard is moving next to Tennessee. Here's what he said.
We're going to Memphis. Memphis is
that's the next city.
Deeply troubled. And the mayor is happy. He's a Democrat mayor. The mayor is happy. And the governor, Tennessee, the governor is happy. Deeply troubled. We're going to fix that just like we did Washington.
President Trump deploying the National Guard to Memphis. Now, we don't have timeline on this. That is basically all we heard was what was in that interview. So I suspect we'll have a more thorough announcement at some point here from the White House. It follows the president deploying not only National Guard troops, but federal law enforcement on the streets of Washington, D.C. for the last 30-some-odd days. It's where we start today with our great panel. Jeannie Shanzano is back with us, our Democratic analyst, Bloomberg Politics contributor, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Lisa Camuso-Miller is here as well, Republican strategist, former communications director at the RNC, and host of the great Friday Reporter podcast. Great to have both of you with us here. Jeannie, the president did suggest that he would go next to a red state to clean up a city. Does this give him credibility after essentially threatening blue states and Democratic governors until now?
I mean, Memphis is still, it is a blue city in a red state, to your point. And the president said that both the governor and the mayor support sending in troops. Now, we do understand the governor is supportive. We don't hear the same from the mayor. The mayor has said that he would welcome assistance to clean up crime and to address crime, and it is a huge problem in Memphis. But he has not suggested that he was welcoming the troops. I think the bigger question here is under what legal apparatus is the president going to be sending these troops in? It's odd because if the governor's supportive, he already has control of the National Guard, whom he sent to D.C. He can call them back and send them to Memphis. That can be done. But under what legal structure the president would send troops in is another question, because, of course, it is illegal in our country to use military troops to address issues of what we think of as regular crime. And so the president could find a legal strategy, but he didn't address what legal strategy that would be. He simply can't just send the military into a city, at least legally.
Interesting. It was kind of strange the way he rolled this out, Lisa, because he said it came from a conversation with the chief executive of Union Pacific Corp., which, by the way, has a pending merger deal, and a former board member of FedEx. He said, when I walk one block to my hotel, they won't allow me to do it. They put me in an armored vehicle with bulletproof glass to take me one block. He's doing this on the recommendation of his CEO. Is that how you're reading this?
It sounds that way. And look, the president is a businessman. And so by nature, he takes counsel and takes meetings with high-level members of the executive world. And so if that's what he's hearing, and he's hearing from voters and he's hearing from the electorate that there is a concern about the various American cities, then that to me is him answering those campaign requests and those campaign promises that he's going to do what he can to try to address these concerns in these cities. And so while Jeannie makes a very valid point about how it is and what is the vehicle that he's going to use to continue to do this, I also think, too, that the president sits at a place where he wants to keep his word and he wants to demonstrate that he can make things happen. And so that is precisely how I'm viewing this conversation that he had from the couch just the other day, that he's trying to make good on those promises.
Well, you live here, Lisa. What do you think about what the president is saying? 30 days in D.C., it's all it took for me. There's no crime in the city. Of course, we know that's not true. There's still robberies. And in fact, there have been a couple of killings in the last 30 days. There were a few events last weekend that would call that into question. We're looking, by the way, the National Guard troops you were just seeing on your screen, not too far from Joe's stone crab. Do you think that this has been a model, Lisa, that should be carried out across the nation?
Do I think that? No, Joe, I don't think that. I do not think that is. I think that this is a image campaign. I think that that's precisely how the president carries out his work. He's demonstrating that he's answering the concerns. Whether or not there is valid reason and or any example as to how this has made any difference is questionable to me. I mean, I've been working in and out of Washington, D.C. now for almost 25 years. It's an American city. American cities have been troubled with crime for a long time. And has crime ticked up over time? Yes. Does it also tick down? Yes. Do we need National Guard troops in those cities? No, I do not think we do. I think we need to rely on law enforcement and the folks that are there to protect the cities in a way that makes good sense. But that's not the way this president operates. And I think we need to remember that that's the way he's going to do these things.
Well, I just think it's funny. Everybody around the country is weighing in on what's happening in the District of Columbia. And every now and then it's worth asking people who actually live there. Jeannie, the Shelby County Mayor, Lee Harris, confirming to local news in Memphis, WREG, that indeed the National Guard was under consideration before the president said this today. He said, while the governor has the right to ask for guard troops, he is asking Governor Bill Lee to, quote, please reconsider if this is on the table, unquote. He said to have individuals with military fatigue, semi-automatic weapons, and armored vehicles patrolling our streets is way too far anti-democratic and anti-American. So this is going to be a different wrinkle. You're going to have a mayor at odds with the governor.
We absolutely can. And you would assume if you had a Republican governor of Illinois, we'd see a similar thing working in Chicago and Illinois as well. And he is absolutely right. I read that quote as well, and he makes a very good point. And of course, public opinion polls support him. Americans do want to address crime. They don't want troops on the streets of their cities to do that. And so there are other ways to address crime. In fact, most crime experts, most people who live in the criminal justice area talk about other much more effective ways to do that. But I think we can't also lose sight of what this is about. Donald Trump ran on two things: immigration, crime, and the economy. He cannot talk about the economy right now because it is a very bleak picture. The job numbers are horrendous. Inflation numbers are bad. Manufacturing job losses are tremendous. We're paying more for what we're importing due to his tariff regime. He simply can't go talking about the economy, which was his number one issue. And so what does he do? Well, he told us in the White House a couple of weeks ago, I'm going to make this all about crime. And to Lisa's point, crime has ebbed and flowed. And you look in D.C., when he sent those troops in, crime was down in large numbers. So he's certainly not doing this to address crime numbers. He's doing it to change the focus from something that he doesn't poll well on right now, which is the economy, to something he thinks he can make a winning issue out of, which is crime and immigration.
Well, okay, so is he making a winning issue out of it? Because here's the thing, and maybe I hope we have time for you both to weigh in on this. Memphis recorded the 4th highest homicide rate of any city in the country, Lisa, with a population of at least 100,000 last year, according to FBI data. Republicans think they have set a very effective trap for Democrats here. Why wouldn't you want help with numbers like this? The president knows this. Is it working?
Well, I'd be interested to see what the data is over time, Joe, certainly. I mean, I love the city of Memphis.
I mean, politically, and I hate to say this on Bloomberg because we're driven by data, but put the data aside for a moment and just politically speaking, you want to be a Democrat who says no to fighting crime?
Absolutely not. But do I want to be a Democrat that talks about the fact that we don't need the U.S. troops to go in to save American cities? I don't necessarily think that that is a difficult argument to have. I think people would much prefer to incentivize their local law enforcement and those who they know who love and want to protect the city in the way that they've been hired to do so.
That's fascinating. Jeannie, I'm guessing that you agree with Lisa in this case. Donald Trump thinks he set a trap for you.
Yeah, I think the reality is about effectiveness. We should all want to clean up crime. The question is sending in the troops, is the president sending in troops that are not trained to address crime in cities the way to do that? And again, most experts tell you no. But Donald Trump can do an awful lot, which is why I think the governor of Maryland was right on point when he said, yes, come in, come help us, come visit. We need to hire more police officers. We need to have better training. We should partner up. So what we see here again from Donald Trump is very much performative. He doesn't want to use effective known strategies to address crime. He wants to make a show of force. I want to clean up crime. I don't necessarily need the show of force. And I think that's the argument Democrats have to make. Help us really address crime, Mr. President, not just put on a show.
Yeah, well, I'll tell you what, Bloomberg has compiled the stats here, and it's pretty interesting. Remember we were going to go to Chicago? Well, we started in Washington. U.S. cities with the highest reported homicide rates in 2024, Jackson, Mississippi, followed by Birmingham, Alabama, St. Louis, Missouri, Memphis, Tennessee, then Baltimore, Maryland. You do not see Washington until you get out of the top 10. And guess what? This top 20 list that we have on the terminal does not include the city of Chicago. Kind of interesting if you do want to talk data. We do that pretty well around here. Our panel will stay with us. Jeannie Shanzano and Lisa Camuso-Miller back in our second hour as we welcome our global television audience to the conversation. Mara Rudman's going to join us as we turn to geopolitics. We'll get an update on the Charlie Kirk killing investigation. An arrest has been made, and Miles Miller will have the very latest for us from World Headquarters in New York. So stay right here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew.
The suspect's family says he confessed. Welcome to the Friday edition as authorities arrest a young man named Tyler Robinson in the shooting death of Charlie Kirk after a family member alerted them. President Trump was the first to announce that a suspect had been caught this morning, and we'll have the very latest on what unfolded today and what lies ahead in the legal path with Bloomberg national security reporter Miles Miller. He'll be with us from New York. Russia says negotiations with Ukraine are on pause what that means for the war effort and for NATO. We'll discuss it with Mara Rudman at the University of Virginia's Miller Center. And as the president pledges to send National Guard troops to Memphis next, we'll get into it with our political panel. It's all after a look at Wall Street, and Charlie Pellet has his view on the markets live from World Headquarters in New York. Charlie, what do we have?
Thank you very much. A little change right now, Joe Matthew, as we wrap up another turbulent week, but we've got the S&P 500 index trading higher now, just under 3 points. That is a gain of just about under 0.1%. The Dow down 198, slumping by 0.4%. NASDAQ advancing another 101 points, up now by 0.5%. Any gain today for both the S&P and NASDAQ will be another record. The 10-year yield 4.06%, with a 2-year currently yielding 3.55%. Gold up $15 the ounce, 36.49 on the precious metal, while West Texas Intermediate crude up 0.3%, 62.58 a barrel on WTI. The Federal Trade Commission is investigating whether Amazon and Google misled advertisers about the terms and pricing for their ads on websites. Alphabet shares, a parent of Google, up 0.3%. Amazon right now down 0.7%. And the FAA says it will fine Boeing $3.1 million for a series of safety violations that it uncovered over a space of several months between late 2023 and early last year. Recapping, little changed on the S&P right now, higher by 2 points at a record 65.89. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, many thanks. Charlie Pellet will have an update on the market about 20 minutes from now, as we always follow the trading on Wall Street, even as we talk politics here in Washington. Thank you for joining us. It's the Friday edition of Balance of Power, and boy, we've had a week around here. But you've made it to the threshold of the weekend, and we've got some smart folks to talk to you about a number of stories that have developed over the course of this day already, beginning with, of course, the manhunt in the shooting death of Charlie Kirk. It has concluded with the arrest of a young man from Utah named Tyler Robinson, and we're learning more about how he was apprehended, how authorities found him, and the work that is left here, not only in chasing leads, but also in building a legal case. We heard from a news briefing this morning a little bit more about this gentleman. Kash Patel, the FBI director, spoke alongside the governor of Utah, Spencer Cox. Let's listen to what he said.
Investigators interviewed a family member of Robinson who stated that Robinson had become more political in recent years. The family member referenced a recent incident in which Robinson came to dinner prior to September 10th, and in the conversation with another family member, Robinson mentioned Charlie Kirk was coming to UVU. They talked about why they didn't like him and the viewpoints that he had. The family member also stated Kirk was full of hate and spreading hate.
Full of hate and spreading hate. Miles Miller has been on this story for several days now, Bloomberg's national security reporter, and joins us live with the latest on this from World Headquarters in New York. Miles, we now have a better sense of the charges this young man will be facing as well.
Right, and AP is reporting that he was arrested on suspicion of capital murder and weapons offenses. Those charges have not been confirmed yet. There are no charging documents yet. I think as we spoke about last hour, what happens in Utah is that there's about a 3-day period where they can draw up these charges, and you can bet they're going to take all the time they need to figure out what the charges should be and to figure out how they're going to square this case out when it goes to court.
This young man was arrested after a family member alerted authorities. He was basically turned in by his own family here, Miles. If that hadn't happened, would this manhunt still be on?
Yeah, but it's clear that investigators were getting closer to him. For starters, investigators had identified a gray Dodge Challenger that was leaving the scene after the incident. They figured out that that was his car once they figured out who he was. But if they had gone down that path, what they would have done is run the license plate, figure out who it belonged to, and then start doing questioning. So that would mean that we would have an identification much later on. But, you know, just to talk to you about the timeline of how this all happened, 9 o'clock in Utah is the time, or 9 o'clock Eastern time, Wall Street time was the time they had the press conference yesterday, about 9:30. It was about 11 o'clock when the suspect gets to his father's house. His father says to him, are you that guy in the photo? You look a lot like that guy in the photo. And he admits to carrying out the shooting, then says he wants to kill himself. His father says, no, let's call the youth pastor. And the youth pastor just happens to be on the task force that's looking for him, calls in a deputy, calls in the FBI, and brings him into justice 33 hours after the shooting.
That is remarkable. Miles, you also mentioned the fact that they pulled out 11,000 leads, generated 11,000 leads in 2 days. Just because this arrest has happened doesn't mean they won't be chasing them all down. What will happen in the days ahead?
Because this is a suspect that was perennially online, you can tell it from the things he wrote on these cartridges that he put into the gun, from what he said in Discord, according to authorities, that this was a person who spent his time online. So they'll be seeing, did he get any material support, right? Did he get any support to carry out this shooting? Whose gun was it? Will a friend from high school say, you know, he was planning to do other things? Will a friend from the neighborhood say he saw him on that day wearing that outfit? All of it is key to figuring out who this guy is and why he planned it. And they're going to leave no stone unturned to be able to have a really robust criminal complaint against him, because these cases are only as good as what you can present to the grand jury.
Got it. Miles, I'm curious if we know, did Dad know the pastor was on the task force?
I'm not sure about that, but, you know, call the youth pastor because they, you know, were members of this church. And I mean, it's just serendipitous that this youth pastor happens to also be a task force officer. You know, the thing in sort of reporting out this story and to bring our viewers and our readers and our listeners into it, Trump makes this announcement at 8 o'clock that they've got a suspect in custody. The press conference gets moved back 30 minutes. I call a source in the marshals, and I said, hey, can you tell us a little bit more about what happened with the arrest? And, you know, the marshal remarked that, of course, like Trump was telling the story, but of course it's always just a little bit different than what actually happened. Let me give you more details. And then they filled it in at the press conference. But, you know, just a little bit about how the sausage is made to get this narrative of what happened and really what was a chase to figure out who this person was, because law enforcement was worried that because they hadn't found this person that he could leave the country, and luckily he was still in Utah, just 3 hours away.
Really fascinating. And great work, Miles. Thank you for lifting the veil on the way this story came together. Bloomberg's national security reporter, Miles Miller. You'll be hearing and seeing a lot more from Miles as we learn more in this case. I'm Joe Matthew in Washington. Thank you for being with us here on the Friday edition of Balance of Power. We're balancing news on a number of fronts here today, beyond the Charlie Kirk story and beyond what's happening on Capitol Hill, though there may be a connection there with Congress. We've got our eyes on what's happening in Ukraine in this announcement today by Russia that negotiations with Ukraine are on, quote, pause. Maybe that's partly why President Trump says he's losing patience with Vladimir Putin, even though weeks and multiple deadlines have passed since he indicated that secondary sanctions would be implemented here, knowing that Alaska's summit several weeks ago generated nothing, and there are no plans at the moment for Vladimir Putin to meet with Volodymyr Zelensky. Let's go back to that interview that generated a lot of news this morning, including this announcement by the president that someone had been arrested. He was on the couch on Fox and Friends, and the matter of Russia and Ukraine came up. Let's listen.
So has your patience run out with Putin?
Yeah, it's sort of running out and running out fast, but it does take two to tango. It's amazing. When Putin wants to do it, Zelensky didn't. When Zelensky wanted to do it, Putin did. Now Zelensky wants to, and Putin is a question mark. But we're going to have to come down very, very strong. We're going to be hitting very hard with sanctions to banks and having to do with oil and tariffs also.
But there hasn't been any hitting, never mind hitting hard, and that's where we start our conversation with Mara Rudman, professor at the University of Virginia's Miller Center, former U.S. diplomat, with us live in our studio in Washington. Mara, it's great to have you back. Thanks for joining us. I have so many questions about this, but I want to start with the actual news from Russia. This pause on negotiations means what? Are we done here?
So I don't mean to smile at this, and I certainly mean no disrespect to calling it news. But the fact that there's a pause on negotiations
There was nothing to pause.
Is not a news flash.
Okay.
I mean, right, there's nothing to pause. And in fact, what Russia has been doing steadily before the meeting in Alaska and since has been to be increasingly provocative, including with the drone strikes earlier this week in Poland. And so I find President Trump's comments a little perplexing, probably more than a little perplexing in that regard.
Well, how about the equivalency there? It's like, well, it takes two to tango. One day he doesn't want to talk. The next day this guy doesn't want to talk when, of course, Russia invaded Ukraine.
Precisely. This is not a both-and situation at all. And U.S. national security interests are at stake. And I noted how much President Trump uses the present tense, I am running, out of patience. We're well beyond that point, and the rest of the world takes note. Yeah. And a friend and colleague recently wrote a column, I think a very thoughtful essay in the Dispatch, Eric Edelman.
Yeah.
And the title of that, quoting former Secretary of Defense Donald Rumsfeld, was "Weakness is provocative."
Wow.
And I think President Trump is sending a signal of weakness, which is very dangerous for the United States and the world.
Well, you remember Barack Obama's red line in Syria. That's something that Donald Trump talked about a lot. This has been going on. There were multiple red lines when it came to Russia. It's been going on for actually months, not weeks. Does it feel to you like the drumbeat on sanctions is getting louder?
I think the challenge we have is the distance between the statements President Trump makes and the action that follows. And the rest of the world watches and calculates. And so I think that we have in President Putin somebody who thinks he's got a red carpet to do what he wants, where he wants.
Saw that carpet in Anchorage.
Precisely.
Let's talk about what happened in Poland, because you would think that this event would be the very thing to trigger, if anything, secondary sanctions. We have an Article 4 incursion. The president was asked about it in that same interview today. And he said, hold on, this may have been a mistake, which is something he said yesterday. And we've heard from Poland on this, as a matter of fact. Donald Tusk himself, the Prime Minister of Poland, on Twitter, we would also wish the drone attack on Poland was a mistake, but it wasn't, and we know it. That's the statement. What does Poland think of this rhetoric?
Well, Poland's been very clear, and I'm sure they're also very concerned. And they're not alone. Others in Europe. This is perhaps one of the few things that Russia's actions in Ukraine and towards Poland that actually unites Europe and European leaders. So we saw the Italian defense minister making strong statements similar to that of Polish leaders, and the NATO, Mark Rutte, the NATO, the lead for NATO, Secretary General, thank you, I believe also made some strong statements. So President Trump isolates himself in the United States when he talks in terms like this is a an error, a mistake, and not a deliberate attempt by Putin to do what he's doing.
Do you have any hope for any result to come from an emergency meeting of the UN Security Council on this? They're doing that today.
Well, I'll say on another issue, it was interesting, the emergency meeting earlier this week, lost track of days, on Qatar, where the United States joined a unanimous resolution there. So there may be room yet for the Security Council to show some action. Of course, on this issue, it's much more difficult because Russia and China are not going to be in the same place as the United States
here we
at
go
all.
Again. That's right. What was the motivation behind this incursion in Poland? We have an Article 4 that's been triggered here. Is Vladimir Putin trying to find the line on Article 5?
I think that what Putin is doing is consistently testing how far he can go without getting a response or reaction.
He hasn't gotten one yet.
From the United States.
Well, that's right.
He certainly has from NATO and from Europe. But he's focused in on whether President Trump in the United States is going to do anything. There are some actions the United States can take. You mentioned sanctions against the major Russian energy companies, agreeing to Europe's price on oil, putting a cap at $48 a barrel as opposed to the $60 a barrel. Making sure, going forward with unfreezing Russian assets, seizing the frozen Russian assets, about $300 billion, and making them available to the Ukrainians. There are tangible moves out there that could be made that the United States could signal in real time, and that's the kind of response I think that Putin needs to see to step back.
Well, you know, it's interesting because we've been talking about this for years, and in the Biden administration, the question we kept asking on the air was, what is there left to sanction? Because the message from the administration was, we have turned the screws in a way that no one ever has in history. How come Joe Biden didn't do all of this?
So Joe Biden did do some of
when
this.
it comes to secondary sanctions.
Well, I think that some of the things that are being discussed.
I know they cut off the banking system. The Biden administration did a lot. But to think that there was much more to do is surprising to a lot of people.
So I can't give you the specifics right now, but I am fair, because I don't want to misstate. Sure. But I am fairly sure that the discussion, for example, on seizing frozen assets and using them was very much on the list, in the near-term list, and I think you probably would have seen that if there was a second Biden administration. Okay. I think the nature of the sanctions on the Russian energy companies was done to some degree, but could be strengthened as well. So that's why I point to some of those steps.
I just wonder if there was a strategy there in holding back some of this stuff so you still had arrows in the quiver.
Fair point.
Yeah.
And I think it was a calibrated. I think there was a lot of tension and pushing probably within the Biden administration about when to do more and how. There certainly was on what kind of equipment to give to Ukraine and to make accessible to them.
Yes. You mentioned Qatar. The president's dealing with a couple of hot issues right now. This is just not only Ukraine and not only Gaza. When Vladimir Putin is sending drones into Poland and Benjamin Netanyahu is sending missiles into Doha, the temperature's rising inside this administration when it comes to geopolitics.
I think, yes. And as you said at the beginning of the broadcast, it's been quite a week. I mean, it's hard to imagine all the stuff that's happened this week.
Do you believe that the president does have the assurance of Benjamin Netanyahu that will not happen again? The negotiators were in town when those missiles landed.
Yeah, I'm skeptical of any assurances, though frankly, I'm skeptical of assurances the president gives to others as well as the assurances he receives. Because I think my biggest concern is he is seen as a weak leader.
Right.
And other leaders around the world are calibrating against that.
Yet he projects himself as a strong man.
Yeah, I'm remembering the phrase about walk softly, but step softly, but carry a big stick. I think he does just the opposite, and I think that's dangerous.
Well, these two have yet to resolve, and we'd love to stay in touch with you on all of this, Mara. Thank you so much for coming in. Mara Rudman with us once again, bringing her expertise and insights to the program. We're going to assemble our political panel next. We've got a good one today. Jeannie Shanzano and Lisa Camuso-Miller are with us today on Balance of Power with much more to talk about here involving the shooting death of Charlie Kirk. An arrest has been made. The Associated Press is talking about charges. We got the update just now from Miles Miller, and we're going to talk more about the political implications here with some very hot rhetoric. And the President of the United States suggesting it's time to beat, as he used the term, to beat down the radical left. We'll get into this with our Republican and Democrat both on the panel straight ahead on Balance of Power on Bloomberg TV and radio.
1:21 on Wall Street. We do check markets all day long. Here at Bloomberg, we have got this stock market rally stalling at a record as bond yields rise. S&P right now higher by 4. That is a record 65.91, but perhaps the key takeaway, little change right now, under 0.1%. The Dow down 172, decline there of 0.4%, while NASDAQ is up 101, now higher by 0.5%. The Bloomberg Mag 7 index advancing 1.6%. The 10-year now 4.06%, with the 2-year 3.55%. Gold is up $16 the ounce, $36.50, up 0.4%. West Texas Intermediate crude up 0.3%, $62.56 a barrel. We are keeping an eye on the Gemini Space Station IPO. It is a crypto platform. Shares indicated to open at $37 a piece. The IPO price $28. Not the only IPO today. BlackRock Coffee Bar jumping as much as 34% after the drive-through focused coffee chain raised $294.1 million in an IPO that priced above the top of its marketed range. Workers at Boeing St. Louis area defense factories will remain on strike after union members rejected a third contract from management. Boeing says no further talks are scheduled. Boeing also says it continues to hire replacement workers. Meanwhile, the FAA says it's going to fine Boeing $3.1 million for a series of safety violations. Recapping stocks higher, S&P right now up 3, a gain there of under 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That's a Bloomberg Business Flash. Once again, your host, here he is, Joe Matthew.
Always great to spend the afternoon with Charlie Pellet, and we'll get back with Charlie in about 20 minutes, see how things are shaping up here in the Friday trade. Many thanks, Charlie, live from World Headquarters in New York as we talk politics here in Washington. And if you've been with us for the past couple of days, well, it's been a very difficult conversation in a political world that was left in tatters by the killing of Charlie Kirk. This story has developed rapidly over the course of this day, starting with President Trump on Fox and Friends announcing that an arrest had been made. He didn't identify the individual, but he did say that the manhunt had ended. That, of course, was followed by an FBI news conference that included the governor of Utah. But the president was asked about some of the rhetoric around all of this, the political extremism, remembering that he said in the White House driveway yesterday as he was on his way to New York, just before he stepped on the lawn to get on Marine One, the president said, "We have a great country. We have radical left lunatics out there, and we just have to beat the hell out of them." Now, to be fair, the president also said in a separate conversation that Kirk was an advocate of nonviolence. That's the way I'd like to see people respond. But the headline of "beat the hell out of them" is making the rounds around here, and the president doubled down on that a bit, at least, when it comes to the blame game this morning on Fox and Friends. He was asked about extremism on both sides of the political spectrum. Here was his response.
The radicals on the right oftentimes are radical because they don't want to see crime. They don't want to see crime.
Worried about the border.
They're saying, we don't want these people coming in. We don't want you burning our shopping centers. We don't want you shooting our people in the middle of the street. The radicals on the left are the problem. And they're vicious, and they're horrible, and they're politically savvy.
That's where we start with our political panel. Bloomberg Politics contributor Jeannie Shanzano, Democracy Visiting Fellow at Harvard Kennedy School's Ash Center. Joined today by Republican strategist Lisa Camuso-Miller, the former RNC Communications Director and host of the Friday Reporter podcast. It's great to have both of you with us here, knowing that this is a pretty difficult topic. Lisa, do you see it the way President Trump does, that, in fact, radicals on one side are more dangerous than the other?
Joe, I think that the language of blame is what's corroding this country. And that's really fundamentally how I feel. I think that this othering, this pointing of fingers, it's rooted in fear. And it's inextricably linked with 9/11 as far as I'm concerned. I mean, it is the fear that was brought on from the fear of terrorism and the fear of our country being under threat that has stoked all of the division. And I'm not the only person that said this. There's plenty of other people smarter than me that have done the analysis. But now we come to a time when we have had this tremendous loss. And I think it sets a precedent for what comes next. I mean, yes, gun violence in this country is absolutely abhorrent at every single level. I think the reason why people are so caught off guard by this particular incident, though, is that this is not someone that was an elected official. This is not someone that had a public forum. He did, but he was not an elected official. So the fact that we are stoking one versus the other, the othering, this guy is to blame or that guy is to blame, it's that shred of empathy that has been lost in the country that will continue to corrode all of us.
Well, quite a contrast between the language that we just heard and have been hearing from President Trump and another Republican by the name of Spencer Cox. That's the governor of Utah. You've seen him on this program a couple of times. Jeannie, he's been very deliberate in his wording, not just this morning, but yesterday as well. I want you to listen to what he said about some of the disinformation and the blame game that surrounded this. It started within moments of the news of Charlie Kirk's death. Listen to Governor Cox.
It is also much bigger than an attack on an individual. It is an attack on all of us. It is an attack on the American experiment. It is an attack on our ideals. This cuts to the very foundation of who we are. We will never be able to solve all the other problems, including the violence problems that people are worried about, if we can't have a clash of ideas safely and securely. Especially those ideas with which you disagree.
He went on to say a lot more about the disinformation that they are tracking. He said that his team on the state and federal level as well are seeing that our adversaries, he said, want violence. We have bots from Russia, China, all over the world trying to instill disinformation and encourage violence. He said, I would encourage you to ignore those. Jeannie, I think you would agree with the comments from Spencer Cox. How worried are you about the rhetoric from the president?
Yeah, I'm so glad you played Governor Cox's comments. To your point, immediately after this horrific killing, today when he spoke at a very emotional press conference, his remarks are the definition of leadership. And unfortunately, the president's are not. The president is doing what so many people are doing, unfortunately, online, which is in the midst of this horrific incident, they are leaping forward to blame the other side and to do the exact thing that President Trump said happened to Charlie Kirk, the dehumanization. He turns around and does the exact same thing sitting on that couch at Fox today. You know, the reality is that President Trump is the leader of this country. Leadership matters. He should take a lesson from Governor Cox. He should also, quite frankly, take a lesson from Charlie Kirk. Whether you like Charlie Kirk or not, he was a provocateur. I think 99% of what he said I would probably disagree with. But he was open to collegial debate amongst people, particularly those people he disagreed with. What did he say? The title of this tour was Prove Me Wrong. And college students could go up there and try to prove him wrong. Was it a showman thing? Absolutely. But President Trump needs to take a lesson first from Cox and second from Kirk and stop trying to demonize the other side, because that is exactly opposite of what we need at this moment and going forward. And he should, as president, know better. But today was just depressing to me because it was another realization that another person killed in acts of political violence that have ravaged both sides. And he has yet to learn that lesson.
Well, I don't know how worried you both are about retribution here. Interesting to see the comment from Jared Moskowitz, the congressman, said people are scared to death in this building. He's referring to the U.S. Capitol, Lisa, where you used to work. 2 lawmakers moved outdoor news conferences indoors yesterday. Alexandria Ocasio-Cortez and Senator Ruben Gallego rescheduled altogether events they had planned for this weekend on security concerns. Capitol Hill officials are now looking at a review of member security, and there is a chance that senators, in fact, one of the discussions happening right now is that senators get personal security details. That would cost a lot of money, Lisa, And we talked a lot yesterday about what would be involved in making that happen and whether it should. I'm concerned more about the mentality, though, the psychology that's being felt among lawmakers and their staff on Capitol Hill. When you hear Jared Moskowitz say that people are scared to death, what's it going to lead to?
Well, unfortunately, it's going to continue to make it more difficult for great Americans to run for office, because at a time when we need leaders more than ever before, it's going to make it that much more difficult for folks to stick around, because there is a gigantic worry for their own well-being and their own safety. And that, I think, is terrible for democracy.
If they're not safe, they don't feel safe, they're not going to run. Jeannie, how concerned are you about retribution?
Oh, absolutely. You know, I'm a data person, Joe, so we look at the data and what does it show? It shows, number one, that violence begets violence. So we will unfortunately likely see more of this. Another really important thing it shows is that while violence is not yet political violence, I should say, at the levels it was in the 60s and the 70s mostly coming from the left, it is more lethal today. And political violence today is gun violence. That's the other thing that the data shows. So if you want to address political violence, not the whole story, but part of that story is addressing the ability of people who would carry it out to access guns. So there's a lot to learn from the data as it pertains to addressing this. And again, it's not just about gun control. We also have to see, in addition to protecting public officials, we have to see some ability to regulate social media and what is happening online. I go back to the fact that these young people today grew up with Charlie Kirk and they watched him die on their feeds and their phones, whether they wanted him to or wanted to see it or not. We have to be able to address this, as well as what we're hearing was the radicalization that may have occurred to the culprit who shot Charlie Kirk. All of those things government can speak to and should speak to immediately. And, you know, Congress is really where that has to start.
Usually after a mass shooting or a major public tragedy like this, Lisa, there's a conversation, at least for 5 minutes, about gun laws. Jeannie just mentioned social media regulations or restrictions. I'm not hearing anything like that at this point. Are we just too jaded to even go there now?
Well, I think it's a little new and it's a little fresh, and it's the week of 9/11, and there's a lot of other business to be done in Washington. I'm not convinced that there won't be a conversation about that. But unfortunately, it becomes, again, Joe, a battle between right and left, and a battle between where can we meet in the middle. And you would hope that this would be an opportunity for us to come together. I mean, we not only had a school shooting the same day, we had lots of violent acts and other things that happened. We need to have that conversation.
Well, I appreciate both of your insights very much on this. Lisa Camuso-Miller, our Republican strategist, Jeannie Shanzano, our Democratic analyst and Bloomberg Politics contributor. Thank you so much both for your candor. Our conversation with Congressman Glenn Ivey, the Democrat from Maryland, is up next, only here on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. The stock rally is stalling. S&P, though, trading at a record, on track for a winning week on the week. S&P 500 index as of now up by about 1.6%. But right now, we've got the Dow lower, the S&P, NASDAQ, they're both higher. And again, to underscore, S&P at a record, up 3. Little change. The Dow down 182, drop there of 0.4%. The NASDAQ Composite Index up 93 for NASDAQ, a gain there of 0.4%. The MAX 7 Index advancing by 1.5%. The 10-year 4.06% with your 2-year at 3.55%. Gold is up $15 the ounce, up by about 0.4%, while West Texas Intermediate crude up 0.3, $62.54 a barrel. We are awaiting the start of the crypto platform Gemini, indicated to open at $37 each, IPO price $28. Also today, workers at Boeing St. Louis area defense factories will remain on strike. Union members rejected a third contract offer from management. Boeing says no further talks are scheduled. Boeing also says it is continuing to hire replacement workers. And the FAA says it's going to fire Boeing $3.1 million for a series of safety violations. Right now, Boeing down by 1.4%. Exchange operator NASDAQ has fired an employee over a social media post that appeared to celebrate the fatal shooting of conservative activist Charlie Kirk. Recapping, S&P up 3 right now, up by about 0.1%. Balance of power continues. Back we go to Washington. Once again, your host, Joe Matthew.
All right, Charlie Pellet. Many thanks, Charlie. Ahead of our conversation with Congressman Glenn Ivey, the Democrat from Maryland, who's going to be with us in studio in just a moment, we have trading already suspended, a volatility trading pause in Gemini. This is our big IPO of the day that we were looking for, up 45%, apparently is as far as we're going to go right now. Gemini Space Station opening at $37.01 a share. The IPO price at 28, being halted just above 40 here. And this is the one that we were looking for, despite the name Gemini Space Station. It is, in fact, a cryptocurrency firm led by the Winklevoss twins. Raised $425 million in the IPO, priced the stock above the marketed range here, shrinking the number of shares. Apparently, it was a good recipe as we see the stock on the move, or at least it was. This was literally halted about a minute into this IPO, and one that, again, we've been waiting for the matter of the day here, and we'll keep tabs on this for you. Shares of Gemini now public and halted for volatility. Congressman Glenn Ivey represents Maryland's 4th District, which I can almost see from the roof up here at our bureau in Washington, D.C. It's just across the river. Oxon Hill. If you've ever been in National Harbor, you know where Glenn Ivey does his work. And we've had a chance to talk politics, talk about government funding, and so many issues with the congressman on this program. There's more that we want to talk about today, and I want to just give you quickly a little bit of background on this gentleman, because the topics that we're going to get into are very much in his wheelhouse. Glenn Ivey was an assistant U.S. attorney in Washington, D.C. in the late 80s. Washington, D.C., the same city that had federal troops and federal law enforcement walking around for 30 days. He worked for a U.S. attorney in the District of Columbia back then by the name of Eric Holder, who you may have heard of. He also served as counsel for Senator Paul Sarbanes during the Whitewater investigations. And yes, to coordinate the Senate investigation into the suicide of Vince Foster. I'm not done. Glenn Ivey was also Prince George's County State's attorney, and when he took office in 2002, there was a big conversation, just like we're having right now, about crime statistics. At that time, Prince George's County had the 2nd highest crime rate in the state of Maryland, and his 2 terms oversaw reductions in crime and led to a number of reforms, measures that included the addition of cameras in police interrogation rooms. He also prosecuted police officers accused of excessive force, and he's with us right now in our Washington bureau. Congressman Glenn Ivey, welcome back.
Thanks for having me.
I could probably keep going because you've got a really long resume here, but I want to start with what we're talking about here in Washington and now apparently in the city of Memphis. The deployment of National Guard troops. Memphis is next. You've been around this town for a while. What have you seen work and not work here with the federalization, easy for me to say, of law enforcement in Washington?
Yeah, I mean, the point I've been trying to make, and had been doing this when I was a local prosecutor too, as you pointed out, is, you need long-term partnerships between state, local, and federal law enforcement. The military is not helpful in this front because they're not trained on how to help with civilian law enforcement. So, in fact, they can get in the way and create problems. You know, for example, they're not trained in how to do Mirandize suspects or when you're supposed to do it. Right. They're not trained in chain of custody or how to collect evidence. So you could actually have constitutional scenarios where evidence gets thrown out in very serious cases like rapes and murders. And the excessive force piece is of concern too. So regular civilian law enforcement is trained in how to de-escalate situations, and they've got alternative measures. It's not just go to the gun. They've got pepper spray and tasers and the like. The guys here in D.C. and where they're deploying them across the country are carrying M4s in some instances, super high powerful assault weapons that can really kill it with accuracy from 800 yards. And so if you shoot somebody, even if you hit the right guy first, the bullet's going to go through that person. And if you're in a scenario where there's other people around, you could have innocent bystanders get killed too.
Well, maybe that's why the National Guard troops have spent a lot of time picking up garbage and doing other things around here, running checkpoints and so forth. But D.C.'s one thing.
Yeah.
We're the federal city. The president's got a lot of leeway here.
Right.
What happens when you roll into Memphis and a mayor who says you're not welcome?
Yeah, I think there's an issue there. Chicago and Baltimore have raised concerns too, for the reasons that we were just talking about. But I think there are going to be legal challenges if he tries to
Posse
do that.
comitatus.
Yeah, I think that's for sure. So, you know, we'll see how it plays out. But the bottom line, though, is if he really wanted to try and do things to reduce crime, I think most of these cities would welcome like additional FBI agents, DEA, ATF, to help reduce you know, the burdens that they have on local law enforcement, local police.
So use the federal agencies, not the National Guard, is your point.
Yeah, I mean, I used to do that when I was state's attorney. We didn't have the resources, for example, to do a wiretap. You got a long-term issue like that. We'd ask the feds to come in and help, and they had the resources to do it. Sometimes for long-term prosecutions, there's something called RICO, which is a specific federal statute you can use to prosecute federal criminal organizations. We had one where we did it with to bring down MS-13. The local U.S. attorney at that time was Rod Rosenstein, the guy who ended up being Donald Trump's acting attorney general for a time period. But it was a successful joint prosecution. It was nonpartisan. It was effective. And I think that's what these cities would like to see from the federal government.
Really interesting. I'll throw another log on the fire here with regard to your resume. You were also on the commission congressional commission that investigated the attempted assassination of President Trump.
Right.
We're dealing with a heck of a story here. Terrible tragedy with Charlie Kirk, and we have an arrest today.
Right.
The President of the United States announced the death and announced the arrest. The FBI director at one point mistakenly announced that there had been an arrest. What do you make of this whole process so far? Kash Patel says this was historic, 33 hours, and they've got a guy in cuffs.
I mean, look, I think it's important to not have the political officials get too far out in front of law enforcement, especially while the investigation's ongoing. I think the local governor, Cox, who is a Republican, was much more restrained and also much more accurate. You know, when Patel came out and announced they had a suspect that they'd arrested and then had to back up because it was an incorrect statement. That's kind of embarrassing, but it also undermined the ongoing investigation because people think, oh, they got the suspect. We don't have to keep looking around anymore.
Yes, right.
So, you know, they should just tone that down, let the investigation go forward. I know they've hollowed out a lot of, you know, experienced Department of Justice and FBI agents. They still have some talent, though, there, I'm sure.
Yeah.
Let those folks lead the way. Let the career agents and prosecutors lead this. Step back politically and let that process go forward.
Well, it's brought about a whole other conversation, and it's probably a much more difficult and complicated one about political violence. And this is something that you spent a lot of time on with President Trump's case. When you consider the other tragic events that we've seen over the past year, the arson attack against Governor Shapiro, the murder, the shooting deaths of 2 politicians and the wounding of 2 others in Minnesota, Nancy Pelosi's husband, you were reaching for greater conclusions in that commission, and I wonder your thoughts on this now with new calls again for lawmakers like you to get a security detail.
Well, one of the challenges there was that the Secret Service was already spread too thin.
With regard to Butler.
Yeah. So, with respect to the president and other presidential candidates, we wanted to focus the resources there. But they also have executive protection when foreign leaders come here to the United States, for example, UN meetings. So there are going to be challenges in giving all of us that level of protection. And even for the president, there can be limits. But look, at the end of the day, I think some of the immediate steps we can take, tone down the rhetoric, let's come together in a bipartisan way. That doesn't mean we stop disagreeing on partisan issues or political issues or policy issues, but, we don't have to sort of try and blame everything on the other guy in a way that inflames people who are at the extremes of the American political spectrum.
Well, we're seeing that already. President Trump said we need to beat the hell out of the radical left. That was a direct quote from the White House driveway yesterday. And he tried to delineate on Fox and Friends this morning between extremism on the right, he said, is just trying to stop crime. Extremism on the left is causing it. You're right in the middle of this, Congressman. And some of your colleagues are rescheduling public events and moving outdoor events inside for this weekend. How are you feeling? Jared Moskowitz said that everyone's scared to death in that building.
Well, there's a lot of concern for sure, and I think people are sort of thinking about, are there additional steps we could take to protect ourselves?
Do you worry about retribution?
Well, I was a former prosecutor, so, who knows, I guess, is the bottom line on that front. And a lot of times these cases, you try and look at the motives behind people who were trying to shoot, like the guy in Butler who tried to assassinate Mr. Trump. I don't think it's ever been really made clear fully what motivated him. And a lot of these people have mental health issues. Sure. And so sometimes, we're not going to get good answers is the bottom line. I think the key piece, though, is to try and figure out a way, regardless of how you feel about the Second Amendment, there's got to be a way to keep these high-powered weapons out of the hands of people who have red flags and mental health issues.
Before you leave us, I want to ask you about your plans for Monday to reintroduce the George Floyd and Policing Act. This is the latest in a number of attempts to see action here. Do you have the votes?
Probably not, but, we want to make sure we try and push it forward. It's passed the House twice before, and this is a tough era right now, for example, with the Republicans controlling the House, the Senate, and the White House, and pretty much the Supreme Court, too. But I think it's important for us to make sure we keep the push, going, and also to make sure that as, the president rolls out these militarized forces into cities, that we make sure we remind his administration in the country that there's a right way to do policing, that there are limits on, especially for the use of force and the like. And we need to try and follow those constitutional limits, no matter how you feel about what's going on in a particular town. The Constitution always applies.
Glenn Ivey, great conversation. It's good to see you, the Democrat from Maryland. Congressman, thanks for being with us, as always, on Bloomberg TV and radio.
Thanks for having me.
By all means. We'll keep tabs on that legislation when it's filed on Monday. Before we hand things over to Bloomberg Business Week Daily, we want to get back to Gemini, where I believe trading has resumed. And Mike Regan from Bloomberg World Headquarters in New York is with us now with the latest on this. Looks like a volatility trading pause is still in place here. Mike, what do we make of this move in the early going?
Yeah, Joe, kind of in keeping with the pattern that we've seen from a lot of the highly anticipated IPOs this year, starting especially these crypto-focused IPOs, like Circle Internet Financial, the stablecoin issuer earlier this year, Figure Technology, the blockchain-based lending companies, that we are seeing these really strong pops on the first day of trading. Yeah, not all of them are lasting forever. Circle really went on for huge gains in the initial days and weeks after the IPO. It's pared a lot of that back. The other big sort of fintech, not necessarily crypto, but a fintech buy now, pay later firm, Klarna, that went public earlier this week. That popped in the debut. Now it's, sort of inching back to that offering price. So we'll have to wait for all these pauses to settle out. But certainly, a huge pop, as much as 63% right at the beginning of trading then.
Yeah, boy. So we had four. Actually, there are 4 IPOs today. The pipeline is rocking here. Mike, what's the next big one on your radar? StubHub?
Yeah, StubHub's probably the next big one. I think, as you said, for today, this is actually the biggest, the most active week for IPOs in quite a long time. I think in a couple of years, as far as that post-Labor Day window when it opens up. A lot of sort of high volume as far as the number of companies coming public, but not huge dollar figures. We're looking at 425 million for Gemini here today, so fairly small as far as offering size.
New issues with Mike Regan. We'll keep tabs on Gemini for you throughout the day here on Bloomberg. Thank you, Mike. I'll meet you back on the late edition of Balance of Power at 5 p.m. Eastern, only here on Bloomberg TV and radio.
Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very happy Friday, everyone. Yes, indeed, it is Friday, September 12th, 2025. Carol Massar, along with Tim Stanovic, live here at Bloomberg headquarters in New York City. As Tim just teased for the radio folks and YouTube folks, I mean, yeah, a little bit of a stall in the equity trade, but man, you get a few records in a week and you're still up about 1.7%. So yeah, it's okay to take a breather.
Not every day can be another record day. Consumer data did little to alter bets the Fed will cut rates in September. We're going to, of course, hear from Jay Powell next week. And that's really the backdrop for today's trade, and I think every day going into Wednesday. Carol.
No, that's a really, really good point, that Fed meeting next week and decision. Hey, having said that, another thing that is definitely on our mind has been this year, and that has to do with the one commodity that is outpacing most major market averages this year. We're going to get into that with Axel Merck in just a moment.
It's not Bitcoin.
No.
It's not Bitcoin.
It's not.
It's an actual commodity.
It is.
All right, don't get mad at me online for saying that, everybody. Also, Tesla shares on a tear as Elon gets a big stamp of approval.
He did indeed. A great interview by our B-Tech team. We're going to get into that. We're also going to talk about the new options exchange in, what do we call that? Wall Street South?
That's what they're calling it. I mean, now I guess it officially is.
All right, so we're going to talk about that. And then former acting CDC director, Dr. Richard Besser, now president and CEO of the Robert Wood Johnson Foundation. He's going to join us along with a member of our Bloomberg News team who have done a lot of reporting on the CDC, what we need to know about the role of that organization and really what its role is when it comes to healthcare in the United States, the good, the bad, and the ugly, if you will, to be fair. So we're going to get to that over the next 60 minutes.
All that and more. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Powell.
Hi, thank you very much, Tim. Going to begin with Gemini Space Station jumping as much as 64% from the IPO price, now up by just about 43% after the cryptocurrency exchange led by the billionaire Winklevoss twins raised $425 million in a packed week for U.S. listings. Again, Gemini right now up by 42.9%. BlackRock Coffee also going out this morning. It is up by roughly 34% on BlackRock Coffee. The Dow lower, S&P, NASDAQ both advancing, as Carol mentioned, on track for a winning week on the S&P. Right now we got the S&P little changed higher by 5, up under 0.1%. Any advance today, however, will be a record on the S&P. NASDAQ also trading up at a record, advancing another 106 now, up 0.5, and the Dow down by 0.4%. Our Mag 7 index up 1.6%. The 10-year 4.06%, with the 2-year at 3.55%. Gold is up $14 the ounce, up 0.4%, 36.48. And West Texas Intermediate crude up 0.4, 62.60 for a barrel of WTI. Workers at Boeing St. Louis area defense factories will remain on strike after union members rejected a third contract from management. It is only the third strike in half-century by the International Association of Machinists and Aerospace Workers, Local 837. Boeing today down by 1.5%. Also, the FAA will fine Boeing $3.1 million for a series of safety violations. Recapping, S&P up 4 right now, up 0.1%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
For those keeping check on this, Gemini Space, it is still up about 35%, 63% though at its highs already today. Keep in mind, it just opened about 22 minutes ago. We did already have one halt, so we're going to keep a watch certainly on that activity. All right, that is certainly top of mind, but so is too what has been happening and what did happen across the country earlier this week, Tim.
The suspect in the killing of Charlie Kirk was identified as Tyler Robinson, 22 years old, of Utah. This coming after a tip from a family member led to his apprehension. A family member told investigators that Robinson had become more political in recent years and had criticized Kirk as, quote, full of hate and spreading hate shortly before the shooting. Earlier today, Utah Governor Spencer Cox spoke on rounding up the suspect.
We got him. On the evening of September 11th, a family member of Tyler Robinson reached out to a family friend who contacted the Washington County Sheriff's Office with information that Robinson had confessed to them or implied that he had committed the incident. Investigators interviewed a family member of Robinson who stated that Robinson had become more political in recent years. The family member referenced a recent incident in which Robinson came to dinner prior to September 10th, and in the conversation with another family member, Robinson mentioned Charlie Kirk was coming to UVU.
That's Utah Governor Spencer Cox earlier today at a press conference in Utah. He was there with FBI Director Kash Patel and other law enforcement officials. For the latest, we bring back somebody who's been covering this story nonstop. Miles Miller joins us here in the Bloomberg News studio. He's a senior reporter who covers crime. He joins us right here in the studio. Miles, what is the latest on this? We heard a lot from the press conference earlier, but what more do we know about this individual?
Yeah, these are the charging documents. They just came out from Utah, and what we learned is that he'll be charged with aggravated murder, felony discharge of a firearm, and obstruction of justice. And prosecutors are really painting a vivid picture of what happened here. The start of him walking across campus, going through a tunnel, picking up his phone, getting to the roof, the moment he fires a shot, jumping off the roof. All of that detailed in this document, and it really paints the picture of someone who, according to a roommate in this, was specifically targeting Charlie Kirk because he believed that he was full of hate and was spreading hate.
You know, what's interesting too, Miles, and I think I heard you talking with either the surveillance team earlier today or another member of our team on air, but this idea that if folks hadn't come forward, we might not be having this discussion. We might not have his name at this point.
Right. You know, as I read through this charging document, it's very clear that, you know, it took a family member reaching out to a family friend, the youth pastor, for this case to get to this point. I think law enforcement often does this appeal for any people who have any knowledge of what happened, putting out photographs so that people could see somebody and say, okay, this is a person I know. That's what led to the arrest in this case. A father sees his son, says you should turn yourself in. He says, I'd rather kill myself. And no, doing the right thing, getting this youth pastor who happens to be a task force officer to bring him into justice.
Miles, what do we know about the ideology of this individual? Because in the moments after the assassination, we started hearing from officials within the Trump administration and even the president himself, just hours, that this was politically motivated. And that was before they even had him in custody. What do we know now that he's in custody about not just potential motivations, but ideologies here?
Yeah, so just reading through this court document, in it, investigators asked the roommate to show him messages on Discord, which is the social media app where people have private conversations. In it, Tyler, the suspect in this case, the roommate thinks he's joking about this, but he says in detail he needed to retrieve a rifle from a drop point. He had left the rifle in the bushes, and he said he was watching the area where the rifle was left, said he wrapped it in a towel. That's everything that investigators said that they found when they went to look for it, and he joked about being responsible for causing Charlie Kirk's death. And investigators believe that, plus the physical evidence, has them at their suspect.
But I do think it's interesting, and I think we were also very quick to jump to, it's a political crime. And we all also put out these, cautionary words of we need to kind of understand what was behind this individual in an environment that is already very politically charged. And I guess we'll continue to find out. They obviously will do some questioning of him. Have they done so far, or what do we know about the suspect? Tyler Robinson, where he is right now and what's going on? Yeah,
so he's currently being held in the Utah County Sheriff's Jail right now. He won't go before a judge likely until Tuesday, Monday or Tuesday. They have a weird provision in Utah where they have 3 days to present the case, whereas here, of course, in New York, you want to get to arraignment within the 24 hours because of our rules, but it's different that way. I reached out to his family to see who the attorney was who was representing him, because you would imagine in a case like this that a suspect in such a high-profile shooting probably wouldn't talk to investigators, but he was forthright when he was encountered by the first officers who came because of that family member, and saying that he was responsible for this. That obviously will go part of the court case.
The federal response to this, Miles, you cover Homeland Security and the FBI. FBI Director Kash Patel was there. He did speak during this press conference. What can you tell us about the coordination with federal and state and local authorities?
Right. So from the beginning, this has been a Utah-led investigation with the help of FBI. Utah can't do it alone. FBI got 11,000 tips in 2 days. Wow. It took the FBI 33 hours to close this case. Kash Patel talks about bringing in air resources, so bringing in planes to be able to fly all that evidence to the FBI's facility on the East Coast at Quantico to run that latent print to see if the shoe print was anything specific. All of that
They
is very
can't do
crucial.
that anywhere else in the field?
So FBI has labs in different parts of the country, but the best lab is at Quantico. You know, the gun was flown to the ATF lab centrally located in the South. So you know, Salt Lake City office of the FBI is much smaller than many of the other offices. And so you need to bring in all those resources. But Kash Patel told that story of the plane literally flying evidence back. I mean, the plane not staffed with a bunch of agents, but with evidence to get it as quickly as possible.
This is a federal crime or will be pursued as a federal crime. And so he faces federal charges and federal penalty. Like, how does that?
Right now, and the same thing with Mangione, is that it starts off now as a local crime. Now,
Okay.
they have the death penalty there, so in this case, maybe the U.S. Attorney's Office won't take it.
All right. Incredible update, and you have been following this nonstop for us, so thank you so much. Miles Miller, senior reporter covering Homeland Security and the FBI here at Bloomberg News. All right. Now we want to get to some market news. There's a lot going on, and it's not just Gemini, which is still up about 31% in its first day of trading. And we're going to talk about that a little bit later on. We are also watching some of what's going on in some of the different asset classes. And I don't know if you've checked out gold recently, Tim, but it has rallied by nearly 40% this year. It is making it one of the best performing commodities, outpacing other market gauges, and that includes the S&P 500.
Central bank buying, geopolitical uncertainties, inflows into ETFs, all supporting the commodity. Our next guest is someone we've turned to for years to talk gold and much more. Back with us is Axel Merck, president and CIO of Merck Investments, joining us from Menlo Park on the West Coast. He manages the ASA Gold and Precious Metals Fund, up more than 100% so far this year. The Van Eck Merck Gold ETF, with about $2 billion in AUM, meantime, is up 38% year to date and invests in the precious metal. Axel, Carol mentioned how well the fund has done and how well the commodity has done in recent years. But let's look forward. What is the outlook for the remainder of this year in your view for gold?
Great to be with you, and the fact that you're covering gold, I suppose, means it's got the attention of mainstream media.
So is that the top? Is this the top then? Is that what this means?
That, if anything, is the most pessimistic thing I've heard about gold in a long time.
Well said.
It took you so long to get me on the air, right? I mean, obviously we've had a stunning run, right? And obviously we have to keep in mind if something is this volatile on the way up, there's always a risk on the downside correction. That said, if there are two key drivers, I think. One is in the US, we have an easing path at the Fed. And if you take the European Central Bank, for example, as far as the eye can see, rates are going to be steady. So we have a more dovish monetary policy. The other one is the broader debasement trade. And of course, is that correlation or causation is anybody's guess. If that is the case, that may have legs that might last years, so to speak, right? The dollar was always the cleanest shirt. One thing I'd like to mention that maybe not the other guests are not mentioning is when we talk about tariffs, it doesn't just impact the flow of goods, it impacts financial flows, because that's the other side of the goods trade. And so I happen to believe that a wrench has been thrown into the engine that we call the exorbitant privilege, that it's more difficult to use the US to finance things for higher returns abroad. Obviously, this is not a light switch or anything like that, but a side effect is higher borrowing costs in the US, and in the absence of fiscal discipline, it means more pressure on the Fed to lower rates, and we've obviously seen plenty of that. And so that's a dynamic that has a lot of way to play out. And of course, the other context is that valuations are somewhat high. And what do you, in the equity markets more broadly, and what do you do to diversify? Now, I'm not suggesting that gold is very cheap here, but gold historically is one of the things that does well in an easing environment, especially also does well if we were to have a more severe correction in the stock market. And so an increasing number of people have been looking for this sort of diversification.
Well, what's interesting, too, as we've seen gold take off, and you talk about throwing a wrench into the U.S.'s exorbitant privilege. I mean, I'm looking at the dollar, or at least the dollar index, Axel, which is down about 10% year to date. Tim and I constantly are asking guests, is the U.S. uninvestable? You know, days of the U.S. dollar running supreme over, although so much is still done in dollars. Like, I guess we're just trying to get an idea if this is a tipping point for the U.S. dollar, especially too with the kind of rise of digital and stable coins, perhaps.
I don't think digital is stable. I mean, the stable coins are US dollar based. I happen to think that's supportive of the dollar, if anything. If you look at the breakdown in the G10, the best performing currency is the Swedish krona versus the dollar. And guess what? The Swedish economy is most, as part of its GDP, exposed to defense spending. And as you may be aware, Europe is ramping up its defense spending. So there are specific things, right? And of course, as a gold person, the debasement trade kind of fits into our narrative. Whether that's really the case it remains to be seen. There is, of course, more competition. Some people say that there is no alternative, and while that may be true, my argument is there does not need to be an alternative. What I foresee is a greater fragmentation, because if you think and go back to the exorbitant privilege, part of that is it's kind of a machinery that provides liquidity for the world. And if that begins to sputter somehow or is less effective than it has been, less efficient, it doesn't mean the world's coming to an end, but it means that less trade might be happening, more things might be happening locally. Ultimately, that's, of course, healthy for emerging markets in particular if they finance more things domestically. But we have some structural transformations. And the dollar might be weakening in that process.
Hey, just got about 25 seconds, Axel. So buy gold, buy the commodity, buy the bullion, buy miners, or don't buy any of it at this point?
Well, I do both. I haven't sold any of them. Typically, the gold and gold miner buys are very different. The gold miners tend to be more speculative, especially go to the more juniors. And the physical gold, through ETF or otherwise, tends to be more of a diversification play. There's a lot that hasn't happened in the junior mining space. Very speculative, but some very interesting opportunities there.
All right, we promise we will catch up more often.
Hey, he was on in May. If you were watching us in May, you saw
while ago.
Axel, okay? So it was a little while ago, but you know.
We always appreciate it. Axel, have a great weekend. Axel Merck, President and Chief Investment Officer of Merck Investments. All right. We truly, truly respect all that is going on and is important to investors, and we're going to stay on it, including watching all of the day's IPOs. At the same time, the team here at Bloomberg Business Week Daily has been thinking a lot about some of the stories that impact investors longer term, impact all of the Bloomberg audience, and that have often been in the headlines, but often get buried and lost in the never-ending flow of headlines, social media posts, and DC press events. And so today we wanted to take a look at the CDC. We're talking about the Centers for Disease Control and Prevention, which was the subject recently of a Bloomberg Business Week deep dive. It was entitled, "America Will Get Sick as CDC's Total Overhaul Takes Shape." And Tim, that reporting by Bloomberg's Jessica Nix and Madison Muller.
Jessica Nix joins us now here in the studio. Also joining us today, Dr. Richard E. Besser, President and CEO of the Robert Wood Johnson Foundation, former acting director of the CDC, and the Agency for Toxic Substances and Disease Registry in early 2009. That was during the early months of the first Obama administration. He joins us from New Jersey. Dr. Besser, I do want to start with you and just big picture. I think many Americans would agree, regardless of their political affiliation, regardless of how they feel about what's happening at the CDC and HHS right now, that Americans are unhealthy in general, that Americans are sick, that the American health system has not been working for years. Why hasn't it? What hasn't been working?
Yeah, you know, I think that's the right diagnosis, and the big question is, what are the drivers of that? And there are many. You know, starting at the healthcare level, you know, healthcare is a small component of people's overall health, but it is important, and we're the only wealthy nation in which your ability to access healthcare is so dependent on where you happen to have a job. There are millions of people in our country who work more than one job per day who don't have access to high quality, comprehensive, affordable healthcare. And without that, they will tend to show up in emergency rooms. They'll show up late for care and be sicker. We also are seeing with the latest legislation out of Washington that tens of millions of people, in addition, are going to lose their healthcare access. So that will move us in the wrong direction. You know, some of the biggest drivers of health have to do with income. and whether someone has the income to be able to afford healthy, nutritious food, whether they have the income and the leisure time to be able to get physical activity. These are critical components of health in America. But we are seeing that in America, the rates of chronic disease are extremely high, and we need to do more to address that. So I think that there probably is a lot of agreement around what the problem is. There is less agreement in terms of what the drivers of that are or what the solution should be.
All right, so let's get to, and I want to bring in Bloomberg News health reporter Jessica Nix, who wrote this story with Madison Muller. And Jessica, in your reporting, you note that there is a small but vocal contingent that's long been demanding changes at the CDC. And then with an ally in RFK Jr., the HHS secretary, finally getting these critics kind of getting what they want. But scientists are really worried because they feel like they've been sidelined. What is everyone so worried about?
Well, we've seen in the past few months since RFK came in to take over the Department of Health and Human Services, a complete dismantle at the CDC for what we've seen in the past. There was a lot of criticisms of the CDC during the COVID pandemic in terms of guidance around what schools should be doing, social distancing, masking. It really divided a lot of the public. Since RFK has come in, we've seen mass layoffs in terms of divisions that study chronic disease, gun violence, injury prevention. We've also seen the dismantle of a vaccine panel called the Advisory Committee on Immunization Practices, who's supposed to meet next week, and handpicked members from RFK have now come into that panel and dismantled vaccine policy as we know it. In August, we also saw a shooting at the CDC, where the CDC was the attack from a gunman who fired nearly 500 rounds at the buildings. Weeks after that, the CDC director was fired weeks into her tenure over vaccine policy. So there's so much confusion and chaos at the CDC that the actual work is not as able to get done because everyone's gone.
So Dr. Besser, let's bring you in. I mean, the worry's justified. Do we need, I guess I want to take a step back because I think it's fair to say that sometimes we have institutions that have been in place for a long time, and there are aspects that get a little stale or that maybe could be improved. And so it's good to take a look at things, but I'm just wondering your view as a former acting director of the CDC, what needs to maybe be fixed at the CDC? What is maybe wrong about the current approach, and what is right maybe about the current approach?
Yeah, I mean, it is so important to look critically at our institutions and ask the question, how can they perform better? Where have they not performed well, and how do you address that? It's critical. I worked at the CDC for 13 years under Republican and Democratic administrations. I ran emergency preparedness for 4 years during the Bush administration, which is why I was made acting director at the start of the Obama administration, to be able to respond to public health crises. What we're seeing here is the destruction of the world's leading public health agency. The CDC doesn't just provide public health expertise for the United States. It had been looked at as a beacon for public health around the world. That's no longer the case. The administration came in and haphazardly fired tens of thousands of federal health workers, so many people at the CDC. For an administration that is concerned about chronic disease, they eliminated the Office on Smoking and Health, and smoking is the leading preventable cause of chronic disease. There hasn't been any coherent approach to this. At the start of the Obama administration, there were efforts to look across the agency. Where was it lacking? Where could it do better? Before the start of the COVID pandemic, the public's take on the CDC was very high. It had very high approval ratings. But we saw with the COVID pandemic, CDC make some mistakes, but we also saw the intentional politicization of public health by an administration that saw the opportunity for political gain. And so across the nation, we saw hundreds of talented public health professionals be vilified. People leave their jobs, some forced out, some not able to take the stress or the blatant threats to their health and safety. And now with this administration, at a time where we need to rebuild trust, we have, as our Secretary of Health, one of the nation's leading anti-vaccine advocates, and someone who has demonstrated no respect for the Centers for Disease Control and Prevention.
Dr. Besser, you mentioned that the CDC is this beacon of global public health. We saw what they did during the COVID pandemic, but what does this mean for future pandemics that might pop up if we have a dismantled CDC, not just for the US, but also for the world?
Okay, my heart just stopped beating because we are going to get another global pandemic, aren't we, Dr. Besser?
Yeah, the question is when, not if. But one of the challenges, it's not just the CDC being decimated. The elimination of USAID, the Agency for International Development. The CDC works very closely with USAID personnel around the globe to make sure that health departments are ready, public health professionals are ready to be able to detect and respond to signals very quickly. To ensure that other countries can control disease, but it also helps ensure that new diseases don't come to our shores. Dropping out of the World Health Organization, which is designed to be the body to help share information around the globe, help ensure that problems are contained where they arise. That is leaving us as a nation less secure, more defenseless. The cut of billions of dollars to the CDC means a cut of billions of dollars to state and local health departments because most of the money to the CDC is passed on. That means that in our communities, they're not going to be as well prepared, not just for the next pandemic or major infectious disease crisis, but for making sure the restaurant you go to for dinner is serving you food that doesn't make you sick. And when your kids go to the swimming pool, they can swim in that water without getting harmed. These are some of the things that the CDC has done that they're not able to do with what's taken place under this administration.
So, Doctor, when in your view do we start to see the effects, if we haven't already, of these cuts that you've been talking about?
Well, we are seeing them, and your reporting did such a nice job lifting that up, where a health department in Texas calls the CDC for assistance, and there's no one there to help. We heard early on in Milwaukee where they're dealing with lead in their water supply. They called the CDC, but the group that worked on lead poisoning had been let go. These are things that will affect people at the community level. It will continue to grow, but in general, public health is invisible when it's working properly. It's only when it's not working properly and then gets stressed. So whenever there's a crisis in a community and public health can't respond, then you will see it. And then hopefully people in their communities will say, this doesn't work for us. We need the CDC to be supported. We need our state and local public health departments to be supported.
Dr. Besser, why are we so divided when it comes to, there are those of us who are like, yeah, I trust the government, I trust the CDC and what they say, and then there are those that don't. Is it just politically motivated, or is it people who don't feel like they get good health care and so they're like, the system is just not working?
Yeah, it's a great question. I think that there are a number of factors. Before COVID pandemic, the approval rating by both parties was very, very strong. With the COVID pandemic, there were mistakes that CDC made, but I led the CDC at the start of the H1N1 swine flu pandemic, and during that period, we saw extremely high approval ratings. And the reason for that was there was intentionally efforts to not politicize the response. People from both parties came together and said, we're going to do what it takes to keep people in our communities safe. What we recommend now may change as we learn more information. That's a good thing. With the COVID pandemic, whenever there was a change in guidance, it was jumped on as a sign that the agency didn't know what they were doing. And CDC wasn't allowed to talk directly to the public after the first 2 months in the pandemic. And that is a setup for disaster, because you need active communication to build trust and maintain trust. And once you've lost trust, it's extremely hard to get it back.
Dr. Besser, we've also seen this dismantle of the vaccine committee at the CDC, which decides which insurance people are going to be able to get their vaccines. So what does that mean to watch this dismantle of the vaccine policy as well?
Yeah, so I'm a general pediatrician, and I practiced pediatrics for more than 30 years, and I know that nothing I did as a pediatrician had more proven value than helping my patients make sure that they were vaccinated completely and on time. And that took spending a lot of time with parents answering their really good questions so that they were comfortable making the right decision for their children. And I always said, if you have a question, if you want some honest information, go to the CDC website. They'll give you all the information. We can't do that anymore. And that is a major problem. We're seeing other organizations step up. The Academy of Pediatrics represents pediatricians. I'm a member of that group. They have guidance. We're seeing states come up with guidance. But the idea that we can't look to the CDC because this advisory group has become so politicized, so staffed with people who have strong anti-vaccine agendas, will put us at great risk. And what I'm hearing about the committee meeting for next week is that they will raise great concerns about safety in the COVID vaccine, safety concerns that have not been verified scientifically. And this, again, will lead people to be confused, and it will lead some people to make a decision that I think is not good for the health of their families.
All right, and as we know, confusion, uncertainty, never good. It doesn't matter what area of the world or our lives that we're talking about. Dr. Besser, thank you so much. Dr. Richard Besser, President and CEO of the Robert Wood Johnson Foundation, former acting director of the CDC, joining us from New Jersey on this Friday. Hey, Jessica, before you go, incredible story. Highly recommend everybody check it out on the Bloomberg and reading. And you do quote Dr. Besser. He said it here, and he said in a very short time, we've seen an incredible destruction of the agency that leaves people here and around the world at increasing risk. And of course, he was talking about the CDC. Your kind of thoughts after, having a further discussion with Dr. Besser and where we are in terms of healthcare in America.
It's going to be really interesting to watch what happens to public health across the U.S. Right now, we're seeing a bit of a piecemeal policy around vaccine policy in the U.S. too. States are kind of adopting their own guidelines or working together about how can we start making sure that COVID vaccines are still offered at pharmacies now as well. So we're seeing a state-by-state approach to public health now, which is difficult without the CDC because the CDC does provide that nationwide view of what's happening to the nation's healthcare.
Right, and it sounds like different states have different monies, and that will kind of determine some of the healthcare.
Well, not just that. I think insurance companies have an interesting position here because if the CDC doesn't necessarily recommend something, but states do, then what is an insurance company going to cover, and to what extent does that actually push somebody to get or not get a certain medicine?
That's a great question. And I think we're going to be seeing that play out, especially starting next year when the next plans start. As of this year, insurance companies are still going to cover vaccines. But health experts have been telling us and in our reporting that the cost of a vaccine is probably less than the cost of the illness that you're going to get later on, and then your hospital bill and everything else. So
that's the whole idea with preventative medicine, right?
Exactly, right. Yeah. And folks have been preaching that for such a long time. Thank you so much. You're reporting and also joining us here, Bloomberg News health reporter Jessica Nix. Hey, coming up next, we're going to get into a new exchange on Wall Street South. That one, Bloomberg Business Week Daily, continues. In the meantime, let's get a check on trading.
Charlie Pellet is standing by. He's got his close eye on the market. Closes in less than 90 minutes. Hey there, Charlie.
Hi, thank you very much indeed. Let's take the health of the market right now with the Dow lower, the S&P, NASDAQ both advancing. S&P, NASDAQ both at records. Strong week on Wall Street, ending on a quiet note. S&P right now up 765.95, up 0.1%. The Dow down 168, down 0.4. NASDAQ up by 0.5%. 10-year 4.06% with a 2-year 3.55%. Spot gold trading higher by $14 the ounce, up by about 0.4%. West Texas Intermediate crude up 0.3, 62.57 for a barrel of WTI. Gemini space station shares jumped 22%, have been up as much as 64% from their IPO price after the cryptocurrency exchange, led by the billionaire Winklevoss twins, raised $425 million. BlackRock executive Rick Rieder rising up the list of contenders to serve as the next chair of the Fed after Jay Powell's term expires. He was interviewed for 2 hours today in New York by Treasury Secretary Scott Bessent. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily. Carol Massar along with Tim Stenovic here at Bloomberg headquarters in New York City. Hey, I don't know if you noticed, but today trading began at 9:30 a.m. Wall Street time on a new exchange. It wasn't, though, on Wall Street. It was the MIAX Sapphire Options Exchange trading floor. And yeah, it's like, again, more happening down south, specifically in the state of Florida when it comes to the investment world.
It's like you said, we can now call it Wall Street South for real.
Totally.
I guess.
Yeah.
Bloomberg's Kriti Gupta spoke earlier with Miami International Holdings Chairman and CEO Thomas Gallagher about the launch and becoming a publicly traded company on the New York Stock Exchange.
Miami is becoming a global financial center. And one of the things that we wanted to do was create an environment where floor brokers and market makers could come down here. And also, there's a very favorable tax climate. When you look at some of the Northeast cities, New York, Philly, Chicago, you've got large state taxes. Here in Florida, there's no state tax.
All right, that was Miami International Holdings Chairman and CEO Thomas Gallagher with our Kriti Gupta earlier today. Full disclosure, Bloomberg and MIAX are launching futures and options and have a dedicated studio on the exchange floor. All right, let's head to Miami and to the co-host of the opening trade, Kriti Gupta. So Kriti, I am still trying to get my head around these different exchanges. What is it specifically? Why does the investing world need it?
Well, it's fascinating because we're so used to talking about the NYSE, we're so used to talking about the NASDAQ, but ultimately when it comes down to it, we're talking about options trading that ultimately comes down to not the institutional traders, but the retail traders. And that's where this exchange kind of fills a gap that may not have previously been needed to be filled. An options exchange that makes it a little bit more easier, or at least the hope is that it will be a little bit easier for all those retail investors that want to have access to the S&P 500, but aren't able to because it's maybe too expensive. The barriers are too high. You have to be an institutional trader, trade in bulk. Options are a really easy way to do that. Now, this is an exchange that's been in the making for almost 20 years. And not only are they making or trying to make it a little more accessible for a retail and arguably an international audience, they're doing it in a really unique way where exchanges around the world are actually pulling back on having traders on the floor. Miami Exchange is leaning into it. And you can see that actually over my right shoulder here, we actually have real floor brokers making those trades in real time by talking to each other the way they did, say, 20 years ago.
You have to wonder if, with technology today, the necessity of that, considering that other exchanges such as the NASDAQ are pretty much fully electronic these days, not to mention the NYSE, which does have quite a few people there still. You said it was 20 years in the making, Kriti. Why did it take so long?
Well, it's fascinating because, look, this is a tricky thing to do, ultimately, and getting a lot of the folks, a lot of the clients, a lot of the brokers on board, a lot of regulatory stories. You also have to think about where we are physically in the country. Miami is on the coast. There are infrastructure concerns here. One, that you really want to eliminate things like systemic risk. These are a lot of jargon for saying if the weather gets bad in Miami, if there's a hurricane, you want to make sure the financial system is secure. And that takes time to build. And that's where this infrastructure has really come about. Now, this is why the trading floor is so important. I got to mention, it's only been a few trades. It's the first day of the trading floor. But the hope here is that in a couple of years, it won't just be an options exchange. It'll be a commodities exchange, maybe even some speculation around a crypto exchange as well, but one that isn't just limited to institutional traders. It's retail traders, is democratizing the markets, and that's what this exchange stands for.
All right, we're going to leave it on that note. Thank you so much. Kriti Gupta, co-host of the opening trade. Be sure to check out her full interview with Mr. Gallagher on this new exchange in Miami. You can find it on the Bloomberg and at Bloomberg.com. Hey, in just a moment, we're going to get into Elon Musk, the man. So says one voice, and I really do mean that this one voice says he's the man. So we're going to talk about that in just a moment. In the meantime, we're going to talk about one stock that's definitely on our mind today.
Gemini Space Station raising $425 million in an IPO, pricing its stock above a marketed range and shrinking the number of shares. It's the crypto firm. It's been around for years, led by the billionaire Winklevoss twins, sold about 15.2 million shares Thursday for $28 each. It said this in a statement confirming an earlier Bloomberg News report. Shares up 22.5%. As we speak, bouncing around a little bit, we've got with us Bloomberg News equity capital markets reporter Anthony Hughes. He joins us here in the Bloomberg Business Week studio. Another successful crypto IPO, at least on the first day.
Yeah, so there's been a lot of crypto IPOs recently, or at least a few, and this one...
Bullish Circle, still doing well.
Yeah, Figure even earlier this week, and there's obviously a lot of demand for these types of IPOs because crypto's in vogue, and for all the reasons we've talked about many times before. But maybe the 20% uptick here was perhaps a little bit disappointing in some respects compared to what we've seen recently. I think Gemini went to a lot of effort here to engineer an outcome which was very positive. So it's going to be very interesting to see how it trades over the coming weeks. But there were some unusual things that happened during the marketing effort here, which probably were not sort of the normal thing you see on a traditional IPO.
All right, you say Vogue, and it makes me think of fashion. And so there's that coat with all the safety pins hanging off that is maybe good for a season, very much in the moment. And then there's
You got to get the coat with the Bitcoins on it.
Well, I was going to say, then there's the Burberry trench, which you can have forever. So when you say it's in vogue, are we still TBD in terms of crypto and understanding its final impact and whether or not it becomes ubiquitous in our world? And I realize when you say crypto, you're the expert, not me.
You're pointing at Anthony.
You're the expert. But I mean, there's stable coins, there's blockchain, there's a lot of ways to dice and slice it. So who knows how it settles. But is it still kind of TBD?
Yes, for sure. But I think what we've seen in the last few months is we've seen a few companies go public that do at least outline a use case for crypto in its different varieties. I mean, obviously, Circle's a stablecoin issuer, and they talk about the uses of that over time. And then Figure, that went public earlier this week, that does sort of mortgage lending off the back on the blockchain. So I mean, I think that was an interesting one because it did try to outline a very specific use case. Whereas perhaps a lot of trading on crypto exchanges is really done by people who are just trading. And I mean the amazing thing about crypto is even if Bitcoin maybe hasn't done heaps really in the last few months, but there's always this potential that something could happen and it doubles. And I think that's the thing that excites people about investing in crypto. The volatility that crypto has, and then by extension crypto stocks have, obviously is enticing to people who are traders. But, the question is, as crypto goes into the mainstream and, maybe crypto becomes less volatile, I mean, Bitcoin specifically becomes less volatile, and maybe if it becomes less volatile, it becomes less of a interesting trade, you could argue.
But we use these terms like crypto, and we use them in ways that are all encompassing in digital assets too. And really, like you said, Anthony, there's so many different parts of the market. I mean, we spoke to Sarah Levy at Betterment earlier this week at Future Proof, and she said, our customers have no interest in anything except for Bitcoin and Ether. They don't care about any of the altcoins. They don't care about anything else.
Yes.
And then you also have the stablecoin side of things, when you see that potentially being adopted by even non-financial firms and non-fintech firms. When you're speaking to your sources out there, what are they saying to you is sort of the most promising mainstream use when we use that overarching term?
I'm not sure that necessarily that's the way people are thinking about it. I think they're thinking that there's the purists who think that Bitcoin is everything and stablecoin is going to have uses that help you to convert a volatile currency into something stable that you can use for a lot of transactions. And I think there's the Figure IPO this week sort of looked at some of the efficiency savings, the cost savings you could potentially make in a process which is really quite complicated, like taking out a mortgage. I think if you've taken out a mortgage, you know that it's a very, can be a very manual and time-consuming and costly process. I love the idea of
putting like a home equity or mortgage on blockchain. It makes complete sense to me.
Yeah, so whether they can do this in real scale is a question, but obviously there's a lot of people who are pursuing ideas to try and make this happen. So, but that's a little bit of an esoteric area. I think for the average person who's interested in crypto, they're just looking at the fact that Bitcoin has the potential to go up materially in a short space of time, and obviously that just excites traders. And I think if that's not the case, then maybe it's a different type of investment.
To put it simply, Carol, number go up.
Number go up. Yeah. Listen, Gemini has more than $21 billion of assets on the platform. It's a crypto exchange, a U.S. dollar-backed stablecoin, crypto staking, digital asset custody, and a credit card that offers rewards in crypto. It sounds to me like that's like throwing stuff out a little bit to figure out, I'm not going to say what it is, but I mean, right? And kind of figuring out where it all goes.
Yeah, I don't think people were really enthralled about the financials of Gemini, but on the other hand, the Winklevoss twins obviously made a very early call on Bitcoin, which made them a lot of money. So they have great sort of following because of that. But Gemini itself, I don't know that people are really enthralled. I mean, some of the comments I've heard back this week is that this is very expensive stock. So, obviously they're going to have to really, as we say, grow into that valuation or prove that they can do more over time, but it's a competitive space too.
I thought you were going to say that Winklevoss twins made an early bet on Facebook, but that would be going back in time
That too,
further.
Right?
Yeah.
I will point out the stock is now up about 20%. It was up as much as almost 64% earlier in today's session, and it's now just under a $4 billion market cap. So, yeah, first day of trading.
Bloomberg News equity capital markets reporter Anthony Hughes here in the Bloomberg Business Week studio. Let's head on over to Charlie Pellet, though, for an update on what's going on in the markets. Hey there, Charlie.
Oh, I thank you very much, Tim. Indeed, we have got the S&P 500 index pushing higher. Best level of the day right now, up 10. That is a gain of 0.1%. Dow Industrials down 154, decline of 0.3%. NASDAQ, meanwhile, up 125 for the NASDAQ Composite Index, up by about 0.5%. Russell 2000 Index of small cap shares slumping now by 0.6%, but our Mag 7 Index holding on to a gain of 1.6%. The 10-year, 4.06%, with a 2-year, 3.55%. Spot gold up $15 the ounce, $36.49, up 0.4%. West Texas Intermediate crude right now up 1.7%, $42.27 for a barrel of WTI. And Bitcoin is advancing by 1.8%. We do have Bitcoin right now trading at 116,531 on Bitcoin. Gemini pushing higher. Just talking about that stock, Gemini, first day of trading up by 21% right now, 34.03 on Gemini. Again, the Dow, the S&P, NASDAQ trading mixed. S&P up 9 right now, up by about 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, only he can lead the company's next phase, and his political engagement, it's up to him. That's just two of the many, many headlines out of the Bloomberg Technologies team interview with Tesla board chair Robin Denholm. Bottom line, Tesla's chair saying Elon Musk is the man to continue to take Tesla to its next phase.
The board's responsibility is to look at who the CEO is for the next period of time. And we believe that Elon is the right CEO for Tesla over this transformative period of time. And our view is he's a generational leader. There aren't any other people out there like Elon who can actually lead the company over this next decade or so. And so once you decide who the leader should be, you need to put in place a compensation package to incent and motivate him to actually deliver.
Yeah, $1 trillion would motivate me as well. That, of course, was Tesla board chair Robin Denholm talking to BTech, the BTech Dynamo dynamic duo of Ed Ludlow and Caroline Hyde. Ed is co-host of Bloomberg Technology every Monday through Friday, 11 a.m. Wall Street time on Bloomberg TV. He joins us now from the Bloomberg News Bureau in San Francisco. Tesla shares, by the way, folks, rallying up about 6.5%, the number 2 gainer in both the S&P 500 and NASDAQ 100 today. Ed, well done, well done, well done. You guys covered so much, and there was and always is so much to cover when it's involving Elon and Tesla. What was a priority for you and Caroline and really your team as you thought about your interview with Robin Denholm?
Yeah, when the news broke a week ago that there was a proposed pay package for Elon Musk, the headline was the $1 trillion value of the total award, right? But because of how the board had to communicate it in the proxy, it's like a very dense 300-plus page document that it's incumbent on shareholders to read. The specifics get lost a little bit. And for me, you guys mentioned the politics angle. One of the few things that was like very explicitly codified in the proxy was that the board had got reassurances from Elon Musk that he would wind down political activity. Now, actually, the big takeaway from the interview was that they are actually pretty relaxed about the idea that Musk might continue to have involvement in the political domain. You know, we pushed so hard. When you guys say political activity, and that was too casual. When the board says political activity, what do you even mean? We asked that. Do you mean Musk has told you he won't participate in a political party, or he'll stop making donations behind specific candidates or initiatives? And Denholm's response was really simple, is it's up to Elon Musk what his political activity is, but they are reassured enough that this package, they will get in return somebody that will be focused on Tesla.
You know, I appreciated how you pushed her, Ed, because if you think about Elon Musk's own political evolution, I mean, he said in the spring of last year that he wasn't going to donate to either political candidate. This was when Joe Biden and Donald Trump were running against each other. That all changed after Butler, Pennsylvania, in the assassination attempt. And then, you know, Elon went full-fledged and even served as part, you know, in the administration in the capacity for Doge. So we saw how quickly he changed his mind in a very short period of time. So I guess it can only be up to him because he's the one who makes these decisions. I don't know.
Well, Well, the way that Robin Denholm put it, and this was an on-the-record, on-camera interview, and Miss Denholm, I'm sure, chose her words very carefully. But she said that Musk's political activity or time in government has concluded, and he is now back focused on Tesla. The main thing that we got to, it was a long interview, right? But again, the details like so important in what the board is requiring of Elon Musk. These are not goals. The word goal is not correct to say that Musk gets $1 trillion in the end if he hits goals. They're mandatory requirements. And if he doesn't hit the operational and financial goals, Denholm was very clear, like he doesn't get not the dollar value comp, but remember, at the heart of this is that Elon Musk's condition, it was a negotiation. And what he wanted was voting power. Because Musk's idea is that with greater voting power, he will be able to keep Tesla focused on a future that is about artificial intelligence, not necessarily the legacy of Tesla, which is selling electric vehicles to consumers.
Well, speaking of power and voting power and just power generally, I mean, there's been a lot of criticism, I think it's fair to say, Ed, of the Tesla board.
Yes.
And who's in charge. And, Robin Denholm, I mean, I'm looking at the Bloomberg description, Australian business executive, former accountant who's chair of Tesla, chosen by Elon in November of 2018 to be chair. And prior to that, she was relatively unknown. I'm just curious about the board, and correct me, because you know this company.
No.
But
Nothing's correct.
What do we need to know about the Tesla board and what they say and what it really means to what Elon can and can't do?
I regret not saying this out loud explicitly. If I did not then ask, I should have asked about it. But basically, the criticism from all kinds of investors, the biggest institutionals on Wall Street to the smallest retail investors, is that it's a rubber stamp board that just does what Elon Musk wants. There's something really important to understand, that it was a special committee that negotiated, meeting with Elon Musk 10 times, this compensation package. So Musk had input into it. But the special committee is made up of just two people, Robin Denholm and then Kathleen Wilson-Thompson, who also kind of chairs the financial and comp committee on the Tesla board. A board of two, or a committee of two, because Elon Musk is on the board, so he recuses himself technically, even though he negotiates. And then his brother, Kimball Musk, is on the board of Tesla, but he's his brother, so he recuses himself from negotiating the comp. It actually was really important to say that out loud. Now,